Good morning, sir. How are you on this bright and lovely? It's only Tuesday. It feels later than that, doesn't it?
It really does. You don't have to say it.
I know. What can I tell you?
But it's good. It's light outside. Yesterday, 80 degrees. We'll take that. Today, 75. It's nice to, see the weather from in here.
Yeah, and actually, it was light at 8 o'clock at night, which was nice to see.
That's pretty good,
so
yeah.
We're getting there.
It's still pitch black when you wake up.
Yeah, usually is.
Insane.
Usually is. Yeah, monster accident on the expressway coming in.
Really?
Truck turned over, and I guess the guy got out, but it caught on fire. So.
Oh, jeez.
They had everybody getting off and then getting back on. So.
Oh, man.
Yeah, it's fascinating.
Don't need that with, how many lanes they have closed down now?
Close them all.
Well, yeah. I mean, aren't they back
but
doing...
this was on the Edens before we got to the other one.
Oh, okay. So. Gotcha.
Yeah. Yeah, I could only imagine if you came in at a more normal time, it's going to be a rough morning in.
I had some traffic, too. The bike station was out of e-bikes, so I had to scooter.
Now, you will never take the 30-pound divvy bike.
I take them sometimes, but, I wanted to look my best, so it was a little hot out. I didn't want to come in sweating.
Come in sweating. Gotcha.
Yeah.
And you do the scooter helmetless, I take it, because, this is a job every morning.
Yeah, you can't put a helmet
mess up
on.
With what the team does in the morning.
Yeah, and I actually need, another reason I can't use the standard bike is because I need to pick up more than 12 miles an hour so I can, get some wind through this. Yeah, exactly.
All right.
To get the right flow. So
I don't know. And is it easy to transition to the scooter? The scooter,
Yeah, but it's funny.
I'm not the king of balance. Things like that were never easy to me.
And on Fulton, there's 2 intersections that are pretty rough cobblestone.
Yeah.
You can't take that on a scooter. I've tried as like kind of an ego thing of like, I just got to bend my knees.
Is it better going faster, or it's just that the wheels are just too small?
Well, there's just there's no suspension.
Oh.
And so these are like pretty, and so you're just like,
yeah.
There's no.
So you stop and walk.
No, you kind of have to go around.
Oh, God forbid you walk across with the scooter.
That would be embarrassing.
Would it be?
Yeah, I think.
And now, how do you pay for the scooter? Is it you've got a card and you swipe it?
Through the Lyft app.
Through the Lyft app,
yeah,
really?
So Lyft owns Divvy.
Now, are you a Lyft guy or an Uber guy, or are you one of the?
I check both.
Look at both.
I check both.
Everybody does. I don't know. I guess.
And I'll tell you my assessment is Uber will give me better flash promotions because I don't use it a ton. So they'll say like,
that's the game. Because I get those from Lyft.
Off.
I get those from Lyft now, and I never take them. I always forget about them.
Yeah, Lyft is usually base cheaper, but the pickup time is always longer.
Really?
Yeah.
Well, yeah, but Uber's just never accurate too. 2 minutes until pickup, and then all of a sudden,
they're
the little car shows up, and it's like 7. And the guy's like freaking on Michigan Avenue.
Yeah. So yeah, I'd say in terms of if I had unlimited money, I'd go Uber probably every time. But it's worth checking both. There's also you can game the Uber app if you sign in, put in where you're going, and check the price like 10 minutes before you actually have to book it. Then you just turn your phone off. They'll send you a push notification if prices drop, and then
you have to turn your phone off.
Right. Yeah.
Okay.
You just lock your phone.
I tried that game at the airport, and every time I do that, it comes up cheap, and then it comes up perversely expensive.
Yeah. Airport and like ball games.
Scam.
Yeah.
Yeah.
There's no scheming that one.
It's a vast communist conspiracy.
I think so.
Okay.
Yeah. That's your After Dark segment.
Yes, I guess so. What do we got going on today, my friend?
We've got a lot we're ramping up for if we want to hop into the platform. Forex markets this week. Was last week the shortened week? Last week? Yeah, last Monday was the UK holiday.
Yep.
So we'll talk about it. I put some slides together on volatility. So definitely in the past week seeing a lot more constrained volatility in Forex markets. But I think we're going to pick up. We're picking up overnight a little bit.
Dollars back. No,
Dollars back.
It's interesting because we went out well above 134 in cable and euro strong above 114. And I was like, maybe they're going to build, because Frank and I had talked in the morning that the ranges are kind of set now. So
and anywhere you checked in throughout the morning, it continued to just kind of churn higher, both of those pairs.
Right. But it seems like maybe the ranges are, because I was actually surprised to see, again, a big sell-off. No, they took out about a third of what they put in yesterday from the lows. But it's definitely they didn't clear the ground to the upside.
No, and it's interesting. It's always an interesting exercise for me when you get in here around this time to just look at. You can see the price change, obviously the percentage change from yesterday's close, but knowing the hours when those moves happened, I think speaks a lot, because you have a bunch of players entering throughout the night, and a lot of times it's like, oh, that was London taking it out.
Right.
Here, we started to slide just from kind of U.S. market close. We know this is kind of the most illiquid time of the day. But yeah, no, not really two-sided until maybe Europe waking up, but taking that all out throughout. We're still in the London trading session, but
yeah. So how do you look at it? We're through that 134, even 0510 was kind of the top. Now, if you were short, you would have to think if they got up to 134 and a half, you probably had set that as your mechanics said, I'm going to cover this. If you did, you took a smaller loss. If you didn't, you're still in it. How do you look at this now that it's collapsed back into the upper end of the range?
Yeah, I mean, it's hard to make
it's slop. This is where the markets get a little sloppy.
Exactly,
Yeah.
because
And it's a little bit harder to if we really were going to put another leg to the upside, and statistically we've run a lot to the upside, hard to say, but we know that this market tends to feed on itself. We could print 136, 136 and a half. I think it's low probability, but it could certainly do it. Not the energy to get there.
No, but yeah, to your point, I'm looking at kind of both sides. Where here, this overnight heading into this morning, pretty supportive to me. That there's at least early through the day, I'd be surprised if we start to retest above 134 with a lot of momentum. But like you said, throughout yesterday, we haven't made up really any ground from where we started the week.
Right.
And so, last week we had kind of early dollar momentum and then just kind of stayed around there.
Giving back less than everything else, though.
Yeah.
Let's take a look at Euro Sterling really quickly, and then we'll go over to.
Yeah, I mean, we're back around 85 here.
Right.
For some historical context, because this is a non-dollar pair. We started the year and a lot of the year at really historic lows. Below 83 is kind of the low for a lot of time. Now, Euro gaining a lot back, but in April, a really up and down story.
Yeah.
What do you make of it?
I think the same thing. We looked at this yesterday. 85 kind of held and it bounced from it, but we're right back there again. So I don't know. I honestly think it's a little easier for me to look at selling some sterling up here and buying some euro, but that just isn't working right now. And from this chart, what we're seeing is that euro has, over the last 20 trading days, underperformed sterling. So we don't have to do any math or ratios or anything. Just go to the cross, and it just tells you right now that the euro on the left side of the quote rail there is underperforming against cable right now. I honestly thought we might see a little bit of, rather than saying that, well, euro and cable against the dollar are both high. Yes, they are. I don't want to buy a 500-point rally. Fair enough if you don't want to. But if you want to trade the relative value of the two, you can either, again, if you were using another set of products, have to construct a pairs trade that is not easy and expensive to do in terms of capital cost, or you can just trade the underlying, which is euro sterling. So I honestly thought we were going to see a little bit of bounce here. We haven't fallen. We're wrapped around 85 cents. So I don't know. I still think it's probably a play, but this is also one that if it doesn't, a lot of times I don't put time on trades. This is one, if it doesn't start to exhibit that pushback to 85.5 or 86, maybe we do ground a little bit lower. But we had an election in Canada yesterday.
We did.
So it must
yeah.
be massively changed.
Right,
Or
you are.
Not so much.
Not so much. I think the result, as expected, what you could see is some volatility around when results were coming in. I think this is when
Are we back to 30 pips is volatile?
I mean,
As traders, we absolutely are. We're mindful of we get these runs like we've had the past 6 weeks, and inevitably, the only thing I can tell you, how long will they run? I have no idea. They will slow down, and we're in that slowdown period right now. So markets are going to get a little bit tighter, a little decrease in volatility, a little less elastic.
I got some slides on that. You want to go into it?
Oh, let's do it, Glenn. I know you wouldn't have come without the A game.
Let's flip into some slides here. We've got exactly what you're talking about. I've got some high probability Forex setups for us around some standard deviations and how to trade, when volatility starts to come in, because we've seen some unprecedented volatility in US dollar last month, hitting I think highs since the pandemic, and for some pairs exceeding those highs. I think Swiss franc being one of them. And so here I've pulled a little heat map for you, standard deviations, and this is just the rolling daily closes. So it gives you an idea of what a daily range will be for each of these pairs. And we've got it over 1 week, 1 month, 3 months, and 6 months. So you can see that 1 month column for all pairs is the most volatile that they've seen. And 1 week, not a lot of data points. I wouldn't necessarily hang my hat on a 1 week standard deviation, but it is worth noting that this past week, 6 trading days, has been very quiet compared to April and March as well. And so you compare this to the 6 month time frame that encompasses all this data, and you start to get a little smoother picture. Do you think that's where we're headed, or could this just be, last week, a really light economic data week. This week, we're expected to pick it up coming into the end of this week with a lot of U.S. data. We've got GDP, we've got, I think, PCE, we've got non-farm payrolls, we've got a BOJ meeting, a FOMC meeting shortly following. So, if there was a week to have a lull, it would have been last week. Do you see us going back to this wild rest of April, or do you think we can point to the 6 month as kind of a benchmark?
I think that we kind of, sure, we've got all those things on the horizons, known unknowns, in other words, non-farm payrolls, FOMC, BOJ. Markets do get a little tired sometime, and I think we're a little tired right now. So we are holding on to more of the upper end of the range than I would have thought, but sometimes it just takes a while, and then it will release. I don't know. The tariff stuff is still kind of a cluttered mess, but it seems like, from what I read this morning, they're going to make exceptions for certain car parts made in certain places. I don't know.
It's getting more and more vague. But yeah.
Yeah, and at some point it almost seems like, and then he'll lose interest and just kind of walk away from it, and it'll all go away. I don't know.
But yeah, either scenario.
So I think that, we probably revert down to, now you can't say, I still think event risk hasn't changed. They can tweet at any time. We're in price ranges we haven't seen in a long time. Give you that, so the market gets more elastic. I'm going to stick with 90 points of euros, 80 pips of cable. Nothing wrong with that.
Right.
What you're going to do is just get a lot fewer trades, because the market itself is only giving you so much. Now, if that is what you want to do, there's nothing. The one thing is, and this was always hard before we had all these fantastic stats and everything, we would feel our way through these changes in
Right.
volatility and thus in ranges. And sometimes you'd bring those ranges where you had interest in too tight, too quickly, and the markets would come back out. So I think for me, wanting to be a little bit more active, I'm going to take a measured approach and start to bring myself back in. Am I coming back into, 6 months of, 45 pips in Aussie, 59 in Euro? I'm probably coming back into, somewhere, and again, this is, so selective. The 27 pips in Aussie is all we've gotten. I'm not coming in. I'm
Right.
not saying now my new trading range is
Aggressive
30 points.
Yeah.
The width of where we've been is now it's going to be hard to pick the right 30 points.
Right.
Now, what this is saying then, well, then you're going to miss some trades, Pete. Yeah, I'm going to miss some trades because I'm not accepting this. I think that short-dated one just speaks to conversion of vol, not where vol's going to
Exactly.
settle. So I will shave off the extremes that we saw in the 1 month and start to work my way back in where I start to get more trades on the extremes back and forth and work from that.
Yep. And so here we've got the 3-month, kind of the Goldilocks
Right.
of that table, encompassing both the very volatile last month and the not so volatile last week. And so here we've got these ranges, and you touched on it perfectly, that these will just tell you, give you historic context for where these daily price changes closed within 68% of the time, as it is by pair. And so you can use these ranges as guide rails for entry points once a pair has made one of these moves of this magnitude within the time frame that you're looking at, as well as manage your profit or loss targets, which is equally important because even if you're right, you have to be able to pull that off. And setting a profit target too high and unreasonably high can get you in that trade, just kind of waiting for longer than you think. And the same with stop losses. As we both know, things can run away from you quicker than you think. And so making sure you set these can kind of give just some important context around what to expect.
Absolutely. And we go back to our mechanics. So we've got non-farm payrolls coming up on Friday. I'm going to go back to my 3-month numbers. I'm going to add on 25 to 50% of them. Those are going to be my scalping ranges for non-farm payrolls. Just back to like what we've done previously. Things like month end.
Yep.
We've got coming up now. The markets. You would think we've moved so much this month. There'll be huge flows.
Maybe.
Sure. Who knows? I don't know. And some of that may have already been done because markets move. But these numbers right there are going to be my rails for probably everything except Kiwi and Aussie, just because I think there may be a little bit more elasticity there.
Right.
But I may miss something. For that 10 to 11 o'clock Central Standard Time frame when I like to trade month end for FX, I'm going to use exactly those numbers to see if a market gets to that point. I'm going to look to fade that move.
Yeah, and here we have a USD JPY example that was, the highest pip range, but of course we've got really high prices in here as well. And so just wanted to point out that we have around 100 pips that we've noted for the standard
Right.
deviation. And you can take this really a ton of ways because we've had moves greater, if you look at just yesterday, greater than that one standard deviation move running away. And then we've also had, you look at last Wednesday, I think is a great example where, the actual high to low range was greater than that one standard
Right.
deviation move, but does come in. You're also seeing, the day after an inside day. And so you can use these kind of as a momentum or a contrarian trader. Momentum saying, this is one of those days. It's not acting like normal. Only 2/3 probability that these stay within these ranges. So identifying which days aren't like the others versus which could be. And my last point I want to make here is because you could be looking at this and saying, Australian dollar only 55 pips. That's almost half of what the dollar yen volatility
Right.
is. Is that even worth trading? And so I brought in some key considerations that when you're thinking about just standard deviations, you have to take into account all of the product specs for both of these markets that actually shake out very differently into a US dollar profit and loss. And so here on the table here, we've got, if you had a hypothetical example, if you had $5,000 and you were looking to use all of that on one trade, you look at the margin requirements, Australian dollar requires less to hold. Right. And so your max trade size for that would be 2.59 lots at around these current prices. Your dollars per pip are a lot more because you've leveraged up a lot more in that pair compared to dollar yen.
Yep.
And then you factor in what the expected move would be in a day, and this is extremely hypothetical. If you caught all of that range to the profit side or the loss side, you've got more than double the nominal value to your effect to your account trading Australian dollar than yen. So a lot more to consider, right now than just these ranges, but how these products are actually set up.
I think that's great because that feeds into, and sometimes we don't speak as much about the capital efficiency aspect as we should. But the different margin rates on the different pairs give you more latitude in terms of the bite you can take. Now, again, choosing a bite that's comfortable for you is critically important. One that you can make unbiased decisions around is great. But this is another great way to think about, well, I'm not trading the big swinging one. It depends on, how you use your capital and what you want to do. This is one of the great things with Spot FX is you can tailor that exposure. And again, larger size is going to create larger returns, but also expose you to larger losses.
Right.
As long as you keep that context in mind and you're comfortable with both those numbers, you're in a great spot.
There you have it.
Wonderful stuff there, Glenn.
That's all we've got here today. We'll see if the volatility continues to constrict or if we're in for another big week here.
Even if it does, we're baselining back to, we're not at 28 pips of euro. We're baselining back to a little bit more standard ranges. Still means lots of trading opportunity for us.
Oh, yeah, there you have it. Happy trading, everybody. Up next, we've got Tom, Tony, and Vanetta. Stay tuned.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Tomas, we are back, my friend. You know what that means. Time for more Tasty Live. No. Good morning, you knuckleheads. That's right. You too. Well, you walked out on me just a minute ago. So
he was talking about his preferred temperature for sleeping naked. I had to yeet myself out of this room because I need brain bleach. I don't want to be here.
I would like to say before
I liked it better yesterday when my technology wasn't working and I didn't have to hear all of this.
I would like to have a day where I don't have to talk to Tom today.
Can I get in on that? Can we go halvesies?
No talk.
Can we go halvesies? Yeah.
Tuesday, no talk Tom.
No talk Tom.
No talk Tom.
What's going on with you?
Oh my God, nothing's going on with me. I'm perfect. I did stay up a little late. I had to watch that game last night. I couldn't turn it off.
What game?
The Florida game.
Florida.
So good.
It was good.
The Miami Heat.
No,
Cavs?
Panthers against the Lightning.
But the
Panthers
Cavs
looked like it was going to make it. The Lightning looked like they were going to make it a 2-2 game, and then they got some big hits going on, and the whole game changed.
It was weird. It was a weird 2 goals both times.
Mm-hmm.
So who won?
The Miami Heat game, I watched it for 2 seconds. I saw the score in the first.
Well, the Cavs blew out the Heat.
In the first half, they were up by 60. Have you ever seen a professional basketball team up by 60? They're up by 60.
Not in the playoffs.
They're up by 60.
Yeah, I know.
The score was like 70-23.
Yeah, the Bulls have no chance. And our conference is so hard.
I'm saying Miami was down by 60 points at one point.
Do you even stay at that point, or do you head for your car in the parking lot?
In Miami, they're gone. There's 6 people left in that arena.
Yeah, I just don't know. I was like, what do you do? But you played playoff ticket prices, so.
You didn't get a playoff game.
There's 6 people.
Okay, but you still paid for the. Yeah. Okay.
Cleveland.
Sometimes you don't get everything you pay for. Okay?
Right.
I've learned this.
Cleveland's really good.
Yeah, they are. Yeah.
But the hockey game was great.
It was an unbelievable
It was
game.
great. It's a good game.
Could not turn it off. The Dallas game was horrible, but
I didn't watch that game. I just watched the Florida. I love watching the Panthers play the Lightning. They're
fun. They're fun.
They hate each other. They're good series.
Yeah.
Do they really hate each other?
Yeah, they do.
Oh, okay. Well, that's good. That's
Not
always.
like Bears, Packers, but they hate each other. And every year they play each other, they hate each other.
Can I just tell you the last couple of days, I've not gotten any work done. It's fine. I'll catch up today. Because I am so obsessed with what is going on with Bill Belichick and his girlfriend Jordan. Did you see Sunday morning? Oh my God. I get up.
I saw the highlight.
No, so I watch because I get up on Sundays because it's a tradition with my parents.
Video. I just saw the
No. So I get up and I watch Sunday morning because I grew up watching it with my parents. So I like to watch CBS Sunday morning. And when I tell you that interview, he looks like he's in a hostage situation. Bill, sweetie, blink twice if you were okay. But she's just on the side, creeping down like this. She's like, we're not going to talk about that. And it's like, it's just a question about how did you meet? It's not a government secret, or is it? OnlyFans. Ooh, what is going on?
You know what? He's got 50 years on it.
She is.
You don't want to talk about it. I don't talk about it either. What do I give a crap? I mean, come on.
Something is odd.
77.
He didn't know about his pictures
10 more
on
years?
Instagram. They are not happy with her at UNC either. Things are happening.
Doesn't matter. He's happy. Nobody cares.
Yeah, going home with a smoke show. I mean, come on.
I don't know. I call elder abuse.
She's got to be CC'd on all the emails.
Yeah,
and stuff like that.
she's in all the meetings, and the memes are funny. I'm legitimately concerned for him, though.
Well, blank makes a man go crazy. So I mean, that's what it goes down to.
But what is happening? But I like all the conspiracy theories. I'm here for it. But Are you not worried?
I'm not worried about Bill Belichick.
I heard on Stern they met on a plane.
That's what I heard too. That's what I heard.
In college, she was working on.
Right.
By the way, I just want to go on record as saying Stern hasn't been that great lately, but this morning I couldn't get out of my car. It was so funny.
Oh, really?
So
I listened to it this morning.
What were they talking about?
You listened to it before they went live for today.
No, I didn't. I'm here. I'm
read-
here already because I get here on time because I know that if I'm.
Were they talking about Bill Belichick?
No.
Oh, what were they talking about then?
They were talking about just a fun, they did a bit on something. It was really
Okay, cool story, Boomer.
I can't talk about
And it was great. They did a bit on something.
They did a bit on something.
I'm not going to share it with you,
it's
but
not
they did a bit on
tasty.
something.
It's NSFW. It's not safe for work.
Yes.
Okay. Well, then that's fine. I
It
guess.
happened, I guess.
I don't know.
Whatever.
So what else did you get up to last night? So you're just watching sports and...
Watching sports, eating brisket. Yeah.
Yes, you said you found a new brisket at Costco.
Yeah, I just.
No, it's always there. It's pre-sliced. It's pre-made. It's in a box. I've seen it, but I just didn't think who.
I didn't even know you were supposed to refrigerate it.
Okay, nope, there it is.
That's right.
Did you just go full carnivore on it? Like, you're just,
It's his new homemade chili. He's gonna get the pre-made brisket, but he's gonna cube it and stick it in the homemade chili, and then it's gonna be homemade chili.
It's okay.
Oh, look at who's talking. Oh my.
Like, unless he's
Sandra Lee of.
unless he's
Cooking Over
entering a state fair, it doesn't matter how
Yes,
you make your
exactly.
chili.
That's
Like, it's fine.
Exactly.
It's all good.
Exactly.
Yeah.
I'm gonna go. I've got a couple of chili ideas too that I want to experiment.
Well, you're gonna have time because we've already hit our high for the day. It's 74 degrees.
It was-
Then when we go home, it's gonna be 44.
I think
Really,
so.
I didn't bring a jacket today.
Yeah, I think you'll be okay, girl.
Okay. In the garage, you walk about 6 feet where you're out in the elements, and then you get home to your heated driveway, heated garage. You'll be fine.
Wait, can you preheat the Lucid?
Oh, sure.
Oh, I didn't know.
It's
I could preheat my Denali. Big deal.
You have a Denali?
Stuff when you have gas. When you have gas, and you have to preheat gas.
What?
When you have a gas-powered car and you have to preheat it, it's like it sits there and runs and everything.
I sit right here from my fat arse, and I press a button, and my car starts, and my heat goes on.
I know, but
and if it's hot in the car, I don't even have to tell it. It puts on the air conditioning.
I know, but the problem with that is it runs.
There's no problem.
Okay, there is a
There's
problem.
no problem whatsoever.
There is a problem because I don't like it when I do it because it takes
There's
like
no problem whatsoever.
Takes like
I click a
20
button, and then it goes through my whole car, tells me everything
This
is
is when
good,
you-
although my
when-
oil's at
when-
20%.
When you quiet down, Grandpa, you're going to see that. In
Sweetie,
the winter,
you guys are both the same age.
No, we're not nearly the same age.
when you in the winter.
Deal.
All right, I don't want to be here. Bat, how about you? What'd you get up to last night?
I got no sleep last night,
Oh no, what
and
happened?
for all the wrong reasons. The house was set to 71 degrees.
Oh, that's too hot to sleep.
I like
That's what
74.
my wife said. It has to be 70 or below to sleep, and she could tell by the 1 degree. Now, I will admit, I put it to 71 because that's the way I like it, and I didn't think that she would look. Well, around 1 o'clock in the morning.
Women know, like it'll mess up your sleep cycle.
Yeah, till
like,
about
if it's
3
too-
o'clock in the morning, she was insufferable. Pulling the covers, taking things, banging the legs, doing the whole thing. Not for good reasons either.
You're getting zero. This is your own fault. Like she told you what it needed to be. Fall in line.
That's what she told me. Exactly what she wrote me. That's exactly what she wrote me. She said, forget what I have. That's
Yeah.
exactly what she wrote me.
That's
So that was my night last night. So I got no sleep. So I'm going to be a little cranky. So don't try me today, Thas. Don't try.
Cranky every day.
What's that?
You're cranky every day. Get off my lawn.
It's the joy of living by myself. Like I think it's too late for me though now. Like I think it's like a Carol Burnett. If you
No,
see
you're
that
gonna-
interview
you're gonna
with
get-
Joan
you're gonna get
Rivers.
scooped up in
You
within
ever see that
6
Carol
months.
Burnett interview with Joan Rivers? She's like Carol Burnett icon. Love her so much.
You're going to find
and also
a
Joan
man,
Rivers.
2.5
So Carol Burnett.
kids
Still
and a
alive,
dog.
I think.
Yeah, I know. That's it. I said she's an icon though. Joan Rivers is not, sadly, passed, but
Joan
Carol
Rivers
Burnett
is,
is. But Carol Burnett said she's like, look, she's like, if I were to get married again, my husband, my loving new husband, he would have to have his own house.
Carol Burnett and
And I'm like, you know what? Yes.
somehow on my TikTok feed, I got Carol Burnett, Vicki Lawrence, and Harvey.
Wow, you're
Korman.
really topical.
No, I know. I got something just showed up there. Harvey Korman.
Yeah, from the Carol Burnett show.
Yeah, with Vicki Lawrence and Carol Burnett.
Yeah.
They're pretty funny.
They're iconic. Yeah.
I like when they make themselves laugh because they can't keep a straight face. Those are my favorite ones.
Carol is a comedy legend, and I still think that she's owed more than society has given her. But that's a
Well, her
TED
with
talk for another
Her
day.
with Harvey Korman and Vicki Lawrence was great.
Yeah, top notch, A+ all around there. All right, well, what else is going on? Nothing.
What'd you do?
Last night, I went for a hot girl walk because it was so nice. So I
was
put my
beautiful.
weighted vest on.
Oh.
Went for
I walked the mutts twice yesterday.
Went
I walked
for
them
yeah.
usually.
Went for a 5-mile walk. And he asked. I didn't bring it up. He asked me what I did. What am I supposed to say? I worship my Tom poster? Like,
You got one of those too?
it's like I tidied up my shrine to Sosnoff. I put in some
Added more cheese.
Yeah, put in some new candles. I changed the offering to a shawarma. So to appease the god, I gave him a shawarma. I left out
a couple of nuts on there.
Yeah, I left out some iced tea for him.
Like these.
It's been a long time since I've had some shawarma.
Yeah.
I need some shawarma.
When are you going to make your own with your shawarma machine?
It's getting warm enough. You can do it outside without burning
What
your
happened to
house
your bottom
down.
lip? You couldn't talk about it.
I was saving it for a rainy day. Maybe I should break out the shawarma machine. I got to find it.
It's going to be nice, yeah.
That's what I'm going to do. You know what?
Yeah.
Break out the shawarma machine.
You do that. You burn down that kitchen.
Yeah, your kids are all married off now. You could blow yourself up.
Yeah. It's propane, isn't it?
It's fine, yeah.
It's propane.
Indoor propane, though.
Not exactly.
SMRT smart.
Yeah.
You got it.
They don't need you for anything. All the checks have cleared.
Light up that shit.
Don't do it indoors, please.
I'm not going to do it indoors, but I'm going to light up that shawarma machine.
Yeah, but it's warm enough you could do it outdoors.
gotta get
That's 40 some odd degrees, you said tonight.
I got to get a shawarma somewhere, though.
You
want me to get you one? I get my buddy.
Who's your buddy?
I got another guy, just like.
You have a bread guy and a shawarma guy?
Okay.
I got he owns like a
Is it
Greek.
lamb or chicken?
Lamb.
You got a lamb shawarma guy. He'll do it.
100%. He makes them in his store.
Oh, well,
so.
does he sell them, or do you just use
He's my neighbor. If I ask him for one, he'll get me one.
a little one?
Okay,
A
now
petite shawarma?
I don't need a giant shawarma like this. My shawarma machine's only this big.
I can ask him for a small one.
Small-
Spiro's. That's right. You guys ever want to get a Bama great sandwich? Spiro's, Glenview.
Is it? He makes his own shawarma like lamb.
I'm sure he buys it like all the other places. I mean, I don't know if he makes it himself, but you'll get what you want. You'll get exactly
like
what you would
gyros.
get if you go to a quote unquote Greek little.
What's your price? What's your price range? How
I
much
don't
would you
want
pay
gyros.
for
I
this?
want shawarma. I don't care what the price is because I gotta do it.
Would you hear that? We got a live one on the line. He doesn't care what the price
You want a
is.
chicken shawarma?
I'd rather have lamb, but I'll do chicken.
I'll find out for you.
Whatever he can do, a small one.
I'll find out for
It's hard
you.
to get a small one. I looked online. I couldn't find one.
What were you pre-tell? What was that Google search? What did you type in?
Shawarma. I'll buy a shawarma.
Why don't you just marinate the chicken and then just?
Oh, you can do it yourself. Yeah, they sell the marinated shawarma chicken at Trader Joe's.
On that little Johnny thing that you got, you'd have to start yesterday. For
Yeah, just go to Whole Foods. Just go to Whole Foods.
And that thing's
sell
gonna
that.
spin. The middle's gonna be raw forever.
This is
It is never gonna be efficient enough to cook all the way through.
It's going to be ground zero for our next pandemic.
Oh, you're not invited.
I don't eat no meat. It's okay. I make lamb. I don't eat lamb, so it's okay.
I lost my invitation.
That's right.
Yeah. All right. Hey, we got a great show for you today. Whether you're going to blow yourself up or not.
I'll get a little gyros too, but I've never seen him sell it.
Well, he owns a restaurant.
Yeah, but they don't have little ones. That's my point.
Hey, I got to keep it moving.
How the freak do you know what they have or not?
I looked online. I couldn't.
And so your Google search online, that's it? You're done? That's how you know? The guy owns a restaurant for 25 years. If they make a small one, I will get it.
All right,
If they don't make a small one, you won't get it.
Okay.
This is weird. Hey, we got a great show for you today. It is a terrific Tuesday here.
But you don't want a gyros.
Oh my God, on Tasty
Or a
Live.
gyros.
No, I don't.
Gyros for my Greek friends?
No,
You don't want a gyros.
I wanted shawarma.
Gotcha.
It is a terrific Tuesday here on Tasty Live. Let's get to the show for today at the top of the 8 o'clock hour. We got an options jive. How reliable is Theta?
How reliable is Theta?
Yeah.
Pretty reliable.
Absolute.
Would you make Theta your emergency contact?
No.
It's
Who
not that
is your
reliable.
emergency contact?
Not
I know
every
you've
day.
seen the meme on TikTok. It's like, I can't believe this guy's my emergency. And then it's like a funny montage of clips.
I've never seen it.
Okay, it's a funny trend. It's like, oh, this is. But who is your, like, my parents? My
My daughter.
specifically my dad. My dad is my emergency
My
contact.
daughter is the only one. Yeah.
Really?
Yeah.
Wow.
Yeah.
Wow. Why not your son?
He's worthless.
Yeah. Your daughters are better. Daughters are.
Oh, God, yeah.
Daughters are better. Yeah. Who's your emergency contact?
My emergency contact.
Yeah.
Just because
His daughter will put him down.
No, it's your wife. It's got to be Lady Bat, right?
It's my wife. Yeah.
Yeah. Okay, good. That's how it. That's what it should.
My wife will put me down. I need my.
No, she will put you down. Yes.
Who has your medical? I know you have one. I have one. You must have one.
A medical what?
Who is in charge if you are not able to make decisions?
Like your power of attorney.
Oh, my daughter for sure. My wife will pull the plug. Yes.
Are you sure? You have that?
She'll say, "Do not resuscitate."
Do you have that in writing?
I'm sure.
I'm sure.
You better check, homie.
I mean, that's something you should know.
Yeah.
I mean,
that's like true crime 101.
Mm-hmm.
Anyway, how
I get a phone call, Sodnoff, and they go, "Well, you're down, Bat. You're down. What should we do with them?" I'm going to say, "Do not resuscitate."
How reliable is Theta? That's going to be at 8:00. Then 8:40. Let me explain. We got Chris Vecchio in the house. What are you going to talk about with Vex?
Today, Vecchio, I don't know. We'll see.
Okay, I don't know why we can't be prepared for this show.
We are prepared, but he's working with our producers on that.
Oh,
Okay.
Producers to the stars.
Then in other news, 9:00, we got a market measures. What makes tail risk risky
Usually high
in
heels.
short premium trades?
Oh.
I would say I would rephrase that to be what's risky. What I don't know, it's hurting my brain. But what makes tail risk risky? Risky in short premium trades? Tom, tail risk? Risk risky?
Tail risk?
What's your question?
What makes tail risk risky in short premium trades?
What do you think?
I think just the fact that it's tail risk makes it risky. Like, is that not risky enough that it's like?
I mean,
big moves.
Weird stuff.
No whammies.
No
Big
whammies,
moves.
stops. Hey, and then live from the trade desk, and I mean literally live, Scott Sheridan is back. Did he bring me this alligator head? Where did this alligator head come from?
Well, that's been there for a while.
That's
from our friend in Florida.
Yeah, it's been there for a while.
Yeah,
have
but
lots of friends in
you do see
Florida.
the Scott Sheridan Studios.
I do see the Scott Sheridan Studio
Yep.
little placard there.
Yep.
So
Yep.
that is nice.
I commandeered that. I told Beth, get a nice big plaque suitable for Scott Sheridan.
So she
Studios.
ordered that off of Temu, and it's this big. Well, anyway, Scott's going to be counting down all the live trending tickers over at Tastytrade. We're happy to have him back. And the Liz and Jenny show live from the floor of the SIBO. It's electric when the ladies are live on the floor of the SIBO. So tune in for that because it's always a good time. But hey, that's the run of show for today. You guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story, breaking news,
Today's
across the wire. Our
This
leading story,
just in.
top story, just in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today is a terrific Tuesday. It's April the 29th. It's a part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Mr. Bat, earnings for tonight. I got the ones from yesterday.
Tonight we got Caterpillar, STX, Starbucks, Sadnov no tariff on coffee, lucky for you. FSLR, Mondelez, Visa, SMCI, to name a few.
Bleh. That is a motley crew.
I think we have a small Starbucks position. I think we have we had a small SMCI position, but we took it off.
Okay. Are you sure
SMCI?
about that?
Where's SMCI right now? Right around 30 something, 40 something.
SMCI.
You ain't got no alibi.
$36.72, down about 50 cents. Sadnov, some of the Visa you have a position in?
Yes.
And then Microsoft will be tomorrow after the close, so you'll do that on the 30th.
Visa we always have a small position. Very hard to make money in Visa though.
Sure.
Well, not on my.
I mean, Visa makes money off of you.
Yes, they do.
It's hard for you to make money off of Visa.
That's right.
Visa.
Yeah.
SMCI. I like SMCI as a trading vehicle for a $35 stock.
Okay.
And got high volatility. It's a decent trade. And Starbucks,
It's the enemy, but you gotta keep the keep them close. So you got to listen to see what they're saying on their earnings call.
No, they're not
Your
really.
friend's
yeah.
close and your enemy's closer.
You don't think of them as the enemy?
I really don't.
I'm just kidding. Hey, investors surveyed by JP Morgan expect the S&P 500 to remain under 6,000 for the next 12 months. Do you think the S&P has already peaked for the year?
No.
Okay, I'm just curious.
I mean,
JP Morgan needs to buy stock.
Why would I say that the S&P's already peaked for the year? Right?
Because you're a bear, and I
I
don't.
understand, but even if I thought that, I mean, I know what statistics are. I know it's not. It hasn't peaked.
I was just curious. I honestly didn't know what you would.
The expected move is
say.
800 points. We're let's call it 5,500.
Sure.
So, I mean,
I think we could have seen the bottom for the year,
Okay.
but that doesn't mean we can't go back to 5,000.
Okay.
But I think there's a good chance that 4,800. I don't know what the low was, 48 something. I think at that 48 something level, we might have seen the bottom for the year.
Okay.
48.30s and change, yeah.
48.30, yeah. I think we might have seen the bottom. I don't know if we've seen.
Do you remember what your year-end projection was? Because we do this quarterly contest.
Like
what was it?
5,600, right where we are now.
Do you remember what yours was, Bat?
No.
I
Okay,
do.
I don't. I was just curious.
I don't worry. I remember his. It's like 6,400.
I don't believe that to be true,
Beth.
but it's possible.
Beth,
Yes, Tom.
year-end predictions for Scott and myself,
Please.
please.
Scott and myself would back
for Tony and myself.
Who the
Oh,
freak
sure.
Scott? I mean, the
One
guy's
sec.
here one day and then all of a sudden he gets first
I
pull in.
meant Tony.
She'll pull it up, and we'll just see. I was just curious, and if you could
The only one
revise.
is in the ballpark. Year-end predictions.
Only one that's in the
Jesus.
ballpark.
Me.
Anybody inside the expected move is in the ballpark. And
There you go.
I
There you go.
I am
There you go.
6,800.
Oh, it's worse than I thought.
So would you revise yours, or are you happy with
Stay
it?
with what I said.
Would you revise yours,
I mean-
Tony?
I mean, yeah, sure. I would put myself more
I'm
inside the
literally
expected move, but
spot
I'm
on.
You're literally perfect. You're literally perfect.
Literally perfect.
OMG.
Tony's.
I'm 6,200. I'm still in the ballpark. I mean,
Oh, that's the end of Q1. We're already.
yeah.
We're
I'm just curious. Yeah, it's
that?
just nobody knows.
Yeah, no, I understand that. 6,400 doesn't make a difference.
we got you. We see your numbers.
You got us
knows.
going nowhere for most of the year, and then drifting a
we
little
see
bit lower.
the Batistas, the Mike, Nick, and Katie's
Of the
Liz
world.
and Jenny's, the Chris Vecchios. Oh my God, Josh is the only one that's close to me
He's right there with you.
at the end of the year.
Yeah.
Josh is just going for job security. I mean,
Josh just thought we were. No, Josh
had
had us at 6,600, and then he thought we're crashing. He must have changed this recently.
Okay. I'm gonna keep moving.
Did Josh change this recently?
He could have. He could
Who
have.
goes from
did.
6,600 to 5,400 in the last quarter?
Hey, I'm gonna keep it moving. The U.S. Treasury Department is expected to leave most of its auction sizes
No,
unchanged.
time out one second. If we had this conversation March 1st instead of now, basically May 1st,
Yeah.
I'm in the lead.
March 1st, we're
6,200 instead of 50. You got 56. You're so far out of the ballpark. Anything can happen is my
but
point.
It's not March 1st.
I understand, but
It
anything
doesn't
could
matter.
happen. Anything could happen.
Hey, I gotta keep it moving, boomers. The Treasury Department is expected to leave most of its auction sizes unchanged for the fifth straight quarter when it announces its refunding plans on Wednesday. I know it's weird that we are all of a sudden talking. We've been talking about Treasury auctions for a while now, but it's kind of important. People look to them. Let's talk about bonds.
Do you know the White Sox would have been in the World Series if we canceled the season after the first game?
That's true.
Bonds, 116.07 down 5 ticks. Pay no attention to the man in the corner over there. Unbelievable.
Treasury. Can we talk about treasuries and bonds?
I'm not going to. No.
Okay. All right.
there's
Fine.
not
Be
much-
petulant
You lost
children.
me.
Be petulant children.
There's not much to talk about today.
Okay. In bonds, treasuries, nothing.
Bonds. They're down.
James Bonds.
They're down like 5 or 6 ticks.
Bank of Japan is going to keep rates steady. They are expected on Thursday to keep rate steady and warn of heightening risks to the fragile economy that could keep policy in a holding pattern. Let's talk currencies.
We haven't talked about the yen, so we'll mention that. It's down small, trading around 70 or so. Higher end of its most recent range. And if you go back to January, where it was on its lows, go ahead.
Should have bought more. Yeah, British pound down small, Canadian dollar up small, euro down small.
Euros, did you say?
Euro down small.
Sorry.
Euros down small.
Well, something else that I would maybe look at is the loonie, Liberals won their election in Canada, basically handed to them on a silver platter because of the shenanigans on their southern border. But Liberals win their Canadian election. The party, Mark Carney, he's now been officially cemented as Prime Minister. And I believe they also secured a majority. I could be wrong. Again, it was happening late last night. But I believe I heard on NPR this morning that not only did they win, but they also have a majority. This is a crazy turn of events because you look at January and the conservative candidate had the lead.
The conservative candidate was a lock in January.
Yeah.
But after all the shenanigans in the U.S., all
Yes.
Trump stuff, they went full the other way. It's going to happen all over the world.
Sure, but Carney is the real deal. He ran the Bank of England through Brexit. He's got,
Whatever.
he's got all the right. Yeah. So, but I was just saying, we don't talk about the loonie a lot. So you talk
The loonies had a nice. It's the Canadian dollar. It's had a nice rally. But let me just tell you something, because I traded. It got down to it was in the mid 69s. It's 72.5 right now. But it trades by appointment only.
Oh.
And it has not had the rally that some of the other currencies.
So if
had,
you
although it
think,
is off its-
it has had a really nice rally. But here's the problem.
from 69 to 72.
Yeah, that's a good rally for that. I'm just saying.
Right.
But
Other currencies have rallied 5-6 cents. This has rallied 3 cents.
the problem is,
Yeah, what's the problem, girl?
almost untradeable.
Okay.
And I have a position on there. You can't even adjust it.
Oh, man.
It sucks.
Oh,
but
man.
we are about to launch Spot FX on Tastytrade, the platform.
Oh, okay.
So we're embedding. We have the second largest FX spot brokerage firm in America, and we're about to embed what we currently have, which is Tasty FX, into the Tastytrade platform.
That's wonderful.
It's all done, and it's going to be probably released in the next. Pete said the next week or two.
Okay.
Pete Momat's running it, and
It's
so you're
imminent?
gonna-
Is he
what?
giving me an imminent?
beyond imminent. It's actually done. You can use it. You can use it now if you want to.
Oh,
And
nice.
It's going to be 80 FX pairs.
Wow.
And so unlike 6C, which if you're going to trade options, you have to trade 6C.
Right.
But if you're going to trade the actual underlying, you don't want to trade the future, you could do the cash market because you get a lot smaller if you want.
A
Okay.
lot smaller. Leverage is good. I mean,
Leverage is really good. It's like, is it 50 to 1? I'm not sure. I think it's 50 to 1. But it's all going to be embedded inside the Tastytrade platform.
That's wonderful news. You can get Timbit size trading. That's for all my Canadian.
You can trade the mini micro or whatever they call it, the macro micro or something. There's a crazy name for it.
Okay.
But you can do as small as is $100 the minimum? What is it, Tony?
I
100?
believe so.
I think either 100 or 1,000 is the minimum, but it's really low.
I think it's 100.
Okay.
Oh,
I don't
All
know.
right. There you go. Let's go. Hey, in other news, IBM has pledged $150 billion to boost U.S. tech growth and computer manufacturing. This also comes as other big tech companies are headed to the White House this week to also pledge their investments to America. What are you doing in IBM?
Ever since the earnings last week, we did absolutely nothing. We made small on the short puts in there actually came in, even though the stock was down like 16. It's rallied back about $6 or $7.
Okay.
236 and change.
It got down to about 128
That's pretty good.
on the earnings. Yeah, I'm surprised it didn't. I thought we actually thought it was going to go a little bit lower, and we were going to sell some puts, but it never actually went lower than that one day. I thought it was going to go a little lower.
In other news, President Trump's administration will move to reduce the impact of automotive tariffs by alleviating some double duties imposed on auto manufacturers. So there's a 25% steel and aluminum tariff, and then there's tariffs on top of the tariff. So some of them are going to get reduced, and then some of them will be subsidized to hopefully give auto manufacturers a little bit of a longer timeline to bring manufacturing back to the U.S., but still some industry experts say it's still not enough time. 18 months isn't enough time to totally change your whole logistics chain. That's just the way.
Got to start somewhere.
Yep, sure. But again, the plan not really worked out. Okay.
Ready, fire, aim.
Okay. Let's talk auto manufacturers.
You wait to get something done. Nothing ever gets done. Sadov will tell you that.
Okay. GM and Ford.
We played the GM earnings last night.
Oh.
And
Unchanged, maybe down 15, 20 cents.
yeah, it's pretty.
But the expected move was small in GM.
The expected move, I think, was $2.
Yeah, I mean, it's relatively small.
I couldn't get. Oh no, it's down. Yeah, it's down small. I tried to
30
get.
cents to 50.
I tried to sell some strangles on the close. We got some off earlier in the day.
Okay.
I tried to sell more on the close. I couldn't get filled.
Yeah.
Okay.
I wish I would have now.
Spotify shares fell as much as 8% in pre-market trading today after the company reported disappointing user and financial guidance. The stock leader paired some of those gains. Spotify reported yesterday that they have already spent $100 million for Q1 podcaster payouts for things like Theo Von and Joe Rogan and Call Her Daddy. And that's just for the first quarter. But for the first quarter, monthly active users did rise 10%. What did you do in Spotify?
I wish I did more of whatever I did, but I sold the 467.40. I went 2 times the expected move in May.
Okay.
Expected move was 70. I went 140. It looks like it's down 30.
Oh my goodness.
You're going to be fine. You're going to be great.
Oh no, it's gonna be good.
Yeah.
I just wish I had done a lot more.
Yeah.
All right. Well,
It was really, really hard to get a fill.
yeah, those markets aren't great.
It was really hard to get a fill.
Yeah. All right, we'll see what happens there. Microsoft says the U.S. can't afford falling behind China in terms of quantum supremacy. Microsoft's position is the latest sign that research into quantum computing is starting to heat up among some big tech companies. Microsoft set to report their earnings this week. You don't explicitly trade quantum computing stocks, but you do trade Microsoft. So
391 unchanged. It's rallied from its lows of around 350 and change back
It's
on.
had a really nice rally. I thought it got way oversold. At this level here, it's kind of, this to me is mid-range. If it goes over 400, it's not getting up by that. I don't love or hate Microsoft here. It's kind of perfectly priced.
okay, what's your current
Rank
position?
of 43. You're going to
Just
do
short
both
some
sides?
strangles.
Okay,
Yeah.
how are you going to adjust those going into earnings?
We're just going to center them tomorrow.
Okay.
It's not until tomorrow after the close.
Right, yes, I am aware.
Yeah, we're just going to center them tomorrow. That's all.
Palo Alto Networks, PANW, is acquiring Protect AI to boost its AI tools. The sum was undisclosed, but Palo Alto has been bolstering its AI systems to deal with more sophisticated cyber threats. The company's stock price is up 23% in the past year, lifting its market cap to close to $120 billion.
So we have Palo Alto Networks. We have a very small position. What's the stock doing today? It's unchanged.
Yeah, and I mean, I like the way they do this. I mean, they went back a full year, a calendar year, not
Sure.
just till January, and your numbers are exactly right. I mean, if you go to the end of the year, the stock's down $10
I'm not looking at it like
or
that.
something. Yeah, I mean, I'm just saying.
Yeah, I mean, we have a small position there. It's nothing.
Okay.
181 and change, where the stock maybe down 50 cents. It's basically unchanged, Tom said.
Alibaba is unveiled their Quinn 3, an upgraded version of its flagship AI model that introduces new hybrid reasoning capabilities. If that means something to you, great. But what are you doing in Baba?
I have a small position. We're a little tiny bit long, but I don't like the name Quinn 3.
Sweetie, are you a Chinese national? Because it doesn't matter what you think.
I don't like that name. Quinn.
Okay, but again, that's your inner gentrifier coming in, your colonizer being like, I want the name.
Wow, she called you a colonizer.
Yeah.
I like the name
Welcome to my side.
Sure.
Deep Seek.
What do you want them to name it? Eat, drink, and be Mandy? You want it to be named Mandy?
Don't think I'm Andy.
Yeah, you love Mandy. I know you do. Okay, well, I don't know what you want.
Quinn.
Hey, here's something that's crazy. The ticker, Pony, Pony, Pony AI. They are the Chinese Waymo. I don't know if you guys have been following this, but the stock was up 55% yesterday on news that they found a way to do like this self-driving cars, but with like 70% fewer expenses. So they slash the cost of the materials, components, sub-assemblies, making it even cheaper to produce like full self-driving autonomy. So jump on it. Come ride it. This pony.
I think of the shoes when I see pony.
I think of the shoes too.
Do you? Gym shoes?
I think of the song by Genuine, and then I think of Magic Mike.
Was it with the kid we grew up with? Came up with the concept for pony.
Really?
Yeah.
Who was it?
This kid I grew up with, it was his dad.
Yeah?
Came up with pony, the sneaker. You remember?
Sure. Did he meet Walter Payton?
No,
He did the iconic pony ads in the 80s.
I know, but they sold it. It was in the 60s and 70s.
Oh, gotcha.
$10.60, up 30 cents. A hard to borrow stock, so be careful in there. The options are going to trade funky.
Yeah. All right. But I just thought I'd mention it's the Chinese Waymo. Waymo.
I mean, I don't know if I'll ever use that, but
I mean, it looks like it was.
But you can trade it. Not that you have to use it, but it trades in America.
I'm
for now.
Surprisingly, I'm going to say this. I have no issue at all with using a driverless car.
Wow.
Because you tried it. Because
I
you were
tried
in
it.
one.
I have
Before
no
that,
issue
you
at
would
all.
have said something different. Right?
Totally fine.
Hey, Duolingo, DUOL, will gradually stop using contractors to do work that AI can handle. I don't know why companies come out there with this stance and they think that this is going to be well received by people, and it's simply not. But good luck to you, Duolingo. Being AI first means the company will need to rethink much of how they work. For a case study example of this, company that just had earnings and is kind of struggling is Spotify. Spotify tried to replace a lot of their sort of very specialized work with AI, and then their Spotify Wrapped for the last year, the worst it's ever been because they just used AI. Like, it was a terrible user experience.
We've experimented with some things just using AI, and so far, no bueno.
Yeah.
I saw pictures of people asking AI to make their dog human.
Oh, yeah.
And then they cry because the dog looks so cute.
Yeah.
Anything else like that.
Oh, yeah, that you don't want to do.
That you don't want
Yeah, no, that's cute. I don't know if you could trade Duolingo. I don't know, or Dua Lipa.
That you don't want to do.
But
Don't tell my wife about that site.
Oh, now I'm going to.
I'm going to tell her. I'll do it for her.
384 is where it closed. 300, 400 shares have traded. Really hard to tell. May 1st, it has earnings. I know it's not going to be any concern.
OpenAI says that they have updated ChatGPT's web search capabilities to improve online shopping for users with personalized product recommendations, with images, reviews, and direct purchase.
Don't get that. It'll look horrible on you. Makes you look fat.
That's what I'm going to program it to say.
Isn't that what you want, though? Like, you want like an unbiased opinion, right?
From OpenAI? No.
I mean, honey,
Don't you think you're already getting that with all your TikTok ads and everything else like that? You're already getting your shopping preferences.
Brutal. I think
the move comes as
brutal honesty of AI would be great.
The move comes
kidding,
as
right?
Wait a minute, you're going to go out looking like that?
As OpenAI is moving.
Are you wearing that?
To challenge.
No, seriously, you wore that today?
The move comes
One time, I think Chandler, she was brutal, but said to Sasha, "You're kidding yourself, right?" When she was getting ready for school, like they were ready to walk out, she's like, "You're kidding yourself, right? You're not going to go to school like that."
I've said before, you're changing, right? That didn't go over well.
Well, anyway. Hey, Temu has already started to add import charges of 145% after the tariffs have kicked in, doubling the price of many items. People took to social media sites like Twitter to say that they bought a $19 dress, but then they were charged $44 and then another $22 for tariffs, import fees, taxes, thereby doubling or tripling the price of some items. A child's bathing suit priced at $12
they should send back
is
a
going to
message.
cost $30,
Send back
$31.
a message just to say, don't worry, it's going to be good in the long run.
You know what? It's 100%. This is the way it should be. America first. Let's get the jobs here. Let's get the manufacturing here. My son did the same thing. He went and bought some. Wanted to buy like some cheap.
And sweetie, who's going to work in these jobs?
$70.
Who's going
$70
to work in these jobs? Is that where Vinny's going to go? He's going to go work in a factory?
Whoever wants them.
Okay.
Whoever wants them. Because everything is, who wants to work at McDonald's? Everybody wants to work when the pay starts equaling what they have to do. That you'll figure out when the time comes. And if not, then you'll roll them back. Who cares? But it was $70 for 10 T-shirts to get delivered.
You
He didn't do it.
have lost your mind.
Now he's going to go to PacSun and buy it right here or someplace else.
And where does he think
Or Hollister,
where does he
wherever.
think that the shirts at
Who
PacSun are
cares?
made? Though?
Doesn't matter. You want the sweatshops, then you support the sweatshops. Pay the $70.
You are truly an idiot.
Hey, Timu,
all I can
PDD. Timu
Truly.
is PDD.
It has the opposite because
You are truly an
because
idiot.
somebody won on an America First platform,
You
and that's
are-
exactly what he's doing.
You are.
I mean, you
truly-
shouldn't. The majority
Stop
voted.
now before you
The
embarrass.
majority voted for America First. This is what you got.
Majority of what? The majority of 30% of America. You are
The majority of
truly-
people who
stop,
voted.
stop
Hey,
now.
PDD. Can we talk
You're
about
embarrassing
PDD? You guys, this is fruitless.
You got to say
It's
both sides.
pointless.
You're embarrassing us.
You got to have
PDD.
both sides.
PDD.
No,
We heard you the
Tom
third
do it.
time.
You're asking him about it.
PDD.
We heard you the third
PDD.
time.
He's
All
got a
right, that's right.
computer over there.
Amazon is launching its Kuiper internet satellites in a bid to take on Elon Musk's Starlink. These LEOs, or low Earth orbit satellites, are the first launch was postponed due to weather, but Project Kuiper is Amazon's plan for a constellation of thousands of internet beaming satellites. What are you doing in Amazon? Amazon also set to report earnings this week.
Up $1. Make it out May 1st.
Small Amazon position on no delta.
Okay. Hey, Meta isn't the only social stock reporting this week. I did not know this, but Reddit and Snap also have earnings this week. I know you're not a big fan of Meta, or you don't really have a position in Meta,
Meta position.
but Reddit though.
We had a Reddit position. We do not right now.
May 1st seems like Mayday.
Do you think you will
stocks
trade
rallied.
it, Reddit, for earnings?
We've been trading a lot of Reddit, but the stock has had such a monster rally
Okay.
that I don't know if we'll trade it here. I mean, to be fair, I thought Reddit was one of the best buys on the board in the 80s, maybe even in the 90s. But at 120, it's a little different to me here.
What about Snap?
Got up to 220.
I know. But on
down-
the way
wow.
down, on the way down, it was one of our best trades.
Okay.
Absolutely. In the middle of the panic, buying Reddit was easily our best trade. Snap, I haven't traded in a long time. I don't even know where it's trading. $10 still? I don't know.
Which one?
Snapchat? I don't know.
Snap.
I haven't traded in
I know we don't ever talk about Snap. Where's Snap?
$8.89.
Oh, so
Ooh.
they've killed it.
offer.
Where's Snap?
I don't really trade a lot of Snap. When it was up around 10 or 11, we traded it a little bit. Maybe
It
that
has
was
earnings tomorrow after the close.
Yeah, their results could offer insights into the state of the digital advertising market. Shares of all three companies have had a tough start to the year amid economic uncertainty. Hey, in some food news, KFC, Yum Brands, bringing back chicken and waffles. Ooh. The fast food chicken chain announced they are bringing back the popular menu item for the first time in 5 years. It features original recipe fried chicken paired with a thick golden brown waffle with pockets of pearl sugar paired with sweet maple syrup. Although legally they can't call it maple syrup. KFC is also introducing a strawberry and cream pie poppers with strawberry and cream filling in a flaky crust as a new dessert option.
think they actually
Both
make
items now available at KFC.
Not a chance.
Do you think they actually make those?
Not a
waffles,
chance.
Or
Those
they
are
just-
frozen. Not a chance.
That's what I think.
100%.
They ship them in, right? And they just, those look.
I don't know.
Well, I mean, think about it.
It's just batter and like milk. Like they might have a powdered product and then they
I
just
just
add
don't think
liquid
they-
to.
I'd be proud of them if they did. I don't think they do.
I don't know the answer.
I've never had that.
But would you eat this?
It's a new item. You couldn't have had it.
Well, 5 years ago.
5 years ago, it was there.
Do you have it? When was the last time you went to KFC?
I go there every week.
Would you eat this?
Mikey, eat it? Yeah, he'd eat it. Believe me. If it was sitting out there on the big boy table, somebody
of all-
he'd go like this. What's this? A waffle?
I've never really ordered chicken waffles anywhere.
You ain't never been to Roscoe's?
You've had chicken and waffles. You've had chicken and waffles. I've probably been with you when you've eaten
As much as you go to LA, you never been to Roscoe's?
I have never been to Roscoe's.
Wow.
Never.
We have a Roscoe's on the south side. Like it's the Chicago version of Roscoe's.
I've never
It's
been to the one in LA. I passed by it.
Your place where you would get the crab cakes, you never tried the chicken and waffles? I'm sure they had it there.
Which place for the crab cakes?
Where you would get your crab cakes.
Wishbone?
What's it? Wishbone. Thank you very much.
No, I get the. I never.
I know
get
you always
crab
get the
cakes.
crab
I
cake.
get
You
the
never tried
crawfish
the
cakes.
Whatever cakes for crying out loud.
No, I don't.
A fresh
think
one?
I don't get chicken waffles.
Have you done?
I don't
Hey,
really
finally.
understand the concept of chicken waffle. Why does chicken
Something savory.
Well, you know what? When we go to Atlanta, we can get
I
it.
don't really care about chicken waffles.
You know actually who has really good chicken waffles is up by you? Batter and Berries. They do it's a
never
really
do.
good, like a sweet
are you doing in South
potato,
North neighborhood?
like a sweet potato waffle. Because I'm supporting a black-owned restaurant because I'm America first.
You know what?
About time you give a little bit of two-sided
Hard-
action on
it's
the
hard to
news.
get
I
into that
mean,
place.
I know, but you gotta get up early. You're always up early though.
I know. I just never think about that place.
Hey, here's something interesting though. 5 down, 45 to go. Pennsylvania has now joined the multi-state online poker player pool. Another small but meaningful step in the fight to re-legalize online poker in USA. Governor Josh Shapiro officially signed the agreement for the state to join the multi-state internet gaming agreement.
think Jules will be making a road trip?
Are we bringing back online? Because I remember the heyday of the Chris Moneymakers and the online poker, and everyone thought they were going to become poker millionaires and poker stars and all this, and then it got shut down. But now we have legalized gambling.
Yeah, that's
though.
what I'm saying, right.
Do we need online poker, or because I'm really worried? I'm not joking.
Need it?
I'm worried about young men.
We don't need online poker.
Right.
I mean,
That's what I'm
We
saying.
need it to survive.
That's what I'm saying.
I don't really care if they have this one way or another. It's
That's what I'm saying. Well, 5 states have joined forces now. So only 45 more to go.
I hate the fact that states control gambling because until they don't, the odds are never going to be fair for the customer.
Oh, sure. I see what you're saying. Yeah. Hey, finally today for my viral video of the day. I'm just titling this "Why Women Live Longer" Part Infinity. I love just this compilation of men just doing men things. Please be careful with tools. Watch this.
You get this part up in the air, you want to grab yourself a hammer?
Ladder session. This is never good. Oh, ooh.
In case you're questioning my judgment in buying this instrument, this fine instrument made in America,
That's you, Bat.
it does have
I did that last night.
Okay.
You got a Tesla
Make sure it's a
coil.
low.
So no
Thank
joke,
you, Beth.
no lie. I told you I'm redoing my closet for my wife, and I was moving an outlet. And of course, I don't shut off the power first because I'm not.
Because you're a man.
I'm not going to
You
make
have
wires.
to shut off the power. Yeah.
No, I'm not.
That's-
Well, I'm in a closet. I mean, I can't see then, and I want to go downstairs and get a flashlight.
Get a headlamp and
The hot wire touched the metal that I was doing to blew all the fuses in the upstairs bedrooms, and I had a nice
SMRT.
little spark.
Cool. SMRT. You don't mess around with electricity.
Electricity
man.
is bad
No,
news.
you-
So I shut the breaker off.
Yeah, that's
Got
the way to
downstairs
do it.
and left that. That's good too. We're gonna take a quick 90-second break and come back. We got more Tasty Live sound of when? In about 90 seconds. That's right. We'll be back in 90 seconds with Tasty Live.
I'm gonna go drink heavily.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
market's 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tastytrade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a look at what's going on in the market. Even the S&Ps down 6,025 cents. Sound off. Decent 40-cent wide, $40 range, 40-point range, 40 handle range from 73 to 33. That's just the two last digits there. NASDAQ down 24. Other side of the coin, you got the Russell basically unchanged. The Dow up 130. Dow, the leader of the clubhouse, to the upside. I guess the NASDAQ, the leader of the clubhouse, to the downside. Volatility up 23 cents. Hanging in there, just under 24, Sadnov. I did not think over the last, almost 2.5 weeks of trading that we'd have volatility over 24 or so. Bonds down 8 ticks. Bitcoin hanging in there at 95,600. You can see it the last 4 days going sideways at the high end of its range. Oil down $1.23, 60.82. Gold down $26. You have to catch a little bit of a rally yesterday. Been going back and forth the last couple of days. Silver up 41 cents, doing the opposite of gold. Good for your silver gold ratio as your short gold, long silver, kind of taking back what it did yesterday. On the earnings front side enough, I guess the big mover was Spot. It was down around $50 at one point. Looks like it's down $40 right now. It's been oscillating down between $30 and $40. PayPal was another one. I think you have a position in, correct?
Yeah, small one. I sold
PayPal up small, about $1. You had
up small? It was down earlier.
PayPal is now up small, about $1. 65.90 on the bid. It closed at 64.
Because it was trading 62.
It was. Markets are dynamic, so
yeah, we sold some naked puts in there, so we'll be happy about that.
Royal Caribbean not going bankrupt, up $7.
You can buy all the Royal Caribbean cruises you want. That's it.
That's it. I guess I can say General Motors down small, UPS up small, $3. Caterpillar for today, Starbucks for solar. Talk about that at the end of the day. Visa.
Yeah, we don't have that much going on today, earnings-wise. Most of it's tomorrow, the next day. Mm-hmm. It's Tuesday, April 29th. Is this the last day of April?
Nope, we got one more.
30 days has September, April, June, and November. Don't you remember that from grade school?
No.
What were you doing that day? Were you absent? Did you have a note?
No, we were probably reading Shakespeare.
Yeah, of course you were, with the other 70%. Right, okay. Yeah,
I'll be teaching you. Okay, Tony.
Yeah, because you used a lot of that Shakespeare, right? Instead, I'm the moron. Like you said, I'm an idiot.
Tony,
I'm an idiot, but I know there's 30 days in April.
April has
you
30
don't,
days.
Right? So practical application in life, I know you don't. You know Shakespeare.
Improv that Shakespeare. Tony, 30 days in April.
Yes.
Got it. Okay, got it.
Which one helps you?
The improving Shakespeare, obviously. Today is Tuesday, April 29th. One more day to go in April. We'll put April to bed. All right, let's do it. And officially, I think summer starts for me beginning of May. Yeah.
It's in 2 days.
Officially. Official summer starts when they roll March futures, but we're going to give it a little bit of a little cushion here. I watched a research video on Tastylive recently. These are emails that came into us from viewers all over the world. Every day we take about 6 or 7 emails out of, thousands, and just throw them up here for confirm and send. It's fun. I watched a research video on Tasty Live recently and had a bunch of questions on some of the mechanics and math equations used in this segment. How can a retail trader actually use this very heavy research practically?
No, I think it's very easy. We talk about, percentages per trade that you put on. I think that's something that a lot of retail investors never looked at. Usually they have a hunch and they bet a bunch, and that's not how you become successful over time. So I think you use a lot. I think you lose it pretty good.
Years ago, actually almost.
I'm sorry to interrupt you. Who's ever talked about a standard deviation staying inside of it or outside of it, depending on what you wanted to happen? Nobody.
Tasty's a really interesting network that we created 15 years ago. Nobody ever thought of doing options research and pushing it out. There were you could buy newsletters and stuff like that, but there was no such thing as there was no option research on YouTube. There was no option research on the internet, that kind of stuff. And so we put together this crazy network, and we decided everything is going to be research-based. It's all going to be math-based, statistical, probabilistic, quantitative. It's all going to be our own research. We built a think tank. Now, there's probably dozens, if not hundreds, of people online giving you their option takes and this and that and their own research. Please don't send me other people's research because I really don't give a crap. Tasty, we spend tens of millions of dollars researching stuff, and we're going to stick with the findings of our own research. And we don't
no agenda. I mean, it's free.
We have no agenda, and we don't care what anybody else says. Because most other people just, when there's people out there, they just want to find, either a little hole in something we've done or try to find, dispute it. And we're not going to play those games. We just do the research every single day. We have a huge research team here of just data science, mathematicians, physicists, whatever. And we just push out the research. And whatever you can pick and choose out of it, that's the cool part. We just throw out, we try to optimize everything. And then you take it and use it however you want.
Right. But you got to pick and choose.
There's no agenda. We don't sell anything. There's no agenda. Just pick and choose whatever you want. We try to give takeaways, and we give lots of different takeaways. Use those takeaways. You can use all those takeaways practically. Some are more complicated. Sure. Stuff like Jacob does or Gad does or Kai. They're kind of tough. Or Julia. Those are not easy, but there are a lot of really cool takeaways in there. And we just pump out new stuff every single day. There's never a repeat.
Right. Like April is the new February with only 29 days to it. You have to pick and choose what you decide to use.
Not exactly the kind of research we do. Let's go next.
Well, it says April 29th, the last day of April. It's the new February. Now, audience, that's not true. And Tom was probably making a joke because he wouldn't make a silly statement like that.
Next slide, please, Beth. And can you turn off Tony's mic? When viewing your holdings on the position tab, do you use the group buy ability? And if so, which do you tend to use? Symbol, order chains, custom, or sector? Is there any advantage to one over the others?
I think there's good advantages to it. I haven't used it, so why would I say there's good advantages to it? I would say because, you can go through your positions. I don't really care if I put something on as an iron condor, if I have multiple positions in something and then roll up one side or the other where it came from. But a lot of people do. And I get emails all the time about the group buy. Most people group buy, strategy or the stock symbol itself.
Okay, so I do use group buy.
Do you really?
Yeah, sure. I actually think, I thought everybody used it, but
how do you?
I do it by symbol.
Okay. That's
It's
what
just by
most
symbol.
people do by.
Yeah, I'm not interested in strategy. I don't customize it, or I don't do it by sector. I just do it by symbol, and that's it. And so I've always done it, no matter what. I've used group by and I group by symbol. That's it. Mm-hmm. Is there an advantage? No, it's whatever you feel most comfortable with. I think symbol's easiest. Let's go to the next slide. What do you do when you're in a position and you're having trouble closing it? How far off mid-price will you move?
Closing it. How far off mid-price will you move? I mean, if you're trading a liquid product, this is hard to say on just anything because, you could be trading a liquid product like SPY and it would be a penny or two. And I would almost, say you're going to be guaranteed a fill on a tick on the stock. You know, you go to other liquid products that have maybe wider markets because they're bigger products than SPY. Then maybe you have to move a nickel, 7 cents, but it's not far. And sometimes the mid price, if you have an option that's 20 cents wide by an option that's 5 cents wide, that mid price, you watch it fluctuate 10, 15 cents on its own. So you got to be a little careful.
If you have a market that's moving all over the place, you'll have a tendency to get filled somewhere near mid price because it's, we're moving all over the place.
Mm-hmm.
If you have a market that's kind of like quiet, like yesterday was, just as an example, you're going to have to move it, like Tony said, in the SPY, maybe like a penny or two, but and then futures options, maybe one tick.
Yeah.
But in something else, like if you're doing PayPal or General Motors yesterday, I had to move it 2 or 3 ticks, 2 or 3 pennies. In some cases, in Spotify, I had to move it like 7 cents. So you just have to play a game of price. It's called price discovery. Futures options don't really have price discovery. Everything is one tick off mid price. Listed options, because they're smaller, they have what we call more price discovery. And so, you can reduce your size to 1 and then test it and figure out the price, or you could just move it 1 or 2 pennies. You're fine. That's how we do it.
Mm-hmm.
We don't play games. Like if we want to get filled, we get filled. That's all there is to it. Like we just don't play games. Let's go next slide. Are your mechanics the same when it comes to covered calls? Let's say I have a covered call on. Would you close or roll at 21 DT? Or because you're okay with losing the stock, would you keep the short call until expiration?
Yes and yes and yes. I mean, I'm going to roll at 21 days or close at 21 days, use that buying power, even if I want to lose the stock, which I don't think anybody ever wants to lose the stock, because if the stock were to close right at that short strike and you didn't get called away, you'd have max profit on the call, you'd have max profit on the stock. So it's subjective here. At some point, you get to a point of diminishing returns. If the stock goes too high, you basically can't make any more money, and the money that you're using there, the buying power is just sitting there. So I roll at 21 days. It seemed to work the best for me. Maybe it'll work for you too.
Same mechanics. I roll at 21 days. So are the mechanics the same when it comes to covered calls? The answer is yes. If I have a covered call on, would it roll or close at 21 days? Yeah, I'd roll at 21 days or I'd close at 21 days.
Mm-hmm.
And I mean, if I had to lose the stock, if I was just dead set on keeping a stock, sure, I don't care. But it would be incredibly rare. I mean, I might accept getting put a stock from selling a naked put before I would have a long stock and a call called away. Just so you know.
Mm-hmm.
Let's go next slide. Oh, this person writes, lately I've been trading 1 data expiration SPX and NDX options. I had a short bias today, and I only entered a short call credit spread with a max profit of $135. Within a few hours, I was at 60% of max profit. Should I have closed it and taken profits, even though it will count towards pattern day trading? Or should I just wait till tomorrow? What would you or Tony do?
So I'm assuming that this would just be his first one round trip. I would
assume that this doesn't put him over.
Right. I would close it because 60% is a home run in my book, especially in a couple
so
hours.
There is.
I would think about ES options just because.
Okay, I was going to mention that. I wrote back to this guy and said that. So there is no question. A couple things here. There's a lot to unpack here, but there's no question. If you're up 60% on this trade, we take profits. As long as it doesn't put you over the pattern day trading limit. However, Tony and I would always take profits. We're never going to wait till the next day. And if you'd
regardless if we continue going in the same direction, you make a full 100% too. So,
and if you had waited until the next day, most days you would have probably lost it. So no, we hate the idea of waiting till the next day, and we definitely would take profits. But if you have a pattern day trading issue, you got to be really careful about trading 0 days and 1 DT if you have to take profits. Like Tony said, you might want to consider ES options. They're half the size of SPX options, and there's no pattern day trading rules.
Right. The reason why I say ES, or you said ES, I think the size is a great point. I would not have mentioned that, although it's a great point. There's no pattern day trading for that.
Yeah, but the difference with SPX is it settles to cash. ES options settle to the future. So it's a little more complicated. So, but if you're going to close early, it makes no difference.
Yes, right.
But if you're going to hold to the very end of the day, you better know what you're doing when it settles to the future. But if you're closing early, it doesn't make any difference. It's just half the size, and there's no pattern day trading for ES and NQ. Let's go next slide. And the last one. This person writes, it's a long one. If my plan is to use my option trading income to help with my expenses when I retire, which metric should I be more concerned with? The net lick or the realized P&L? As an example, say my net lick is 300 grand and I don't want to fall below that. Each month, could I withdraw the amount over 300 grand to use for a living expense? As an alternative, can I withdraw the realized profit from each month? Which method is more accurate? Which method is more accurate and more sustainable?
All right, you're going to be doing this for retiring in the future. I'm not 100% sure that I would be taking the money out now and keeping that $300,000 level. Although I guess you could. I never did it when I was just using my trading for just my income. So I always kept.
This guy's asking, I would use
my net lick.
Okay. That is exactly the answer that I gave. Just want to make sure we're on the same page. Tony and I use net lick for everything. Your net lick is the value of your account. And assuming that you're trading efficient liquid products, not something that's got crazy wide markets or 2027, option prices, but assuming you're trading stuff that's reasonably liquid and the markets are efficient, your net lick is how much money you have. The realized profit means nothing to us because you could have unrealized, realized profit. Who knows what that means? The whole key is your net lick. Everything's based on net lick. Everything we do, all our research, everything is based on net lick. It's never open P&L. It's never realized profit. It's always it's never option buying power. It's always based on net lick. Everything is based on net lick.
Good job out of you. Good job out of me. Good job out of our viewers for asking those questions. We're going to take a quick 90-second break and come back. We got an option jive next. We'll see how good that is. This is Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tastytrade, named best online broker for options trading. Genius loves company.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really Tastylive until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
It's options.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. What do we got, Sosnoff?
We got SPOO's down 30.
SPOO's down 30, trading near their lows of overnight. That is correct. You are there. 25.21, the low 25.24 right now. NASDAQ, which was the lead of the group to the downside, still is down 130. The Dow and the Russell are both up and now are both down. What happened?
I don't know. But last night when they were up, I couldn't resist selling some S&Ps.
I saw you sold them at 55.70, 3 ticks off of the highs.
How did I do that?
Because you knew you were going to close them 10 handles later.
Well, I didn't know.
I'd rather have the 10 handles. I don't have them.
I waited till I woke up in the morning.
You woke up at 4:25. You went to bed, more importantly, you went to bed after 9:02. That's late for you.
Well, what time did I sell the futures?
9:02.
Well, I must have been up.
That's what I said. You went to bed after 9:02. I know that April doesn't have 29 days, and I know if you made a trade at 9:02, you had to go to bed after 9:02, obviously.
I was watching the game.
Oh. Game was over by now.
I don't know what time the game was over.
Okay, well,
then
you were up. More importantly, you were up at 9:02. That's a late night for you. No wonder you're a little crabby.
I was up a lot later than that.
Were you?
And then
you woke up at 4:25?
I woke up at 4:01.
4:01?
I get up at 4:01.
Every day?
Every day.
Not 4 o'clock? 4:01?
4:01.
You set an alarm?
Yeah.
For
But I don't need
4:01.
it. I'm up anyway.
You do that so that you can win the prize in case
No,
you
I'm
get
just
a
up
pin
at
at 4
4:01. I
o'clock?
like 4:01. I like getting up at 4 because my brain works better. So I can answer emails. I can do other things. I like 4 to 6 in the morning.
Like 7:30, it's shut down, right?
Totally.
You set an alarm?
I have an alarm, but I don't really use it.
I just asked you. You set an alarm at 4 o'clock.
I have an alarm that says set up 4:01.
So you do. So when she asked you, do you set an alarm? The answer is yes.
I don't believe it.
Here, ready? I'm going to go right to my phone. What time does it say?
4:01.
Wow. I'm impressed.
So when she asked you a question, do you set an alarm? The answer is
yes, but I don't need it. Is what I said.
You know what? You're impossible.
I don't need
You're
it.
the best.
Mm-hmm. Sure you don't.
The important people at this firm are up at 4:01.
I was up at 3 o'clock. I was up at 3 o'clock. I was up at 4 o'clock because my wife was having a night.
Not that kind of night.
Not that kind of night. No.
All right. Can we move on?
Yeah, I'm ready to go. You're the one that went to this.
How reliable is Theta?
I mean, as reliable as any other relationship I've had, probably better.
Oh, that's the best relationship you've ever had. Me too. Theta's my favorite relationship in my life. Yeah. Who would have thought we'd be talking about how reliable Theta is at this point in my life, but how reliable is Theta? It's our most reliable relationship. I guess there's your answer.
End of story.
Yeah.
You go right to the opening bell.
Yeah. Let's go, Beth. Next slide. Theta is perhaps the most central Greek to short option premium. It says how much a short option position expects to profit per day, provided everything else stays fixed. Of course, everything else stays fixed. Pretty much never happens in the market. Spot prices and volatilities are both highly dynamic. Still, over the long run, as underlyings go both up and down, our thetas might give us roughly how much we expect to make. So here's the question that we're going to solve today. does this intuitive shortcut play out in reality? And how does an options daily P&L tend to relate to its current theta number? You want to take a guess?
I mean, I'm 70% of the time. I'm going to go with the standard deviation.
Let's take a look. 15 years worth of data. We considered short individual option positions, 45 days, and consistent initial out-of-the-money deltas. We compared the realized daily P&Ls to the closing theta numbers from the previous day. And we tried to solve for the following. What was the average absolute size, plus or minus, or the difference? Did the short options over or underperform their thetas? And what was the net difference, P&L minus theta? How frequently were P&Ls greater than yesterday's closing theta? And when one was greater, how much was it typically greater by? We repeated the analysis only looking from 45 days to 21 days, assuming the trades were closed thereafter. This is what we call heavy stuff, okay? But we're going to see how reliable theta is. Hang in there, Tony.
I'm going to try.
Let's go next slide. Okay. So the first slide we're going to look at is going to be short calls. And again, these are 45 days to expiration. And what we did is we put a bunch of numbers on the board just to see. And again, this is 15 years worth of data. And we're just seeing kind of like, okay, net average P&L from theta. And then the frequency of the P&L is greater than the theta, which is which are the two numbers on the board so far. Then the average difference when the P&L is greater than the theta, and then the average difference when the P&L is less than theta. And the objective here is just to kind of see how accurate are these numbers.
I'm just going to say I'm spot on. I said 70%. It looks like it's average of maybe, around 70%. I mean, 39 being the highest, 26 being the lowest.
So the takeaway is that the numbers
are as good as you're going to get. Nothing's going to be 100%, but 70% of the time it's 100% correct.
Well, they're not even. Yeah, the point here is that the numbers are on a daily basis. They're not as predictable as they are long term. That's what they're trying to say.
Sure,
is on a daily basis. These numbers are kind of like.
You've noticed that with today's market that we've had over the last couple of weeks compared to the month prior to that, they were a lot more accurate.
Can you go to the next slide, Beth? On the short put side, because the market has a tendency to drift higher, you can see on the short put side, the numbers are a lot better. And the net average P&L minus the theta, the numbers are strongly better, and the frequency of the P&L being greater than the theta is much higher because puts are more reliable as a moneymaker. Short puts are more reliable as a moneymaker than short calls. And so you can see the numbers are much stronger here. But again, the purpose is showing that these are not perfect on a daily basis at all. And if you're trying to judge something from one day to the next day, it's quite difficult.
Yes.
But over time, there's pretty decent payouts. Let's go to the next slide. This is where we are at Tasty, the 45 to 21. The last one was letting the puts expire, letting the calls expire. And you can see how much better the short calls are when you manage at 21 days. This is your first sign that, hey, we should be managing these trades. But the other part of it is that the P&L numbers are actually much better, and the frequency of P&L being greater than the theta is much better. All the numbers across the board when you go 45 to 21 are stronger. If you go to the next slide, which is short puts, this is actually going to turn, really obvious into much more predictable returns on short puts when you can manage from 45 to 21 days. It's just really interesting to see all the consistency, but also to know that on a daily basis, you're 35 to 50% of whatever you expect.
Yeah.
Let's go to the next slide. And because I want to read these takeaways, because this is such a heavy piece. Across options, realized profit for short options averaged less than their thetas, especially for calls and more noticeably closer to the money. Yes, on the call side, it's very hard to squeeze the money out of the call side. One of the reasons is calls, these are S&P calls, because calls trade cheaper than puts, so you don't get nearly as much juice, and the market has a tendency to go up more than it goes down. So squeezing money out of the calls on the theta side is tough. This didn't mean that short option positions weren't net profitable, just not as profitable as theta alone might suggest, with significant variability around the averages. So these effects were diminished when the trades were managed early. You basically take a ton of risk, if not mostly all the outlier risk, off the table by managing early. As spot price and volatility changes, they drive option prices. Daily option P&Ls tend to be more dramatic than theta, both positively and negatively. And this is another reason for making small, frequent trades. It takes a lot of occurrences for the overperformers and underperformers to cancel out and leave you with long-term profits. One of the things that we learned from yesterday's piece was we did a piece yesterday that was all about the reasons why you got to trade small and trade often. It was all built around law of large numbers and lots of small trades. What this does today is it shows you that if you trade just based on theta and think you're going to be able to cherry pick a certain day or days, you can't really do that. That's why you have to sell the volatility when it's high and wait till it comes in.
I love it. Good job at the team. What would you say the percentage was then? Because it looks like it was actually less than.
Yeah, it's a little less than 50%. Is what he's saying.
Yeah.
So he basically for puts it's around 50% of the time. For calls it's around 35% of the time.
Let's take a quick 90-second break and come back. We got more Tasty Live immediately following these messages with the opening bell next. But there's no.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade.
And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. That's what I do.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tastylive.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right, with the opening bell, you've got about 3.5 minutes or so. Even the S&P's down 23, about 7 or 8 handles off of their lows. NASDAQ, leading the clubhouse to the downside, down 111. Russell was higher. It's down by 6 now, joining the E-mini S&P's NASDAQ. And the Dow is the only bucker. They're basically unchanged on the Dow. It was the strongest of the group all morning. Volatility up by 34 cents, give it a little bit of... a little bit of help to the downside here. Volatility stays bid. We'll see. Bonds down 4 ticks, 116.08 mid-range for the day.
They're dead. They're dead to rights here. Bonds. I mean, they've had their move. They're done.
They've had their move and they've had their volatility too. It seems like volatility's come in too. So
a lot.
So you've lost that too. Bitcoin 95,600, basically unchanged, although hanging in there at the high end of its range. Oil down $1, gold down $23, but you can see here gold going sideways to higher last couple of days. Silver up 41 cents. There's your Bucker Sosnoff. Some of the stocks that we look at for earnings today. You had Spotify, well, earnings last night into this morning. Looks like 555 on the offer. That would be down around 40 or so. General Motors was another one. General Motors 45.87. Well, let's just call it 46. We'll get the middle there, down $1.20 or so. Royal Caribbean was to the upside. Let's see if it still is. It is, but it's a lot smaller, only about $4.5. It was 7 earlier.
I didn't trade that. I only traded PayPal, Spotify, and General Motors.
What's your soup du jour for today? Caterpillar, STX, Starbucks, First Solar, Mondelez, Visa, SMCI. Visa, I think, is the only one you really have a position.
I don't even have a Starbucks position right now.
You
Visa,
don't?
I don't. I have a Visa position, and I had an SMCI, but I think I took it off. I did. So I got a Visa position. That's it. I might trade Starbucks now that I'm in the coffee business and I'm practically a professional.
Practically, that is correct. That is correct.
And something else.
So, and you're something else?
Oh, something else. No, something else I had for SMCI and Starbucks. Maybe trade both those.
Mm-hmm.
Yeah. Corinne tells me last night, she goes, I saw that Starbucks had a lavender, she goes, I saw you wrote about lavender lattes. And she goes, I saw Starbucks had some kind of matcha foam, lavender latte, something.
You got that.
She goes, why don't you guys have that? I go, we do. She goes, what?
She's just looking for an excuse not to come.
I know.
And she's like, I drink a lavender latte. You don't have that. We have that, honey. I'll stick that in your pipe and smoke it. Mm-hmm.
I go, you go Starbucks. I go, you go Starbucks. That's
she can't do that.
That's going against the family.
Yeah, she can't.
I know. No, she won't.
That's not right.
No.
Right? I mean, even I wouldn't do that.
She would never go against the family.
Right. Can't.
No, never. So.
Ooh, you just got a couple seconds here before the market opens.
No, I'm ready. Give it to me. 16 seconds, 15. Like when the bell goes off.
I know you do. We have a few of them that go off because you like it so much.
We have a bunch of bells.
Mm-hmm.
A lot of platforms open. Who's down 20? Did not see that. But it's okay. Works perfect. We're a little bit short.
What did you do in PayPal that you paid too much for? You bought some puts back on the 58 puts at 25 cents, the 57.5 puts at 23 cents.
Well, I put those in when the stock was down. I forgot to change it.
Oh.
Can't be that bad.
Oh my, yeah, you got ripped off so bad, son, for probably about a penny or two.
No, I bought the offer. But you know what? When I put the order...
No, you paid 25 cents. The offer's 28. The mid price is 22. They're 16.28. You paid 25.
I can live with that. I put it in when the stock was down. Wasn't paying attention.
This is why I can't leave you to do your own stuff.
Okay.
And your other puts are 20.29. You paid 23. You probably got the best fill of the day because you're a luck box. That's just how it works for you.
General Motors.
How does it feel to go through life? I mean, basically, oblivious, but
hey,
yet,
you could have made the trade, okay?
But yet you get by being a little.
You could have made the trade.
Oblivious. I'm trying to be nice.
I'm actually not oblivious. I'm actually trying to make you feel better about yourself, and missing out.
Don't worry about me, boo.
And missing out on all the good trades. Because
I'm okay.
Because your wife won't let you trade the earnings trades because of prior debacles.
My wife won't let me trade unless I make a phone call first.
Right. Tony is the only trader I know.
But you can get my trades every Tuesday and Thursday. That's right. Option trades today when I just asked my work wife if I can make that trade, and he okays everything. So today after...
Tony's the only trader I know that has to send a DocuSign to his wife for a signature.
No, I actually have to do a physical signing. It's so old school.
A physical signing?
Yes. Mm-hmm.
Well, Spotify's got very wide markets, so I'm not exactly sure where these things
I don't know why you would be in there, but that's you because you're that.
Well, I'll tell you what.
Netflix down 11. Let's talk about stuff that trades instead of watching Sadnov hurt himself trading with the platform.
I'll tell you.
Costco down 6. What?
I'll tell you why I trade Spotify.
Yeah, tell me.
Because what we sold yesterday at 777 is 362 today.
Okay. Well, today you got lucky. It still
okay.
stinks.
So it's come in $3. That's why we don't. That's
okay. Sure. Okay, Kimosabi. Costco down 5, Amazon down 2 and change, Meta down $1 and change, helping the NASDAQ be a little bit lower. General Motors down $1.60, that had earnings. UNH can catch a bid down $1.58. General Motors down, I just mentioned that. Apple down about $1.20. What's helping this market, Sadnov?
All I want to tell you is Spotify, 314. We sold that spread. We bought it at 314. We sold it yesterday at 777. That's pretty.
Great trade.
That's a great trade. $4.50 on.
Much rather hear that than why am I in this? Don't ever make me trade this again, Bat. Markets in here are garbage.
So we are officially out of Spotify today, and that turned out to be a golden nugget.
Tesla up 2, PayPal up $1.75, Coin up $1.70. Those are your helpers to the upside. SoFi $14.40, so enough of $1.20. That's good.
I missed SoFi yesterday. My earnings slayer forgot to tell me. I'm just saying.
Now it's my responsibility?
Might be. General Motors.
And what would you have done in SoFi? Just a question.
Sold 12 puts.
Of course you would have. Sure.
That's exactly what I would have done.
In what? In May?
In General Motors, here's a surprising little... Let's see. We sold the spread.
I owe you 36 cents.
We sold it at 186. Tried to do more later on. Couldn't get filled. It is currently hasn't come in that much. Just so you know, General Motors. Oh, you know what? I did June. That's why.
Mm-hmm.
Okay.
You did May and spot. How come?
Because I should have done May and everything. General Motors 154. Sold it at 186. Came in 32 cents.
Better than a sharp stick in the eye.
So the earnings streak continues. PayPal, Spotify, and General Motors all worked out again. This has been probably the best earnings cycle we've had.
You did not anticipate that.
No. I said earlier when we had the big sell-off that when we get into earnings with volatility heightened, it's good.
True.
It's easier to trade earnings when volatility is high than when volatility is low.
Sure. Yeah.
And tonight we will take a quick look at before I get into all the other trades we have on, take a quick look at our Visa position. We have the 325, 350 in May. What would a new subscriber do? That's what we currently have on. Huh?
What do you want?
I don't know. What's the expected move in there? $20, right?
That's
$17.50
Yes.
in May.
Yes.
So move $20 away, takes you to the 350s, 360s. I don't know. What do you think about it? Which way are these things going to go?
Oh, you're the earnings slayer. I don't want to skew you. I don't want to hurt your feelings or anything like that. Tell you what to do. So you got this.
I got this. I just here's what. I don't want to let everybody know why I do this, but
yeah, don't let everybody know why you do this. Visa $337 in the middle of its most recent move.
What I like
both sides.
What I like to do sometimes is just act like I'm including you in my decision making, so people feel better about you, your own fans. Like that's all. I don't really listen to you. Okay, I widen my strikes. I am going to
reduce your size. Visa's not a great trading vehicle.
It's not
no matter what happens tomorrow on Sadnos, profit or loss.
305, 360. We have that strangle on. Let's take a quick look at SMCI.
SMCI.
$36. It's right in the middle of the range. IV rank is low.
Yeah, 26.
IV rank is low, but volatility in there, very high.
Yeah, $37 stock with 100% implied volatility. I'm just rounding between friends.
Expected move is $6.
You're going all the way out to May. Expected move is $2.70 for earnings. I mean, we could talk about the expected move being $21 if you want to go out to January of 2026. I mean, but we should probably stay to the earnings and state that it's $2.74. Otherwise, $6 would be misleading for earnings. Then you'd go to me, Bat. Why is this stock only moved $2? Expected move was $6. And I have to say, no, Savs. Expected move was $2.73 for earnings.
Oh my God, I'm going to kill him.
You want to play nice? We could play nice. You want to play mean?
SMCI. We're going to sell a few puts, and just to get just to get a position on. I'll do stuff there later, and we'll take a quick look at Starbucks.
May you sold the 29 puts, not even a Johnny like Nick.
And I just want some
position on Wednesdays.
I just want a position on so I can have something to talk about.
I understand.
And Starbucks, it is trading for $83. Have not traded Starbucks in a while.
Now this is a competitor. This is a competitor to your business. It's on its butt. And I know you have a quandary.
How much is Starbucks worth now? What's the market cap?
Market cap in Starbucks, approximately $95 billion.
$95 billion.
And they have a bullseye on their back. So I don't know if that's right. And you are coming after them.
Bad coffee's worth about $50. So
now the stock's on its butt. You're in the same industry. You know what a money maker it is. What do you do in Starbucks? It's going to be a quandary for you. Are you going to get long your competitor? Does money win over loyalty?
I haven't figured out how to make money.
Capitalist pig, you.
I haven't figured out how to make money selling coffee yet. I can't figure it out. It's very hard.
You making it on the toast? I should charge you more.
We lose money every piece of toast.
Is that your story? You're sticking to it.
It is.
No, we really do. No, I'm not listening to you. No, we really do. No, I'm not listening to you. Mm-mm.
Let's see here.
I'm gonna have to email my partner. Tell him we got to charge him an extra 75 cents a loaf. Would you like 75 cents or you want $1? What kind of tariff do you want? You want $1? Say something mean again. I'm going to make you loaves of bread $1 more.
I'm going to try to find out what I want to do here, but in Starbucks. But how come there's no volume in Starbucks?
Well, we've been open for 8.5 minutes. That could be a good reason.
I don't care. 336,000 shares trading on literally and no options.
Well, let's put some context around it. Starbucks trades on average volume is almost 11 million. So
on an earnings day, yeah, not much.
No, not just on earnings day. Just the average volume is 10 or 11 million. So I would expect that volume to pick up. If it doesn't, then you're making a good.
I think I'm going to wait a little bit before doing anything in Starbucks. So let's take a look at everything else this morning before we get into. We got Vecchio waiting in the green room right now.
Yes, we do. He still has a job, huh? I remember talking to him yesterday on the close. He was worried about job security, but he must still have it. You got the call in, Vecchio. Good job out of you, man. So sure about that Ilya kid.
We don't have any losers today so far.
Present company excluded, right?
Yeah, kind of. All right, what do you want to do?
You don't have any losers today? I mean, the market's basically unchanged, but you are right. You don't have any losers today.
I just said I don't have any.
What did you do right? Like, what did you do that made you so right today?
I don't know. Anyway,
what's your delta theta ratio? You're basically delta neutral here, and you got a market that's unchanged.
Yep, it's a good thing.
Yep.
And some good earnings plays. That's it. All right.
Buying
Let's
power
do it.
usage is a little on the lightish side.
I'm on the light side. Yeah.
Yeah, we got January. You're probably mostly in January, right? 52 days to go. So you should be a little light on the buying power usage. I mean, not light in your loafers, like light on your buying power usage.
Are you done? Let's bring in Vecchio. Beth, let's.
All right. We're going to bring in the Vecchio. Bring in the Vecchio. We'll be back in 90 seconds. This is Tasty Live. Bring in a Gip.
If you missed the live show, here's our cherry on top weekly recap.
Bat, how about you? What did you get up to last night? Any shenanigans?
Watched a little hockey. Watched my pool get filled up with water.
That must be exciting. When it goes to each level, what do you do? Like,
we have a party.
You have a party?
A party.
Do you fill it with cold, crisp bottles of Saratoga Springs?
No, you use Fiji water, don't you?
Avion?
No. Hose water, Sosnoff, so I'm going to tell the kids not to drink it. All right. Put up this picture. Can you please put the picture of me as an action figure? It looks
Did you
like
put him in a tracksuit. Is that tracksuit?
Tracksuit works. I don't really have tracksuits, but I do wear a lot of leisure stuff on the weekends, so I'll be good with the tricolor cookie is absolutely spot on. The coffee cup is spot on. The trading card is spot on.
It's a pink sheet, yeah, like a
disco
card.
ball, I can handle it. What I have a problem with is, how did Dylan Radigan get in my jeans? It looks like a collab between Tony and Dylan Radigan. It looks like Tom. Like, that's Tom. I mean,
that's because I did this one.
Right, that's Tom as a gnome. You're perfect. You did you, right?
Of course I did me.
Yeah, of course. I could have told you that.
So I have a can of Diet Coke. Liz and Jenny.
Can't say anything bad about that.
They have the zebra and the jade lizard. Jenny, of course, has a glass of wine. I did Jenny's. And her boat, her sailboat.
Yeah. You were very kind.
Also, I'm no dummy. I typed in the prompt, make her look younger and slimmer. I did Dr. Jones. So he has the dumbbell, a cold plunge pool, a calculator, and he's Florida man.
Jamal, perfect. The basketball, the football, the video games.
And the gears, because he's an engineer. Yeah, I did Julia's.
Yeah, perfect. She looks
She's the
great.
cat. So the thing, people think it's a chandelier. It's a quantum computer.
Mikey Butler's perfect.
Yeah,
Very
he's got the
good.
snowboard, the Chinese takeout, the dumbbell,
Yeah,
golf
perfect.
ball.
Mikey must have done Mikey. Let's go next one. Okay, who did my son dirty?
Was not me.
Okay.
It was not me. The same person that did yours did your son's.
Okay, they don't like Batista, so that's what I figured from the very beginning. Katie McGurgle's beautiful, perfect.
Katie is stunning. She is an icon. She has a Harry Potter wand, cowboy boots. If you haven't seen Katie try to teach Tom how to line dance, it's on our social. And then
Okay, now I know who did the Batistas. It's Gus. Okay, Gus did the Batistas. All of a sudden, he's all buff and What the? This is not. This is. Gus did the Batistas. I'm 100% sure. And Gus, I will be coming for you.
I should have been. This should have been me.
Yeah, he looks like The Rock. Yeah.
Mommy and Daddy are fighting, okay? And you guys are not getting along. I am not going to come in here and try to mend this broken bridge.
He's just having John withdrawals. That's all.
With you, it's hard.
She always has her A game. Wait, go ahead. I'll take the pressure. I'll take the heat. What do I do? I love this.
What's the line you always use? It's hard to fly like a turkey.
Fly like an eagle. It's hard to soar like an eagle when you're working with turkeys. Turkeys don't fly. We're like, I cannot with him. I just sometimes.
Wild turkeys
Did you just
fly.
call me a turkey?
What's that? Wild turkeys do not fly.
Yeah, Steph, I think you and
Did
me.
you call
I
me
think
a
this was
turkey?
more.
I didn't call you. I'm calling
No, I think
Scott.
Turkeys
it was
don't
me.
fly. They can get airborne for a second.
I called him a wild turkey.
You can get airborne. Well, you couldn't get airborne.
Turkeys
for anything.
fly. Turkeys fly. I've seen turkeys fly.
Turkeys do not fly.
A wild turkey doesn't fly, you're telling me?
You've seen a turkey fly.
When Tom's out on those survival missions that he frequently goes out on with just a knife, and he hunts.
When I'm
yeah, he
taking a
sees
hike
wild
in the
turkey.
woods, I've seen wild turkeys fly all over the place.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem! At Tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tastytrade, make your move.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live. That's right. This man Chris Vecchio, let me explain. What's up, Chris?
How are you doing today, guys?
Doing well. Thank you for asking. Do appreciate that.
Oh, you're welcome. Tom, how are
How
you?
you doing?
Good. Yeah, no issues, no complaints, no problems. Everything is perfect. I guess another day in paradise, you know?
I think Tom's lying.
Every day I get to spend with Tony is a day in paradise.
Oh, you see, now you're making me feel good. You really are.
That's beautiful.
I know.
It's a beautiful thing.
All right, what do we got today?
You know, aside from the light death threats on overtime yesterday, you did get my brain ticking about why a company like Boeing would not see its share prices decline in the face of news that China was returning some planes. Now, ultimately, that story is like really a non-starter. India is going to whitetail these planes. It's when planes are built for another carrier and they are sold to someone else. It looks like they're going to absorb all the Boeing planes that were supposed to go to China. But I figured, Tom and Tony, that this is probably a discussion that many people may not know the background on, and that's not the trade war here, but it's more about the underlying philosophies of how we approach the market. We've had a lot of new viewers here on Tastylive over the last few weeks because of the market turmoil, and so people may not be familiar with our trading styles and philosophies, and so I figured we could use this Let Me Explain to take a step back from the day-to-day market action and discuss some bigger level trading philosophy ideas. First and foremost, of course, is the notion that you said that fundamental news doesn't matter for traders, and it speaks to an efficient market hypothesis perspective. So, Tom, I was hoping that you could explain briefly as we work through some of these questions about trading philosophy here. What do you make of efficient markets? Do you find that markets are efficient, not just in the what you pay is what you get, the bid-ask spread being tight, but do you think that there are exploitable edges for traders and systems that traders can follow to make money in markets?
I do not. I do not feel that there are. Here, let me preface this. I think there are a few opportunities and cracks where there is some inefficiency in the markets, meaning occasionally you'll get an option that's mispriced because either nobody's following it or there's a big order or, there's a lot of confusion as to, volatility and pricing and, occasionally technology can mess up. So I can't say that there's never that, there's literally hundreds of thousands of different option series between listed options, futures options, and all the various derivatives markets out there. Technology makes mistakes. People make mistakes. Big orders can move markets. There's no question that occasionally there are opportunities that are where markets lose a little bit of their efficiency and they get a little bit out of line. However, for retail customers to think that they can operate within those parameters and take advantage of those opportunities, I'm telling you right now, it is virtually impossible. And the firms that do live in that world, it's super competitive. You need ridiculous amounts of capital. You have to plan on holding trades that you have no interest in holding for, a long period of time. And it's a very, very competitive, capital intensive game. And it's only for professionals. On the retail side of the business, the marketplace is efficient. And everything we do, and the reason we're able to do all the things that we do and live in this world of law of large numbers is because we play in an efficient marketplace. The reason you can be a professional trader is because the playing field is level. The reason I don't believe you can be a professional gambler, for instance, is because the playing field is not level. I know people think there are such things as professional gamblers. I would argue that if there is, it's a minuscule number, and I don't even know how real that minuscule number is. So to answer your question is you can learn mechanics like what we do here at Tasty, and mechanics are really important because mechanics allow you to play on that level playing field. Without the mechanics that we preach and we talk about and that we research, the playing field is very uneven. It's very hard to know kind of where you're putting yourself at a disadvantage, even if the pricing is efficient. It's very hard to understand all that stuff. What we do at Tasty, which is so cool, is we kind of optimize the mechanics to put you in a position where, hey, you know what? I get why I'm doing this. And now hopefully, what I think, when whatever happens, happens. But if what I think will happen happens, I will make money. And that's the position we want to put people in. There's nothing Tony or I or you or Ilya or anybody else on this network can do that will point people, to actually, we can't tell you what's going to happen next. We can't tell you this is going to make money, whatever. What we can tell you is, based on our research, we've optimized the strategy and the mechanics around that strategy and understanding what that underlying product is, so that if you have an opinion, you can take advantage of it. That's it. That's the best we can do.
Tony, I know this week's a big week for macroeconomic data. We have JOLTS coming up in a few minutes at the top of the hour. We're going to have the GDP report this week. We're going to have non-farm payrolls. Do you think that traders should be paying attention to macro data like this to influence your trading decisions, or are those macro data points more for longer-term investors to consider?
I'll use your extreme version example of Boeing. I mean, Boeing was right where it is right now before all the news, if you want to interpret it as tariff news, bad news because nobody was buying the planes, etc. Whatever you want to do, stock went down $40. A lot of opportunity on both sides, bullish, bearish, to do something in there. Heightened volatility, everything you look for here. I'm not saying you get short. You could get shorted on the news if that's what you think it is. But price is king. And it made a lot of opportunity for a lot of people to make some sort of money, or at least have a shot in the game where you had tighter liquid markets. Everything became, on the board there. Any strategy you wanted to do. So if the news or the numbers bring extremes, I think that gives us a chance to play. So I like when the market has economic news, but I can't benefit from direction from the news.
Yeah, I mean,
Tom,
I'm going to second what Tony just said about the reason that we like news is completely different than the reason most people like financial news. The reason we like financial news, and I can speak for Tony on this because we think the same way, is because it creates noise, which creates opportunity. That's what he was saying. Mm-hmm. The noise creates opportunity. We don't really care what that, we don't try to interpret the noise to give us a market direction. We just try to take advantage of the opportunity created by the noise. And he said it's based on price. Sure, that's based on price. Sometimes it could be based on volatility, but most of the time it's price. Mm-hmm. But that's what does fundamental. That's what that news is. That's the thing that drives opportunity.
Kind of expanding on that a little bit here, speaking of the opportunity here and the other side of it, actually, the risk. We can quantify risk. New traders can look at a trade and say, okay, 63% probability of profit, I'm going to risk $50 to make 200. But it's more than that. Do you find that, as either of you have gone on through your trading careers, that risk is more than something quantifiable, that it's inherently psychological? Because what's an acceptable risk to me may not be an acceptable risk to you. How do traders work around that?
Well, you work around that. The only way, again, I'll let Tony speak for himself. The only way I know to work around that is to keep your trade size in place. It took us a long time to get there. It took us a couple of decades to get there, actually, but because we came from a different world. But it's just the only way you can normalize everything is through trade size.
I'm going to say the same.
I've rationalized that. It's taken me a long time to get there, but trade size normalizes everything.
Tony, you'd agree with that?
Yeah, I'm going to agree with that. Trade size and strategy, I guess, if I had to add something.
Okay, so then the question isn't strategy, right? it's really mechanics Tom, that you're getting at here, right? You're not going to stick to the same strategy all the time because the market conditions change, but you have to have a set of mechanics that you work around. At what point do either of you look beyond the mechanics and just go to gut instinct, or is your gut instinct in trading really built upon the mechanics that you've developed over decades?
No, I think they're two different things. I think that our gut instinct on price is not about mechanics. That's just about, that when it comes to us feeling that something's at a price extreme, that's just from watching the tape and watching the markets for so long. And I think that each one of us is different. I mean, I might think there's plenty of times when we're on the same page about price extreme, but there's plenty of other times when, I'm thinking, okay, now's the right time. And he's like, no, it's not. Or he's thinking now's the right time, and I'm thinking, no, it's not.
That's all subjective. Now you go to the strategy.
Yeah, it's all subjective. Exactly. So I think the price extreme and with respect to direction is something that both of us have just developed on our own. That is completely, we own that 100%. He owns his, I own mine. That's 100%. But I think that the strategic mechanics, the optimization of the mechanics, that we share together.
I think the point that you guys are sussing out here a little bit is that newer traders probably shouldn't trust their gut instincts up front.
Why?
Well, because you don't have those years of experience of tapering.
Who cares?
What else you got?
Who cares? Who cares?
Well, actually, that's what I'm trying to work into. Do you think that new traders, because they don't have that experience, should shy away from their gut instinct? Or
no, I don't think it matters. I don't think it matters. If you're asking me if my gut instincts are better in 2025 than they were in 1985, I would say no.
Oh, come on. You got to give a little bit of
Nope. I'm going to tell you right now, the markets are just as random to me as they were 40 years ago, 30 years ago, 20 years ago. The difference is that I've become more accepting of the fact that markets are random and that I don't know where they're going to go next. And I've become more conscious of size, so it doesn't matter as much to me. But if you're asking me if my instincts are better, no, my mechanics are better. So I don't get hurt as bad. But my instincts, they're still my instincts. I mean, how, if you truly believe...
Can't take the spots off a leopard kind of thing?
Yeah. Like, I don't think... Man, I thought in 1985, I thought I could take the market every single day. And in 2025, I still think the exact same thing. But we're right about 50% of the time.
Right.
I mean, I really, like somebody that's doing something for the first time, in this case, it's almost like walking up to a roulette table and saying, you know what, I really think the next roll is going to be black. And the reality of it is, if somebody's been doing it for 25 years or somebody's doing it for their first day, the odds are still the same. But the difference is that we manage our bets better and we're able to accept the results better. And so for me, that's the difference. I need to be opinionated. I need to be directional because it's what keeps me going. I need to feel that I can tell when something's at a price extreme. I need to think that. Like you're never going to convince me that I'm never going to change from like not doing that. I'm always going to think that I know when something's at a price extreme. And sometimes,
even though you know it's random.
Yeah, and sometimes it works.
Tony, you seem to indicate that you think that your gut instincts gotten a little bit better over the last 30 or 40 years. What's been the most significant change, do you feel, in your gut that's made you a better trader?
Experience. I mean, I understand what Tom is saying. I mean, 40 years ago, I traded 4 options only, like at the money.
I've watched him for 40 years. His gut instincts are no better today than they were 40 years ago. I don't care what he can say whatever he wants.
Come on,
your gut instincts about which way the market's going to go. I wouldn't.
No, my gut instincts are probably the same, but I look at different things now. Now I've never looked at volatility before.
Of course, I'm not saying it, but you still don't know. If I said to you, what's going to happen tomorrow, you're no
I don't
better.
know direction, one way or the other. No, I
That's
wouldn't.
all.
No, But I could put more things in my camp to support what I think is going to happen, even though I know it's going to be random.
Chris, you got to look at the bright side here. I'll apply this to you. Okay,
this is going to be a dig on you.
And I'll say this in a nice. I'll say this in a nice way.
Do not talk about my haircut. Don't talk about the hair.
No, I'm not going to talk about the hair. You should be happy we think this way, because we don't bring people on board because we think they have any clue what the market's going to do. Like, I don't talk to you or Ilya or Pete.
I can stop faking it.
Or Victor, because we think you guys have any clue what the market's going to do tomorrow. We would do the opposite more before we did what you told us to do. We would do the opposite. Every single person here. It's not just you. If you bring Scott in here right now, I would much rather do the opposite of what he thinks than what he thinks. So I think it's important for you guys to understand that, because not a single person in this firm was hired because we think they have any idea what's going to happen next. Like, do you think Tony and I would ever make a trade because Dr. Jim thought it was a good trade? We'd chop our own fingers off first, directionally. Now, if he said something about the math behind the logic and the, and how we think about, processing the mechanics.
You like ABC stock. This is a good strategy.
Right.
I would listen to
optimizing the mechanics behind that. But we would laugh if he told us what he thought about a different stock. We think about that with everybody here. So why would we, I laugh when I see somebody on some network go, oh, this stock's a great buy, or some analyst that all they do is study one stock. I just laugh at it. It's a joke because I'm an efficient market theorist. I don't care what they say. But the noise that they create is interesting to me. That's it. And then the mechanics around it, I find fascinating. And there's a value to just having you talk about stuff. Like, the value of Chris Vecchio is that you engage people with the chatter, whether or not, because maybe there's a few tidbits in there about some other thing that we recognize, or that creates some encouragement, engagement, uncertainty, whatever it is.
So you might be useful. We just haven't decided.
Well, you're useful, but it's not for your market opinions.
Right. There you go.
Tony's been doing this for 14 years. I haven't listened to one thing he's ever said about a market call. What? You're going to tell me it's different?
And you told me he comes across like the Charlie Brown teacher.
But I think it's important that people recognize that. When people call in with their trade assumptions, the reason we do them sometimes, if they're directional, is just because we're like, well, we don't know any better than they do.
I'll go to our confirm and send. I'll go to our twice a week when we go to our viewers.
What's your assumption?
Yeah. Anything like that. Somebody will come up with an assumption and they'll say they like ABC stock, and Tom will say, oh, I hate that stock, and do exactly the opposite, but apply the same strategy, maybe in a different direction. Not because that person's right or wrong, or Tom is right or wrong. It's just that his gut feeling goes in that direction. It doesn't make the other person wrong. And then you have a nice tug of war and see who's right in the end. I mean, how many times does Tom say, oh, you took me down because I listened to what they said? I mean, we know going into it, you couldn't do those two segments going into it if you thought that it wasn't random. If the mechanics fit, then it's workable trade.
I think that's the conclusion here, though, right? Like, you don't need to be, if you're new, if you're older, if you just started trading, if you've been trading for 40 years, it's not the noise that you pay attention to in the market. It's the mechanics and applying those mechanics to the market that you find yourself in and day out. So as newer traders who may be listening to Tasty Live for the first time, right, you don't need to be bullish or bearish on anything per se. You just need to know how to take the proper tool out of the toolkit and apply it to the situation at hand. And you have to start small. It's really about building up over time. Most of the traders who are doing this for a long time, in my experience, they go through drawdowns, they blow up accounts, but they have the tenacity and the perseverance to stay with it and learn from their mistakes. And they don't let any single loss bog them down at all. They just move on, right? Because it's a trade. You're not marrying these things. So
it's just a trade. All right, my friend. Good job out of you.
Thanks for talking trading philosophy today.
We're going to take a quick, Tom loves that
Chris.
subject.
Oh, I do.
I know.
That's good.
We're going to take a quick 90-second break and come back. We got more Tasty Live sound. What comes up next? That's right, a market measure. We'll be back in 90 seconds with Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tastytrade. Genius loves company.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with the market measure. But before we do, Sadnoff, I've got a bunch of emails. I know you have too, confirming that turkeys do fly. Somebody just sent me picture proof of a turkey on top of a garage. Wild turkeys do fly. Now, I was only going with my WKRP in Cincinnati, where the turkeys did not fly.
Listen,
that was where I got my information.
I told you many times, you are
a walking out trade.
A massive misinformation, a walking out trade of sorts. And of course, turkeys fly. I have a couple of videos of turkeys flying all over the place. They're swooping around. They're catching dogs and stuff. You know, they're
catching dogs.
Picking
I don't
kids
think
off
you have a
the
video
ground.
of a turkey catching dogs, but whatever.
Big turkeys.
Big
Let me tell you something.
So Patrick and the other Taiwanese sources, thank you.
Turkeys, they come at you as a pack. They're scary.
Turkeys are ugly.
No, I like wild turkeys. I think they're kind of cute. I don't know. You ever seen a wild turkey around?
When have you?
I've seen them. I've been out places.
Where?
I don't know. I've seen.
Where did you see a wild turkey?
Like on a golf course once. I've seen them.
You know what?
Like on a hike.
Was it a goose?
No, I know the difference between a goose and a turkey.
I'm just asking. It's okay.
On golf courses, you see a lot of like Canadian snow geese, whatever they're called. But
that wild turkey picture, first one that pops up. Just throw it up there when you get a minute. I want to see how cute these wild turkeys
are. They are cute. They're like black and they got like and they got they're nice. I'm telling you, I've seen them in Maine. I've seen them.
Okay, well, I grew up in Brooklyn. We don't have too many. It's ugly. I'm looking at them right now because I can see Beth's computer.
The problem is,
what's the problem? Just do the first picture, Beth. First picture on the left. Whatever the first one that came up. Don't be.
They're not really good.
Be random.
Yeah, there you go. That's a wild turkey, but they're not really good eating.
Okay, that is not a pretty bird. I mean, the birds I look at, sad enough. I'm like, yeah, you want to eat them day and night, night and day.
Omaha.
Maybe you're used to that turkey. That's not a bad looking turkey. That's a Thanksgiving dinner waiting to happen. But doesn't matter because I make turkey once a year.
Yeah, at best.
At best.
Yep. Ooh, bourbon whiskey, like that. Ooh,
wild turkey.
Yeah, wild turkey. That's right.
When we were in college, wild turkey was kind of the
I don't think I've ever had it.
It's a horrible bourbon or whatever it is. Bourbon. I think it's bourbon.
Yeah.
Yeah, we had it when we would drink shots of wild turkey thinking we were cool.
Were you good for one?
Me? Yeah, 15,
Happy.
20. 15, 20.
Uh-huh.
Petite.
What?
Petite.
No, I could drink a little bit of bourbon, but not.
You got a quiet day. Forget about bourbon. Quiet day on the market. Not too much back and forth, sad enough. How come?
Yeah.
I guess they're moving 20 handles in a clip, but.
Yeah, something like that. I don't know. So far, so good. I'm not complaining because we had good earnings and we have no
Volatility
problem.
in by 10 cents now.
We have no problem children so far. Nice little run up in Apple. Take a look real quickly. Apple be Snapple.
Apple's been strong all day, hasn't it? Up $1.60.
Yeah.
Where did it open? It opened
guess I'm
at
flat.
2. Oh no, I'm sorry, I digress. It was opened at 208 and change, so right near its low. So no, it hasn't been strong all day.
Gold staying down, silver's up. We like that. Not much else.
Beautiful.
I think we're in pretty good shape today. We'll take it. I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thank you for spending your beautiful Tuesday with us. I don't know where you are in America or wherever you are elsewhere in the world, but the Bat and I are going on the road in the month of May, starting, tomorrow's May. Our first road trip is May 30th will be
Tomorrow's not May.
Oh, tomorrow's not May. Thursday's May.
30 days has September, April, June, and November. Today's the 29th.
Starting.
Unlike the new February. I know in your world where you just change facts, today can be the new February. But in our world, we still got another day.
Starting in May, we hit the road. It's the beginning of a long road trip for road trips for the rest of the year for us. The first one is Buckhead Theater in Atlanta, Georgia. We will be there on Friday morning. Yes, Friday. Usually we do Saturday events.
You heard it right.
We're doing Friday because we're doing a live trading show. It's going to be a lot of fun. It's going to be a little different. It's going to be a little smaller crowd. It's going to be, because it's a Friday, it's going to be a completely different kind of show. Doors open at 8. Show starts at 9. We can't wait to do this. I think you're going to be a little overwhelmed by the speed of it, but it should be a ton of takeaways. We call it At Work by 11 because we're going to be in and out. So the show starts at 9, ends at 10:30. You're at work by 11, or you're back wherever you said you needed to be. Doors open at 8. We'll hang around for a little bit, and then we get out of Dodge right after that as well. So we'll be at the Buckhead Theater in Atlanta, Georgia. It's right downtown. We've done shows there before. It's a super nice theater, and we'll see you there on May 30th. The only other 2 shows you can sign up for right now are London, England, which will be on June 20th. It's a Friday night. So if you're in the UK or anywhere around the UK and you want to come out, it's Friday night. It's triple witching. We can't wait to get back to London for this event. And it's Friday night, June 20th. And then the following Monday, we'll be in Milan. Our first show ever in Italy. And it should be a lot of fun. We're excited about meeting our Italian tasty traders, and it will be translated. So there will be a translator on site. I'm actually meeting with him today, and we're going to talk about how we want to do this. But
awesome.
So you'll be able to get stuff out of it, even if your English isn't perfect. We'll be at Fabrique in Milan. That's at doors open at 5. Show starts at 6 at night. Same in London. We'll be at Earth on that Friday night, and then on June 23rd, we will be in Milan. Dylan, myself, and Rich. Rich, Tony, and myself will be in London, and Tony and I will be in Atlanta, Georgia.
Mm-hmm.
And then after that, we got a ton of events for the whole rest of the year. We're going to be just all over this wonderful country. Matt, throw up the other ones real quickly. Yes, after Milan, we're going to be in Denver in July, in Chicago in August, in San Francisco and New York City in September. In October, we'll be in Los Angeles and Charlotte. At that point, Tony's going to get my arm, my elbow.
I'm going to come up lame.
He's going to pull a Rodney Dangerfield. And in November, we'll be in Austin, Texas. So can't wait to see everybody. And then don't forget, if you can't make those cities, that's Tony and myself. But then we have a whiteboard tour with Mike, Nick, and Katie, and Ryan. They're going to be in Washington, D.C., Seattle, Dallas, and San Diego. The 4 of them. It's going to be great. And then Dr. Jim going out solo this year, Boston, Detroit, and Tampa. This is all on Tasty. All of our events are free. And this is a big part of how we go out. We meet people, we market. We'd love you to come to one of the events somewhere in the U.S. The whiteboard tour and the options crash course are much smaller events. So sign up early because those are really going to be limited space. All right. You ready?
I'm ready.
Beautiful. You better get your helmet on for this one. We got another heavy piece.
Oh, no. Sponsored by the CBOE.
Sponsored by the CBOE. Yes. Let me just see what we got here. Okay. So, what makes tail risk risky in short premium trades?
I think the answer's in the question.
What makes tail risk risky? Let's take a look. Short options are dynamic products. We just went through an unbelievable period where short options, especially short puts, exploded. So everybody's very familiar with this. This means exposure is dependent on many variables that go beyond the traditional ways of measuring risk. Basically, fooled by randomness is where we're going to go with this. Today, we look at what metrics we use to gauge risk and what not to overlook. What are the different types of risk that are most important to recognize with short options? Tony, what's the single most important thing?
So we're going to throw out size? We're going to throw out size?
Not throwing out size.
Oh, I would say size is probably the single most important thing. And then avoiding the dynamic move in the market, which you can't do. So size would have to be the king.
There's lots of different kinds of risk, but the part that most people don't recognize is size.
Mm-hmm.
Let's go to the next slide. When looking at the distributions of short strangle P&Ls, we see the 3 main metrics that we gauge profitability and risk by. These are just our gauges, okay? There is the average of 95% of the outcomes. That's inside of 2 standard deviations. That's where we figure, and as a firm, we measure most of our risk. There is CVAR, which is the 5% of the worst losses, we actually display CVAR on Tastytrade, and we obviously display the average of the outcomes on Tasty. What we can't quantify is the tail risk and the worst cases, which we write as unpredictable, uncontrollable, and the only way you can control it is by size. So when you look at this, we can give you the CVAR, we can give you the average of most of the outcomes, but on the unpredictable stuff, the only way we can control it is by size.
You think it would be strategy too, right? But you know what's going to happen? Right. Each strategy has their own probability of success. And if you get some sort of move, like you would think that, like you might say, hey, an iron condor or a vertical spread, even if you're wrong, say a put vertical spread and we go lower, that's going to be a better use of your capital. And also not only is it going to help you with the outlier move, well, what if the move never comes back to your spread? Then you're a full loser on that. Where a naked option, if you're mechanical, you might actually make money on a move back into the zone. It's hard.
There are there are a lot of things that people will tell you about, everything from being smart about fundamentals and being smart about, market awareness and being smart about stop orders and things like that. The reality here is the only way you can control the unpredictable is by size.
Mm-hmm.
We like to use a really bad analogy, which is a car accident. When you get in a car, you can put your seatbelt on and you can decide to drive when you're not drunk.
You could break the law, drive when you're not drunk and not use your seatbelt.
You can drive when you're sober and you can put your seatbelt on. You can control the thing and you can control your speed. You can control everything that you possibly can control when you get in the car. You can't control things that other people do, and we call that the unpredictable. And so it's the same thing with trading. You can control your size, that's it. And you can control the efficiency of the products you're using. Let's go to the next slide. So we did a study, because this is a market measure, for 10 years. We sold strangles. We managed at 21 days. And we looked at lots of different things: average P&L, average profit, average loss, CVAR, largest loss. Let's go next slide, Beth. Okay, so this is where it gets really, I love the graphics these guys use for this. Notice that when you increase the delta of a strangle, the average profit and loss scale proportionally. So this shows the range of most P&Ls minus the outliers. All the averages for 30 delta strangles were around 45% larger than the 16 delta strangles, and so on. So you can see 16, 20, and 30. Everything is proportional. But what we do is we try to figure out, which is the risk world we want to live in.
That's correct.
It's not like you're
not like one is overly better than the other.
That's
looking
right.
At all these numbers. Yeah.
That's right.
Yeah.
But where do I make the most money with the least amount of risk and the least amount of challenges and the most sleep at night type thing?
I mean, if you look at just which a lot of people do when they're trading, they look at where can I make the most amount of money. You would go to that 30 delta. If I just showed you those 3 green bars of the two, you'd say, oh, I'm going to do the 30 delta for sure. But you've got to take a look at what the loss could be too.
When you look at this proportionally, you're going to probably lean towards the 16 delta, or whatever, just because you're thinking average P&L. But let's keep going. There's a lot of takeaways here. So let's go next slide. So this one's C-bar. This is the worst 5% of all cases. So the C-bar for the 30 delta strangle is 45% greater than the 16 delta strangle. The worst case outliers for the 30 delta are about 16% larger than the 16 delta. These proportions are similar to the ones on the previous slides. So essentially what we're saying is when you start to look here at the average of the worst 5% of all trades, okay, you can easily, rationalize, justify anything that whatever case you want to make, put them all together. We're just showing it to you.
Sure.
This is what we do really well at Tasty. We just show everything, and then we'll tie it up at the end, and and try to get you to a spot where you think is kind of the sweet spot. But you can see where we're going with this. The sweet spot in the 16 to 20 delta range. Let's go to the next slide. So this is a cool graph. This shows that as delta increases, the losses grow larger, especially in extreme cases. The 30 Delta Strangles face bigger average losses and much more, tail risk. And so, it's...
I mean, it goes 30, 20, 16, as you would suspect, right? Like there's no intersection of lines anywhere. So, I mean, the pricing stays pretty consistent.
No, and so you can decide you decide where you want to be on that. But obviously, you take significantly more risk at 30 deltas than you do at 16 deltas. That's all there is to it. Let's go to the next slide, Beth. So this study shows that higher delta strategies face both larger and more frequent losses. The 30 delta strangles, or 30 delta strategies, lose 31.5% of the time with a $460 average loss compared to 26% and a $334 loss for the 16 delta, compounding overall risk. So you want to make more money, you take more risk. You're willing to take less money, you take significantly less risk, and you have fewer losses. This is how the game is played. This is where everything is normalized. It's essentially, we commoditize everything based on efficient market pricing. And so just to point this out, again, it's where do you want to be on this scale? Mm-hmm. Do you want to have more losses and make more have more losses and bigger losses and potentially make more money, or have smaller losses, lose less time but make less money?
We like to opt for the higher probability.
We like to opt for the higher probability of profit. We like to opt for more wins.
Yep. Again, this is a personal thing, right?
Yes. Let's go to the next slide. So notice all the metrics scale to a near perfect proportion depending on the delta of your strangle. So all the metrics for the 30 delta strangle were way greater than the metrics for the 16 in terms of risk. Yes, that is the case. That's exactly what we wanted to show here, was that everything scales in near perfect proportion. And the 16 delta has a lot more risk than the 16 delta. I'm sorry, the 30 delta has more risk than the 16 delta. Let's go to the next slide, Beth. So some of the takeaways. The tail risk inherent to short premium means that outlier losses of a strategy will always be much higher than the average risk reward of the strategy on a trade-by-trade basis. Staying small is the only way to protect against the sudden shock of a 5% outcome. And the delta of your strangle will effectively scale the exposure to all the metrics: profitability, normal volatility, CVAR, and outlier risk. I think all of those are common sense, but we wanted to point everything out to you.
Let's take a quick 90-second break and come back. We got more Tasty Live. That's right, with your friend in mind, Mr. Sheridan. That's right, Mr. Sheridan's coming in. We'll be back in 90 seconds. Tasty Live.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Do you remember Gilligan's Island?
It's near and dear to my heart. Every day I come home from school, what do you want to know? Let's sit right down and hear a tale of a fateful trip that started from a tropic port aboard this tiny ship. 5-6 passengers set sail that day for a 3-hour tour. See, you didn't think you were going to kill Gilligan's Island.
3-hour tour. Which one was Bob Denver? was it this here? Which one was Bob Denver?
Forbes called us best online for options trading. With stockbrokers.com, we're number 1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend, and you know what that means. That's right, Tasty World Live headquarters. I'm stumbling on my words here. Do you want to know why, Mr. Sheridan?
I threw you off.
You did throw me off. Today is the anniversary of Live from the Trade Desk.
No, it's not.
That's what my Taiwanese sources tell me.
That's amazing. It's Elizabeth Staub's birthday. I know we're not able to give birthday shouts out, but we're going to give her one.
What is this, The View?
Yeah.
What is this? We give people...
So wait a minute. It's really the anniversary?
That's what my Taiwanese sources
from
tell me.
seven.
I haven't verified these
from
Taiwanese
17,
sources, but I love these Taiwanese sources. What's
from
that?
17, 2017. Gotta be.
I believe so. Yes.
Who told you this?
Hold on.
I can't out my sources in case
Hold
they're
on.
wrong. Are you a little teary-eyed?
I'm a little teary-eyed. Right?
You know, you weaseled your way into the office, into the studio pretty well. It only took you a little while. I mean, like you did it from your desk on the trade desk, everything else like that, and then
No, he didn't do it from the trade desk.
No, I was always in the room. And it's funny.
No,
'cause
you did it from. Didn't you do it from the trade desk?
No. Originally, I was in front by Tori.
Yeah, he was
in
by the
old
screen, he was
office.
on the side of the wall.
On the side of the wall.
Right. Yeah.
Got mic'd up. Woody set the whole thing up. It's nice. This is different level.
Oh my God.
No shade on Woody.
Did you see the Scott Sheridan Studios behind you?
No, I was just looking at this. I'm like, where is it?
It's right there on the bottle, the red bottle. About there you go.
Oh yeah.
It's right in the shot there.
Is it in the shot?
Studios. Yeah, 100%. It's in the shot.
I mean, you need like 10-10 vision. By the way, I wasn't going to call you out publicly.
Oh no.
But I have to.
What?
I'm going to love this. I don't know what it is, but I'm going to love
is
it. I could tell by the look on his face and yours.
Okay. So we're out yesterday afternoon. We happen to be driving down.
Really? Another outing with the guys? No bad. Go ahead.
No. It was before dinner. It wasn't that kind of an outing. We had a meeting. So we're driving down Ravenswood.
What are you going to out me for? What'd I do?
Oh, you're getting outed. So we're driving down Ravenswood. Now, for people that don't know Chicago, which is most of you, there's a train that runs in the northwest, and then it goes up to the northern suburbs and runs right down the street. So one side of the train is heading south, the other goes north and south, but let's just say it goes north. So we're on the southbound. So Tom takes off in his new fancy electric car, which I can't keep up with. Do you know that there's actually stop signs on that street? Okay.
You blew stop signs?
No, he didn't blow through them. He went from like 40. No, he went from like 40 to 30, and then just kept going.
Oh, I don't stop for stop signs.
Because you're above the law. Above the law.
So
That's so bad.
so bad. Now the good news is you only have people coming from one way, so it only has to look one way because you got the train on their side. So I'm thinking it's
No,
not.
there is no. There's nobody. You can't come.
What do you can't come?
It's only for pedestrians.
There's streets.
Yeah, and you're in a bigger vehicle. You can hurt them. They
There's
can't hurt
streets
you.
that go east-west. You can have cars coming in.
No, they can only go one way.
Thomas?
Go ahead. Put a number on it. And I'm driving. Now,
those side streets are two ways. There's no way they're just one.
I can watch it. I watch it.
Yeah,
At
you got
30,
eagle eyes.
do you have like collision warning, whatever these things are?
Yeah,
and it just locks up. So if a person walks, I wasn't going to say that.
Oh, my car, this car, it tells you. It goes, watch
Careful.
it, watch it, cross traffic, watch it, traffic.
Now,
You're
what
too
I
close.
will say, on the flip side of the coin, so I'm taking Tom's approach where you criticize, but then end with a compliment. Which
Tom does not do that approach. That's what we're trying to get Tom to do.
Kind of.
But go ahead. Tom just
I was going to
criticize.
pick up Max, and he actually recognized Max.
Well, I didn't know that.
You've only known the kid since birth.
No, but Max got in the car. He's like, "That's amazing." Tom actually waved to me. He's like, "But I think he just saw somebody he waved. He didn't really know it was me." I said, "No, I'm guessing."
First of all, I had no idea that he would be out on your son would be out on the side of the street waiting. I didn't know you. I thought you were going that way because you couldn't make the turn the other way.
No, I was going to pick him up.
I know. I had no idea. You didn't say you were. So I thought you were just following me because you couldn't because the traffic was blocking the way to go.
He was following you because you're such a leader.
And then I got worried.
I'm a good driver.
Because you didn't turn.
Evidently
on your,
not.
Because I couldn't make the turn.
No, but you didn't turn on your street. And I looked at Max. I said, "Wait, where's he going?" And I go, "Oh, the garage." You parked that car in the garage?
Hey, where else would I park?
You always parked on the front, in the front of your house.
No, I always park in the garage. I have a garage. That's what I have a garage
You've
for.
left your cars out forever in front of your house.
Not anymore.
Really?
Oh no, I
can't in the
only
city.
leave my car out when I want it to get stolen.
Okay.
No.
So anyway, for the neighborhood.
Yeah.
Could you just?
Yeah, that's a residential.
That's my
area,
neighborhood.
too.
I don't go.
Oh, there are.
I was kidding. I don't go
I'm
through.
speaking on behalf of the other people.
You don't want to hurt a neighbor.
You don't want to hurt a neighbor.
I don't go through red light through stop.
No, just stop signs you go through, not red
You
light.
go through the meters getting on the ramp on the highway. You don't believe in those. You
Oh
say,
no, those are bullshit. You stop at those?
Yeah, it's the law.
You stop at those red lights to get on the highway?
Yeah, it's the law.
Oh my God! You're
It's so that it's
the
so
only
that
people that stop
a-holes
at those
like
are
you,
tourists.
It's like a-holes like you,
right?
Don't make it good for people trying to get on because there's not enough room. They're synchronized for the traffic,
Oh my God!
and it's the law. I listen.
only
My kid's going to
tourists.
driver's
Tom,
ed.
I'm with
I'm going to bring home.
Beth, do you stop?
No, there's no way
No.
she stops. Right. It's only for tourists.
Beth, I need some
It's
help.
the same people that sit upstairs at restaurants. It should say that. If you stop at those aren't real red lights. Those are just.
No wonder you keep getting tickets for speeding. In your
I
area.
stop.
You stop at those things?
Yeah,
You have to.
it's the law.
Oh my God!
I mean, I guess if stop signs are optional, I could see why a red light on a ramp is something you can completely ignore.
The red light on the ramp is for traffic purposes.
It's,
Right.
it's for suggestion only.
Yeah.
It's as
yeah.
Tony
Nobody
said, so it's
stops.
the flow of traffic. So if there's no traffic, there's no red light. You
People will
just go.
honk at you if you stop at those things. It's unbelievable.
Tony,
I'm telling you,
Tony,
that's
has
for
it been like-
tourists.
has it been like this all day?
All day.
It's literally for
He called
tourists.
before 7:30. He called me an idiot. I'm a little hurt. Still waiting for an apology.
Okay, I'm telling you right now, if you told him why I called you an idiot, he would agree.
Doesn't matter. That's a word that you shouldn't use with friends.
I'd agree.
Public, out with everybody. It's very emasculating.
All right, so I watched 5 minutes of hockey last night. Did you watch hockey?
Yeah, I did.
Which game?
I watched the final 5 minutes and 40 seconds of the Florida-Tampa game.
Great game.
Great game.
The only reason I was watching was because I don't get this. Cleveland, Miami, 3-0 Cleveland in Miami. Did you see
They
the
were
game?
up by 60.
They lost by 55.
They were up by 60.
I'm
in the first
sorry.
half.
That's embarrassing. You're a professional athlete on your home court in the playoffs. Show up.
Agreed, but they were down by 60 in the first half. 60.
I don't think they're down by 60 in the first half.
They were down by 60.
I don't think so. I was watching the game. I don't think so.
Oh my God.
I don't think they were.
Tom's
They were
a
down by
contrarian
39,
driver.
I think, at halftime.
They were down by 60.
I bet them at 44 and a half. I'm like, how do you not take 44 and a half points in a professional game? Apparently, because they're going to lose by 55.
Is that what they lost by?
Yeah. I'm sorry. Spoelstra should just look at these guys and say, you're an embarrassment.
And he is really probably the best coach.
He's amazing because he does more with less. That guy just always gets them ready to go.
The problem with basketball was
was
that picture of LeBron. I don't know who he was talking to, but the game was on the line. He was talking to the opposing team. Game was on the line. Seconds left in the game, and he's laughing and joking with the opposing player. I don't remember.
You're LeBron. You can do whatever you want to do. You can't. I mean, LeBron's. He's
you
LeBron.
won't get that in a hockey game. I don't care if the.
I'm not disagreeing with that.
You don't-
but if you
there's
watch,
just
you're
no-
saying
He's not a competitor. No, he's a competitor.
He's a competitor. That guy
There's
was.
no killer instinct.
He's a competitor.
In basketball.
Okay, first of all, that's
you would
not
never have gotten Jordan doing that.
You watch.
Never. And that's the difference between the two of them.
I'm
and
not a
that's why
huge
there'll only be
LeBron
one
fan,
Jordan.
but he's a competitor.
Maybe it's a different time, the whole thing. I
agree.
get it.
I'm not a big LeBron fan,
but he's a competitor.
He's a competitor.
I get it, but you never would have
You know what's
gotten
the
that
amazing
with
stat about LeBron? So he's played 22 seasons, right?
I think that's right. He's 40. He's going to turn 41. He's 40. I think
He's played 22 seasons.
Yeah, that's unbelievable.
Which is he's never really gets hurt either. He's played 22 seasons.
Well, when he does get hurt, he heals in like 3 minutes.
But he's played 22 seasons. He's played the equivalent of 3.5 years of playoffs.
3.5 years of full seasons.
Full seasons.
So 82 games.
He's played
3.5.
250 playoff games.
That's crazy.
Yeah. He's played 22 years. He's played 200. I don't know how many playoff games, but it's over 3 years worth.
That's crazy.
He's played over 240 playoff games.
Yeah, and Tony, if you watch the superstars,
He's won 4 championships.
you watch the superstars of the NBA, they're amazing.
You know, to kids like your son, they're going to think he's the greatest of all time.
Yeah.
Because they didn't know Michael.
Get it.
Of course.
But that's
Yeah,
where
but
his
then you
father
go
will
back
correct
and you
him
watch
one more
Magic
time.
Johnson and Larry Bird and
Jordan won 6
Kareem.
championships.
Like, you're old enough, you might say, like, Willis Reed. Okay.
George Gervin, maybe.
I love George Gervin.
I know you do.
The Iceman cometh. But no, when we were kids, our
Dr. J.
I mean, Dr. J was
Dr.
hands
J.
down.
Yeah.
No.
Yes.
Dr. J and Walt Frazier.
Walt Frazier.
Frazier, 100%.
Well, it was a different world.
New Yorkers, Frazier. I mean, he would walk around with his fur. He was bigger
Frazier
than
was
life.
before. Frazier was a little before, but Frazier was the biggest.
What do you think? I have no idea.
I know. Dr. J got a ball. I mean,
No,
the
but
red,
he
white.
was a little later. It was a little.
What do
few
you
years
think
later.
I have no idea. What do you think Walt Frazier made a year's peak? 100 grand?
Yeah, probably
100 grand. He still does Nick games.
Does he?
Yeah.
Oh, cool.
$100,000.
Something like that.
Sad enough, I'm getting emails from a lawyer who would like to be able to follow you around so that he could be the first one while you're driving, to be the first one to represent the person that you hit, so that he could go on record here and have all this.
I've already got Lerner and Rowe. I've watched all their ads for so many years. I just want to hire those guys.
And they're saying you're a contrarian driver. This is all coming from the YouTube chat.
What's a contrarian? Oh, not following the law?
Mm-hmm.
Yeah.
What?
I like that.
Yeah.
Pretty good.
I've been in the car with Sosnoff.
Not by choice.
Stop sign or not, pedestrians should worry. They really should worry.
I've never been in an accident.
I mean, I've never had a pedestrian come up to me and knock my window
You've
off.
totaled a car.
Wait a minute. You have never been in an accident. Ever. Fender bender, nothing. Nobody's ever hit you. I don't believe it.
I don't believe it.
I don't believe it. That's mathematically impossible.
Because I'm an amazing driver. Because when I was 18, I learned how to drive a truck. It's just, I'm an amazing driver. Like Tony's totaled cars. You know, you've totaled cars. Whether or not you guys say
I've never totaled a car.
Well, your car was just totaled. And then he
my car's actually in great shape right now. They did a really good job of fixing it. They detailed it. Looks great. Because the 6 said I got to get rid of it because it's got.
And I'm getting
juju.
people writing in. They agree with me on the LeBron, especially your helper monkey.
LeBron meaning what? That he's the greatest ever?
They agree with you. You mean that because he smiled?
Yeah.
Oh, please.
Yeah.
Well, and obviously you didn't watch Ovechkin the other night when he.
Oh, they also say LeBron sat out more games than Jordan ever sat out too.
Hey, you didn't watch Ovechkin the other night when after he almost killed the guy, then he smiled at him. Okay, I don't think it was the same kind of smile, but he smiled at him.
How big is he?
Ovechkin?
Yeah.
Oh, Walt Frazier just retired from doing.
Oh, did he?
Yep.
He's about your size.
Is it like 230, 240 though? It's got to be big.
He's probably 225. But he doesn't have an athletic body. He looks like a schlub. Like if you just
Talking about Walt Frazier now?
No, talking about Ovechkin.
Oh.
He doesn't look like a like.
I mean,
He's
you
not
look
a.
at somebody like Jokic.
He's not a finely
I think
tuned.
he looks like a schlub.
He's not a.
I would say he's hard as a rock.
He's not. Ever seen him? He's flabby. He's.
Now you've touched his body.
I'm just telling.
TikTok, Tony. TikTok.
I'm just telling you. Go Google it.
But I mean, if you bring up, in fairness, if you bring up,
he looks like a guy just going out for a beer on a Saturday.
bring up Jokic. Look at that guy. That guy does not look like he's the MVP of the NBA.
How about Luka Doncic?
Same thing. But I mean, Jokic, like he's slow.
I just like the stuff he comes up with.
But
he says it with such.
look at
confidence.
Ovechkin. Ovechkin.
I've stared at him. I look at him. Yeah, I got it. I understand what
he's
you're
just
saying.
Tony,
he's just some
bring
guy
up
you wouldn't even know.
Naked pics that Ovechkin, see what you come up with.
I don't want that search. This is a work computer. Let me do it on my phone. Hold on one second.
But when he plays, he doesn't look like that at all.
I can't with you.
And he doesn't get hurt ever.
And I saw him one time.
The man had a broken leg this year.
Remember we went to the game. We saw him one time. It was 15 plus years ago at the UC. I was really excited to go see Ovechkin. He got thrown out with the.
He got thrown out of the game.
He got thrown out of the game.
Yeah. I know.
You don't think
I went to see Jokic. He got thrown out of the game.
I was there.
Yeah.
Yeah, he got on Serbian night.
On Serbian night. Yeah.
Got thrown out. Like, what ref does that?
Stupidest. like we all went to see Jokic play, and he got thrown out.
Thrown out.
Oh, my peeps are writing into me. You've never been into an accident, but you've caused more accidents than any other driver.
It's my grandmother.
Grandmother caused accidents?
One of my grandmothers used to cause a lot of accidents. She would drive really slow on the highway. Big cars getting smashed behind her. She would be totally oblivious. My dad used to tell stories.
And do you think you have some similarities with this grandmother?
No.
Yeah.
With this so-called grandmother.
Unbelievable.
No.
There's zero chance you've never had a fender bender.
Nope. Never been in an accident.
Anybody in your family? Because I want to see if you're going to tell the truth.
Corinne's totaled a couple cars. Case totaled cars. Cole, not that I know of. Did I ever tell you the story of my son? What he did when he was in high school, my car had a huge. Came back to my car one day. It was parked in our garage, and there's a giant scratch on the side of the car. And I'm like, "What the hell? Like, what did this happen?" And so I go, "Did you do this?" And he's like, "No." And I'm the case. Did you do this? Like, were they? Because they were both driving. He's like, and they're both like, "No, I didn't even touch your car." And I'm like, "Well, somebody must hit me when I was parked or something." Anyway, on his graduation day, he was one of the kids that gave the commencement speech.
Tells the story?
Yeah.
No.
Yeah.
He calls himself out. He doesn't know. He doesn't remember. He didn't tell. He told you.
No, he said, "Dad, I have an apology." Yeah, I got to confess.
He's giving the commencement speech on graduation day. He's one of the two kids gave a commencement speech. He's one of them, and he goes, "I got to come clean on a couple things." And he says some funny, it was all part of a joke. And then he goes, "And Dad, it was me who crashed up your car." And I was like 2 years earlier, like, "You freaking little bastard."
How do you get mad? How do you get mad at him?
He outed himself.
There.
Yeah, he outed himself in front of everybody.
All right, pretty good.
Because I kind of knew it must have been him, but he never, he said it wasn't him. So no, I never did anything. But that's because I'm an amazing driver.
I'm the greatest driver ever. Go ahead. Tony, you might be flying solo tomorrow. I can't deal with this.
Yeah, I know this is bad.
You're mandatory. I'm optional.
I know.
Okay?
I know.
I think I might have just had a meeting hit my calendar during.
Well, Tony totaled the car last year, and I mean, probably.
I wasn't moving.
That's your story.
I win in that one. Well, if I had that happen, I was parked at our old office.
Yeah, I know. Both of you guys.
Parked, and some guy smashed into my car.
Yeah, I know.
But this one, a lot of damage for nobody being in the car. It was driving itself.
I wasn't moving.
Yeah, I know. That's what you say. But there's other people that dispute that.
I wasn't moving.
All right. Should we get to some business?
Sure. People are sending me pictures of Ovechkin celebrating shirtless last year.
Ripped.
He looks fine to me. I'd be very happy with that. I think you would too, Saz.
Okay. What I'm happy with and what you're happy with are two different things.
It's so difficult.
All right.
You want to get to your list?
I'm trying. I got a lot going on up here trying to process what's going on over there. Top 15 symbols going through the system. First 40 minutes today. No broad-based indices or futures. Time for you number 15. SLV at a 42 42. For everybody else, Tesla at a 39, SoFi at a 22, NVIDIA at a 33, PayPal at an 18, PLTR at a 69, HIMS at a 66, Amazon at a 49, GLD at a 58, Spot at a 32, UPS at a 30, MSTR at a 19, Apple at a 39, Google with an L at a 29, Meta at a 52, and number 15 for Tom, SLV at a 42. Rounding out the next 10, Microsoft at a 40, TLT at a 41, TQQQ at a 42, GM at a 41, Intel at a 31, and AMD at a 40.
Good job out of you, my friend.
Good news today for you.
What's that?
No Taco Tuesday.
What is it?
JP's.
Oh, bad news for Saz. Saz all of a sudden does not like.
No, I've never liked JP's.
How do you not like JP's?
How do you like it? It's like the worst of all the supplements.
First of all,
I like
The bread's too hard for a sensitive mouth.
First of all, put the hot jardiniere on. And
They're jardiniers. They're
okay.
I
This,
don't like it.
Tony, you missed lunch yesterday. Ready? I have to go over this for everybody that's interested.
I don't like their jardiniere for some reason.
I didn't miss lunch. I chose not to.
So K-Fire, which is actually better than I remember, is more chicken than I remembered. Okay. Now, the reason Tom loves K-Fire is because of hot sauce. They didn't bring hot sauce yesterday.
Oh no! No hot sauce?
No. So listen. So Tori, being Tori, the star she is, says, "I got you." So she goes over and grabs a bottle of something. It
was hot.
And says, "Listen, this is really hot. You need this." So what would a normal person do?
Put a little bit on the side, taste it with my fork, and then decide how much I want to put on my food.
Thank you. So I looked at him and I said, "You're not going to taste it?" He's like, "What difference does it make? It's hot sauce." Okay. So I tasted it and I went, "That's hot." It was hot.
It was hot, but I put it. It wasn't that bad. It was like just made your eyes tear for a few seconds.
So enjoyable. I'm going to take a quick 90-second break because do you want to know why? You're going to like this. Liz and Jenny are down at the floor of the CBOE today.
I thought that was Wednesday.
Yeah, why are they down there today?
Are they down today, Beth? I thought I read a memo that they were down today.
First of all, now that I'm
Am I
live,
wrong?
wait a minute. I don't see.
Am I wrong?
No.
Oh, there it is. Thank you.
We're up to two times a week now.
Oh.
I didn't know
Tuesday,
that.
Wednesday.
Well, why don't you guys read the memo? Why does the guy that has to do all the work read the memo?
That's why.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny from the floor of the CBOE. We'll be back in 90 seconds. Tasty Live. A little hot sauce challenge.
A little bit.
What is the challenge? Just to eat this hot sauce,
350,000 Scoville units, which is like I looked up Frank's. So have you ever had Frank's?
Yeah, sure.
It's 500.
And what's this?
350,000.
James come up and says, "Did you have anybody take you up on your offer?" I said, "No." He goes, "Oh, I'll do it." I go, "You sure?" He goes, "Yeah, I'll do it." But we thought it would be cute if we all showed some solidarity and we all did it. So we just gave him a cup of it, and then we all had cups of barbecue sauce. Then my peeps across the pond over there started taking spoonfuls of the barbecue sauce, going, "It's not that hot."
I don't know. It's not that hot.
It's not that bad.
So are we just spooning it now? Like
Yeah.
Just take a good
Just spoon it. It's not that hot.
So that his testosterone gets going.
I'm not letting you one up me, Pete.
And he starts taking spoonfuls of it.
All right, tough guy, let's go. I'm finishing my cup.
Then Pete, the loving human being, started scooping it out like it was the
Pete-
bottom of an ice cream container.
And
Then it hurt.
yeah, it started to catch up with me a little bit.
I don't know why. I have no remorse. Like, I really do.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Whew, let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You got to be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents? I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
Tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tastytrade's low commissions. Try it out and leave us a review.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tastylive.
Tom versus Tony. Round 1. Trade. Massive volume. Killer trade. Surplus. Shoot. The fall. Volatility boost. Killer trade. Resistance. Straddle support. Order sold. You win.
If you missed the live show, here's our cherry on top weekly recap.
I went to the pool at the,
You went to the pool at the Soho House?
yeah.
And you didn't go to my pool?
Yeah.
Do you think he wore his Crocs?
100%.
100%.
You can't.
100%.
You wear your
them.
jorts. You wear your booty jorts with like your ass hangs out just a little bit in the back. I'll gross myself out.
I just drew up in the back of my mouth a little bit.
Daisy Dukes in like a crop top with Crocs. Meow.
Got the need for speed? No problem! At Tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tastytrade, make your move.
And welcome to the Listen Jenny Show. Yes, it is Tuesday. It's not Wednesday. We are live from the SIBO. We've got the SPX pit behind us. What do you think, Liz?
You know, as you're bringing it in, all I kept thinking about is remember those old Double Mint commercials? Because now it's double the fun.
Double the fun, double the pleasure, double the fun. We're here 2 days a week now.
2 days a week. These guys are thrilled. Let me just tell you.
Everyone gave us dirty looks as we walked in today because they have to be on their best behavior and wear their jackets when we're on air.
Yeah, because I guess you don't need to wear jackets anymore, except,
I think that's still the rule. I think it's still the rule. They just don't follow the rules.
No, I don't think they would need to wear jackets anymore.
Really?
I don't think so.
What say you, team? Jackets required? Yes, jackets required.
Well, I'm going to ask a floor official as they walk by because there's a big sign that says jackets are required between 10 and 11 on Wednesdays and now Tuesdays.
Now Tuesdays. Buckle up, boys. Keep your jackets out.
Yeah, keep your
jackets out. We'll be back tomorrow.
I'm hoping these jackets are washed because I have not seen a coat room.
I took your jacket home. I took your jacket home when you went on vacation, and I was going to wash it, but then I know you might like it a certain stiffness.
I will tell you, I have to keep washing it, but this jacket is 3 sizes too small for me. I have very long arms. Jenny ordered me a minute jacket, so this is how long I have.
Okay, Liz has been complaining that her jacket's too small for a year now. We've almost been here. It's almost been a year. 1 year. And let's just fork over the $75 to order a new jacket.
Man. Tiny jackets for life. Fat guy in a little coat. What's it from? Chris Farley.
Yeah. All right. But I can get you a new jacket.
I just need longer arms.
These aren't meant to go across down to your wrist.
But they do on you.
All right, we actually have a lot going on. We are taking live tweets. Send us a tweet, include the hashtag LIZJNY. If you're on YouTube Live, you can post something on YouTube, and Frank the Great will share it with us. Frank, we were all just talking about you. Everyone sending thoughts for your wife. We know she broke her foot, ankle, leg.
All of the above. It is. We're sending everything that we can in your direction because that looks pretty.
Yes,
pretty
everyone's
intense.
Concerned, and we were just talking to your nephew about it all. We feel so bad. Hopefully, she's okay. Yes. Now he said they're not going to make it to Rhinelander for a while.
Oh,
right.
Yikes.
Yes. So thoughts and prayers go out to your wife, Frank. But he is manning YouTube. Maybe he's at the hospital. I really don't know.
That's okay. I actually have it pulled up. I glance occasionally at it, so I will jump into the chat and see what I can do sometimes too.
Okay.
We also have a big day. We have Jenny. I know you don't know this because I don't think you were listening this morning to anything. But how many companies do you think are declaring earnings today?
12.
44.
Whoa! I wasn't even close. No, I
mean, there might be 12 on Bob's list that are vetted, but 44 companies are declaring, and they're getting big.
I'm relying on you for the news from now on because I've become addicted to these audiobooks. So I finished the one audiobook yesterday, started another one after.
Oh, she's showing me on the train, and she's like, "Oh, I'm doing this now." I was like, "It says you're on chapter 12." She just started.
I am.
Yesterday.
So I'm counting on you for all the market news.
Challenge accepted.
Normally when I'm listening to market news, instead I'm listening to my audiobooks.
Challenge accepted. I accept. So you get 44 companies today that are declaring earnings, and I think somewhere in the morning, somewhere in the afternoon. But we're getting into the meat and potatoes of earnings season.
Yesterday we put on four earnings trades.
Knock on it. Wait, where's wood? Here's wood.
Knock on
wood.
wood.
We're 4 for 4.
you want to jump in and take a look at those?
Before I have to eat my words.
Yeah, before one of them turns into a loser. Okay, yesterday we put on earnings trades in PayPal. We sold the 60 put in PayPal. I'm going to take that off. We sold it for $92. We're taking it off for $8.
Okay,
so we made $84.
And as you're taking these off, can we kind of talk a little bit about each one and why we why we chose it? So this one was was this the hefty buying power?
PayPal?
Yeah. See what you get back when you close it.
I think it was UPS.
Oh, maybe it was UPS. Okay.
I think PayPal was only $500 or $600. We're getting $738
so, I mean,
back.
That's actually not that bad. We could have done a durational one there, but PayPal's up only 80 cents. This is why I like selling premium. I would call this a non-move, wouldn't you?
Right, right. It didn't really move too much. We made our almost full amount. I'm going to pay 9 cents to buy that back. We're getting 700. We're going to get. Wait till you see our buying power by the time after I close these 4 earnings trades. Oh, I think somebody is talking so loud they're trying to get on air in the background. Your cousin, Frank. Okay.
It's nephew, not cousin, but that's okay.
Well,
I'll keep her straight, ladies and gentlemen.
Royal Caribbean, we did the 217 calendar, and earlier it was trading 217. 8:30 on the open. Where was Royal Caribbean?
Big orders are going that way. 217. Liz upside down, Royal Caribbean.
This is a talent you get from working on the trading floor. You can listen to 2 things at once.
I did listen to everything you're saying.
She was listening to me. She was listening to them.
Hippie just had a big order. But the, 217, and it was. And another breaking Royal Caribbean news.
What?
So, you know how I went to Haiti and it was my favorite stop?
Yes.
They're no longer going there again. Too
Why?
dangerous.
Too dangerous.
Yep. Barbecue. It's the guy who's running the ship in Haiti. I mean, I shouldn't laugh. It's a horrible situation, but that was the most beautiful island I'd ever been to.
Okay, so hopefully they have no relationship to the old... And not Bob from Texas, not Barbecue Bob, Barbecue Master. Do you remember?
Oh, yes. Groupon 5-cent puts, buy the bucket load.
This guy, Barbecue Master, is what he was known as. He would sell nickel puts to pay his mortgage. He would say, I'm paying my mortgage with nickel puts. And he would just sell nickel puts and Groupon.
We haven't heard from him in a long time, so.
Well,
I think Groupon's out of business.
Royal Caribbean, it's down to $210. We're still up $47 on our little calendar. We only paid $1.40 for it.
Okay, so I will tell you, this was the at the monies. It was slightly so when
it was a slightly bullish trade.
Yeah, it was slightly because I think it was trading like I don't know 215. So slightly bullish trade. So we said this is equivalent to it not moving, and really we still made money on it because the expected move in Royal Caribbean was $14.
Right, it's still close enough. We said it could go down a little bit, and this could still make money. It just couldn't go down too much. We only paid $1.40 for this. We're closing it for $1.87, so we made close to $50. We'll take it. We'll take it. All right,
and there's no need to
185.
And I don't care that much. You took off PayPal, right?
Took off
Royal Caribbean. I don't care that much about either of these stocks to get back in them.
29 rank in Royal Caribbean, $211 product.
No, it's not that liquid. I mean, you've got the million there today, the 197 million.
It's fine.
But that's only because of earnings.
Yeah, we'll leave.
Who's up 15?
I know. Okay, SoFi up only 32 cents now. It was up a little bit more on the open. I think, because we were looking at SoFi in the train, it was up a little bit more. Because we were both complaining that we didn't have big enough. We wished our positions were bigger.
I mean, this is still pretty good. You got 60% of whatever premium you sold, because I think we sold it for 64 cents. That's not bad.
And it's a 17-day. So it was for 64,
it's a 17-day. There you go.
Buying it back for 25. We didn't get full profit because it's a 17-day.
That's right. If you notice, I can't hide anything. My face shows everything. When I was like, why isn't it more profit?
Yeah, right. Why didn't we make more?
Because it was the 17-day.
17-day. But we'll buy that back for 26 cents. When the market's 25.
Wait, did you already buy it back? Can you go back to the position page real quick?
Sure.
I just want to see, how long have we had that on for? How many days? Because I can't.
One day. We put it on yesterday.
Okay. I was going to say, that seems... maybe we went out so we can get at least 60 cents.
If we wanted to stay in SoFi, the rank is only 21. So we're going to pay attention to rank.
Yeah.
And see. If they're all low, we'll be back into some of these. But if not, I'm not even sure where VIX is right now.
I will let you know. You stay where?
Okay.
You stay the course?
Okay, so that's 1, 2, 3 winning earning trades off. One more to go.
VIX is down 1.2% to 24.84.
Yeah, 24. Yesterday, how high was it?
I'm gonna record, like just me, not us, not from Tasty, the VIX bit tomorrow when we're getting our computers.
Oh yeah.
Yeah.
Vanetta, it's coming. They keep asking us to record some shots
tomorrow.
We always forget.
Hey, listen, our train was 20 minutes late today.
We're lucky we made it.
It was causing us heart palpitations. We didn't know whether we should turn around and film from home, but we made it. We're here.
Okay, so we did a downside ratio spread in UPS. I don't know if you can see that at the bottom of the screen, Liz.
I can.
Downside ratio spread, it's pretty much full profit because, and it didn't even go up that much.
You can butterfly that off for the amount of money that you
but
get from
it's a 3-day.
Like, if it drops, it drops. Because let's walk through the process to see.
Okay.
Because you're going to buy it back for full profit.
2 cents, 2 cents, full profit.
Or you can buy let's see how much it is.
So we have the 93.91 to be the 89 for a nickel. So
there you
we
go.
pay a nickel, and we have a butterfly for 3 days.
For some odd chance.
If you all drops. Another thing I would look at is instead of buying that for the nickel, if the 91 were about the same price, you could just buy one of those and then just have a long put spread.
And take a look at this. By buying that in, by putting in that, where you're paying 4 cents for it, you're getting back $1,290. Is that right?
Yes,
This is the one that cost us so much yesterday.
Using a lot of buying power.
Yeah.
So we have that little butterfly on for the rest of the week in case something crazy happens in the market.
I mean, I don't expect that butterfly to come in.
No.
But it's the same price as closing it, so why not take the free shot?
Sure. Okay, so that's it on earnings, but hey, that's not bad. Not a bad start.
Nothing to shake a stick at. I mean, honestly, 4 for 4 with earnings is pretty good.
Yeah. Oh, we didn't look. We were going to take a look at putting in that SPX $10 wide today.
It's early enough. Let's take a look. So SPX, now this is on the heels of Jacob's study. It's something that I was actually out of left field when I saw the results of the 40 delta $10 wide.
I know. Now, yesterday we closed sharply unched, right? We were completely unchanged at the end of the day. Now we're up $15 from the open. If I go 40 delta, it's tight.
It's tight, and it's going to get tighter as the vol comes in. But SPX still has a 31 rank.
30, and then the 55, 55, 30, 40, 50. They're always 25. They're always about $25 wide
during our show.
Apart, the distance between the shorts is always about $25.
And you're getting 640. So we were getting 650.
Ooh, we were getting 690 the other day.
Yes, we were getting over 7 at some point. But this is still high because do you remember Jacob's study? It said the average price was about 50%. So this is still high. Ship it.
640. 640. We'll ship it. We'll see. I don't know.
I mean, this is going to tick away as it goes. This isn't
unless
like the
it gets
Jajun.
Close to one of our sides. If we drop 5 points or go up 5 points, it might hit because one side will get
possibly,
close.
Yeah. It's hard with both sides. Like the Jajun trade, you're looking for a directional move. So if you get that move, it'll in one direction or other, it'll pop.
So the risk on this trade is similar to the Jajun trade. If we're risking 250, we were paying 250. Sometimes we were paying 260, 270, even 290. So we're risking somewhere between $250 and $300. Here we're risking $350.
Yeah, I mean, it's a little bit more. It's similar, but it was more similar when you were getting $7 for it.
I can't wait to see what Jacob has for us tomorrow.
He's adding to the study, remember?
Right. So we'll see.
He's building on it. I can't wait. Okay.
So that's working. Earnings are closed. That's working. As far as today, we are
taking live tweets, and I know there's a lot of earnings. Like, take a look at that calendar. I want to give a big public service announcement just because I want to make sure it happens. We've got a special guest coming on our show tomorrow.
Oh, we do.
In the beginning of our show, it is one of our favorite floor officials. He is retiring, Ed Barry, who you're going to learn his name tomorrow. So tune in if you want to see. We're going to ask old floor stories. We're going to have a lot of fun with that.
He's been on the SIBO, I don't know, since he's been on the SIBO floor a long time, and he is the kindest, nicest, sweetest man down here.
Really, he truly is.
Aside from our crew right over here. In addition to our crew.
In addition to Matthew and Steve. Yes. The nicest people down here is Ed Barry. So he will be live with us tomorrow during the first segment. So we're kind of looking forward to that. We're really excited. I think you have to retire in order to be able to talk to us. Because nobody else can talk to us because their firms have them under lockdown. We can talk to them privately, but they won't come on the show.
But it's nice he's coming on, and everyone around here is sad. You could just feel it. Everyone's sad that he's leaving because he's been such a staple here on the floor for so many years.
Yeah, he has been for years.
And I believe he got to ring the bell. When you retire, you get to ring the bell.
He said he didn't want to, I don't think.
Oh, really?
Yeah. Remember what Steve said?
Okay, so today, if you look at that list, Liz, Visa, Starbucks, First Solar, PPG, what is that, Procter & Gamble, Burger King,
Humana, Caterpillar.
What's WDC?
No idea. ADP, Hess, and GEHC. I don't know what that is. And you can see, this is Bob's vetted list, which is wonderful, and we appreciate that.
And that's why I went with 12, because I'm so used to seeing Bob's vetted list. that's why when you ask me how many people are coming out with earnings today, 44 never crossed my mind because I'm just used to Bob's vetted list.
Well, we're in the bulk, and this is the vetted list. There are other companies that are going to be that would be reporting today as well.
Yeah.
So
there's a lot.
Yeah.
Tomorrow, some big ones. Tomorrow we've got some big ones for sure.
And you see what's happening. Like you don't even get, and the same thing with yesterday. He's removing one day, and you still have show more. It's going to be a laundry list of things that are coming this week. I think we get the big dogs on Thursday too.
Yeah, you could just look at the symbols.
Yeah,
see all the symbols
Amazon, Apple,
McDonald's,
Riot. Yeah, they're all
CVS, Microsoft.
Yeah, those are all Thursday, either before or after the close. But yeah, this is a big earnings week. So we are on an earnings high. Because we're 4 for 4.
4 for 4. Today from this list, I would do Starbucks. That for me personally, that might be the only one I'm playing.
I don't mind looking at some of the other ones. I don't. I'd like to take a look at Caterpillar just because. So when my dad passed, I did get gifted some Caterpillar stock, which I sold. So I like to see where it is.
Yeah, you support. You still don't have. Do you have any of your stock left?
No.
Liz Claiborne is gone.
Okay, breaking news. We'll talk about this tomorrow. This is from Frank the Great. He's given us fun facts about Ed Berry.
Oh, good.
Keep them coming, Frank.
Keep them coming, Frank.
Keep them coming.
Okay, so you had Liz Claiborne, you had Caterpillar.
Oh, no, Liz Claiborne was something that my dad bought and put in my account. But Caterpillar was something he had in his account that I got gifted. So, yeah, my brother.
Now, if you think about the stock picks you're picking for JD, if you give him any, like I gave JD OKLO, and you what did you put in JD's account?
I just gave him the cash and let him pick whatever he wanted.
So, like one day, if he is 50 years old and he says, "Sorry, Miss Jenny, I got rid of my OKLO," I won't care.
No, you're not going to care.
I'm not going to care.
Hopefully, he can send his kids to college with the OKLO that you bought. So OKLO, I just glanced at it, is down 1.5% at 24.11. It's only got an 11 rank. OKLO.
I still continue to sell puts in there, but I'm having to go further and further to get anything. But honestly, I'll look for $1 each week. Like now, I'll probably go out to the 10-day and probably sell the 22.5.
So you know what's crazy? You're looking at a 22.5 product, and you can get 90 cents, $1. I'm just going to round for a 31 delta. It's using a lot of capital though.
It's cash secured.
Cash secured.
It's cash secured.
Cash secured. Okay, let's jump into some earnings because I want to make sure we get to everything. I'm going to keep an eye on Twitter. I will keep an eye on the chat.
With that list, I said I would only do Starbucks. Starbucks is something that I typically trade. And it's down at a level, or I don't mind selling puts in Starbucks. Or either puts or downside ratio spread.
Sure, let's take a look. So honestly, sometimes this looks good. I'm not a fan of Starbucks, the product. We've said this before.
We know this.
But and this sometimes goes in 250 wide strikes.
Do you want to turn your volume off?
Yes, I do. I'm still
getting alerts
from the cruise. I had to join WhatsApp to talk to somebody on the cruise. Yes. And then, I don't know what happened or how this works. Some trading team found me on WhatsApp and is constantly messaging me.
Just turn off WhatsApp notifications.
Well, we'll do that later, but I kind of wanted to see what they were doing.
Yeah,
you know what I mean? So I joined some rogue trading group and I want to see what they're up to.
I still like getting my coin notifications of what coins are moving.
Yeah. So these people seem to be making a lot of money. They keep
Okay. In Starbucks.
No, I was going to say that sometimes it's 250 wide strikes. So I don't know if it's going to be. No, you got dollar wides.
It's only $83 now. In the weeklies, we've got dollar wides.
Okay. And let's take a lesson from the 4 that we know. All of them stayed within their expected move.
Right. They all did. So I just went to the expected move, that 78 put, $1. That doesn't look. That's probably what I'll do. The 78 put for $1.
Now, my gut reaction when you have dollar wide strikes in something that's $80 would be a Jade Lizard. But you're getting $1. Puts are neutral too. You're getting $1 the same way. You'd be moving your put down by 1 and capping your upside for no real reason.
If we did a Jade Lizard, what I would do would be, maybe that 77 put, and instead of the call spread, go further
and sell
just go further and maybe get 40 cents on that 93 call.
Yeah, that's not bad. But I kind of like the $1 on the put. You've got a 48 rank in something, it's beaten down towards the bottom of its range. And then what are you going to do if Starbucks goes down? You're long Starbucks. It's an $83 product.
And I don't know how their earnings are going to be. They've honestly been kind of empty lately.
Have they?
Well, the drive-through lines have not been as long as I usually see them.
Oh.
I don't know.
I'm not a good litmus test for this because I don't.
Your kids go there.
No.
Okay, so I'm going to look at a downside.
We're a Duncan family, like all Duncan.
What am I doing?
Oh, you got to buy one, sell two.
Buy one, sell two. You're getting 81 cents
so
on this.
That's not bad. So we did the same thing in UPS, and I kind of like it because, and then if it drops, you can make a little bit more money. You were getting 80 cents anyway.
And if it drops, it's almost like a mental game. You're like, oh, okay, well, maybe my ratio spread will hit.
Yeah.
It's
and
only
then you can leave. You just leave it until the end then.
Okay. I'll do this. We're getting 79 cents on this ratio spread using 1100.
Very similar to UPS.
If it shoots up,
great.
Yeah, we'll make $80.
Great.
Not much different than the dollar put. So I'm working
I like that
in Starbucks.
Good.
And if Starbucks drops down to that level, 77, 76.
It's been there.
But yeah. I've been through a wild ride in Starbucks, and I've seen it have wild moves. It's had some crazy moves on earnings.
Speaking of that, I don't know why. This is where my brain jumps. Okay, so pipe down back there.
Hey, we're trying to do a show.
We're trying to do a show over here. The Starbucks made me think of Bad Coffee, which Tom owns. So Tom is now in direct competition with Starbucks.
Yeah.
But the guy who I ran into at Gap was asking me if Tom's going to franchise Bad Coffee. I was like,
I don't think so.
I don't think so.
I don't think so.
He's like, he really should. He's got a great concept.
I think if someone wants to go to Bad Coffee, you have to come to Chicago to go to Bad Coffee.
Bad Coffee. And it's hidden. There's no directions.
Okay, so Starbucks is in. From that list,
I'd like to look. So I don't know that I want to put something in. I do want to look at Caterpillar. I'd like to look at First Solar. I don't want to put anything in First Solar, but I think those have been myrtleated, the solar companies.
We'll look at that.
And I want to look at Visa.
And it's bothering me that I can't remember what WDC is.
I'll look.
WDC, Western Digital.
Oh, there you go.
Okay, you want to look at FSLR?
I don't want to put a trade in. I just want to see where it's been because I thought, they've been myrtleized. All the solar stuff has been myrtleized. You know what else has earnings today? Hold the phone, Jenny. Let me make sure I'm not lying to you. CCJ is May 1st before the bell. Is that today?
Yeah, but CCJ...
We have a position in it.
No, we don't anymore.
Oh, okay. That's the only reason I was
We don't
saying hold the phone.
Okay, what does it say? Earnings May 1st.
After the bell.
That's not tomorrow, that's the next day.
30 days has September, April, June, and there's 30 days in
30
April.
days in April. I know. My daughter was trying to count how many days until our next vacation. I was like, don't worry, there's only 30 days in April.
30 days? I have to go through the whole song. 30 days has September, April, June, and November.
So CCJ, we can look at that tomorrow. All right, Caterpillar.
Well, the only reason, First Solar is solar, Caterpillar or CCJ is uranium, which is the nuclear. So those are both like double-sided energy coins. You know what I mean?
Do we want? Let's take a look at First Solar, FSLR.
No, I don't.
We used to trade it back in the day. We've got
when
it
it was cheap.
Filled in Starbucks and SPX all at once.
Okay.
So SPOOs were up 10 when we put Starbucks on. They're only at 1, which is why we got filled. It's probably
SPX.
right. Yeah,
we put SPX on. Yeah.
So it's probably trading very close to our put spread. That's why we got filled. But I'm going to put in a GTC for that. SPX. We sold this for $640, and I'm going to put in a GTC to take. I want to say 10%.
Set your bar real low.
10%.
Yes.
We only got $640.
Yeah, 10%.
So I'm adjusting this close position for 10%, send and send.
Beautiful.
I think I'd rather do these than the Jajun if the risk is similar.
I do too. That's what you want to jump back in sometimes.
Because if we had done a Jajun, SPOOs were up 10, now they're not up at all. We would have gotten filled on that immediately. We just get filled on those.
You would have gotten filled, right?
So we've got the order in. Okay, back to First Solar. I'm curious what the buying power is. You can get pretty far. 12.30 expected move. If I want $1, I can go all the way down to the 122, and it's trading 138. That doesn't look bad
for $1,200. That's the same price we paid in.
Yeah, but look how far we are. We were much closer in Starbucks.
You are much closer in Starbucks. Why is Starbucks holding up so much capital?
It should be about 20%. So,
but this, I mean, so Starbucks is $80, and this is $138. Now, granted, you're a little bit farther, but this is much. Like Starbucks capital is a lot higher.
But okay, so let's talk about this. Let's say you got long at 122. Your max loss is 12,000. It's using 1,200. That's only 10%.
Yeah, and Starbucks
I thought it was usually about 20%.
It is usually 20. That's what I'm saying.
So this is not using much buying power. Because we're so far, because it's a 13 delta. If we were at the expected move,
it's still holding up.
1,500.
It's still not that bad. It's still only 15% or 10%.
What do you think? 122 put for $1, and if we are forced to get into First Solar, we're forced to get into First Solar.
Okay, I'm not going to lie to you. I've been really liking getting $1 with the downside ratio spread.
Okay.
Just because if it drops, whatever.
I can make this one $2 wide. Hold
on. You got to buy one.
Hold on. I know I got to switch that. Buy one, sell two.
There you go.
80 cents.
I like this because it just gives me a false sense of security, Jenny.
Then when it's down, instead of crying and saying like, "Oh my gosh, we sold this put and it's down," we say,
"So you're saying there's a chance."
This is a losing trade, but there's a chance.
Like Dumb and Dumber. So you're saying there's a chance.
That's exactly it. We're like Dumb and Dumber.
Dumb and Dumber. So you're saying it's the same thing, but if it goes up, you still get that.
Right,
I would never do this downside ratio spread in like a durational trade.
No, but for the week, it's ending on Friday.
Yeah.
Today feels like Wednesday. Don't be confused. It's only Tuesday.
You're not coming to work on Friday?
Oh.
You're filming from an
I don't know where I'm going to go
location.
tomorrow when I wake up. Tomorrow, Wednesday. We've got to get back on the train.
I'll try to remember. You might see me, you might not.
All right, I'm working that ratio spread in First Solar, 77 cents. I'm not gonna chase that trade.
No, don't chase it. Okay, Visa, Caterpillar. Let's take a look at both of those.
Visa.
And then I would like to get to the SIBO's most active. I think it's pretty interesting.
What? That was
Snap. 129,000 options.
Well, they have earnings.
That'll do it.
Okay, Snap has earnings today. So what Liz was referring to, she's looking at the SIBO most active, Snap 11 call, 129,000.
Huh. Let's take a look.
Let's look at it.
So this is not proprietary information. You can go to the SIBO.com, go most active. That was the first one on there.
Was it the 3-day?
May 16th.
No, it's not the 3-day. It's
May 16th, so 17 days, the regular May.
So
11, and the volume keeps going up. As I'm watching it, the volume is ticking up.
That weekend, I'm just going to let you know, your wheels can start spinning. My mom's turning 75. Any ideas?
I got some ideas.
Okay, all right. I'll take all ideas.
Okay, so...
And this is scary to think it's only 17 days away and it's her birthday weekend.
That is kind of crazy.
Yeah.
Okay, so if you look at this, it's the May 11 calls. 144,000 are already in there, and this is 129. These could be closing orders.
Could be closing. But why would it be closing on a day Snaps up?
They're selling out of the ones they bought. I'm sure they made. If you have 144,000.
Oh, if they bought them.
If you have 144,000 of them.
In my mind, people sell options.
I know. Like, what? But if you have 144,000 options, it's up a dime. Right?
Yeah.
Sold.
I mean, who knows where and how much they bought them for when Snap has been, honestly, like, Snap's really fallen down. So unless they bought them.
Well, we do have a Snap position.
We do. Let's take a Snap.
Isn't that what they do in poetry readings? Instead of clapping?
So, you know, with this family that we know,
yes,
she is a poet. And I went to one of her poetry readings, and people really did do that. Like, instead of clapping.
It's out of control. So funny. Okay.
All right. Selling the 8-9. We're short the 8 put and the 9 put. They're both worth something. One's worth 59 cents, one's worth $1.06. This is our Snap trade. This is our earnings
trade. Do we want to take one off? No.
I don't think so. Just leave them.
Yeah. Okay. But we
got $1.65 to make in Snap. If I look at this side here and one of them said 50%, I would say sure. But it's not. 20%, 27%. Let's just leave it. What's our risk in Snap?
Snap going to zero. Well, my kids use, you know what was really fun? And I didn't know this. Your kids use Snap too, don't they?
Mm-hmm.
The whole time we were in Austria and Germany, and JD would literally take his phone and just kind of go like this to wherever his surroundings were. I was like, what are you doing? He's like, they're my Snap memories. I don't send them to anybody, but every year it pops up where I was.
Oh, that's cute.
I was like, that's kind of fun.
That is cute.
I didn't know that. So,
but I mean, I guess that's just like for us, Facebook memories.
I don't put anything on Facebook.
No, but it posts, then it would post.
Yeah, but I don't put anything on there. But I think if it was just for me, I would like it. I don't like it because it's out there for everybody else.
If it were just for me.
Yeah, I would do the Snap if it's just for me.
And there are so many things I don't post because I'm like, I don't want everyone to see this. But
it would be fun. Yeah, that's what I'm saying.
But I think our phones now do that, where our phones will pop up like, here's the memory. So today, Logan's like fathead on a stick popped up. It was like,
his prom.
Here's the memory. It was his prom.
His head on a stick. It sounded so bad when I said that last week.
So that popped up today.
Yeah.
Yeah. Well, I don't mind being. I don't
So we're
mind
long
being
snap.
short 2 puts and snap.
So we're long snap. Okay.
That's fine.
I was just shocked at, usually you don't see that. They do have earnings. That's also not on Bob's list, which is great. Like, Bob's list is vetted. Snap isn't that. I mean, 17 million shares, but that's because it's...
Okay. So far earnings trades are Snap. What else do we get filled in? We're working for solar. It's getting away from us.
I want to look at Caterpillar and Visa.
And we're in Starbucks. We're filled in Starbucks. Caterpillar is 305. That's what's hard. It's expensive. Even though it's fallen, it's still expensive for us. I don't... $15 expected move. Something had a big move today. Spotify.
Oh, that had earnings too.
Yeah, did you see that today?
No, is it down or up?
Down. Spot down $36. But I guess its expected move was more than that, so...
Oh, but
right?
still, that's a big move for Spot.
Yeah.
I guess it's a $500 product. That's like a...
It's down 6%.
That's a drop.
6%. No, 6% is decent.
That little 6%, the percentage has thrown us off.
You know what's having a big move today? Up 18%, and not as much as it was. It was up 20-something% earlier. Hims. And Hims had... I don't know what the news is in Hims, but big jump. Let's try to see. What's the Hims news?
I don't think Hims is that. Oh, 86 million shares have traded.
Hims and Hers rises on partnership with Novo Nordisk. Oh.
Okay.
Okay. Now we see.
Sell Wegovy on its platform. I don't know what Wegovy is. What drug is that? Jenny, what do you use Wegovy for?
I don't know.
That pill you take on the train.
I don't know.
I'm teasing her.
Although Hims and Hers. So that was the one that on the Super Bowl had all those commercials of people just like getting the pills in the mail and taking these pills. I don't know what kind of pills, but we got long Hims way back when, back on the Super Bowl, around the Super Bowl, which would have been February, which was right around here.
Which was great, right there.
And then it ran up, and now it's back down. But jumping up today with their partnership with Novo Nordisk.
Novo Nordisk. So it's at the low. Look at can you get on the, there you go. It's at its low today, though.
Yeah, because it jumped up, and now it's been falling.
Yeah.
So I'm kind of curious.
We've got a lot of tweets coming in, too, by the way, Jenny.
They have earnings May 5th. Their expected move in the 17 days, $8. You can go, it's up $5 today. You can sell the 26. I know the earnings are later, but
it's all cash settled, isn't it? Yeah, almost.
It's not. I'm in Hims. I've stayed in Hims. I've stayed in Hims since we got in way back when.
So it's also had that. This is one where I would.
There's decent premium.
This is one I do a downside ratio spread in.
Yeah, right. Well, and the earnings are not yet, but I don't know if anyone feels like, oh, I missed the move. I want to get back in. 28, 26.
You're not going to get anything. You're going to get 28 cents.
You've got to do 27, 26. You're not. I don't know.
It's the same thing as if you sold the 25.
25. And I wouldn't.
But look at how wide those markets are. 61 at 83.
Oh, yeah. Well, 118. I've been selling puts in Hims.
Can I also give a huge shout out to our team here because they have solved my vision problem by bringing the screen so close to me.
Yeah, you don't even really need glasses anymore. Watch this. Take off your glasses. Liz, what is the 25 put?
64 at 82.
Take off your glasses now. Liz, what's the 29 put?
64 at 82. I can do it. 64 at 29.
You don't even need them. It's a miracle. It's a miracle.
I can see. I have legs. It's like Eddie Murphy from Trading Places.
Okay, but anyway, just want to bring this to your attention. Hims has really had a big move. Caterpillar, I think we don't need to trade. It's $300. It's out of our budget.
Out of our budget.
Yeah.
What's Visa trading at right now? Visa, where you want to be. Isn't that this, Logan?
338.
Yeah. I don't like it.
I don't think so.
That's okay. We're in there. I do want. We're gonna go back and forth. I do want to go to Twitter if you don't mind.
Sure.
Because we got a lot of tweets that are coming in. Just go straight. Go Bob, and then just start scrolling up, or you might have to go top down.
Okay. Here. Let me refresh.
Because you might have to go top down, yeah.
Here we go. Jack Tucker, reducing size to manage swings in 0DT SPX.
Oh.
Collected 56.75. So he's typically been collecting about 11,000. He's cut it down. So he's 5 lot instead of 10 lot.
And SPOOs are up $2.50, $3.
Yeah.
$2.25.
So, and And the VIX has come down. Vol's coming in a little bit, and we have been having some movement, so it makes sense.
Yeah, this does make sense. And that's what you're supposed to do when the vol comes in a little bit, Jack Tucker. So you're going to get a gold star.
Gold star for Jack Tucker. Jordan, Snap earnings.
Yes, thank you very much. We just,
two short puts. We have one in the money put and one short in the money put, one short out of the money put.
And I think they were letting us know that when we were looking at it. I was like, Snap! 192,000 or whatever it was.
Okay.
Oh, I believe this is a new tweeter.
Yeah, welcome. Welcome. This is, I don't know if it's Keaton or Ketan Patel, managed to go 2 for 2 on earnings, GM and SoFi. We forgot about GM. So
GM had a crazy move today. Diagonal spreads paid off. Thinking about Starbucks and Snap today. Okay, so Starbucks, we just did the downside ratio spread, and Snap, we have 2 puts in.
Two short puts. But good. I want to take a look at GM.
GM had a big move this morning. Percentage-wise, I don't think it's like a big move.
Down
2%.
Yeah, I think it was down more.
I think it must have been.
Take a look at that bar. It was down. The low was 45.34. So it's up, and it was down $2. So down over 4%.
It was almost like a tale of two cities. They
it's quiet
GM
now.
And something else. I know. I don't like
very
when it's
quiet. Spoo's down 50 cents.
GM and something else had earnings, and both of them were like a tale of two cities. You know what's so funny? I don't know. Do you think they can hear the voices behind us?
The viewers?
Yeah.
I don't think so.
You don't think so? Because they all sound like Pack-A-Day smokers.
I don't know. They all sound like what?
Like the gruff Pack-A-Day smokers. Everybody's got the gruff voice.
Oh.
You know what I mean?
Maybe that's why we did okay as women. Our voices stood out to, like, when the broker would come in the pit and they'd call for a market, maybe our voices stood out because they were female voices instead of male voices.
That's what Kathy said when she was on.
Oh.
With us.
That's why it's stuck in my head.
Yeah.
Huh. Interesting.
It's a differentiator.
Where was Kathy? She was over on the P Coast. Yeah. I didn't know what pitch she said she was in.
She was in a lot of them, I think, too.
Yeah.
Same thing.
Okay, so GM 38 rank earnings are over. Would you have any interest in getting in now, going out to June,
sure,
and selling this 42 put for $1?
How much capital is it? I can't.
Only $498.
I'm interested.
Honestly, if you see if we see earnings and earnings are over and rank's still high,
my
sure.
problem here, and this is a personal problem. It's June.
Hey. That's the way the cookie crumbles. That's the mechanics.
I know.
We're going out to June.
I know, but it's crazy. To get $1 in June, it's going to be like watching paint dry.
It's only using $498.
I know, that's true. That's the one thing.
If this were using too much, I wouldn't do it.
Because it's out in June, I'd say no thank you.
97 put, 42 put, $97. Using $500.
That's an after earnings post, yeah.
Okay, so that's working.
So thank you very much for those. Let's go back to Twitter.
I want to keep an eye on our SPX. So it's up $20. So now we're back to SPOO's up 10.
SPOO's up 10.
Which is where it was when we started to put this trade
on. SPOO's
on.
up 11 when we put it on, and then it came down. We got filled, and now it's back
up.
We
tried to put it on when SPOO's were up 11. We got filled when SPOO's were almost unchanged because it came down to our put strike. Now it's back. Up $25.
And I love that Jack Tucker kind of pared his down a little bit, taking a little bit less risk.
Yeah, it makes sense.
Yeah. Okay, we'll keep an eye on that.
Okay, so GM, we just sold a put in GM. We have our puts in SoFi. We've got our downside ratio spread in Starbucks. I think we're good.
Yeah.
All right, look at Cupcake Trader. Opened a Lyft Strangle last night as it fit my little Tastylive account. Yeah, I like Lyft. It's been, it's a nice.
Let's take a look at Lyft.
It has decent vol. There's enough premium, and it's a low price product.
So let's go to Lyft and take a look at it.
Let's see.
I've got the strikes up, so you can just go to it.
And we have been in Lyft.
So it's June 6th, the 15.5 call,
June
10
6th.
Put. Okay.
It's a 10 put.
It's a bold choice, not going with regular June.
Well, this is TP. This has got, to me, this is TP. It has TP written all over it. TP will go to any weekly close to 45 days.
I like that better because they're going farther out in time is bad. So it was the 10.5 put, it was the 10 put, and the 15.5 call.
Oh, and a call.
Yeah, it was a
Getting
strangle.
crazy. Now
look at this, Jenny. So here, you get 71 cents and you're only putting up $200 to do it.
No, that's not bad. Now, I hesitate with the naked calls in smaller accounts because in the smaller accounts, I like low price products because I know where my cap is. Like, I know if this goes to zero, I can't lose. Like, you see, there's no max loss here with the naked call. If I remove that naked call, my max loss is 960 if this goes to zero. With the naked call, we have run into times where things start running and they don't stop. We've seen that before, which is why in the smaller account, I like smaller price products or lower price products, but I usually stick with just the puts.
And earnings are May 8th.
Right. And there's nothing wrong with selling calls. This is just my personal preference is I don't really do it.
In my personal preferences, I don't sell both sides going through earnings. Even though you got a 63 ranking, even though there's a lot of things going on, the volatility has come in a little bit.
So
I don't mind it though. I mean, Cupcake, you know what you're doing. You're a great trader. You've been doing this for years.
If I were going to trade Lyft, I'd probably just go right after earnings, or maybe May.
You can go to regular May.
And get 50 cents. Here's 55 cents on the 11.
Yeah, and so you're in May. Can you do me a favor and show the green bar in the green bar for the earnings cycle just to see? You're right there.
We could sell so what is this, the 11 for 56 or the 11 for 50? I'll just go in the earnings cycle and sell the 11 for 50.
Yeah.
Now, it's not as much. She was lower. Cupcake Trader had the 10 put. My break even is 1050 instead of 930. It's worse. But if it goes down, I'm thinking I could just keep rolling and collecting more credit for the roll.
I think so too.
So,
okay. I have to say this because we refer to Cupcake Trader as she.
Oh, is Cupcake Trader a man?
Go back into Twitter. We're going to scroll for a little bit. I apologize about this. Scroll down. Scroll down, scroll down, scroll down, scroll down.
To the top?
Down. Keep going, 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 keep going. Right there, Cupcake.
Cupcake Trader is a fella. This was my... Okay, I'm so sorry. I think I've confused Cupcake Trader with... Remember
Trader.
MK Baking Trader?
Yes.
Yeah. So I apologize. We shouldn't assume just because they bake cupcakes.
Because I don't bake cupcakes. You do.
Okay. I'm really not a baker. I'm more of a cook. Like, I like to cook food.
You're like a homemaker person.
I'm not a big baker though.
Yeah, but you like to make flowers, do flower arrangements.
Yeah, today.
Bake. Yeah. So we just slap a label on you. Sorry, Cupcake.
Sorry, Cupcake.
I like calling a guy Cupcake though. It's way more fun.
Yeah,
love it, Cupcake. Okay, so that's what I wanted to do. Now we can go through. You saw there's a lot of tweets.
Okay, let me see. Let's see what we missed. Phil Collins, Mikey, happy Tuesday. Liz speaks. My mind goes to now. I have to listen to it.
Phil Collins.
Who doesn't like Phil Collins?
Do you know that the girl from
Emily in Paris
is his daughter?
Yes.
With the eyebrows?
I'm pretty sure I told you that on the show one day.
I think you did.
This is just like just like me and Kathy.
Yeah. It's his daughter. Who knew? Okay, thank you very much, Mikey. Listen to it. I hope you're listening to it. This is what's funny. You got to get to the next one from Mikey.
The one song I can't wrap my brain around with Phil Collins is "In Too Deep." It's all he says the entire song.
Doesn't matter. He's a master. Master of his craft. Take a look at this. Please tell us Jenny was listening to her audiobook with the headphones on. It's true.
Mikey, I switched to a much tamer book series.
One was real risque.
When you finally get scuba certified, we'll go to... Oh, yeah, here
Mikey,
you go.
I got a year left, and then I'm going to the rattan.
You can keep waiting, Mikey.
1 year. I said I'm going to do it once the kids go to college.
Oh, okay.
Yeah, I've got a plan. And there's a tank that Jenny wants to put me in Orleans.
There's a scuba certification place right in the middle of our houses. Big white building.
When the
with
kids
a
go to
tank
college
inside.
and I have so much time on my hands, I'm going to be in that tank waving. And
Every time I try to get her a gift card,
I'm going to write notes to Jenny.
Every time I try to get her a gift card to the scuba place, she doesn't want it.
I think it expires after a year. I need a year and a half until Annabelle goes to college.
All right.
Then I'm going to be self-contained underwater breathing apparatus certified.
Frank, this comes from Robert Dryden on YouTube. So thank you, Frank, for sharing. I duplicated your PayPal and UPS trades yesterday and took them up for winners this morning after the open. That is wonderful news. Our trades are not trade recommendations, but I'm glad the two trades you had on were winners.
I love it, and thanks for sharing with it, Frank. That's awesome.
Nothing we do is a trade recommendation.
Nothing.
You know what to do. $50 in my pocket. Worst case in SPX.
All right, Mikey, this is for you.
I'm glad you knew what to do.
I know what to do.
She knew what to do, Mikey. Good for you.
Cupcake, that fella.
That's the lip strangle.
Yeah.
Okay, we've got to these. Jack Tucker. Wearing eyeglasses while trading is cool.
It is, thank you.
Yeah. Yeah, you know, I don't really wear these when I'm out and about, but when I need to see my computer, I do.
Yeah.
Yeah. I need this for my...
I'm going to my ophthalmological neurologist today after the show.
Good luck.
Yeah, he's going to talk to me about my 6 nerve palsy and possibly the Mayo Clinic.
It's been a year.
It's been exactly 1 year.
1 year.
Mm-hmm.
So we'll see. One day, Liz may be gone at the Mayo Clinic, and I'll have TP on for... How long do you think you'll be gone?
I think I could probably do the show from the Mayo Clinic, live from the Mayo Clinic. That'd be a good show.
That would be a good show. Okay. Back to here, 10:45. We only have 15 minutes.
Okay.
And we did get some requests on the zebra, so we had some people ask about it, and I don't know if it was spurred from Vanetta's.
I think it was because you were in a zebra
Because
costume.
I'm in the zebra costume and in Vanetta's doll. What are those?
And if you can see,
Liz wore it today.
I wore it today in honor of the show that we're going to do. You can't even tell. Like,
No,
it looks
so
like I'm
you've
wearing
got
a
to
blazer.
open your jacket to show the zebra. Other side. There you go. There you go. So I did pull up right here on
Ooh, Spoozer at 14. We gotta see. I'm going to keep an eye on our trade.
Keep an eye on it because it could be turning into a loser now. We need Spooz up 10, no more. That thing didn't give us a lot of room. Okay, if you go to tastylive.com.
So if you were concerned about that, it is up $30 right now.
Okay.
Should we take it?
We put in a 10%. We put in a 10%.
It's nowhere near. It's actually perfect. So because our short strike is the 55.30, 55.55, and it's trading 55.45. We're right in the middle.
Okay, great. We're gonna
We
leave it for
hold.
now. Wait
Hold.
for it. You go to On Demand, the Liz and Jenny show, Liz and Jenny strategy.
Yes,
series.
there you go.
That's how I got here. And here we explain everything: the reverse big lizard, the ratchet, the spike lizard, the big lizard, the jade lizard, and here we have the zero extrinsic back ratio, also known as the zebra.
Zero extrinsic back ratio.
And I was surprised. Were you surprised that Vanetta put your doll, me in the zebra dress, because you're the one who always wears the zebra dress?
You wore that. It's on our show.
In that show.
Yes.
That's right.
And that's why I'm in that weird red polka dot thing, because those are the pictures we took.
Yes. And that's a regret. I would like to change that outfit.
So is mine.
All right. So if someone wants to get long,
And now you're an action figure in it. That's why I regret my dress too, and I was like, oh, great.
And you know, Vanetta sent those to us and said, like, oh, aren't these so cute? And I was like, yes, they are so cute.
Is my head that big? Is my head bigger than my body? Does my head go down to my waist?
Hey, she said she tried to make us look better than we are in real life. She tried to.
Gus made mine.
Who made yours?
Gus. Vanetta made yours.
Oh.
Gus did not do me any favors.
She said she checked a box to make her look younger and skinnier.
Gus, where's that box? I'm just kidding.
Okay, we're going to talk about the zebra. Someone had brought up coin.
Oh, yes. This is a good example. So the zebra, the zero extrinsic back ratio, is a stock replacement. It is not a high probability trade. It is a stock replacement.
If the stock goes up, you'll make money 1 for 1. If compared to buying 100 shares of stock.
Yes.
Okay.
Now, and I'm going to say, hi, my name is Liz. I do use zebras. I use them in my IRA like candy, because if I want a stock, it's a fraction of the cost than buying in an IRA.
A fraction of the cost and defined risk. But if you get a big move in the market like we had, all those zebras can go to zero.
Oh, they can go to zero.
So here's what I would never do with a zebra. I would never take all of my capital and put them all into zebras.
No, but you wouldn't take all your capital and put it into stock either.
Right. So that's just a warning. Like if someone took all their money and put it into zebras and the market was down, those zebras expire worthless, and then you're out of money.
Correct. So it's the same thing. You would never put all your capital into any one thing anyway. Because there's so many things that you can do with it. You wouldn't put it in one thing. Okay,
coin is having earnings. We had gotten the question on the zebra. Someone was looking at coin.
I think this got brought up because of how expensive it is. This is a $200 product. So just go open up June. Let's just stay in the June cycle. So let's just kind of go through this. You can buy 100 shares of stock.
Okay, so I priced a zebra earlier, and I just went to the regular
May in 17 day.
Well, because they have earnings. Because everything's inflated because of earnings, and figured after earnings, people would move their positions out anyway. People would move them out after earnings.
You can go to May.
We can.
Well, I was just going to say, if you're just looking at it as a stock replacement, you can go in and hit buy 100 shares of stock.
So you buy 100 shares of stock. It's going to use in coin $10,000. Typical margin 50%.
In your IRA. So this is what I was going to show you. In your IRA, that max loss is what it holds up. $20,000. So it's a $200 stock holds up $20,000.
So you've got $20,000 in notional value. In your IRA, that's what it would use. In margin, it holds up 50% of that, so $10,000.
Okay, and then just hit a 30 delta put or something.
If you sell puts in here, I think there's decent premium in coin, or there has been, but the rank's down to a 10. So with the rank, and I've been in coin selling puts, I go back and forth between selling puts and buying in the money calls. I have been buying in the money calls short term. I'll go back and forth.
And we're not saying this for coin. Like, just, we got to remove the fact that we're giving our opinions on coin.
But you would look at this and think there's a lot of premium there.
Yes. And you're just threw in a random 30 delta put. You're using $8,200. It's almost the same as buying the stock.
But to make 1,000, you would think there's a lot of premium. It looks like a lot of premium, but the rank is only a 10. So that's the one thing that makes me think, well, maybe I shouldn't be selling puts in here. The rank is only a 10,
and it's cash secured.
It's like margin. It's like
yeah.
It's like you're using $8,000. It's like margin.
It's 20%.
No, it's way more than 20%.
That's not like normal margin.
No, margin on stock. Like if you were long the stock.
Oh, yes.
It's
stock margin.
Yes.
Correct. Okay.
Yeah, it's the margin in coin is very high for selling options.
Correct.
Yes.
So that's option B. And then we wanted to show how you can create a stock replacement by using the zebra. We're just going through the steps. Now, we don't, a coin is, everybody's got opinions in coin, maybe you use this, maybe you don't, but because it's so capital intensive, the other stock replacement strategy,
they're still expensive.
It's a fraction of what it was.
It's half of the it's half of the buying power for selling that put,
and half the buying power for buying stock.
For buying the stock.
On margin and in an IRA. So, like something like this, if I'm looking at it, if I'm in my IRA and it was going to cost me $20,000 to control 100 shares of stock, I can use this for $4,500 and still control 100 shares of stock if I so choose. So that's just it. Is you can do this in coin, you can do this in anything, but a lot of times if I want a stock, because I'm an options trader, I will use the zebra.
Now, the further out in time you go, the more expensive they are. So you see $4,500 here. If someone, and usually we like to do the zebra with at least more than 10 days till expiration. If someone said, well, I want to get long through earnings, I looked at the 17-day, and you could see we're trading at 205.
Oh, was that June you were in?
I was in June.
Oh, perfect. That's actually great. That's perfect.
So
that's what I expected to see.
So now I went to May, and I just want to show how they're cheaper as you get closer in time. So in May, it's $2,700 instead of $4,500.
Yes.
Because they become wider when you go further out in time.
They do, and you lose. I'm not going to get into the weeds in there because you can lose less if you go farther on time. If you do a zebra in like the leaps and it comes down, you don't. They maintain their value.
Right, but you still hold some value.
We just wanted to go through the basics of the zebra, but you will see us break it down on that tab where Jenny showed.
But to say, if I want 100 shares of coin and it's $10,000 in buying power, which is a lot. Here you've got 100 shares of coin through earnings for $2,700, or you go out to June, $4,500. To Liz's point, you go further in time, then you've got that for a longer period of time. How much? I'm just curious. If I went all the way out to January, how much it is?
You're looking at 50 delta, 70 delta. The premise is washing extrinsic value. That's why it's called the zero extrinsic back ratio. So the delta is the 50 delta, 70 delta. Jenny was genius during this filming. They're like, what delta, what delta? I was like, it's not a delta. You're washing extrinsic value. And then finally she's just like, 50, 70.
But that makes more sense when we're in around that 45 day. When I go so far out in time, you can see if I do 70 delta, 50 delta, that has the 50 delta way out to the 240. Isn't that weird?
Well, you look at your extrinsic value. That's what you got to do. Go back to basics on this. You're trying to wash extrinsic value. If you sell that 210,
Then you've got to go way down to the 170.
Yeah, you got to go to the 170. That's not that
so
bad.
So then here it's the same price as buying the 100 shares of stock. Then I would buy the 100 shares of stock. Then I wouldn't
unless you're in your IRA,
in your
then
IRA.
it's 50%. That's the one thing that I was going to say is it always takes it down if you're in a cash secured account.
This is the first time in my life, though, that I've really started not thinking to myself, like, let's say I want something, let's say I want to get long this, and I don't want 100 shares. This is my first time where I'm like, okay, I'll buy 50 shares instead.
Yeah. And there's nothing wrong with that.
Yeah.
It's just hard. I mean, I think options trading is really fun. I was just telling this. I was at prom this weekend with a bunch of the kids, the prom pictures, and those are the kids that are trading with JD.
Oh.
And so I was talking to a couple of them this weekend, and I was talking about how options trading becomes so much more fun. The world is just kind of like your oyster. You can do so much with this option chain with anything. You can create or lock or put any type of risk parameters you want by using options.
Right. It really makes, and I know sometimes we'll look at products and say, oh, Caterpillar, we don't want to trade it on earnings, it's too expensive. But honestly, it gives everyone the ability to make a trade in a $300 product if you use options.
You can make it. You can take it to a smaller nugget.
Sure,
it's just we just
can.
said naked options in this account.
You certainly can. I'm going to check on our SPX trade because we are almost out of time.
45, take it. Just take it.
Oh, $50. We'll take it. $50 in the time of our show. We'll take it.
Yes.
$5.90?
We will take that. Sure.
$5.90. Let's see. Can we get filled?
And then I know we are running out of time. We only have a couple minutes left. So can you go back into Twitter and go top down?
Okay. Back into Twitter.
Top down.
Top down. Cupcake. I just like to eat cupcakes. Cupcake trader. We thought you were a baker. Just like to eat cupcakes, but I know I shouldn't.
I love a fella named Cupcake. I think it's fantastic.
Yeah.
It's wonderful. So yes, I love Bart Simpson too.
And this.
Do you know that Bart Simpson's the longest running show on TV? Not Bart Simpson's.
No, I think.
Did it get taken over by something?
Well, I thought it was The Simpsons, but I heard Tom and Tony talking about what have been the longest running shows, and maybe he asked not cartoons, because then they were coming up with some other shows.
Hold on.
Grey's Anatomy, and they were listing
Guiding Light.
Guiding Light.
72 years. I stand corrected. I apologize, Simpsons.
It was something I thought.
It's Guiding Light.
It was The Simpsons. And Days of Our Lives, I believe, is still on, too. But Guiding Light.
Guiding Light.
Before.
It's been on for 72 years.
Oh my God.
It ran on 15 years on radio before becoming a TV show.
Oh, that's why it's the longest running.
Mm-hmm. I was like, 72 years?
Guiding Lights. That must have been the first soap opera.
Must have been.
I miss those days watching soap operas. I used to watch them with my grandma all summer, every summer. We would just sit at home and watch soap operas all afternoon.
I just remember folding clothes watching soap operas with my mom. Okay, so, and then keep going down because you got Eric, because we're almost out of time.
Oh, with 2 mini tranches collected 1,100 with near 40% GTCs inspired by Jack Tucker.
Inspired by Jack Tucker, love it.
Stepping out for the rest of the day for birthday shenanigans.
Woot.
Happy birthday.
You got to say the woot.
Woot, woot. Happy birthday.
So I hope for your birthday, all that comes in.
And then Brad says, stay calm, do nothing. In regards to...
Oh, I have no idea, but that's okay. But look at the next one. I love.
Thank you, Brad. I like that mantra. Stay calm, do nothing.
Thank you for the context, Mikey. No jacket required. You can tell when I'm like a deer in the headlights.
Oh, here, no jacket required.
Yes, that's right.
Was that the name of one of his albums?
Yeah, it must have been. It's right there. I don't think he wrote that on there.
If you have that album, go play In Too Deep and count. How many times does he say, I'm in too deep in that song?
And then, Mikey, look at this. Samantha said she'll come out of Pad-Eye Scuba retirement to teach me. So, yeah, Mikey, it's happening. It's happening.
There you go. Look at you. You're going to be out scuba diving with Mikey.
I'm going to be in that tank in no time.
All right, it's 10:58. We're out of time. I want to see if we got filled. We did not get filled.
Just take it down.
It's working right there.
Okay, we'll leave it.
590.
We'll push it out. We'll push it out when we do get filled. I think I've pushed everything out. What's the last thing we got filled on?
Okay, I'm going to take there. We should get filled. It was just trading 6. Mid-market was just 6. I'm going to replace order.
Yeah, but SPOOs are dropping. It's okay. Just leave it. We'll get filled in this.
Oh, I see. Debit. I was looking at it the wrong way.
It's fine. Like, this will get filled. We'll push it out once we do get filled.
Once we get filled, we'll push this out. Hopefully we will.
Yeah.
But honestly, who thought we could get out of Iron Condors in 50 minutes?
Woot, woot.
We're out. All right, everybody. Thank you for watching. Tune in tomorrow. We'll be live from the SIBO again.
We're back. They're gonna love it.
Yeah. Remember to trade small, trade often.
Laugh with us, learn with us, and watch Liz and Jenny show. We'll see you tomorrow, everybody.
Stephen and Atlanta, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tastytrade is the best brokerage, and you guys have the best content. And I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
you were the great disruptor when it came to forming Thinkorswim and then Tastytrade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tastytrade. Genius loves company.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man, Mikey Butler, and we have Mr. Thomas Westwater in the house with us today for our Thomas Tuesdays. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day gets spent with my buddies, Mike and Thomas. Thomas, welcome back, sir. How was your hiatus?
It was good. You know, I did some stuff around the house that needed to get done.
Nice.
Not enough, though. So, you know, there's always things to do. Got the garden going, so that's nice.
See, that's my next little project. I went
Tomatoes.
Tomatoes this year? Okay, nice, nice. What else?
Peppers, squash, you know, all the stuff. We got strawberries, cucumbers.
You got real land. I have like a little like box that I can do something in.
You have nothing. Yeah, you got room.
Yeah, you know, I'm concrete jungle, but I'm thinking peppers because I hear that they are just the easiest, like set it and forget it type thing.
Jalapenos, yeah.
Yeah, that just like grow a ton, and you can do like more with tomatoes are great, you know, but you what are you gonna get like 2 or 3 yields out of it throughout the summer?
Well,
like
you'll get more because there's 2 types of tomatoes: determinate and indeterminate. Your determinate's something that you get 1 yield per season. Your indeterminates, like your San Marzanos, they'll keep growing until you get a frost in the fall.
Okay.
So if you're in a warm climate, San Marzanos, you got some plants that have been there for years, just continue to produce. But get an indeterminate variety, do some trellising on your patio.
Yeah.
And they'll grow up. You could get crazy with it, so.
Okay. Because I went to Home Depot like 2 weeks ago when we had that like one like mildly nice day. I was really excited. I was going to get everything. And I talked to the nice older lady that was there, and she was like, "Listen, you gotta," because I was like, okay, should I do this, do that, and she's walking me through everything. I was kind of like a little lost, and I was like, is it too early? And she's like, "Honey, listen, you wait till Mother's Day." That was what she told me. It was Mother's Day. That's when you start. You got to get all the plans because, it's too early. It was too early, middle of April, too cold.
Yeah.
Nothing's going to stick.
And she was right because you would have had to endure some cold temperatures. Everything you would have done would have been for nothing.
Yeah. So I think middle of next week is when I'm going to do it.
That sounds about right.
It's a good time. I put some of my babies in the ground yesterday.
Okay.
Sunday and Monday, so I think we're good. Temps, you want tomatoes 50 at night and above.
Okay.
If you drop into the 40s, you're going to be okay for a little bit. So.
All right.
Yeah, next week you're looking at 70 and sunny every single day from there on out.
Okay.
Same with this week actually, but we're finally here. We've made it.
Yeah, we made it. I hit some golf balls yesterday. We did the par 3. It was great. Started off really, really hot. The rest of it, not so much.
Yeah. Last time I played that, I was yelling 4 because I was shanking.
Were you?
I was shanking balls for like 80 yards out, shanking them dead right.
It's
That's
early
when
in
you
the
know.
season. You got time.
Yeah.
You're just warming up.
Yeah, you really got to get into the swing of things.
Yeah, literally.
Yeah.
But yeah, that's good. It's been a nice couple of days here. Nice couple of calm days in the market.
Oh, seriously.
I don't know if that's nice, but it's better that it's not collapsing.
It's true.
That's good.
It does feel, it's funny. It's like I saw a meme on Twitter that, was kind of like one of those like guys at his desk, like sleeping basically. But it's like the VIX at 25 and it feels like it's 12.
Yeah.
Like it kind of has that feel after the chaos that we've seen all year when you get, vol still high, but, for all intents and purposes, then big old nothing moved today. It feels like nothing's happening. It's crazy how vol changes you.
Quite literally.
Yes.
But yeah, we have a lot of Mag 7 stocks reporting this week.
Yes.
Earnings, but I don't know. I don't know if anything's really going to come out of these things because there's a lot of these stocks have 5% moves or less. Like Apple has less than a 5% move projected for this week.
They've been pretty inside, though. A lot of the earnings that we've seen have been pretty contained.
But Apple's swerving. They're moving their Chinese production to India to avoid tariffs. At least that's allegedly, that's what's happening. Who knows? It's been too quiet on the tariff front. We need an emergency press conference. Get the thing,
I think
get the markets rolling again.
On right now, so who knows? Usually he nukes the market. You have the Besant rally, the Lutnick,
Hammer.
dumping.
Yeah.
So, but neither, because I think Besant was on earlier this morning, or at least had some sort of tariff talk, economics talk of some sort this morning, but nothing really happening. Yes.
Yeah. Next Wednesday, May 7th, FOMC meeting, Jay Powell takes the stand and gets hammered with questions. But yeah, that's the interest rate decision day, May 7th, and we have a 93% probability that we stay where we are, 7% chance that we get a 25 basis point cut. But June is where the cut is projected. Almost 60% chance that we arrive at 4.0425.
So this is all about the jobs report Friday.
And you have GDP coming, PCE. What else do they have here? You think that's what the 7% is? Is the potential for?
Yeah, I mean,
great jobless numbers.
Inflation's not so much in focus right now. It's more jobs. We had the JOLTS this morning dropped from 7.6 to 7.2 million openings,
which would be good. I mean,
not too much, but yeah, we'll see how it goes Friday. I think focus will shift back to the jobs report, and then, if it's really weak, you're gonna see maybe some pressure on the administration, But a lot of CEOs, 60% of CEOs in S&P 500 companies are now projecting a recession this year. But at the same time, 75% of earnings so far have beaten estimates. At the same time, though, you're seeing a lot of companies withdraw their outlook because
who knows?
It's so hard to forecast with the supply chains being upended like this.
Yeah.
Yeah, I think Southwest Airlines pulled back their estimates for like the next 2 years. I think I read that somewhere.
I mean, you saw JetBlue dropped a lot this morning. It's now green on the day, up 2%. It was down like 4 or 5% earlier.
Oh, yeah. Yeah, some of the other ones like PayPal had earnings this morning. That was the big old nothing burger. SoFi as well. It opened up like $1 and change. It's now basically unchanged. Been a lot of inside moves.
Him and Hers is up 25%.
Which one?
Him and Hers.
Oh yeah,
So they said they're going to do the weight loss drug from Novo Nordisk on their platform. So
yeah, and I saw MVO was up like $2 or $3. Yeah, $2.50-ish, but still.
That was the craziest Super Bowl commercial, I think.
The Hims
one. Yeah. Where they were basically bashing all of like the traditional prescription drugs, but then they were just like, take our prescription. Like at the end of it, it was like, what?
Yeah, well, you just got to fill out a 3-question questionnaire.
Yeah.
Get the stuff.
It's like getting a pot card from a doctor. That's just like, just say these things. Do you have anxiety?
Yeah.
Yes, I do. Yes. Yeah, kind of wild to see. But yeah, lots of stocks reporting. If you look at the preset earnings watch list on the Tastytrade platform, you can see it's infinitely scrolling. And that's for like the next 3 days.
Yes, and you will get some of those in the cherry picks today coming out shortly. We give you the next week worth of earnings, which includes, Apple, Amazon, Microsoft, Meta. Those are kind of the big names, biggest names coming up. You got Visa in there and some other ones as well. And then we just heard you over here, John. Are you enjoying the sandwiches? We heard you in here.
I don't think he knows.
I don't think he knows.
Yeah.
John, we hear you in here. So don't say anything naughty. So in the cherry picks, you'll get the earnings that are coming up. You'll also have some of the biggest moves on earnings. We have had some big ones. I know I said a lot of them have seemed like they were inside, but like, your UNH, which got hammered on earnings. I think UAL was another one that had a big-ish move on earnings to the upside, but just some info on earnings. So you'll get that in the cherry picks coming at you soon. Of course, 2 trade ideas. Lovely. Quick little market update.
Please.
Sure. E-mini S&P 500 futures near the high of the day, up 21, 55.77 the high. We've had a 50-point intraday range, including the overnight session. So, we've had a very, very muted week here. Maybe that changes with earnings tomorrow. You got the Meta and Amazon or Meta and Microsoft, I forget. 2 of them are tomorrow, 2 of them are on Thursday, so maybe it's a little quiet before that storm. NASDAQ up 65. You got the Dow up 289 and the Russell up 5. Everything having very much an inside day. Oil giving it up a little bit, /CL down $1.34, 60.71 here. Volatility futures at 23.50. The VIX at 24.50, near the low of the session here. About a couple ticks off the lows. As we were saying, it feels like a 12 VIX, but with a 25 in reality here. Bonds up 17 ticks. They've had a really nice rally over the last week or so. Gold giving it up a little bit, down $22 and change. It's been chopping around the 3,300, 3,350 range for the last 3 or 4 sessions here. Silver up 16 cents, and then Bitcoin kind of muted here after having a nice little rally. It's been kind of chopping sideways as well this week. Futures at 95,006. Spots at 94 and change, up $500. So definitely a grind of a day, a grind of a week so far. Be interesting to see if any of the kind of macro stuff matters towards the end of this week, if any of the earnings matter towards the end of the week. Obviously, they're big names and big parts of the market as a whole, so you would think so, but who knows? Might get a little inside move.
Yeah, feels like it. Feels like it. It's going to be hard for these companies to announce anything substantial given the landscape that we have right now. But you never know.
Yes.
Still plenty of realized volatility from earnings historically. Mm-hmm. So still got to stay small there. But yeah, Apple is May 1st after the close. Sure. Microsoft and Amazon are the ones that are Microsoft and Meta are the ones that are tomorrow after the close. And then Apple and Amazon are usually close together. Amazon's May 1st after the close. So I put a link in the YouTube chat to the Meta and Microsoft earnings previews. If you want to join us on the Tastylive YouTube channel, you can access those links. You can also sign up for the cherry picks pinned to the top of the chat. And you can also throw in your trade ideas and questions along the right-hand side, and we will get to them shortly. Yes. Shall we go through these slides?
Yeah,
Talk a little bit about oil.
Yeah.
Hopefully a bullish sentiment.
Are you still in yours?
Yeah.
Oh.
Yeah,
For better or worse?
I'm still in mine too. I wanted to get out yesterday, and now I'm back to unchanged on the positions.
Yeah.
You snooze, you lose.
Yeah, right.
Come on.
This is what happens when you take time off. You miss the moves, and then
slow getting back.
Yeah.
Okay, it's all right.
It's well deserved. Everyone's got to take a little breather every once in a while.
Yeah.
Except you. You can't physically do it. Remove yourself from the markets.
Never.
Never. Yeah.
It's ingrained in my brain. I see numbers as I sleep.
Yeah. You do see the matrix sometimes. Got to give it to you.
I do.
All right, crude oil. What do we got?
Yeah, so we're kind of looking at a oversupply shock now. We've seen a lot of forecasters, all the way going back a few months, forecast that the balance will swing to a surplus later this year, really late this year into 2026. We're now seeing a lot of those oversupply forecasts being brought forward. So we're going to be taking a look at how the oil and the dollar are moving together right now. And, a lot of people, you talk about oil, you see where the dollar's going, the dollar gets weaker. It makes, buying oil for foreign companies and stuff cheaper. So usually a falling dollar is good for oil, but that's when the economy is doing well. It's chugging along. There's not a lot of fear in the market. So, dollars doesn't have a safe haven bid. So right now it's kind of an interesting situation. We're seeing the dollar fall and oil prices fall even faster, which has brought that oil-dollar ratio even lower. So let's go to the first slide. So traditionally, so this is crude oil divided by the price of the DXY, the dollar basket. It's like 56% weighted towards the euro. You got the yen in there. You got the pound in there. A couple other things, I believe the Canadian dollar, Australian dollar, much lower allocations. This mainly moves on the euro, the yen, but those are the two most other liquid currencies, so that makes sense to do. So we're seeing, last week we're at the lowest point since late 2021. We're still hanging right around that level. So this is because oil prices have fallen faster than the dollar's fallen. Typically when this ratio goes down, it's dollars increasing, oil's going down, things like that. So we're kind of in an interesting point here, but usually when this ratio declines, it means oversupply is coming into the market. And we see that back during the COVID pandemic. Demand was taken off all of a sudden. Producers were still producing. They didn't have enough time to ramp down production. So you saw this oil dollar ratio just plummet back there in 2020 that we see on the chart. And that's what signals oversupply. Then you get into 2022, really strong economy. Producers are starting to ramp up production and catch up, but not doing it fast enough for the economy. And then you see this oil dollar ratio increase. And a lot of the time in the market, you hear, what the oil is doing relative to the dollar, but you really don't see this oil dollar ratio put out in analysis enough. It's just a way to visualize the way of talking about how the oil and dollar are working. It's not, too important. You're trying to predict where the oil price is going to go in relation to the dollar, et cetera. Just because the dollar does control a lot of those safe haven flows. Usually safe haven is on, dollar's going up. But now we got these tariffs and things like that. You're seeing the euro get a lot stronger. The euro kind of having this safe haven appetite versus the dollar. And at the same time, we got supply chains, things like shipping lanes. The number of vessels are down. Of course, that less shipping in the economy means less demand, less products are being produced and shipped, things like that. So we're kind of seeing this ratio go down right now because of this, these recession calls, this slowing economic growth, things like that. So of course, the slowing economy is not good for oil, but we're also getting dollar weakness right here as well. Oil's fallen faster than the dollar, so of course this ratio is going down. Let's go to the next slide.
I love the negative oil prices we have there in 2020. That
was crazy. Yeah.
That was a special point in time. That was one of the more
learning moment.
That was it's. I don't know if we'll ever see negative prices. Well, I shouldn't say ever because it happened once, but negative prices on a trading platform, certainly a mind twister, brain buster.
Yeah, it was wild.
Yeah.
So here I took the data going back to 2014, divided into 4 quadrants on how this ratio goes. We're in a low oil dollar environment. Last week we were very near that very low oil dollar regime. So we have a moderately weak oil price versus the dollar, even though the dollar is fallen, like we talked about. The ratio right now, it's at 0.61. So we're on the upper end in that low oil dollar ratio right there. Last week we were, down near 52, 53. So we were treading into that, very low oil dollar environment. What I did, I kind of did a back test on this, ran some statistics, and let's go to the next slide. We'll just take a look at that.
Cool.
So the second, chart there on the left, it's the low oil dollar. When you put on a long oil trade, this has typically been the performance since 2014, is you get more weakness, especially at that 45 and 60 days out. So it continues to weaken. Now, when that ratio goes very, very low, like we saw in COVID, of course, oil prices, they stayed low for a little while, but they bounced back very quickly. That's why this chart is showing these very large returns back there. The data was kind of skewed by that one large event back there.
Yeah.
So, if you put on a trade right now, historically, it's giving you negative returns on oil. And that, that kind of shows what a low oil dollar ratio is expecting. You're getting weakness in the economy. You're getting some oversupply fears coming into the market, et cetera. Conversely, you get, that high oil dollar ratio. It's rising. You get better oil returns because that ratio is increasing, showing some, producers are starting to ramp up. The economy is growing. Demand is increasing. Things like that. And then, of course, you get the very high oil dollar ratio, which we're not, anywhere near right now. But that's kind of, it's almost like a mean reversion. You get these cyclic, and that's how the oil market is, right? It goes in cycles. You get, the economy is ramping up, producers ramp up, production gets very high, economy starts weakening, the oil prices start coming down, then producers follow and they start taking production down. So kind of a self-correcting mechanism in the oil market, right? Because producers need to respond to demand. So right now, demand coming down, production still relatively high. But now, production in the U.S. is probably going to be coming down with these low oil prices. And that's what we've seen, especially some of these smaller, higher cost producers having to do. They're going to have to start cutting production. So OPEC right now, OPEC Plus rather, is the group, the cartel. They're saying they're going to extend these production cuts. They're going to take the production cuts off, pump more oil into the market. This is kind of OPEC's time to capitalize on the U.S. weakness. Now, a lot of people are saying, why is OPEC going to release more oil when the price of oil is getting really low? And it's partly political. It's not, OPEC isn't just, let's get the most profit. It's to fight the U.S., Permian and things like that. And that's kind of what it was produced for. You saw the shale boom, OPEC trying to fight back. They need to protect their profit margins, et cetera. So right now, a lot of OPEC producers have a lower cost of production than the U.S. So they can take some of this pain and release more oil onto the market. Yeah. At the same time, you got economic demand coming down, and OPEC's going to release more supply. So you get, now these forecasts make sense because it's, they're pulling forward their oversupply forecast from, late 2025, early 2026 to mid 2025, late 2025. So where can we see oil prices go? We're near the 60 level. That's kind of psychological line in the sand for prices. My concern on the chart, we've already gone below 60 once. We bounced back, right? And now we're coming down to retest it again. So trading this, I really don't like the second retest once you break a psychological level and then you come back down to test it again. Because if you break it, you usually get a follow through on that move and you break the previous low. Fundamentally, these tariffs, they're staying on with China. Other countries are being negotiated with. That's good. Japan, India, etc. However, the two largest oil consuming nations in the world are China and the U.S. So as long as this China-U.S. trade spat goes on more than a couple months, it's really harmful to the oil complex because you're hurting the economy of the two largest oil consumers. So I'm not really looking to get long here anymore. I got long 2 weeks ago. We had this bounce the past 2 days. I should have taken my profit. It's killed the trade for me. I'm probably going to take it off at a loss today. Flip to the short side. I'm going to watch the 60. If we get under 60, I'm going to take that short.
Okay.
And that aligns with the ratio right here.
Yeah.
If we take a trade right now with this oil dollar ratio where it's at, 45, 60 days out, you get that 1 to 2% decline in prices. So that would take us down to like 59, 58, somewhere between there. We break the previous low, you got even more pain there. So yeah, that's my thesis on the oil trade right now.
Is this maybe even a long dollar story too?
Yeah, I mean,
because
if the dollar goes up,
Well, you're thinking because you kind of have this a rare occurrence of both, being so low, right? Because you were mentioning oil comes down because you have fears of recession or turmoil in the economy, but that usually is kind of offset by the rise in the dollar, and you're obviously at lows in both those things. Could that be kind of the secondary point here of maybe it's instead of an oil play to kind of get that ratio higher, it might be a dollar move that would do that.
Yeah, I mean that works in the same thing if you're flipping this trade inversely. Long dollar. We've seen the dollar kind of moderate a bit from the sell-off. Got around 98.9 on DXY. Last week, we of course had new lows for the year, but the trend is still down. It's where does the dollar stabilize, So the euro, it's done really well. It's been helped by a couple things, German defense, utility spending, etc. The war in Ukraine kind of remains a geopolitical thorn in the side of that trade, although it's kind of been brushed to the side right now.
Yeah.
If this trade negotiation with Russia doesn't pan out, then is that geopolitical pressure going to come back into the euro? Because, if the euro weakens a lot, you're going to get a higher dollar.
Yeah.
So I don't know. I do like non-dollars right now. I like the yen. I like the euro a little bit. Canadian dollar, not so much. But I think that makes sense too.
Yeah, I'm trying to talk myself into my call spread in the euro futures, just because the move has just been so big. You gotta think there's some sort of bounce back in the dollar.
You're selling the call spread here.
Yeah, I'm short the 116, and then I've got a wing on there, 40 some odd days, or when I put it on, it was about 40 days out, 38 days out. So I'm short the 116, 117 and a half, near the highs of kind of where it traded about a week ago. Just thinking that, this move has just been so big that I would be on the contrarian side of the coin here.
I mean, I think the market is pretty long euros right now. So, you get to a point of saturation with those. Let's see where it's at. Euro non-commercial longs. Yeah, I mean, we're the highest long position since about September. But that's coming off really low levels back there in the start of the year. I mean, we're the lowest long position going back all the way to early 2020.
When the euro was at its lows. basically. Like, I mean, it was
The
multi-year
euro
lows.
was at its lows. The DXY was at its highs. So this reversion trade, I think that works. Especially now we're moving into the negotiation phase of these trade talks versus the escalation phase. I think that's why volatility has cooled off. Because you're thinking, we're fleshing out these deals with other countries outside China. Once that happens, then you move to China. The focus starts there.
Yeah.
And then that's when the market really, sentiment recovers, things like that.
Yeah. Yeah, they've taken a lot of volatility out of the currencies, out of bonds. Even like gold into this move lower has had a lot of vol come out of it, which I will give you props on that call, because while you were gone, I hope you took some profits on those gold moves, because that was a face ripper. Are we going to chop around this range? Are we still going higher?
For gold, I think we'll chop around for a bit. You're seeing the calls for 4,000, 5,000 at the end of the year. I'm not sure if that pans out. If gold got back to like 3,200, I'd probably get long again.
Yeah.
Just think with the Fed cutting, things like that coming.
The natural
gold
bid.
Is still structurally bullish, but we get these more pronounced pullbacks now, like the one we saw in early April.
I hope gold does come down to 32.10 in the next 3 days.
I don't know about that.
So, I mean, if you're trading short gold, you stay long silver with this ratio still
at the highs.
Pretty highly elevated.
Yeah, it was over 100 in the middle of last week.
Yeah.
I think it's probably a little bit lower than that now.
Yeah.
Right around it.
Yeah. I have a long zebra call spread in silver and a short put or a bearish put diagonal spread in GDX, and then a free butterfly in GC futures at 32.10. So I've got the trade on. It just needs to happen
quickly.
Yeah,
today
in the next 3 days. Micro crude, I have the long contract. My basis, I rolled from the K to the M contract. My basis is around 66. Okay. So I think what I'm going to do, I think what I'm going to do is sell in the M contract. So 16 days out in the crude oil big contract. I think I'm going to sell a call spread at 64. Okay. 64, 65 call spread for $230.
Oh, in CL.
In CL.
Okay.
That'll bring in it gives me some upside risk, but it'll bring in $230. It'll reduce my overall basis on the crude trade to 64, which is right where my short strike is. If we get up there, I will have upside risk, but I'll also have the contract on.
Yeah, you'll be able to scalp the contract.
Yeah,
it'll sort of cover some of that.
So I think that's the move. Without exiting and just going straight short, I think just adding the short call spread in CL, picking up $220, reducing basis by 2.3 points in my micro crude contract with the static delta still. I think that's the move.
I like that. And you use the crude futures for the size.
Yes.
Rather than the MCL contract that would be more of a covered position.
It would be a covered position if I just sold the 64 call, but it's I would collect 70 cents instead of $240. $220 I was just filled in.
Yes.
So there's the adjustment.
Are any of the grains or soft ags interesting to you, Thomas? We've kind of brushed them aside for the last couple weeks. Anything moving there?
Yeah, I mean, I think China's cut some grain shipments that might be related to like some
tariff.
Yeah,
stuff.
tariffs, kind of trying to inflict some pain to U.S. farmers there. I've had a ZW trade on for quite a while. It's done nothing until today, where now I'm down $50. I was long a call spread, so probably going to take that off for a small loss, but we don't got anything big for a couple weeks. WASD coming up. Until then, it's just watching weather, crop planting progress, things like that. So I don't think there's too much there for the grains just yet. Corn pulling back pretty nicely today as well. Probably take long opportunities more than shorts here with the pullback. We've had like a nice elevated decline until today where you get that bigger sell-off. But yeah, I'm not really touching grains.
Just not interesting at this point. I hear you. Took off that note trade the other day. That was another good one that you threw our way. So thank you for that. While you were gone, we were just peeling off all the good positions that you sent our way over the last couple weeks. So
my live kettle's finally doing something.
Oh, I capitulated on that one.
Yeah.
Oh yeah, there you go. Oh.
I still got 38 days, so
I like that trade.
I'm going to keep it on for now.
We had somebody ask about copper the other day. Have you been looking at that or seen that move? I mean, that move's been huge over the last 2 weeks.
Yeah, I mean, it's definitely rallied a bit there from that initial tariff sell-off when the investigations were complete. I don't know. I think, we're kind of in the middle of this range from March to April right now. I think a neutral trade is probably the way to go here. I mean, directionally, I think it's kind of chopped around for 4 or 5 days now after a big rally. So you had some profit taking after a big sell-off. So positions are readjusting. I don't think there's a huge bias in the positioning right now after everything's gone flushed out both ways. I don't know. I think you'd need to see a re-escalation. The China thing, I don't think that's going to happen. So copper, I think you're starting to get back to a long thesis here. I think you just need some time to flesh out this sideways move. I mean, technically it's fine. It's above the 21 9-day EMAs. We're holding above that. We've had some intraday drops below it. It's been bought. I wouldn't hate a long trade here.
Lovely.
We've covered them all.
Yeah.
We got our fix, our future fix.
I'm tingling. Feels good. Yeah. Lean hogs, live cattle. I think I'm in a similar position to you, Thomas. I have the 215, 220 long call spread that I converted from a diagonal spread. And then, gold futures, downside butterfly for free at 32.10. Threw on the crude oil, short call spread against the micro crude static long contract. And that's it. That's my little futures exposure there.
There you go.
Love to see it. If you want to join us on the YouTube channel, we're streaming live. You can head to Tastylive. You'll see this video on the homepage, and you can throw in your trade ideas, questions along the right-hand side chat. We've got the Cherry Picks newsletter pinned to the top of the chat. You can get that for free coming out today. But yeah, let's get to some questions here.
Am I still late to the yen?
I don't think so. I mean, I think it's taking a breather, but I don't know. We've had this really good run, all the way from January, and the dips have been bought every time. So is there a reason to think it's going to change now? I think it's going to keep going up.
Okay.
I mean, at the same time, if you expect a dollar rebound, it's probably best to wait.
Yeah, this would not be the trade.
Nice to see a recovery there, but I think I'm going back there in December, so we need it to come down a little bit.
Oh, so you're doing that psychologically for your own.
Yeah.
It got you hooked.
Yeah. Oh yeah.
I have a friend that's in Italy right now. I was like, damn, that stinks. In the last month, everything just went up.
Yeah.
15% for you, 20%.
He's like, last week this was $20.
3 weeks.
Yeah.
So okay.
Yeah, good. It's good.
Yeah. He's a lawyer. He'll be fine.
He'll be fine.
Yeah, he'll be fine.
All right. Popping over to the YouTube chat questions now. Happy pre-hump day. Yeah, I guess it is Tuesday. It feels like it's Thursday. I feel like.
Well, because it's been a grind in the market.
Yeah, that's
been
why.
Slow days. Things aren't moving and shaking. It's been nothing.
Thomas, when it comes to S&P futures, do you prefer SPX or MES? Do you trade SPX 0 days? If so, how do you trade it?
Is that for me?
Yes.
Yeah.
I usually just trade ES, so spread, defined risk.
You haven't caught the 0 day bug?
No, I haven't yet. I've traded like the 1 week, 2 week out for short moves earlier this year, but yeah, when I'm taking a trade, it's more speculative in MES or ES, so it's usually 7 to 14 days. So I've probably traded only twice this year.
I agree. It's always I love that people are like engaging in that and trading in the 0 day stuff. It's obviously very high volatility. It's quick. One of the huge benefits of it in SPX is that your position is done with at the end of the day. You don't have any overnight risk. Your profit, your loss. It's over. It's done. It's on the books. Just keep, of course, size in check. As always, things move fast. Manage positions. We've seen crazy moves in the last 5 minutes, 2 minutes, 1 minute, 20 seconds of the day. So, I think if anybody's trading that sort of stuff, take the money and run when you get it, if you can.
Indeed.
Thought.
Cat earnings play, short iron condor for May 2nd. 290, 320 shorts, 15 points wide.
290. Is this on the weekly?
Yeah. 290, 320, 15 points wide. So
this is in play as a tariff play.
Picking up $4.
Mm-hmm.
Somewhat of a chicken iron condor. I'm just going to look at the 17-day, see what that's trading for. So if you go to the 17-day, you're picking up $6 instead of $4. You have to wait longer to get it, but I really like just going to the monthly as opposed to the weekly, just because, yes, it's instant pain, instant gain if you're in the weekly, but if it's instant pain, you can't do anything to defend it. Or at least if you go to the 17-day, you can just hold it and do nothing, or close the untested side that's inevitably worthless, and then you have the opposing side for a rebound play. I've run into many scenarios historically where I did a weekly iron condor, got blown out, and then watched it retraced a week later. And it's like, okay, I'm done with this.
I did one in Apple today, so.
A weekly?
Yeah. But I feel you. I agree with you. It's
If you're signing up for the instant pain, instant gain, it's fine. But just realize, if you have a loser, there's literally nothing you can do.
I would rather do it in an Apple than a Caterpillar, because I'm a little more comfortable. But that's my lean.
Yeah, but Caterpillar does have earnings tomorrow before the open, so you do have Wednesday, Thursday, Friday for some movement.
Yeah.
So yeah, conservative move would be going to the May monthly, but if you want to do the 3-day, just realize it will be volatile. So much bad guidance, market doesn't care, lol. Yeah, sounds about right.
If you think the noise has kind of been, we were talking about this yesterday with Ryan. It's like, you think the noise has kind of been, the market has finally like digested it and understood and just said, you know what, this is going to just be crazy until it's finally done with.
Oh yeah. I mean, you had an extreme negative sentiment, so everyone was bearish. It's like, how much worse could it get? So, you come up, you start buying. So I think it makes sense what the market's doing right now.
You think we bottom? Was that our bottom for the year?
I think so, yeah.
I feel like it got bad. Like I was getting the texts, I was getting the calls. It felt, violent, felt bad. Yeah. So that's kind of my lean too.
Yeah, I agree. I think the bottom's in.
I think we're still going to have volatility though.
Yeah.
We're going to have big moves in both directions for quite some time, I think.
But I mean, historically, we've seen this a couple times. The bottom is usually when you have that huge, just vacuum move to the downside and back up. And we saw that early April. Yeah.
Yeah, and we had like liquidity drains going on in the market where you're just having everything sell off, people moving cash. You're not seeing that now. I think it'd be really hard to get that again. It'd have to be some like horrible headline, tariffs or something.
I think what makes this one a little bit different is I don't think it's a V bottom. I think it's like a chop, like I don't think it's the COVID, within 6 months we're 50% higher. Like, I think this one's a little choppy.
Yeah. Well, the money printer is at 9,000 RPMs during that time.
The money printer was
right now it's
overdrive.
Collecting dust.
Yeah, they popped the NOS in that thing and just spun that.
Yeah. But also, like, when you think about, and it's the same reason why this move was pretty violent to the downside, is because of the concentration of these stocks and the stocks that are getting hit with tariff implications. In COVID, it was the same stocks, but their numbers were through the roof because everyone was sitting at home on their computers all day. So it's like, it's a complete opposite scenario where right now you have detrimental information coming out that could impact these companies in a big way, where before it was like literally everyone is using these companies like Zoom and Google, Microsoft, YouTube, whatever.
Where's that stock?
Zoom?
77. It's had a nice little bounce back.
Yeah. I mean, nothing close to its half-life. Yeah. This will be one of those stocks where it'll never reach 550 again.
No. I mean, Peloton is the poster child.
Yeah, Peloton is the other one.
That is the.
Looking back, that was the dumbest bullish trade I might have ever placed.
Hindsight.
Yeah.
That was the hindsight trade.
Yeah.
Should have known, Mikey.
Yeah.
It's all right.
Pelotons are great, but when the world opens back up.
Brittany's trying to sell hers, I think.
Huh. There you go.
You want one?
I'm okay.
See?
Yeah.
$6.
I like the real. I like the real gym world. Yeah, crazy times we've had over the last 5 years. First tranche of 0-day closed it out.
Nice.
Cool. Love it. Interesting commodities info. I thought there was a strangle and MCL play to be had. Sure. Strangle and MCL if you have the risk tolerance.
Yeah, I think you've traded these options a couple times.
Yeah, they're fine.
Like they're in the same realm as the micro E-mini and micro NASDAQ options. It's like not the best liquidity.
Yeah, micro crude is much more liquid than MES.
Yeah.
I'll say that. And at least just like not having numbers fly around on your screen.
Yes. Not as big of a.
But even gold futures, like my gold futures position this morning, I have this little butterfly on with that's $100 guaranteed profit. But this morning it was a $800 loss, $400 loss. Now it's a $100 gain, and that's not real either. Like it's all just fake numbers right now. Like it's telling me the mid prices are so wide that it's telling me I can close it for $300 and I know it's impossible to do that. Because it's completely in the money by 100 points. So it's just annoying when you have that the wide bid-ask spreads with some of these products. But crude oil, microcrude, you're likely not going to see that same thing. Any trade idea on LE since it has bounced back in the last few weeks?
Yeah, I mean, I'm going to stay long right now. It's making a nice, really run. Good run here. There's not really any selling coming in right now. We've broken prior resistance.
Summer's around the corner.
Yeah.
Stakes will be flying.
Yeah, I think it might have more room to run. That's why I'm staying along. But I think a lot of the move has probably happened already. So I think there was 3 or 4 weeks ago we took that trade.
Yeah.
Took it right at the top, kind of back there on April 2nd. So I've stayed in it for a long time. I took some pain at the start. It's come back. Probably going to take it off later this week. Hopefully the price goes up for a few more days.
Yeah, I closed out on the 16th. It would have been a nice hold, but hindsight, I didn't know that we were going to bounce all the way back.
Yeah, it happens.
It's okay.
In general, what percentage of your trades are earnings plays? Depends on volatility environment. Like a couple weeks ago, when there were earnings, I wasn't even paying attention to them. because the market volatility was so high and you didn't have to go to earnings to fabricate high implied volatility environments. When volatility is lower and markets aren't moving, we will have a larger chunk of earnings trades because that's where the implied volatility is. But with that said, like this earnings season that we're seeing right now, there's not that much opportunity in terms of like big cost basis reduction because the expected moves are not that high.
Yeah. I also want to differentiate between like earnings as in 0 day or weekly trades versus like, because I have stuff that I'm going to have to hold through earnings just because everything has earnings coming up. So I don't know if I consider those earnings trades. Like,
yeah.
If you whittled it down to just like the stuff that I'm putting on as a 1 day trade, I would probably put it at like maybe 5 to 10%.
Yeah. Mine's a little higher because I have less positions than you.
Yeah.
But I'm like 10 to 20%.
Yeah.
But my trades are all like longer term trades. So it's kind of like I'm placing this trade before earnings to get a real nice cost basis reduction. And if I'm right the next day, great. But if I'm not, if my long option's in July, I can roll from this cycle to May to June. Like it turns into a longer term trade, but I'm capitalizing on the cost basis reduction and then weekly option with earnings on the horizon. So it's kind of both. Do we know what's happening with natty gas futures to cause the move up?
Ooh, I haven't even looked at natty gas.
Yeah, I think this might be a bull trap here.
Okay.
We've had this move come down a lot. Weather forecasts are really, really warm for pretty much all the eastern United States where a lot of demand is concentrated. Oh no, I wouldn't buy this rally. I'm not necessarily selling it either, but we've already sold off from these morning highs here.
Mm-hmm.
So there's sellers here right now. I don't know. I think we go lower if I had to say anything, but I think 2.9, 2.8. If we get down there, I'd be a buyer.
Okay.
So
was this move on anything other than just because the day ends in Y? Like, was there any sort of like report or like something that came out that moved this?
I mean, inventories have been recovering pretty well. We've had a pretty mild start to the shoulder season where demand typically falls off.
Yeah.
Then we're going to go into a few more weeks. We're going to go into summer where you get those heating or cooling degree days. Energy production starts rising again, or energy demand. So I don't know. I think this is a tough place to trade it right here.
Mm-hmm.
Could probably get flushed out either way, but I'm just watching for now. So
okay.
If we get back, under 3, 2.9, I'll buy for a short-term bounce. But yeah, it's a tough one right now.
Okay.
It's a tough one always.
Yeah, Mike's kryptonite.
It is. It is.
My kryptonite too. I think I mentioned that in a video with Gus. I'll fade this. I'll fade this small, like just a little call spread. A delta here.
Yeah. Remember, nothing has been resolved. No agreement, no deal. Same tariff risk to the downside till something changes. Fair.
Certainly.
However, market structures have changed a little bit. Volatility is flat at 23. We had a 7-point backwardation between the first and second month contracts at the height of the craziness, and we were seeing 200-point moves. And you should always assume that whatever you read in the headlines, whatever you think the market always will do stuff first. Like
it's already in.
It's already in.
Yeah.
And then you'll look back and be like, oh, this is why the market was behaving this way because now these headlines are coming out, et cetera, et cetera. So I would say, yes, we could, in the E-minis, like specifically, we could get back down to 5,000. But what is it going to take for us to get below where we were before, where uncertainty was insane? There were a lot of strong words and tariff threats being, outlaid. Where now, like we're saying, that has already happened, and now the result of what has happened is likely going to be reduced tariffs, negotiations, and then we finally know what it is. Once we know what it is, that's when the market can digest the information and grind higher. And that's when we get into the teens and the VIX and all that stuff. But yeah, you're not going to get back to all-time highs in the E-minis with backwardation. So we're kind of out of that, at least for now. The market could sell off 300 points and the backwardation will go right back into the futures market. So
We're very flat, vol.
Very flat.
Which I think tells you exactly what that person wrote. That's what everybody kind of thinks right now, is that we could flip either way. This could all be done next week, or nothing gets done, and we have a little bit of a spike in volatility. I mean, that's what a flat vol curve is telling you, is that it's very uncertain.
Yeah.
Backwardation, fear. Contango, no fear. Flat.
Yeah.
Is kind of like, scared.
Yeah. And that's another thing, like when we were in buy the dip mode and we would see the market drop 100 points and we just bought the dip immediately, it was because volatility was in contango and it was in the teens.
Yeah.
So it's like, okay, that is telling us that whatever we're seeing today is likely not going to continue. And we're fortunate a lot of times that we were right. But then we had this big move and the market was selling off. Backwardation came into play, got even steeper, and then you saw the 200-point moves in the market every day. So the volatility curve from the 10, 11, 12 years I've been trading, the volatility curve is, I think, the most important thing to look at and understand, at least from a risk perspective. All right. Drone and 2 for Tuesday. Diagonal on wing. Oh, no.
Oh, why do you keep wanting us to get into the chicken wing game here? It's just not. And we've looked at this stock before. It's not very liquid.
Yeah.
It's a pass from me, dog.
Yeah. No weekly means no tradey for me. But I hope it works out for you. Earnings tomorrow before the open. BMO.
Can't do anything here.
Yeah, it's enough. I think maybe I'm looking at something else.
Before the market opened.
Oh, before the market opens. Oh, God.
Stop.
Okay, crude. Gas. No.
For what? Crude oil?
The crack spread. MRB, MCL. Long the April 9, 17, or at 17, and then short April 21st.
Gasoline in RBOB? Gasoline?
MRB, MCL. Long MRB, short MCL.
I don't know.
Let's
go to the
next. Everything I read was incorrect, so that's my bad.
We don't trade MRB on the platform.
Yeah.
Is it tradable? What is it?
I don't think there's much volume there. There's not much volume in the full size contract. I would imagine there's.
Oh, it's a micro.
Yeah, it's micro RBOB.
Okay, I didn't even know that. Yeah.
Right. Yeah, I've never traded because there's not really volume there. It's saying 9 on the day.
Okay. Yeah, we don't have that. Okay.
Last one. How do you size your positions? Formula or eyeball it? Formula. Formula with a dash of eyeball.
I was going to say, like your risk parameters.
Yeah.
I like to do 1,000, 1,500, would be like the higher end.
Yeah, but
everything's in that variable.
Between 1 and 5% is where we land, but we're usually between 1 and 3%, I would say. 5%, I think, is more for ETF positions that you can roll perpetually. Earnings trades, spreads, things that are more binary and don't have a lot of defensive maneuver capabilities, we're closer to 1%. So whatever your portfolio size is, take 1% of that, and that's the trade size that we're starting with.
Or you say GFY and just trade once, trade huge.
You could do that. And that's going to result in a 0 balance or a 200% higher balance.
That's not always true. So, yeah.
All right, that's it for us. Thanks for tuning in. If you got any further questions, you can find us on the Twitters. I'm at Trader Mikey B, Nick's at Trader Nicky Bat, Thomas is at FX Westwater. Hopefully that gave you some crude oil trade ideas amongst other futures trades. I've got that crude short call spread against the micro crude long. Got some exposure elsewhere, but yeah. Love to see the depth of analysis from Thomas.
Yeah.
And yeah, we got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. We'll be back same time, same place, 11 a.m. Central tomorrow. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tastytrade, named best online broker for options trading. Genius loves company.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, like, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from Tasty Live to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We are back. It is Tuesday, April 29th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, it's the eye before the storm, I suppose. Earnings, GDP report, non-farm payrolls await us in the days ahead. Are you enjoying your final reprieve before it all arrives this Tuesday?
Yeah, I am. I mean, arguably markets have slowed down quite a bit. And it seems as though, there's obviously been different times where we have craziness heading into earnings, craziness during earnings. I feel like this is one of those times where we had crazy stuff happening and then earnings come and then all of a sudden there's just a calm.
A calm. There is a calm today right now. We had Scott Bessent speak this morning, the Treasury Secretary. Whether or not he helped calm markets or not, they were trading higher all session long until about 30 minutes ago. Perhaps it's because we see that we have Commerce Secretary Howard Lutnick due up on the calendar in about 57 minutes' time. That is important. Why is that important? John, we can go to the slides. It's a defensive kind of day already. Classic risk-off in FX. The dollar, the yen are the top performers. Bonds are up. Stocks are wobbly a little bit. The sector rotation within the stock market's not fantastic. But maybe it's because Lutnick looms is why we're looking at a market that's pulling in here in the second half of the day. I mean that seriously. There's a great chart that's been floating around from Sherwood, which is a financial news agency from, I believe it's Luke Kawa who put it together, formerly of UBS and Bloomberg. Returns in the market, S&P 500, depending upon who's mentioned more in that day's news cycle. When it's Besant, the market, not too bad. He's the competent guy. He's the guy who calms everything down. But when Lutnick or Navarro are speaking here, Jamal, the markets don't like it. And so at 2 p.m. Eastern today, one Howard Lutnick will be taking the microphone. I know this seems silly to focus on here, but if you're a scalper, I think the evidence is pretty clear throughout this tariff conundrum. We've seen that Lutnick has been a negative influence. So it's something that we have to have in the back of our mind here as we go into the second half of the session.
Yeah, I mean, this is something that gets to what we've been talking about for a couple of months now, where it's very much of a headline-driven market. And I'll be honest, I mean, I hope this is the situation today, because this is one of the reasons why I'm trading on both sides of the aisle, if you will. I mean, I got short call spreads, I got short put spreads. You know, I kind of am, I wouldn't say I'm hedged, but I got stuff to do regardless of how the market reacts, especially if it reacts to the way that these guys talk. So I'm all for it, Chris. Bring it on. I wouldn't mind a little bit of downside so that I can cover a few short deltas.
And we have this GDP report tomorrow morning, too, and it feels like the market may be underplaying the risk that it could pose and a wake-up call that it may bring. I'm reminded of what happened on February 21st when we got the PMI reports telling us that the economy was backsliding towards recession, and that really kicked off this market pull. Tomorrow's GDP report could ultimately signal that it has indeed come true, that the slowdown has arrived, and the forward-looking data aren't too pretty here. But we make our way into the charts today with a brief reprieve to worry about who's talking from the Trump administration. Besant this morning, he talks. The market's up most of the day. Lutnick comes onto the event horizon. We can see him as we're driving down the road, and we buckle up. It looks like the market's buckling up at least. So stocks were up after Besant. Here we are right now, 55.56, up by 0.05% at ES. NASDAQ down by 0.05%. Russell up by 0.16. The Dow up by 0.38. So just first blush there, Jamal, when the Dow's the leader and the NASDAQ's underwater, it's a defensive kind of day, at least in the equity markets.
No, absolutely. It's certainly that. I guess one of the things I'm looking at is to see if we're going to continue this sort of what would appear to be a streak of doji setting in. And I certainly hope so, because one of the biggest positions I have in the portfolio is a SPX calendar, 5,400, 5,500, 5,600, 5,500, obviously being the middle. I love it, for my SPX. And so I hope that that's the kind of thing that we're going to see over the next couple of days. Again, I know we have a bunch of big data coming out. Obviously, you mentioned GDP. We also have an ISM, PMI. We also have, what else we got tomorrow? Something else. Core PCE. Again, I mean, those things may move the market to varying degrees, but I hope not a whole lot. And I hope we kind of sit in this level. And I could see us sitting around this level. Honestly, I think if we have a big move higher, I don't necessarily know. I wouldn't be surprised by it, because we talked about how buyers are lined up around this area to push markets higher. I just think they're going to take their time in doing it, as it would appear right now.
Yeah, the next few days, we certainly do have a whole host of things coming up. Wednesday, it's going to be GDP. Thursday, the ISM manufacturing. Friday, non-farm payrolls. Monday, ISM services. So the run of U.S. data here is as strong as it's been in a while. You mentioned the PCE report, of course. That's also on the calendar. ADP. There's home sales. There's income and spending figures. Tomorrow's calendar is super saturated for U.S. data, for global data. Today, we find ourselves looking at another doji, though, as you mentioned here. We're kind of hovering in a zone where the market's been pinned previously. And Jamal, let me tell you a story here of stubbornness. On March 14th, I put on a short put spread here in ES, the 5550, 5500. with 47 days to expiration. And the month of April was a nightmare. And yet, for some damn reason, I held it out. And so with 1 day to go to expiration here, I was able to close it when we were trading closer to 55.73 and get out at exactly break even for what had been a nightmare of a trade in the short put spread at ES. The fact that I'm able to get out at break even and I was able to kind of hang through it here is enough for me to take it off the table ahead of GDP, ahead of all these earnings releases. I have no lingering position in the indexes right now in the futures market. I have no intent of putting one on today unless that's something small and that's something short. Because it feels like the data that's coming down the pipeline is going to be a stark wake-up call that recession is arriving and arriving soon.
I find it. I think it's a good time to mention what we talked about last week when we were saying, that buyers probably live above 5,500. I think people thought we were a little crazy, but when you look at the chart, I think this is exactly what we were talking about. Such that once we got above 5,500, especially if we closed above, which we did on Friday, I think was a huge psychological thing. And make no mistake, a lot of this recovery is about the psychological damage that was done to all of the technical charts on all of these equity names, let alone these indices. So I think the fact that we closed by 5,500 is huge because, again, we had during this drawdown, we had 5 times that we touched it, or at least 4 maybe. I'm looking at 1, 2, 3, 4, 5 times. No, it was 5 times that we touched it. And finally, when we touched it on Friday, we closed above, I think was huge. So I do think I'd be shocked if we went back down to 5,100, these 4,800 levels. Again, it would take some serious rhetoric to push that over. And I don't think it would be the same old rhetoric. I think it would be, it would have to be something much stronger. But I think we're out of the woods, whether or not we're, heading back towards 200-day, moving at 5,700 and above. I think that's the hard part going forward. But it would appear to me that things have calmed down. Again, when you look at the last couple of days of trading ranges, nowhere near as big as they were over the last couple of weeks.
No, they haven't been. And that's certainly, certainly reassuring. The month of April was wild. I think I wrote about it yesterday for the Tastylive traders blog here. But this month produced 4 of the largest price swings that we've ever seen in history. For the S&P 500, April 9th was the number 1 largest single point gain at 474.13 points.
Right, on April a points 4th, basis, right?
Yeah, on a points basis. April 4th, April 3rd, and April 10th rank as the number 2, 3, and 6 largest single day point losses ever. I mean, so, are we going back into that world where we're in record-setting territory? I mean, that would be wild if that happened again, but we just saw it was historic in nature. I find myself feeling cautious because the market, if it's out of the panic state that it was in of liquidation and correlation equals 1, then we have to, rubber meets the road. Okay, if these tariffs are in play and the bullwhip effect of the supply chain issues is coming down the pipeline, realistically, the probabilities of that recession have gone up, and the Fed still may not have the data in hand to act when they meet next week, which is probably the outcome of all this. Jamal, I mean, I look at the pricing here. Usually it's something that you and I touch on. Ilya and I did it yesterday instead, but the CME FedWatch tool is giving a 7.74% chance of a 25 basis point rate cut next week. The GDP data tomorrow, the ISM manufacturing, services, the non-farm payrolls report on Friday, all of that could provide at least enough evidence for the Fed to start talking about the cuts again. Do you think that we want to have cuts being discussed a little bit more aggressively in this market? Would that help soothe traders' minds, or would these be cuts for the wrong reason?
I think it would be, it's hard to say the wrong reason. I just think it would be cuts not for the reason that we need them. You know what I mean? I don't want to call it wrong, but it would just not be for the reason that we need them. That being said, I just don't see how they end up doing a cut after all the rhetoric that Jerome Powell has had more recently. I don't see how we even do a cut next week. But to your point, are they going to start talking about it? Is it something that they're going to bring up during the meeting? I think that's very possible. Of course, with a lot of different caveats, right? Sort of like a lot of these companies that have presented earnings have been giving their earnings going forward or their guidance or lack thereof with a lot of caveats.
I'm reminded of some of the numbers that we've shared here previously. What happens after rate cuts, depending upon how you classify them? We like to bucket them into 3 different categories: recession, emergency, and maintenance. When you look at the maintenance returns over the years, you're looking at a market where the average return for stocks a month later is a little bit weaker, but it's higher 3 months later, 6 months later, 12 months later. When the market's seeing rate cuts for emergency reasons, right? Something really bad, unexpected's happened. The market is lower a month later, but 3 months later, 6 months later, 12 months later, it's higher because the firefighters have arrived. When recession happens, it's no good. Historically speaking, since the 1980s, when you see a rate cut for recession reasons, stocks, the S&P is lower by 2.2% on average a month later, 14.3% on average 3 months later, 12.8% lower 6 months later. So if we start to see these Fed cut odds go up, we're about 70% chance for a June cut as is right now, and that does leave ample room for that gap to close. Let's say the data do provide that rationale over the next few days. If history is any guide, right, then stocks are probably still in the barrel in the short term. The rate cuts may seem good, but they're not coming for a good reason, or not the right reason. You say you don't want to use right or wrong. I think that's fair. They're not coming for the reason that the market would desire them to be arriving for, which is inflation's defeated, not that we're concerned about growth.
Are you at all thinking about how tomorrow could end up going, being that it's end of the month flows? I know it's not end of the quarter like it was in March, but we have seen some movement at the end of months based on flows, based on how the month has been. And again, you said this has been quite an ugly month. We know sometimes different, whether it's funds may have to rebalance for the end of the month. Do you think that we could possibly see something like that, or maybe it's just hogwash and it's kind of quiet?
No, I think that's probably. I mean, obviously, it's not end of the quarter. If it was end of the quarter, it'd be with a GDP report on the same day. That'd be a very big development. Yeah, I think. I mean, listen, this month has been very difficult. People have seen huge underperformance. They've obviously seen stocks bounce back. We closed March.
Yeah, I'm just looking at it too.
19,439.50. I mean, we are technically higher throughout the month of April. It's a heck of a drawdown that you had. If you were an investor or advisor and you told your clients not to panic and ride it out, you look like a genius. If your clients had previously panicked and you said, no, buy the dip, you look like a genius. If you sold everything in the first week of April and you panicked, you probably have some splaining to do. I mean, I think there's some incentive to chase here. We've seen a lot of these big funds are still in significant drawdowns right now. But are there any of the incentives on the table or disincentives on the table? Have they changed? No, they haven't. Reality meets the road, though. February 21st, right? This is that PMI report that suggests that we're potentially heading into a bit of a growth scare. And this is before Liberation Day, obviously. Yep. I feel very fortunate that I was able to get on my long deltas and the indexes today. The question is, would I want to put that similar trade back on given the levels we're operating around? No. I wouldn't want to just put a short put spread on here on a day where vol has come in and we're staring down the barrel at what I think to be is going to be a wake-up call of event risk.
Yeah, that's a good question. Would you add long deltas at this level? I think that's a very solid question because again, it feels like 5,500 became a new line in the sand. Where we go from here is anybody's guess. And like you said, vol IVRs are still a little pumped up, but obviously it's a far cry from where we were just a week ago. So there's God. I mean, I have a bunch of positions on. And I got a bunch in both ways, ready to do something in either direction. 100 points in either way, 50 points in either way. But it's a good question. Would you apply? What would you get at this direction? I mean, would you get short deltas here? Would you get long deltas? It's actually a really good question. I don't know. I don't know. If I had nothing on right now, I don't necessarily know if I would choose to do something right here because it's literally the line in the sand.
I think the VIX term structure helps inform us of that decision right now. It's kind of humped. It's kind of not so much anymore as the day's going on. Yesterday it was a little bit more exaggerated than it is right now.
Yeah, it's a little flat.
But I think we've properly hypothesized, you especially, like, why would this decline be happening here? Okay, we have our 90-day tariff window, and then you go into a period where they say they're not going to extend the 90-day pause after July. So vol rises back up, and then it kind of flattens back out again. It's not exactly in contango, right?
Mm-hmm.
It's getting at, like, there was some backwardation in the back half as you look into next year.
Mm-hmm.
If this was a market where
it's a funky curve for sure.
Oh, I thought you said it was an FU curve.
No,
like, that's how I feel about it.
FUN.
Okay. Okay. But both would apply here, because if this was a market where, like, okay, we just put in a higher high for the month today, at least post-Liberation Day, we should say, we see an increasing slope rate of change for both the 5 and the 21 EMAs, the 1 week, the 1 month. It's a bit of an inside day, maybe, but you know what? Hey, this is a new high close post-Liberation Day. I could work with some long deltas here if we were in just pure contango in the VIX term structure. Overbought stochastics, you'll love to see it. MACD crossing through its signal line, you'll love to see it. The technicals are all there for continuation to the upside. It's just that we have the specter looming, not just of Lutnick, but of all the data that I don't think the market doesn't like when the Fed is cutting. I know people say, oh, the Fed's going to cut now. This is great. Careful what you wish for, if, again, history is any guide.
It is, and I also find it interesting that you do have a lot of companies, when you're talking about earnings right now, which we're in the midst of, whether they're saying they're completely just foregoing giving guidance for the rest of the year, or there's, again, there's plenty to be mentioned that are fine with this environment and showing within their earnings that they're not worried about tariffs whatsoever. Again, it's very, it varies from industry to industry, but I say all that because I haven't really noticed markets really being swayed one way or another too much from earnings yet. Now, again, that should change over the next couple of days here when we get a few Mag 7 names to present earnings. We'll see how that changes the sentiment and changes what kind of moves we get out of the markets. But for the most part, they haven't really been affected too much by what's coming out from earnings.
No, and earnings season is both good and bad, right? The number of companies beating their EPS estimates at 73% is below both the 5-year and the 10-year averages, the 5-year average being 77% and the 10-year average being 75%. But overall, companies are reporting earnings that are about 10% above expectations in aggregate. That's above the 5-year average of 8.8% and the 10-year average of 6.9%, according to FactSet. So, again, pick your narrative, right? If you're a bear in this market, you could easily say recession looks like it's coming, and earnings, more companies are missing, or fewer companies are surprising than they typically do, and we see that the earnings growth rate is coming in. Companies are abandoning guidance, and yada yada yada. But if you're a bull, you could say, you know what? Overall, earnings surprises were above expectations. Companies know all these uncertainties. The market knows that companies have no reason to issue guidance. So, maybe that's different. Right, Jamal? If you're a single company and you pull your guidance, the market's going to kill you for it. But like during COVID, when everyone pulls their guidance, the market says, yeah, you get a waiver, you get a free pass because everyone has to do it. So it's not really about you, it's about the environment you're in. It's outside of your control. The management team is just trying to survive. And so you're not held as accountable.
Yeah, you get a little bit of a reprieve in those situations, which is understandable because really nobody knows, again, the scope of this fully, how it's going to affect. I mean, there's still, oddly enough, we are almost 5 months into the year. Longer. We've known about these tariffs coming longer than that, basically around the time of election. And there's been a solid 2 months of them obviously affecting markets, 2.5 almost, going back to the end of February. So oddly enough, we have a potentially a lot of time and a lot of data that we should have by now. And we just simply don't with regard to tariffs. So if these companies are pulling their guidance, you can't really blame them for it because they're preemptively doing it based on what they're hearing, not necessarily what they know.
based on what they're hearing, not what they know. I think that's a good distinction. Stocks back up near session highs, 55.68 or so. We've been riding the 1 week moving average here as support the last few days, which is an encouraging sign here for bulls. Technically, if we didn't have this background situation of the tariffs, you're starting to look more comfortable. The VIX term structure isn't fantastic. But you got to pick and choose. You're not going to get everything perfect every single time. And if you're waiting for every single starter lineup when you make a trade, you're going to be late, right? You're only going to jump into the market when it feels really safe. I personally have had I've eaten a lot of Tums this past month when I look at my ES position, Jamal. So for the sake of not having to do that tomorrow, I'd be happy to be wrong and miss the market going up more than I would be if I held on and this thing came down. And I said, I thought that data was going to be bad. Why did I stick around with such a short-term trade time? I hate 0 DTEs. Why did I do this to myself? Not worth it. Not worth it.
I actually want the market to, and not just even for my own position, but I think in order for this thing to really be healthy, I think the market could use a pullback for a day or two, despite, without it being just because Apple or Meta, don't do well on earnings. Like, I think it could use just a regular technical pullback. Because, you get 6 days in a row, all of a sudden people are clamoring for more. And it's like everybody forgot about what it was like 3 weeks ago when you were, crying for higher. Now, all of a sudden, you're expecting it to be higher. The market pulled back 30 points at one point yesterday during the day. And some of the more senior people around here were like, wait, what's going on? Was there news? Why are we down? It's 30 points. What are we talking about here? I think that's okay. We need that. And I think we could use that maybe one or two for a couple of days for the rest of the week.
In terms of the sector performance today, I said at the top of the show, it feels like it's defensive kind of day. Underperformer, retail ETF is unchanged. XLY is down by 0.1%. On the flip side, what's doing well? Materials up 0.88. Utilities up 0.6. Financials are up 0.73. Financials actually look pretty good. This is the one sector where if you want to have a bull thesis on a fundamental sector rotation basis, financials are holding up. They're holding up from their post or pre-election levels. They might be getting ready to break the downtrend from their March swing highs here. They've certainly pulled back up into their sideways range that they had been trading in for several months. Financials are doing well. That's usually a good sign. But then you have something like healthcare. Healthcare is back on the up and up. Staples are on the up and up, while you have technology and others lagging the broader market. So I'm not in love with what we're seeing on the board here. Not exactly a growthy kind of day when you look at the sector ETFs.
Yeah, when you look at the heat map overall, though, it doesn't suggest that the market is going to take off or fall in one way or the other very big today. It seems like things are just fairly flat. When you look at, Apple's kind of flat, Amazon's kind of flat, Google, Nvidia. Like you said, healthcare is kind of leading the way a little bit as well as financials today. But things are fairly quiet across the board. And I think, the signs of exhaustion, especially month-long exhaustion, is setting in just a little bit, which is, I think, why we're getting some of these dojis here.
It's only been a month since Liberation Day.
Just under, even.
It feels like way longer than that. Yeah, so I guess tomorrow is officially 4 weeks. Jeez. Wild stuff. Yeah, the heat map right now is just like, it's muted reds, muted greens. It kind of looks like vomit to me. My eyes it's not very appealing. No, this isn't a great day. It could be a better day. We'll see what Lutnick has to say in a little bit. Markets playing with fire, stepping in front of him, but you never know. Stocks, broadly speaking, have enjoyed a little bit of a pullback here in vol. Spot VIX now at the lowest level that we have seen on the other side of Liberation Day, 24.25. I think there's some traders who may look at this and say, well, if the market was really worried about the economy and the economy is really going to be a problem for these tariffs, wouldn't the VIX be higher? It can be both, right? That we've come to terms with that this is the reality that we're living in. We're not seeing the uncertainty that we had a few weeks ago. We are certain that this is going to be miserable. We can have a VIX that comes in also with these concerns proliferating. Stocks can fall even if the VIX is coming down. So I think we need to be careful about that.
Very well said, my friend, because that's it, right? The market always, VIX always rises because of uncertainty. Is there still some uncertainty? Yes, but we are certain this is going to be miserable. We are certain that this is going to add to the price of a lot of the things that we buy overseas, particularly from China. Again, we're seeing a lot of different charts float around about certain products and what they cost plus tariffs. So I think now that you're starting to see some of that go into play, that is sort of eliminating some of the certainty that we had no idea of how this was going to work and if this is really even going to happen. One of the trades that I tried to do, that I like to do when you see VIX explode, much higher, 40s, 50s, is a VIX put, but it is about timing, right? So I didn't do it when the VIX was, over 60. I actually did it as the VIX was on its way down, and when it was a day where the VIX was trading around 30, and then some headlines came again and it jumped back up to 35. But it was about 40 days left for the May cycle, and I bought a 28 put. And yes, I did say buy, but again, when you think about it, buying that put is essentially betting on volatility to come in. So it's not exactly your typical buying option situation, right? Like I am buying a put on the VIX, thus betting that volatility is going to come in and fall back below, which it has. But the interesting thing here is I bought 28 put in May for $5. So the break even right there lets you know it's 23. So we need VIX May futures below 23 or more, which right now it's right around there, right? And so I'm slightly making money on this 28 put in May, but I really bought it with the intention that VIX would be around 20 or 19 by the time I took it off. That part I don't know about. We got 21 days. I might give this thing maybe another week, and then I'm just going to be out of it and probably not roll, because my guess, if I'm lucky, VIX is trading 22 or maybe 20 by next week. I'm just going to close this thing, and there's no chance I'm going to roll it.
Well said. We get ready to turn the calendar here, or turn the page to bonds. When Lutnick speaks today, I would remind everyone that he did speak earlier as well. He was talking about tariff relief available for U.S.-built vehicles. That didn't seem to bother the market. So if he were to stick to the script and talk about how there's tariff relief, maybe all this doomsaying about what he may bring is all for naught, and this market can extend its rally over the course of the session. Message discipline, of course, has been a problem. So I'm not going to put my chips on that table. Bonds here, though, are inching up, which is nice, at least from the ZB perspective. Back above 117. Okay, we're starting to get something cooking here. I think, Jamal, we've tapped the sign a few times about the Trump put being in TLT, not in SPY, as a turn of phrase, and that would mean that there's a threshold of pain at the long end of the curve, 4.5% of the 10s, 5% of the 30s. To that point, we've seen those lines hold over the course of April. They were tested. They bent. They did not break. We've seen quite the rally here now in bonds. We're up about 4.5 points over the past week plus. What's the move here now at ZB as we hit 117 in today's session?
Yeah, I mean 117s, huh? You say they're inching up. I mean, they're almost moving up by yards now. These are really making a pretty strong move. And honestly, I think the play is still the same play we've had on, which has been the best play you could do, which is a non-directional play. Again, I've used the Iron Condor. I believe you still have a similar trade. And again, given the areas where I have this, I feel very comfortable. I mean, 110 and 121 being my short strikes, it makes me feel pretty good. And again, a lot of that had to do with the huge range that was carved out during all this scariness and fear. The other interesting thing to me overall, just taking a step back and looking at it, is how for the better part of 3 years correlated markets and bonds have been, whether it was to the downside or to the upside. And it's been a fascinating, I'm speaking for myself, it's been a fascinating education in bonds. Again, I've been trading for 20 years, but I really didn't look at bonds like that. Honestly, the only time that I kind of paid attention to it was major times of distress. And you start to learn something there, whether it's 08, whether it's 2020, whether it's 2022. But 2022 and the last 3 years have been a huge educational, look into bonds and the way that things have happened. So I don't know. I don't know how much longer this happens. I don't know if you see the 60-40 portfolio move the way it used to move once upon a time. You would imagine at some point again it will, but This has just been really interesting to watch.
It's been very interesting to watch. There was a point there when we were in early April where the correlation between bonds and stocks was a near perfect -1 on a rolling 1 week basis. We're now back to near perfect +1 on a rolling 1 week basis. The flips that we see throughout all this, I think we could just talk about being part of like the whole Sell America movement. Just broke my pen. The Sell America movement that was going on at the start of the month, dollar down, stocks down, bonds down, people buying gold, people buying Bitcoin. Bonds, though, are going to be the place that if you think about the potential for recession, since 1980, the two best places to hide out during recession have been the long end of the curve and gold. It's one of the things that has me questioning my short gold exposure moving forward with tomorrow's data due up. I think there's going to be a position change that's necessary there. In terms of ZB, I still have in the U5 contract, and obviously it's working out well today, the short 115, 117 put spread here. And so that's behaving a little bit better right now. I'm very comfortable keeping this on. I think that bonds have a sideways to long bias at the moment. Now that we've backed away from the craziness of this all, and the administration has signaled that it's not going to, blow up the U.S. bond market for the sake of trying to reorient the global trade system. And Trump showed his cards by telling everyone he was watching bonds a few weeks ago. I think that we're going to be looking at the typical recession trade. Recession classic is kicking in. Yen up, dollar up, bonds up, stocks soft. And that makes me question gold as well. So right now, everything working out here. Technical momentum's nice. Stick with it.
Yeah, I mean, I had a little marker on for when bonds hit 117. Kind of surprised me when it happened this morning, but they've been strong, just as strong as equity markets. And again, that correlation has been something to keep an eye on. We'll see if it deviates going forward. There's so many different reasons why it could. Again, I mean, I wouldn't necessarily say this is telling me that the Fed is going to cut per se. I think it's just telling me things aren't as scary as we thought they were a couple of weeks ago. Like you said, when there was not even a couple of weeks ago, last week and prior, the previous 3 weeks, when there's basically the Sell America event going on.
One thing that needs to be done for me ahead of tomorrow is I do need to change. I have 24 days expiration on my short iron condor trade in the 10s, right, in notes. At the time, it was very easy to put on. I can't believe I was able to sell, basically a point wide and get a decent trade on. Look at how wide that was. It was beautiful at the time. We got to 52 days. You could go a point wide. Still, you're not going to get the same risk to reward if you go around the 1 standard deviation move. 73% probability of profit. You're risking. That's not a great risk to reward there, Jamal. It's not fantastic. So there's probably a way to make an adjustment here that if I'm going out to do this, we have the swing lows from April 11th, which are closer to 108. Do we think that those lows that the Trump administration effectively cried, mercy on with the bond market when the news reporting comes out that Trump's watching, do I think that those are going to be broken and challenged soon? No. Just my gut instinct says that the administration has showed its cards. And we've been vindicated over the course of the month, thinking that those lows are going to hold. There was a scary attempt or two down there where the market sold back off almost immediately the next day. But if you held the line in the sand and operate around that belief that you listened to what they were saying, they don't care about stocks, they want lower rates. So clearly if rates are going up because of their policies, they're going to have to walk back the policy. The market's talking to them. We can start to get this into a more manageable scenario where if we treat those recent lows, maybe we don't go as far out on the side here, but we can treat the recent lows as something to work around where you can get something that's a little bit closer to a 3-to-1, maybe 3.5-to-1 risk to reward as opposed to a 6-to-1. If you simply go out to the 1 standard deviation, beyond the 1 standard deviation band. I think that's what you need to do here. You need to pull this up on the short put spread side.
Yeah, I really don't blame you. I have I am short the 108s and 115s, and my condor's 2 points wide. So just like you, again, I did it last week. I did it on the 21st, so things were just a little bit different when I did it at the time. But I'm with you. I think we have seen the areas of the pain threshold already in some of these trades, and I think we are safe to sort of look at. I think we're safe to sort of identify those areas of where we want to place our trade around.
This is better than what was on what's on right now. So let's try to get this moving here. Here we go. Never like when that's filled too early, Jamal.
Immediate fill. Oh, look at that.
Immediate fill. Immediate fill. Close this guy out. All right, so moving this, adjusting it
today, actually.
Yeah, I don't know why. I mean, there's decent volatility here. It's an IB rank of 54.6 in notes, and that's the one good thing still that traders have working for them, as we've covered a lot over the past few weeks. Typically, you look at a little bit more vol, a little bit more juice in ZB, but it's difficult to operate in if you're a smaller trader getting into the futures market for the first time, because ZB is twice the size of ZN, not just in buying requirement, but also the tick value. So you ultimately end up going to TLT a lot of the occasion. But in this case right now, ZN, half the size of ZB, is giving you something decent to work with, where I was now a little bit more of an upside tilt. That is the difference, though, from where we were a few days ago. Okay, and I think that's worth noting here. We had returned back into the range-bound sense after this period of instability at the start of the month. We're now clearly making progress through the top side of the former range here in notes. And this is one of those things that gets me thinking that we're going into more classic recession type of trading. ZN is now breaching what would have been the top side of that range in place prior to Liberation Day. And if we didn't have this candlestick up here, Jamal, let's just say we were trading sideways for this entire month until now, and we just saw prices breaching 112 today, I can't help but feel I would be getting very, very bullish on notes from a pure technical perspective. Also with this lingering recession concern in the background. I mean, it kind of fits like a glove. It almost feels like it fits too good, but I don't know if I'm approaching this the right way, because I feel like I'm distracted by this action here in the first days of April.
Yeah, I mean, it's hard not to take note of that, right? Like it kind of is. Well, let me ask you this, and it's not the same chart, but would you feel that way about equities? Again, you're seeing a similar type of chart. You're seeing it approaching these dojis. We know what happens when dojis start forming. Sooner or later, it's going to explode in one way or the other, either direction. You probably feel more downside than anything just because of how ugly the sell-off has been. But, these are doing similar things. And so I guess to the point of sort of the correlation between the two, is this really poised to move higher? Does that mean that equities are going to move higher, right?
There was a period here when bonds and notes moving up in April was a good thing, because it meant that the fear was leaving the market. It feels like we're maybe ending that period where bonds moving up or notes moving up is good for stocks. It's less away from signaling that the panic is, sell America's ending, and more about like, oh, people are buying these because they want to lock in rates. They want to lock in the yields before slower growth comes around the corner. That's what concerns me. That's my big concern here. Maybe the iron condor, maybe I need to add something sweeter in here, Jamal. Maybe I need something that has a little bit of upside convexity and kick to it as well, like a 114, 115 call spread. Like kick that in. 115, 117. Now it's adjusting the condor too much. We'll have to go back to the drawing board here. We want to keep moving with gold and silver though, but I don't know, this chart, I'm just like erasing this. I'm holding my hand up to the screen. Okay, if that wasn't there.
You like looking at it. You like the way it looks. You feel like it's about to make a nice big move higher, don't you? You see that little, those last couple of days, those candles poking up, you're like, if that wasn't there, if that one area wasn't there, I'd be like, this is a buy. I get it.
If that's a buy for the reasons that I mentioned, how long does gold remain a sell? It's off by 0.42% today. It's not really doing much of anything against its 1 week moving average. It's kind of pinned here. We don't really want to give this up. I'm still short the call spread that was put on last week. I'm not feeling too hot about it right now, particularly if my concerns about stocks and bonds are founded. Jamal, what do you make of gold up here? It's a 58.4 IVR. We've had a meaningful pullback from the highs. We're sitting on top of the 1 week moving average basically to the penny.
It's tough for me to, honestly, on both of these. You can almost lump, both of these together in the way the last two instruments we've been talking about, bonds and gold. It's tough for me to sort of make the directional play, given the narrative that has been the case over the last couple of weeks, right? Where most of them moved off of the Sell America narrative. And while that's probably going to change, I just don't know in what way yet. And so I'd rather be directionally neutral on both of them until they both give me more of an indication of what's going on. Look, the gold chart looks fine despite all the craziness that happened, whether it moved big, whether it reversed high after it hit 3,500. I mean, it's still technically nice. Like it reversed and now it's floating into a pattern and it looks like it wants to form dojis. Nothing in here is telling me that, I want to get shorted back down to 3,200. Again, I feel like directionally neutral is the play, especially once it hit. I think that's the nice thing about these is that they both hit these crazy highs in a way after big moves, and then they pull back. And now, the vol is still somewhat elevated as the whole, sort of everything has calmed down around the talk of tariffs and what was pushing these in either directions either way. And I keep, I'm still lumping them both together, gold and bonds. And so I think that's why the directionally neutral play works well. Give it time to carve out some range before it decides to make a move, I'll just say higher because I think we're both looking at it in the terms of whether these could both explode higher. I would say just directionally neutral is the play on both of them because, again, the narratives are around why they made the moves, why they created the ranges, why they created the chart patterns that we're seeing. That was based on different narratives. Now what's going to be the new reason? And I just don't know yet.
A quick programming note here. Lutnick is starting to speak right now, a little bit early. So keep an eye on the newswire for headlines if you start to see markets moving.
So wait, we got a bid into his before he spoke? Because I did see this bid. I was curious about it. So this bid that we just got, it has nothing to do with anything. It's just there. And
there was, before Lutnick spoke, there was a comment that crossed the wire from Bassett saying that a trade deal with India is close. I don't know if that's a recycled story or a new one. Yeah, and that's out about, let's see what the headline says. 1:37 p.m. Eastern Time. Scott Besson says that U.S. may be closing on a trade deal. Also has sustainable talks with Japan, contours of a deal with South Korea are coming together. And Lutnick is starting to speak right now. So we'll keep an eye on the headlines there for stocks, obviously. That was supposed to be 2 p.m. Eastern, so pulled forward a little bit. We'll see if the whole Lutnick talking, the market's moving lower, holds here. But Jamal, gold, right? Gold is, this has been tough sledding. Even if this has been something that's been working in my favor, this particular trade, I can't help but be drawn to what the data tells us that we should be doing in the grand scheme of things, which is even if we have a short-term pullback, even if we were more than 25% above our 200-day moving average last week, which the 1 day, 3 day, 5 day, 1 week, 2 week, 4 week, 6 week, 8 week, 12 week forward returns were all negative. Historically speaking, when you look at all the other instances in history on average when that has occurred, this also feels like an ahistoric time, and the recession factor still remains. Gold does really well during recessions. So if we have an opportunity to get long on pullbacks, that may be the more prudent of the two activities. I think I have to toy with this over the next few hours. I may cut my short delta exposure here heading into tomorrow. Because if the GDP report is as soft as we fear, gold goes up. If it's stronger, gold's probably going to come in because it's going to give the Fed one less reason to actually cut. But then again, if the economy is holding up throughout all this, does it signal to the Trump administration that what they're doing, not so damaging? Press forward, lean in. That could also be a takeaway here. And so if the Trump administration says, hey, look, the economy's growing at 2%, tariffs aren't a problem, full steam ahead, gold's going to go up. So I don't know. I just have the reaction mechanism around this tomorrow is very confounding for me. I find tomorrow to be actually a very important day in the grand scheme of things.
I have a different issue. In my case, I'm still short this iron condor with I have the 34.50 and the 34.70 call spread that I'm short. To the downside, I mean, I'm way out of the money, if you will. I have the 30.40, 30.50, 30.30 short put spread. I'm trying to decide whether or not I want to roll that up. Now, I had been against rolling that up, but maybe things have calmed down enough where I could actually do that. So, and I think it would provide at least a little bit of protection for me if, like you said, gold does make a move to the upside for whatever different reason. So I do have to keep. I might try to adjust that right now. Oh, filled. Actually, it just happened.
55.91 here in ES. I'm waiting to see if we're getting any of these headlines crossing the wire that draw us into anything. It is the 100 days of the administration, so there have been various comments and events coming out. And trade deal with India, South Korea, Japan would be excellent. Lutnick has just started to speak on CNBC, so keep that in mind. Silver prices here today up by 0.52%, still leading along here. I've enjoyed the fact that the last few days we've caught this 1 month moving average, which we've been doing over the past week or so, even with the pullback. There we go. Now it's starting to shape up a little bit more like a Morningstar candlestick cluster, perhaps, against the 1 month. And we're pulling back above the uptrend from the December, January, February swing lows. I'm very constructive on silver still. And we've recently seen that the gold-silver ratio crossed below 100 after rising above it previously, which is an important characteristic, whereby typically it means that you have a period or a window where silver outperforms gold. So I'm going to stay long silver here, regardless of what I'm doing with my gold exposure. I like the setup. I have the time on my side. There's no reason to change something. Plus, I've ridden it out throughout all of April thus far, and I'm a stubborn guy. It worked out in stock, so it's reinforcing the message that I should still hold on for this ride, too.
Yeah, I got no position in this one. I mean, I could see if people are doing a directionally neutral position in here as well for, over a shorter term period. I could see if they're doing that based on a lot of the same reasons I said about gold. But as of now, I got nothing.
Copper here today, down by 0.5%. It's struggling. Jamal, last week we talked about the 618 retracement here in copper and how by crossing through it, it would signal that this correction's over and we've started a new uptrend. Funny how that happens at the 618 is exactly where the rally stops. Like stocks at a line in the sand, if it's 55.50 in ES or 19,400 or so and 250 in the NASDAQ, right? Copper is back at that line in the sand where it's trying to determine, is this the rebound over, or have we returned back into a bullish trend? Non-committal. One might argue that this non-committal behavior is indicative that it's not ready to say the bulls are back in charge. Copper struggling, and then oil struggling here today. Bonds going up, yen going up. Smells like a growth concern on the macro level.
Smells like it, but it would seem as markets are not that worried about it overall. But you're right. Underneath the hood, it does kind of look like that when you see a little dancing around in some of the metals. I don't know. Hard to really kind of maintain. I can't really make heads or tails of this, especially oil. Like oil has been one that has been hard to figure out. So again, that's another one where for me, directionally neutral seems to be the way to play it.
Yeah, talk to me about oil. I'm still leaning short of put spread here, but you said directionally neutral is the way to play it. It's a 70.2 IVR. We've been asking for months. Where's the oil vol? It's sticking around.
It is. It's sticking around. It's kind of stubbornly hanging in there. But nevertheless, I'm unfazed. I'm still going to remain directionally neutral in this one. Again, this is another one where you've got these huge ranges that have happened, and so as a result, I mean, it's like a shock to the system, right? When you get these huge ranges, vol kind of still remains elevated because for a while there, people feel like, well, we could see that type of activity again, and usually you don't. At least not in the immediacy. So again, it's just another where I think directionally neutral makes a whole lot of sense given how the wings are kind of bid up.
This is a technical failure at the 1 month moving average. We rallied back into it in the middle of April, and then we struggled to poke through it the past week. You could even see if we go down to a lower term time frame here on the 4-hour chart, how we had those former lows from early March that we treated as resistance. And then after a few days of just bouncing around, we're now leaning to the downside. I could make an argument, left shoulder, head, right shoulder here on the shorter term time frame. To that end, that would give you a measured move to the downside. We'll call it 61.5 and just eyeballing at 64.85. So 335. 57, 58, we'll call it what, 58, 35. Somewhere in that neighborhood. That puts you back down here near the swing low that you get on April 10th. That math was definitely off. Either way, though, the swing low from April 10th at 58.29 seems like a place where you may want to look if you're leaning short deltas right now. The momentum is accelerating to the downside on these lower term time frames as vol's picking up, which I think is noteworthy. I have a short put spread on in here that was established a few weeks back when we were closer to the lows. I still think that's ultimately the play here, even if there is a period of drawdown potentially. Maybe you wait to put it on. But again, we talk about red lines in the sand for the administration. They seem to be flexible and willing to adjust their rhetoric once there's enough heat. The heat in the oil market is 49 to 53 a barrel. Below that level, existing wells shut down. Drill baby drill is really kill baby kill. Not sure if we want to run with that. But we see today even on CNBC, and this has been something we've been talking about for weeks now, the oil industry that Trump wants to drill baby drill has taken a beating since taking office, and it's because companies are now saying they may have to slow production. And that's not a stated goal of the administration. If you slow production, you remove supply, fewer jobs, less energy independence and security. I think with the vol here, Jamal, your approach being directional neutral, harvest the vol. I'd be very surprised if we're looking at low 50s oil in short order, unless we're back in panic liquidation state. Recession will not help oil whatsoever, but I think we have time on our side where if we do go down, it's going to be a slower ascent. And I think there's a floor, we'll call it 54.5. I think we got to treat the 54.5 floor that we had from early April as a place to trade around for the foreseeable future.
I agree with you. That's one of the reasons, and I've probably been a little bit more aggressive with it. I did 56, but that's exactly the reason. Again, the recession has been the biggest story surrounding oil for most of I can't even say this year, but really the last 2 months, really since we got in. Things really changed 2 months ago, right? And so 2.5 at this point. And so that's really been the biggest story. That's one of the reasons why we saw the big move down towards 56 and change. And so I'm using that as my area to sell against.
Doesn't look great. Natural gas here today is up by a little bit. It had a nice little rebound yesterday, gaining over 6% or so. Today it's off the highs. Certainly this breach of the 1 week moving average is comforting. Maybe we're getting a retest of that 345, 350 area, which if you notice, that's the swing low from April 9th. And we have our 1 month moving average coming in close to that area too. Mm-hmm. I have no conviction here. I was looking for a further pullback down below 2.9. We haven't quite achieved that yet, so I'm willing to be patient. Nice lows to trade around, though, if you caught it. Natural gas to me is lower on the totem pole of interesting things to discuss or trade right now, given all the action we're seeing in stocks, bonds, currencies, yada, yada.
Agreed. Yeah, there's so many other different things that probably have a little interesting, not only storyline, but also vol to them.
Speaking of risk-off days, certainly not in stocks right now. Holding up while Lutnick speaks, which is a very nice occurrence, and maybe that's a good sign for the end of the session. We see here that in the FX world, it's kind of tilting and squirming around now. The yen is off by 0.08%. Earlier, it was up marginally versus the dollar, while everything else was off versus the greenback. It's still holding its own right now, and yesterday we put in a nice little piercing candle. The Canadian dollar is in a lot of people's minds today, in part because we just had the Canadian elections last night. Mark Carney was elected He was appointed prime minister previously. So now he's officially been elected prime minister of Canada. He's taking a pretty strong rhetorical approach towards the U.S. right now, saying that the relationship between the U.S. and Canada is dead, and we have to learn and prepare for a new future.
Well, you know, when it's being called for your country to become the 51st state, I don't blame them.
Understandable, and I think that's one of the lessons here of the tariffs. Like the tactics that have been taken, it encourages from a real politics point of view. So I said this with Victor a lot over the past 2 months. Politics exist in other countries too. So if you're going to be the politician who kowtows to American leadership, whatever political party is in charge in America, it could be Biden, Trump, it doesn't matter who it is. But if you're that person who says, okay, America made these demands, we're giving in to them, your people aren't going to like that. So there's an incentive right now to cut a deal with Trump, but also be very tough on him in public, because that's what's good for your reelection bid. Canadian dollar here, though, you know, it's closer to the yearly highs than it is the yearly lows. And I think that says a lot about the situation we're in. It's a 53.8 IVR, though, and that's the only thing we care about here. Where's the vol? It's still fairly elevated in FX markets, but we talk about that risk-off, growth negative type of session. The Australian dollar is the worst performer here today. China sensitive, metal sensitive, heck, even energy sensitive. About 12% of Australian exports are petroleum products. So, look, I don't think we can. There's a lot of silver linings for today's action. Stocks are holding up for now. GDP tomorrow. We have those significant earnings releases tomorrow. We're about to head into a macro and earnings storm the next few days. So buckle up. This is what I say.
It's going to be very busy for sure.
Going to be busy for sure. We're winding down things here. We talk about it being busy. The calendar needs to be split into two for tomorrow. This is rare, Jamal. Usually the calendar for the next day is like a few events, one page. It's big overnight. There's a lot of data due out from the UK, from the Eurozone, from Germany. Then you head over into the US session, and it is just a fire hose of information. ADP, GDP, Chicago PMI, personal income, personal spending. There's home sales in there. There's going to be energy stocks over the course of the morning. 8:30 Eastern is the time to look for, though. That's when you get the big stuff going down the pipeline. Jamal, it's going to be an exciting Wednesday from start to close, pre-market to post-market. Wednesday is going to be a big day for everyone here. So best of luck trading. You and I are going to be back later on, though. You'll be back with Engineering the Trade. I'll be back with Overtime. So be sure to stick around. After a brief break, Dr. Jim Schultz is here with From Theory to Practice, up next on Tasty Live.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Tuesday edition of what it is that we are trying to do. Welcome to the Starbucks earnings edition of what it is that we are trying to do, man. I'm excited. You're excited. We did a little GM work this morning, and that worked out pretty well. So we're going to try to parlay that into some Starbucks trades later today. And, of course, I wore my public shirt today just in case the Starbucks earnings trade goes awry. We can slide right into our shift in the cheese department to pay for our losses. So welcome to the show. I'm so glad that you're here. If you're watching over on the Tastylive network, then I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren who are also watching the show. You can celebrate if you are a bull. You can commiserate if you are a bear, because the markets are indeed looking pretty green right now. So John, bring us into the market here. Let's see where we're at on the old stock market. Yeah, baby. You mean S&P's up 39.75. That's a little something to the upside. You got the risk-free instrument, also known as the NASDAQ futures, extraordinarily high-risk product, up 137. You got the boomers up 380. You've got the Russell 2000 futures index up 18 on the day. You got bonds up 21. Man, you got notes up 8.5. You got UB40 up 27. Again, super impressive given the fact they haven't done anything since 1983. You got Bitcoin up 727. And so the Bitcoin bros can take some victory laps here today, up to 95,000. Obviously, the Shifty is getting slapped around a little bit, down 23 on the day for the gold futures. And then naturally, with the market being so strong, you would expect volatility to be weak, and it is indeed pretty weak. With volatility futures down 45 cents and spot volatility, the old VIX, as irrelevant as it is, up down $1.27, down to 23. Man, you guys think this is slow? Like, you think this is bad? If we get back to VIX 16, it's going to be brutal. Like, it's going to be absolutely brutal, man. We need an Elon tweet. We need a Trump truth. We need Bessent. We need Lutnick. We need somebody to come out here and shake these things up a little bit, which could be happening right now. I think Lutnick might be speaking right now, actually. So, guys, let me know if he says anything notable. One way or another, it will probably show up in the market before I can even get to your comment in the stream. Not to mention, I only get to 1 to 3 comments per show anyway. But if he does say something notable, please drop it in the chat, because I'd be very curious to know what that might be. So, all right, if you have a question for me, get it in the chat box. I'll try to get to as many as I can right around the halfway mark of the show. We don't have too many things to do here in the portfolio. All we have to do is take a look at our GM earnings trade from this morning that, as of right now, is working out okay. It's not amazing. This is not a home run. This is not, Manny Ramirez. This is not, David Ortiz. This isn't even Jaron Durant stealing home. Like, my man, straight steal of home. That's crazy stuff in the MLB leagues. This is more like a Dustin Pedroia. Right? This is more like, like a Bill Miller, right? With the base knock off of Mariano Rivera, which, of course, we all know how that ended back in 2004. I know Harold knows how that ended back in 2004. He probably never stops thinking about it. But nevertheless, I digress. We're going to go into, let's see here. We've got, the oil strangle, not too much going on there. We just put that guy in yesterday. We've got our MES strangle that we just rolled out. We're going to sit tight on that and kind of do nothing. The other positions are all long stock positions. I'm just going to sit tight on those and not do anything on any of those guys either. What I do want to do, though, let's take a look at GM. So this was a trade that we did yesterday for this morning's earnings. And GM has not done very much post earnings. It's only down 40 cents on the day. And so, I don't know what they said. I have no idea what the report might have been. But, pretty much a non-event, pretty much unched on the earnings call results here. And so for our short call that's in the June cycle, not too much either way. We've picked up a couple pennies in front of the steamroller, but nothing too notable one way or another. We're only up 26 cents on the trade. So we're going to sit tight and do nothing. There's no reason to take this trade off now, in my humble opinion. Some people might say, hey, this was an earnings trade. Like, the earnings have come and gone. You have a little bit of green on the screen. You should take it off and, don't be greedy. Don't go for more. I think that's fair. I think that's totally fair. The only counter that I would have to that, or I guess the most significant counter that I would have to that, is right now we're only up 26 cents. So it's not really that economically significant, in my opinion. Now, some people might look at that and say, yeah, that's enough for me. That's economically significant. I think that's fine. I think we can all agree 5 cents, 10 cents is not economically significant enough. Not for an undefined risk position where, you took on this, limitless risk for all my Bradley Cooper fans that might be watching the show. Amazing movie, by the way. For 5 or 10 cents doesn't really make a lot of sense. But once you start getting into 20, 30 cents, you could argue that this is now kind of on the cusp of economic significance. When you get to 40, 50 cents, because remember, 50 cents in the options world is $50 in the actual world, then you're probably in kind of an economically significant situation at that point. So right now, I'm going to sit tight. I'm going to do nothing. We've gotten through the earnings call. Like we've gotten through, the binary event that was this morning. GM is still in business, which continues to surprise me to this very moment. And so I think we're probably going to be okay on this position. Famous last words, of course. So for GM, there's nothing to do here. We're in the June cycle with 52 days to go, and we're up a couple of pennies. We sit tight. One final comment on this, though. No more than 6 minutes. This will be real quick. Remember when we put this trade on, we just did this just yesterday, right? We did this trade yesterday during the show. So if you missed yesterday's show, if you go back and watch the tapes, you'll see all my analysis around GM, all 90 seconds of it. And then we put on the GM trade. And then now here we are, like we're up 26 cents. And now I'm talking about kind of the aftermath from, the earnings call. When you put on a trade in a normal cycle, like we did right here, 52 days to go. Yesterday it was 53, of course. When you do that on an earnings day, I think that's a great strategy. I think it's a great strategy. I think you kind of use the earnings day and use that earnings release as a bit of a Kickstarter into kind of a normal trade that you're going to manage more normally. You're going to kind of, take a look at that like you would any other 45-day trade, that's not necessarily associated with earnings. That's all well and good. But again, I say this almost every single show. If I don't say it every single show, I should be saying it every single show. You have to know what you've signed up for. So when it comes to, trading earnings, you're signing up for potentially an explosive move. You're signing up for something that could potentially be a big mover one way or another. That is indeed what you're signing up for. But if you also choose a longer cycle to play that earnings event, then you are also signing up for something strategically that is designed to move a little slower. So you have the event itself that's going to cause things to move more quickly. It's going to cause things to move very fast. But then you have the actual strategy that you've selected in terms of the longer duration. That is not going to move as fast. So you kind of have some friction that's baked into this position. You kind of have these offsetting kind of forces that are working against each other. The binary event, potential for explosive moves, longer duration really kind of slows everything down. Really just kind of softens all of your Greek exposure pretty much across the board. And so that's really helpful to understand if you go into an earnings event, like we're going to trade Starbucks earnings here in just a couple of minutes. If we choose the front week, which we're going to do, then that's going to move very quickly. But if you choose the back month, which we're also going to do, by the way, and so stay tuned for this Starbucks strategy that we're going to be putting on here in a couple of minutes. We're not going to light just one stack of cash on fire. We're going to go for multiple stacks of cash at once. But if you choose that back month, then you are going to naturally have a slower moving strategy. And so just understand what you're signing up for. It's so critical, man. It might be the most important thing. I mean, the most important thing, obviously, is the do nothing strategy. But maybe a 1B or maybe a close second is going to be just knowing what you've signed up for. Like, understand, like, what am I going for here? What are my gimmies? What are my gotchas? Like, how do I define success? Right? The classic interview question. Like, if you let me know in the chat, have you ever been in an interview and your potential employer asked you, how do you define success? Like, how do you define success? That's a classic question from, for job seekers and when you're starting your career, you're going through the interview process, whatever, right? What are your greatest weaknesses? Which obviously your greatest weakness is that you're a perfectionist and you work too hard. So I got that one covered for you, but we all know that. The second most common question is, how do you define success, right? Well, you actually, all jokes aside, forget the job interviews and the rigmarole and all the stuff that doesn't matter. You need to actually figure out the answer to that question right here, right now. You need to know, how do you define success in your portfolio? Now, that might seem obvious. You might be able to, Jim, I'm trying to make money, right? I'm trying to make money. Like, obviously, how do I define success at this job? I'm trying to do great for the company, right? I'm trying to help you make a better widget. I'm trying to help you sell more widgets. This is basic stuff. Like, I understand that. But that actually comes in all shapes and sizes, because some traders and some investors may not want that. Obviously, we all want to make money, but some traders and investors might be prioritizing risk reduction. They might be prioritizing not having long delta. Like there's a lot of different ways to slice this up. So that's kind of a subset question, kind of a tributary question off of the how do you define success kind of branch coming off of the what have you signed up for kind of source code. And so hopefully that helps a little bit. But yeah, I would say that was probably about 6 minutes. All right, so let's go ahead. Let's go ahead. And man, I see you guys, man. I see you guys in the chat, man. Look at you guys. Man, we've just gotten started. You guys are blowing it up. Man, you guys are you're gonna trick YouTube into thinking this is some quality programming. I see Ross in the house, man. I see Marlon's in the house. I see Jim's in the house. Theta Trader's in the house. Stefan's in the house. Man, look at you guys. Scott S in the house, man. That's some good stuff. Sergio, Samuel, man, I appreciate you guys. All right, let's go into Starbucks. All right. So you might think wrongfully that since I already have a Starbucks position, I'm not going to trade Starbucks earnings. Couldn't be more wrong. Like, we are going to trade Starbucks earnings today in some crazy ways. Some absolutely crazy ways. Because if you guys have been following the show for any length of time, I don't think I've ever told this story before on air. But I met my wife in June of 2006. We met at the very end of June 2006. Her birthday is on June 26th, actually. So what a birthday present for her to meet me. Like, unbelievable luck for her. She's the true luck box. Like, forget about Luckbox Jeff and Tom and Tony. She's the original Luckbox. Met me on her birthday in 2006. That's crazy. So she may not view it that way. But so we met in 2006 at the end of June. I asked her out for coffee, and we went to coffee at Starbucks on July 1st, 2006. We have been to Starbucks or some coffee establishment. Sometimes we don't always go to Starbucks, but we usually go to Starbucks on the first of the month ever since. And it has become our month anniversary. It's amazing. We're at like 3,000 in a row. Like, we have broken Cal Ripken's streak at this point. Like, we are in the Guinness Book of World Records without question. So obviously I have a lot of nostalgia baked into Starbucks. I'm obviously maritally obligated to play Starbucks to the upside, which is perfectly fine because I've never seen a company extract more value out of a C+ product than Starbucks. They have extracted so much value out of this extremely below average product that's quite impressive. And so I anticipate that extraction is going to continue. And so we are clearly going to play Starbucks to the upside, but we're not going to do it in just your regular ho-hum Betty Crocker way. We're going to do some crazy stuff. So, all right, so we are going to play Starbucks to the upside. Normally, when you want to play something to the upside, what are some options that you might have? You could do a short put, right? I like that idea. I think we're going to do that. You could do a long call spread, right? I like that idea. We're going to do that too. You could also do, again, I'm just spitballing here. You could do an expected move butterfly to the upside with call options, right? Hey, what if we do that too? So if you go into, I mean, I couldn't be more bullish on Starbucks. Again, just as a company, as a thought experiment, just as an idea, a phenomenon. When you want to play a stock to the upside, and let's say you wanted to do it in the front week, what is a classic way that you could do that in terms of just keep it very simple and keep it very, very, very buttoned up? You buy an at-the-money call spread. You could do the front week, you could do the back month, you could do a lot of different things. You buy an at-the-money call spread. So I think as the first component to this strategy, that's exactly what we're going to do. So you've got Starbucks here at 84. You can see the stock is just sitting around, obviously waiting for earnings after the bell today. And then tomorrow, by the way, we have Microsoft and Meta too, which I'm with Errol for today's assignment. So maybe we'll do a couple Microsoft Meta plays here today too, because obviously I won't be with you guys tomorrow to do them on the show. So let's see how long this takes us, and then we'll see if we have a little extra time. So if we've got Starbucks at 84, again, I'm not going to overthink this. I'm not even going to underthink this. I'm going to apply the appropriate level of thought to this trade. We buy an 82 call. We sell an 86 call. We're paying $2, $2.07 for a $4 wide vertical spread. That's exactly what you would expect. It's a 50-50 proposition. You can see that right there. And so this is exactly what we want. It's very clean. It's very simple. This is a bullish trade. We're playing Starbucks to the upside, and we just kind of see where this guy takes us. Okay, I like this trade. I like this trade a lot. So this is going to be the first piece of 3 for our Starbucks earnings trade. So we pay $2.07 for this at-the-money call spread. And again, don't do this at home. This is crazy stuff. I would not recommend that you do this at home. I recommend you do the exact opposite at home. And for anyone who has followed the show for any length of time, you know that if you have taken the opposite of all of my earnings trades since late 2022, you are now retiring 18 months early. And so keep that in mind as you decide what to do with these trades. So 207, no takers. Let's try 209. I'll probably get somebody out there. All right, beautiful. So I'm in at 209. Okay, so that's the first piece. Okay, so the market is continuing to rally, so they must like what Lutnick had to say. I think he was talking at 2 o'clock. Again, guys, let me know in the chat. Even if I don't get to it during the show, I usually scan them after the show, so you guys can kind of fill me in. And so, EME S&P is almost at 5,600. Wow, that's pretty impressive. NASDAQ almost back to 20,000. Man, they really had They really had the children scared there for a second. Well, I mean, NASDAQ was at like 16,000 something a couple weeks ago. Man, that's crazy. All right, but back to Starbucks. Okay. So if you are really bullish on a stock for earnings, there's a strategy that we have that's called the Super Bowl, right? Which is where you buy a call spread, which is exactly what we did. That's the first piece to the Super Bowl. But then the second piece is you actually sell a put to finance that call spread. So this is going to be the second piece of 3 to this Starbucks earnings trade. So number 1, we have an at-the-money call spread. It's a very clean, bullish play. If the stock goes up, we're going to make money. If the stock goes down, we're going to lose money. If the stock goes nowhere, it'll probably be right around a scratch. But now let's go into June. Because again, remember, I want the call spread to move fast. It's only 3 days out in terms of expiration. That's a front week strategy. But the short put, because it's undefined risk, especially, I want there to be more time on this strategy. So let's choose that June cycle with 52 days to go. Gives us plenty of time. I'm thinking we'll sell about a 35 delta put here. So it looks like we're right at around the 80 strike. So we sell an 80 strike. I mean, Starbucks was just at like 110 like 2 months ago. I mean, man, that's a pretty steep drop for the old SBUX. So let's sell the 80 put in Starbucks. It looks like I'll get about 310 for it, maybe 305. This is going to be the second piece to the earnings trade. All right, so we got filled at 310. So this is now a Super Bowl. We are now going to coin a brand new strategy. So if you do a Super Bowl and you're like, man, I'm pretty bullish, but I'm not bullish enough. I need a little bit more positive delta. I need a little bit more bullishness. Here's what you could do. You've got the call spread. You've got the short put. Why not layer on top of that a front week expected move butterfly? Which, I mean, that is our go-to, right? I mean, that is our croque en bouche when it comes to earnings trades. Like, that is 100%, what we typically kind of lean on. So I'm thinking, man, let's go with an expected move butterfly to the upside. It's a very, very cheap shot. Very cheap shot. So even if all of this blows up in our face, it's probably not going to be that bad. It's probably not going to be, a complete disaster, right? Famous last words. I mean, what could possibly go wrong at this point? If I go back to the 3-day cycle, I'm thinking, well, actually, these aren't even my thoughts. Amelia, she went to swim at Nana's house today. I told her, I said, man, we got some heavy analysis that I need from you today. I've got Starbucks earnings, possibly Microsoft, possibly Meta. She's like, listen, Dad, I'm going with Sissy and Bubba, which is her sister and her brother. I'm going with Sissy and Bubba to go swimming at Nana's house. So I'll give you this Starbucks earnings butterfly, but that's all I'm able to do for you today. So I said, okay, that's fine. She wants to do 85, 91, 97. Should be about $1.30 or thereabouts, $1.37. So a $6 wide expected move butterfly going right up to the expected move on the upside. We're kind of overshooting the expected move just a titch. Nothing super crazy. 85, 91, 97. So for $1.38, so the net across all 3 of these, well, actually, hold on. Let me put this on first. $1.35. We're taking a shot. We're actually taking 3 shots. 3 shots in 1. So let's see here. There you go, $1.38. So let's look at, let me just go to my activity tab really quick. So if you actually add up these 3 trades, these are all part of the same trade package. All part of the same trade package. That reminds me, just a quick little tangent. I got to get Microsoft in mind, but this is actually an interesting little tidbit from my dissertation. So my dissertation was on the internet bubble, and it was on institutional trading during the internet bubble. And what I actually was trying to measure, I had access to all these kind of proprietary data sets, and it was great. It was amazing. But the one thing that I was really trying to measure was when institutions come in with like huge block orders, like, not 100 shares, 200 shares, they've got like 50,000 shares to fill or whatever. What they would do is they would split it up. So they would oftentimes engage in stealth trading to where they wouldn't hit the tape all at once. They would split it up either within a day, sometimes multiple days. Well, what was really cool was I was able to actually see in the data set which orders actually belonged to which, complete trade. And this is where I actually coined the term trade package. It's all over my dissertation, trade package. So when you guys hear me use that term, like I was using that term at the University of Memphis when I was writing my dissertation. I don't think Dr. Wood loved it, who was my dissertation chair. But he I used it so much, I just beat him down. Just wore him down over time. He was like, all right, I guess we'll have to go with trade package. But so when I look at like these different pieces to this Starbucks trade package, it's a little bit nostalgic for me in that regard as well. But if we look at this really quick, you can see that it looks like my net debit is only about 30 cents. Right, I paid $1.38, I paid $2.09, and I picked up $3.10 on the short put that I sold. So it looks like it's about 37 cents or so. So that's my net debit, my net outlay on the Starbucks trade. Let's go into Microsoft and Meta though, and then I want to get to you guys, man. Man, look at you guys. I can't even keep up. Man, you guys are crazy. You guys are so crazy. But let's do Meta and Microsoft because again, we don't even need, we don't have to overthink this, guys. Again, you don't overthink it, you don't underthink it. You apply the appropriate level of thought, right? You don't need fundamental analysis. You don't need technical analysis. You don't even need quantitative analysis. Just use common sense. Both Meta, both Microsoft, gotta play them to the downside. There's only one way. There's only one way. Gotta play it to the downside. So let's go to Meta. And I think I'm going to take two cheap shots here with some expected move butterflies because I like the fact that they're both high-priced stocks. So this could potentially be, a nice payday if we happen to get the magnitude and the direction right on these stocks. I think you've got Meta at 555, which is rather feng shui, so that's impressive. But what if I do a 540, 510, 480? Is that going to be too expensive? It might be, but let's give it a shot. $30 wide. Oh, it's only $5. That's kind of what I was hoping for. It's right at the expected move to the downside, I should say. 540, 510, 480. For $5 on the nose for Meta. Man, I like it. I like it a lot. I don't like it as much as Starbucks, obviously, because Starbucks, we are playing that thing to the upside every which way from Sunday. And so let's go into Meta for $4.98, and let's see if we can get filled here really quick. And I'm going to do the same thing in Microsoft, because at a certain point, you just kind of dance with who brung you, man. And the expected move butterfly, again, it's our crocambouche. I mean, that's the only way that I can put it. Going back to my 2003 days from studying abroad in France, in Nice. I was in Nice for the semester of spring semester 2003. I lived on the Mediterranean Sea for like four months, and had plenty of crocambouches in my time there. So let's see. So Meta, let's go to Microsoft. So we got filled on Meta for about 490 or so, or about 505 maybe. 506 actually. You go to Microsoft, let's do the same thing. Let's just go down to the expected move. This is the beautiful thing about knowing the expected move, which we learned yesterday with Tom and Tony on the Skinny on Options abstract applications, is always symmetric. The reason why it's symmetric is because the Black-Scholes model assumes a risk-neutral world when it goes through its pricing mechanisms. But anyway, we all already knew that, so I'm not going to beat that to a pulp. But if I go in here, I don't know, let's see, 392.50. 375, and then that would be what, a 57.50? I think so. Might be what, $4 maybe? Yeah, 390. Okay, so that's pretty good too. So there you go. This is what we're gonna do. Again, just use common sense, guys. I don't know how you can possibly be bullish on Meta or Microsoft. It just doesn't make more sense to me. You can look at the charts if you want to, but they also couldn't be more bearish. And so if you go into the front week here, 392, 375, 357.5, 386 is your debit. Let's go for it. And let's try to get to you guys, man. I want to see where you guys are at. Let's go 390. Probably get filled at 390. All right, beautiful. So we are in Microsoft and Meta and Starbucks. So the portfolio is looking rather robust. We've got some short premium working for us, and man, it is some good stuff. All right, so let's go in here. Let's see. Let's go into let me surprise and delight somebody. So so I see a couple of quick comments. I see Larry R saying, Dr. Jim, thanks yesterday for the education. I imagine cover calls. You're welcome, my friend. Thank you so much. I think you're the one who had the question, so thank you so much. I see Ross saying, oh, Ross, yeah, Ross, did you have a different username yesterday? Yeah, Ross rings a bell. Right, I know we met before. You're in Boston, I think, right? Yeah. You had a different username yesterday, though. So you're trying to keep me on my toes. Like, I knew I recognized the avatar, though. But Ross says, I think Dr. Jim is required to be bullish on Starbucks. I am 100% required. Although now that I'm starting to think about how lucky Autumn really was to meet me on her birthday in 2006, I may start to renegotiate this Starbucks deal. Right? I may start to say, hey, listen, from time to time, I may be carrying some negative delta in old SPUX. And given how you lucked out in 2006, I think that should be okay. But let's see. Here we go. Adam, wait. Let me see here. I'm trying to find somebody. Can I find somebody? You guys are just making me laugh. I'm trying to find an actual question, though. I can't find any questions. Oh, here we go. Well, Ross has a question. I'll go to Ross because I see the question. He says, Dr. Jim, you traded MCL yesterday with N expiration. Can you explain why you did that instead of the M expiration? Okay, great question. And I think actually we had a question about this recently. I think Emmett actually was asking about kind of the different expirations. Pretty sure it was Emmett. And I mean, my blueberry intake's been, I haven't missed a day. It's been a couple weeks now. And so I'm pretty sure it was Emmett. M to N, talking about like futures options and dealing with the different expirations. And so right now, if you go to trade MCL, like the straight contract, you're going to be trading the M cycle. So you're still going to be trading June. You're still going to be trading M. If you were to go to trade the outright, like if you went to actually do like a long futures trade in CL or MCL, or a short futures trade in CL or MCL, you would be choosing the M cycle, which is what you would want. Like you want to choose the most active contract at that time. And Tasty makes it super easy. Like they kind of roll it for you and let you know like when it's going to be, like which contract is appropriate for you for like your outright positions. And when I say roll in that context, I kind of meant it in a general sense, not the technical term of rolling that we all know well and good. What I meant was when you log into your platform every single day or however often you log in every single hour or every single 3 minutes, then it's going to show you, like when you just look on the left hand side here, like right here, it's showing you all of the active months, all of the active contracts for whatever product you might be looking at. And right now it's actually just June across the board. Like it's just June across the board. I think silver might not be June though. I think silver's like July or something. Is silver's N, right? Yeah, silver's N. So that's July. Right, so silver is going to be the one stick in the mud when it comes to, the non-June that you would be trading. But when I put on this strategy up here, which is a strangle, of course, we're selling the 54 put and we're selling the 69 call. I didn't choose the end cycle. It chose me, Ross. Like, so you can't choose your destiny. Like your destiny chooses us, which of course is a very famous quote from Rounders, from our Rounders fans that might be watching the show. But if you go into MCL, if I go to the trade page here, you're going to see if you do an options trade in the 48-day cycle, which is what I did, as noted by the silver dot right here, that is going to be the end cycle, which is right there. Again, it wasn't my choice. It was chosen for me. And so any cycle prior to that, if I would have chosen, the 3-day or the 10-day, or the 16-day, you can see those all would have been M, right? And so by choosing the cycle closest to 45 days, it just happened to be N. So that's why I chose N. I didn't go out of my way to do it. It was kind of done for me. So hopefully that helps a little bit there, Ross. All right, so let's see. Let's go ahead and oh, wait, I see one quick. Oh, this is a great idea. I'm surprising and delighting several people in the middle here. Neri says, Dr. Jim, you should do a show where people can only ask yes or no questions so you can reach more people. That's actually a really good idea. The problem is not even in the question. The problem is going to be in my answer. Do you really think that I can get away with just saying yes or no and then done, full stop, moving on? I've never seen a zero delta trade on the board in practice. This might be the first one. There's absolutely no way I can do that, as evidenced by the conversation that we are having right now. And so it's a great idea in theory, though. but it may have some problems in practice. And so let's see. Brad Glazer's in the house. What's going on there, Brad? I appreciate you. Looking for Meta to follow Google with the positive ad spend results. So doing the Dr. J expecting move butterfly for an upside earnings move. I appreciate you, man. I appreciate you. Because you're doing it the way that it should be done. You're choosing the right strategy, expecting move butterfly, and you're choosing the right direction, the opposite of me. So you're gonna be in really good shape, man. Like tomorrow night, I would already make reservations at Bonefish. Like I'd make them right now. Like you are gonna be lock, stock, and barrel, like all set to go to get that slightly overpriced fillet tomorrow night at Bonefish. Sam L's in the house. What's going on there, Sam L? Sam L goes on to say, the market's green because of a trade deal. Oh, did they actually have one? Like I heard in the news, possibly like India was closed and Japan was closed and some other things were closed. Like, did these things actually get ironed out? Like I've heard a lot of like noise around the edges, but I haven't heard actual like deets. Like I need some deets, like straight deets, not noise, right? Not Johnny Pools 47 offering up his commentary on the internet. Like I want deets. I need facts, man. Like have these things actually been done? That's crazy. As Sam L says, one country is in, the other, well, let's just say we're waiting on their RSVP before making any announcements. Okay, well, I guess that's good news. That's very, very good news. So let's see. Theta Trader's in the house. Theta Trader says, I checked the market right before the open and now not seeing a whole lot of movement. I don't know, man. I'm seeing a lot of movement. I'm seeing a good bit of green. Did I miss the sell-off that allegedly happened before the chat blackout? I'll take my answer from Dr. Jim off air. Did you not think I was going to make it to your comment? It was the first comment. It was literally the first comment, which is still only like a 60 delta that I'll even get there. But that's pretty funny. No, it looks pretty green so far. And so maybe it wasn't, though, earlier. Sergio, Dr. Jim, let's go, my friend. What's going on there, Sergio? Thanks for being here, my friend. I appreciate you so much. Paul's in the house. Good afternoon to all. Thank you so much, Paul. Appreciate you very, very much. You are part of the core position. Weiss is in the house. Good to see you, Dr. Jim. Man, thank you there, Weiss. Appreciate you, too, my friend. Here's some exciting news. So just a quick little announcement. I didn't have a chance. I wanted to get into the earnings trade. So again, go to tastylive.com, go to the events page, sign up for all the events, Boston, Detroit, and Tampa Bay. But that's not what I want to talk about. The new crash course, I am recording it tomorrow. I should, in theory, be able to record all of it tomorrow. In practice, it could be a 2 or 3 day event. It all kind of depends on how it goes and how it flows. It's very similar to the lettuce. It's like you may only have to do the lettuce once in the day, but again, it depends on how it flows. If it's not flowing the way that you want it to flow, then you got to go back in there and you got to spruce it up a little bit. And so it's going to be the same thing tomorrow, but I have very high hopes that I will get it done. I'm going to get it done by the end of the week because that is the deadline that boss woman Beth has kind of laid down the law on me. So it will be done by Friday. That's for sure. I'm hoping I can get it all done in one day. But we'll have to wait and see. But I'm excited. We're going to get that done, get that recorded, and then the graphics team is going to make it all look all pretty and nice. And so John Stein's in the house. Can you explain the difference between a poor man's covered call and a what? John Stein goes on to say, I did a synthetic stock position, and I sold a call out against Dad, maybe against it, at a delta of 30. Yeah, the difference between a poor man's covered call, I don't know what I'm comparing it to. But, that's how you do it, right? If you do a covered call, you just buy stock and then you sell a call at usually around a 30 delta. If you want more upside potential in the stock, then you choose a lower delta, like maybe 15 or 20. If you want, more extrinsic value, but you're willing to give up some upside, then you choose a higher delta, like 35 or 40 or 45. That would be a standard covered call. Now, a poor man's covered call is instead of buying the stock, you actually buy a call to be a stock synthetic. So you might choose like an 80 delta or 85 delta, maybe 90 delta, depending on how much you want to have in terms of the alignment with actual shares. Of course, the gotcha there is the higher the delta that you choose on the long call, the more it's going to cost you, the higher the debit that you're going to have to pay. It's still going to be much less buying power wise than the shares would be, but it could be closer and closer the higher the delta that you go. Generally speaking, we tend to land somewhere between 80 and 90 delta in terms of the long call that we would choose for the stock synthetic or the stock substitute. So hopefully that helps a little bit. Let's see. Daniel Rooney's in the house. What's going on there, Daniel? Dr. Jim, how can we profit after a huge upward move like in HIMS? I had a short put that's doing well, but I didn't profit from the huge move as much as I would have liked. Yes. So, excuse me. If I go to HIMS, I think, yeah, they've had an amazing run, have they not? So HIMS is up, wow, $7 today. So yeah, that's a pretty big run. Didn't they crash though? They also kind of like crashed, I think. So hold on, let's see here. I think they also crashed. If I go in here and just minimized. Oh, there we go. We're back. If I go to the chart of HIMS, and oh yeah, I mean look at that, man, that's crazy. Man, that looks like a VIX chart. Look at that. You kind of got that little that's like a butterfly. It almost looks like the maximum profitability on a butterfly. So HIMS had quite a run, and this was just a couple months ago, of course. Couple months ago, HIMS was up to 70, and now it's down to 36 after a huge gap up. Did HIMS have earnings last night? I think maybe they did. HIMS had no. It's coming up on May 5th, Cinco de Mayo. Wow, and so wow, that's really crazy. This stock is wild, man. This is some crazy stuff. So okay, so yeah, the stock has had an incredible run, but that's not your question, of course, there, Daniel. Your question is, how can I profit after a huge upward move like in HIMS? I had a short put that's doing well, but I didn't profit from the huge move as much as I would have liked. This is the classic gimme gotcha exchange with selling premium, trading derivatives, and using the strategies that we use. This is why we prefer to sell options rather than buy options. Because if you just zoom out, like if you just go 10,000 foot view, like standing on the moon, looking at the earth, you're not looking for, St. Petersburg. You're not even looking for, Florida. You're certainly not looking for like Ocala or Lake City, right? You're just saying, all right, that's the earth, right? 10,000 foot view, or maybe that's like a 10 million foot view or whatever. Selling options, like with a short put, like what you did, you are signing up for, here it is again, you are signing up for limited profitability. That is what you are signing up for. There's going to be no home runs. There's going to be no Manny Ramirez. There's going to be no David Ortiz. Like all your chips are in the middle on Dustin Pedroia, which is not a bad thing, by the way. That would make me feel pretty good about my position. Limited profitability. But remember that what comes along with that is higher probability. And so when you have a move like you have in HIMS right now, where it's like, man, you're kind of kicking yourself, the opportunity cost, like I knew, quote unquote, knew that it was going to go higher, like things like that. Like I got it. We've all been there. I'm still there today. Like you're there today. Like we've all been there, and we will all be there again. But you just have to understand that is what you're signing up for. And so when you have big moves, you're going to miss those naturally. Like you're managing your winners, you're going for limited profitability, and in exchange for that, you are choosing higher probability setups that will likely have a much smoother outcome over time. If you start, taking the big cuts, like, Rob Deere, like Cecil Fielder, right, for all my early 90s, late 80s Tigers fans that might be watching the show, which, I mean, that's where I grew up, of course, so I'm very, very familiar with like Lou Whitaker, Alan Trammell. If you take those type of strategies where you're taking big cuts and big swings, yes, you can hit some home runs when you get the direction to move right, but you have a lot of things working for you that, of course, we also easily forget on a move like this. We're like, man, I knew it, I missed it, blah, 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 blah. Like I totally understand, Daniel, 1,000,000%. But if you actually look over a large enough data set, right, in terms of buying premium, selling premium, in terms of just playing direction versus playing a little bit of direction, but also having time working for you, also having volatility working for you, it's so, so, so powerful. And so the answer to your question is really to not even answer that question, is to kind of reframe the way that you're thinking about your strategies. Because again, I could just easily say, hey, just buy calls, just buy stock next time. And then if there is a huge upside move, then you're going to get paid really nicely. But I know that's a bad move. Like I know that that's not the right move strategically for you in the long run. And so by all means, I mean, take some directional shots, have some directional components in your portfolio, whether it be some stock plays, whether it's some futures plays, like whatever. I think there's a lot of potential there without question. But you also never want to forget the power that is always available to you with short premium and what that does for you with probability and, allowing a lot of introducing a lot of ways to make money that aren't related to direction at all. And so I would encourage you to kind of reframe the way that you're thinking of the situation. And maybe it'll sting a little bit less. I understand it stings. Like I totally get it. 100%. And so Sparky Dog says, hey Doc, Microsoft earnings play, you got it, man. Play it to the downside. Again, I think this is pretty basic. I think this is more or less common knowledge. I don't think I'm doing anything special. We're not splitting the atom here today. I think it's pretty much a slam dunk that Microsoft is going to be going lower. So you should, of course, be buying out of the money calls with that information. And so Scott S. says, what's up, Dr. Jim? What's going on there, Scott S.? I appreciate you, my friend. Thank you for being here. Emmett's in the house. What's going on there, Emmett? Hey there, Dr. Jim. I'm here to absorb some knowledge. I sure need it. I thought you wrote arb some knowledge. I'm like, oh, that's pretty funny. I sure need it. Well, I hope we can give you something. Like, again, as far as actual value that you can use, that's hit and miss. B minus humor, that just keeps coming, man. It just keeps hitting you, whether you want it or not. Like, we just keep running it out there, and it's exactly the same every single time. And so, but I appreciate you, my friend. Hopefully, you are getting a little bit of value from the show. Thank you so much. And then Neri is in the house. Oh, that was the yes or no question thing. Bill Buchanan in the house. What's going on there, Bill Buchanan? Can I get a foot-long chicken tender pub sub with extra cheese, please, Dr. Jim? Yes, I can do the extra cheese because I'm your cheese guy. Like, I've got my little cheese station. Like, we've got your goat. We've got, like, your honey goat. Have you guys had the honey goat yet? Man, it's really good. Like, we've aged it for, it's been expired for at least 6 months, right? So this stuff is going to have a very unique taste. So I would absolutely give it a try. And so, Bill Buchanan, I appreciate you, my friend. I will set you up. You know that I will set you up. So Stefan says, good afternoon, Dr. Jim. Always a pleasure. What's going on there, Stefan? I appreciate you. Thank you for being here. Thank you so much. Ross is, there we go. That was the Ross question. Wow, when I get to the middle questions that I grab in the beginning, that feels like I've accomplished something. I have to be honest with you guys. And so let's see. Sam L says, Starbucks is $15 for a coffee. We're officially bullish. Yes, 100%. So my go-to drink at Starbucks, if you guys want to know, I think I've shared this before, but I get it every single time. It's just a question of whether it's a grande or a venti, which, that depends on, the energy levels at that time. But it's always a hot latte with oat milk and Splenda, right? Like, that is so delicious. It is the nectar of the gods, man. It is so delicious. It is so amazing. And my wife, what she gets iced latte with almond milk and stevia, which couldn't be grosser. Stevia is nasty. Oh my gosh, that stuff is so nasty. Like, sometimes she'll be like, hey, I didn't finish my coffee. Would you like to finish it? I said, are you serious right now? You put that in the trash immediately because nobody should ever have to touch that or drink that. Oh, stevia is so nasty. Whereas Splenda is absolutely delicious. And so let's see. Bill Buchanan, everybody loves volatility until we get volatility. That is 100% right. That's kind of like, everybody says, let's just buy the dip until the dip shows up. And it's like, yeah, I'm not touching that dip, man. Just like that stevia in Autumn's latte. And so DW3 says the insiders already got the word. They're doing the trading. They're doing the trading part now. Yes, they probably are. The insiders are always going to get the scoop, man. Obviously, your Nancy Pelosi's, your whoever else is, which I wouldn't say Nancy Pelosi is a Trump insider. Probably not. But she's an insider nonetheless, and very impressive. Returns, of course. And so YouTube Jim's in the house, says, Dr. Jim, greetings. On the phone again. I am proud I can join away from home. Baby boomer, I think I'm impressed with myself. You should be impressed with yourself. That's an excellent use of modern technology there, YouTube Jim. Thank you very much for tuning in and being a part of the show. I appreciate you. And so let's see. Scramble Everything says, hey, Dr. Jim, get ready for the biggest, most beautiful next 100 days of your life. The most important historic 100 days in the history of the world. Yes. And then Theta Trader says, you're going to love these next 100 days. Yes, I think I will. That's May, June, July. Here in Florida, I'm going to take my final breaths here in the next couple of weeks, and then we all won't be able to breathe for about 3.5 months. And so it's going to be fun, I think. And let's see. Scramble Everything says, I enjoyed that Limitless movie and the first season of the TV show. There's a TV show? I didn't even know that. I had no idea. Are you serious right now? It's a TV show that's off of the movie make? Wow, that's crazy. That movie was great. That movie was excellent. Really, really enjoyed that movie. I'm going to have to look into that now. And so let's see. And then YouTube Jim says, I have to restart the stream between the shows to get the chat. Yeah, but that's a small price to pay. And so let's see. And then Daniel Perkins says, hey, Dr. Jim, I'm sorry for teasing you about the open P&L. Believe me, mine is worse, man. I don't know if you can get worse than mine. Look at that. Look at that open P&L column. Look at that. Look at General Motors. Man, they laughed at us. They mocked us when we sold the call in General Motors. Yeah, they're going out of business any second now. I mean, look at the rest of the stocks. Not doing too great. But hey, guys, this takes a lot of practice, man. There's a lot of training that went into this to get these type of impressive results. And so maybe you can have these results too if you keep trying hard. But I got to go. I got to get you guys to Jamal. I appreciate you guys. I appreciate you guys so much. If I can help you guys in any way, please shoot me an email. I'm jschultz at tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal come up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And tastylive in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tastylive core strategies.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And Tastylive in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Hey, what's going on, everybody? It's earnings season, and you know what? A lot of different companies are having some decisions to make about whether they're issuing guidance or not. Can you blame them? There's a lot going on. We'll talk about what's happening there. There is, of course, some tariffs heading down the pipeline, and a lot of companies overseas are starting to really make some decisions that might affect U.S. consumers. We'll talk about that. And finally, big move out of him today would seem as though, it's related to Novo Nordisk. I'm sure you saw the news. We'll talk about the different angles on it. We'll talk about those three things and more. We'll take a look around at different earnings. I've been looking at selling some earnings. I really think this is a great quarter for that. Just really depends. So far, a couple of things have worked out. And I'll decide whether or not I'm doing more. And just go through and look at the book and decide on a couple of positions maybe you can help me with. But first, welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade. I'm your host, Jamal Chandler. Lots of earnings tonight and tomorrow. And one of them in particular is Starbucks. I couldn't help. I was curious. Some of the most popular drinks. These are the 4 most popular drinks. I was wondering what you guys were interested in drinking. Now, I know we all have our favorite drinks. I couldn't put all of the drinks. I mean, the poll only allows 4. I was just curious. Out of the 4 most popular drinks, if you were forced to drink one, which one of these would you be able to tolerate? Obviously, Robert Denseglio said that he drinks black coffee. I get it. I don't blame you. So does Emmett Morrison. I get it. I mean, I'm a vanilla latte guy myself. But if I had to choose from this list, man, I would probably go with the iced caramel macchiato. I think that's actually one of my daughter's favorite drinks. I would probably go with that. Strawberry acai refresher. I mean, unless you're like a 10-year-old girl, that's the only people I expect to be drinking those. But I'm just curious, man. A little poll. Love to do a little engagement here and there. Just let me know what you out of those drinks. If you were forced to, only if you were forced to, which of those 4 drinks would you indulge in, imbibe, if you will? Let's pull up the slides and let's talk about what the week has been like, or I should say, the last couple of days have been like so far. Is this like day 7 to the upside? I'm not even sure where this bid came from today. Buying, I guess, begets more buying. You guys thought I was crazy. You guys thought Chris Vecchio was crazy when we were on Futures Power Hour last week and we told you that the buyers are above 5,500. Now you're seeing it. We closed above 5,500 on Friday. I'm not surprised that we're keeping a bid here. I do think this day ends in a doji. I have one position that really hopes this day ends in a doji. We'll see. But, a lot of earnings that are coming out. I've seen a couple of companies now, and GM and JetBlue are the latest companies. They're not giving full year guidance, and can you blame them? I mean, nobody knows what the rest of this year is going to look like when you start tacking on tariffs and all these other things. The interesting thing about JetBlue is that they're one of many airlines. Matter of fact, they're just the latest in a long string of airlines. Just about all the airlines, except for United, which United gave 2 different type of forecasts. That says a lot. And then I guess instead of all the other ones doing all that work, I don't blame them. Why you want to do all that? Just say, look, we're just going to refuse to give a forecast right now because the future is murky and we don't exactly know how many tariffs are going to be and how much it's going to really affect us. So in GM, of course, there's a lot of auto stuff that is done between Canada and Mexico. And obviously, they're in the crosshairs of tariffs. So why should they give an outlook when we just don't know what's going to happen here? I mean, it's kind of crazy when you think about it. Like, how are you supposed to give an EPS, right? Full year guidance when you just have, this could either swing you a couple of $1 billion one way or the other, I'm sure. There's no telling. And I think you're going to see this a lot. Now, the interesting thing is that these companies aren't getting punished for it. Back in the day, if you didn't issue full year guidance, your stock was slammed. No questions about it. Now you can't exactly do that because, again, it's unfair. I mean, they're telling you things are uncertain going forward, not because of their business per se or how they're conducting business, but because how business in general is going to potentially be conducted. So I think you're going to see more of this as we go on. Speaking of companies and speaking of tariffs, and, it's crazy. I mean, I set out like 2 months ago to be like, I am not spending my show covering all this political crap and half of it. I mean, you guys watch the show already. I'm not into politics, but what can you say when politics finds its way into the equity markets? You got to at least cover it and plan for it and talk about it. Even though these companies don't have to issue any full year guidance, they're not doing it because, of tariffs. Temu is passing on just about all the costs from the tariffs to consumers. I mean, things are basically doubling. Like if something costs $20, all of a sudden it's going to probably cost $50-something, and that's just what it's going to be for now. I'm sure you heard of the fracas earlier today over Amazon potentially putting up the difference in prices with tariffs and without. And so This is not quite over. It is interesting when you look at equity markets, and this is what happens. When sanity kind of kicks in, when uncertainty is not as bad, and again, there is still uncertainty, right, as far as tariffs, but whether or not the tariffs are happening, I think the certainty has set in the fact that they are. To what degree, I don't think anybody knows, but did that mean that tariffs mean that the S&P 500 should be trading 5,100, I guess was really the question. It seemed as though that was a bit overdone, but you can't stop the market from going down when it wants to go down at a time when it wants to go down. So what are you supposed to do? You got to be along the other people, either selling it or get out of the way. Catching a falling knife is hard. Even though we did try to catch a couple of falling knives, and we caught a couple. My hands got a little bloody, but, it's okay. I still have some of those positions here, and I'm still holding on to them, but we're fine. But this is going to be a thing. One of the Chinese companies, PDD, which I didn't realize Temu owns them. Now, the stock is not cratering by any means, shape, or form, but these are the companies that I don't necessarily know how much they're going to benefit from these tariffs, if you will. I would say it's going to be less so, you would think. I mean, there shouldn't be as much purchasing going on their platforms, but what the hell do I know? I'm just here to trade these things. Nevertheless, I think you're going to see more of this, companies passing the costs on to consumers, and that's what everybody is afraid of. What's that going to do to retail sales? What's that going to do to GDP? We'll find out tomorrow. GDP is coming out tomorrow morning, as well as core PCE, which again is a reflection of inflation and the Fed's preferred inflation measure. Finally, positive news, NVO is offering Wegovy through the telehealth providers. For the longest time, it was more of like these companies were the ones that were coming up with the offshoots. And I think there's been some regulation that has disallowed some of these offshoot drugs similar to Wegovy, et cetera. And as a result, NVO is now offering it through these companies, Hims and Ro and LifeMD. So it's going to make it a lot easier to acquire these things. Hims responded in kind, making a big move. We haven't seen it make this type of big move since, when was that? Was that earlier this year already? It seems like we've already had two different trading environments. There was prior to February 20th, and then there's been after February 20th. Things have been so wild. But Hims has taken off on this news. NVO is back in play once again. This was one of my more interesting names last year. A year ago this time, I was really interested in getting along it. You could see where this whole thing was headed as far as the weight loss movement. But NVO seemingly got hit as the stock started to struggle some, maybe. And what's funny, because obviously there was a lot less supply compared to the demand last year, and it was all these different shows, and like Oprah did a quick show on these weight loss drugs. It was wild, and they've been around for like 20 years. It wasn't like these are brand new, so there's a lot of study behind them. But anyway, that is one of the more interesting things today. Leftovers, clothing and clothing and shoes are the most returned online purchases. Let's move to the next slide. This is a survey, and clearly you can pick multiple answers, but this, I think, let's see, 42 plus 24, 68, 78 plus 18. Actually, you know what? I don't think they did pick multiple answers. I don't know why I said that. Well, it doesn't matter. Share respondents who have returned the following after shopping online in the past 12 months. I mean, I guess you could choose multiple items. I don't know. 25% is clothing. And I think a lot of us identify with this. Usually if you buy something and it doesn't fit, I mean, you're returning that thing, man. Like, I'm old enough to remember when you couldn't always return something that you bought clothing-wise if you just couldn't. But a lot of things changed over time. You can return anything. Hell, sometimes you can return electronics right away. No big deal, right? Clothing is definitely one of the main things you can return right away. As a matter of fact, I don't always buy clothing online. I don't like to, particularly pants. Pants are really hard to buy online. I have to go and try them on. But it's funny, I bought this shirt recently, and I bought two sizes because I really, sometimes when you buy things, and what's funny about this, and I'm sure you guys understand this, when you buy things, like particularly like Asia, when you buy them, like if it's a shirt or something like that, I mean, they're large. It ain't quite like an American large. You know what I'm saying? And so sometimes you got to buy like a large and an extra large just to see what the fit is and then just return the other. Now, obviously, whatever I bought, well, I don't know that. I was going to say whatever I bought, I feel like it's an Asian company, but I don't I was going to say I don't think it was because I got it within 2 days. But honestly, I mean, again, a lot of these companies are. The interesting thing is a lot of these companies store a lot of inventory or have tried to store more inventory in the U.S. over recent years. For example, one of the company that my wife used to work for, she's in supply chain. One of the pivots that they were doing was making a move towards some of these overseas companies, particularly Temu, for example, what we just talked about. And they were a warehouse company, so they would domicile a lot of their inventory here so that they didn't have to, deal with sort of the lag time in prices. Obviously, this is even more huge now. If you don't have to deal with lag time and or tariffs, right, would be an interesting thing. You still do, obviously, now, but if you had hoarded a bunch of stuff and brought it over here over the last couple of months, which I promise you has definitely happened. We heard about iPhones in India being airlifted out of there, mostly just to avoid tariffs ahead of the deadline. So there's a lot of that. Anyway, I digress. Clothing is definitely one of those things that are mostly returned online. Shoes being the other. Again, it's all about the fits, right? If it doesn't work, you send it right back. Accessories, whatever that may be, 12%. Food and beverages. I mean, really, who's returning food and beverages? I'm curious about these people. Consumer electronics, I would think would be higher. I feel like that would be higher than food and beverages and accessories, but maybe I'm wrong. Consumer electronics, 10%. Cosmetics and body care, 9%. Books, movies, music, and games at 9%. And then furniture and household goods, 8%. 50% of people said that they had not returned anything this year. Hey, there's always somebody different in the pack, I suppose. You know what I'm saying? Pants are overrated. I hear you, Grumpy Mike. You know what I mean? I hear you. Donald, what's good, man? How you doing? All those drinks are liquid diabetes. Neri T. Hey, Jamal, are earnings a large part of your portfolio? And how many earnings plays is too much, do you think? We'll get to the portfolio a little bit and I'll show you, but it is not a large part of my portfolio. If I have like 20 names, I might have 3 of those names that are earnings names, maybe 3 to 5. Like, it's definitely not a large part. I don't play earnings. So, I do end up playing sometimes some of the bigger earnings. This time around it's going to be a little different. I usually play earnings for moves. Usually do calendar call spreads. I don't necessarily like to buy outright. I just like to play it for a move. I have in the past bought outright calls or puts based on thinking something's going to fall or rise based on the current environment. Now I just try to find cheaper ways to play it. Usually, as a lot of longtime listeners of the show know, it's usually like a calendar call spread, calendar put spread. But this time around, it's been more selling earnings because I think there's going to be a bid to a lot of these options because a lot of the trading sort of market participants are betting that earnings are going to be wildly crazy because, of tariff talk. Anyway, let's move to the next slide. One of the ways I like looking at volatility, we all can look at a VIX curve and see 1 month is in front, 1 month is higher than the next, etc. Right now, you have May, which is trading 15 cents higher than June, which is trading basically the same as July. June and July are the same level now, and May is trading a little bit above. Obviously, that's kind of flat and somewhat backwardation. The other way to look at vol, I always look at as well, is volatility risk premium. I learned this at the SIBO. Looking at forward-looking vol in the form of VIX minus historical vol, which again, when things get really crazy, like we saw recently, you get sort of an implied vol rise above historical, right? But then when you have the environment that we just had, where we get all these big moves, huge ranges intraday, et cetera, then you have a scenario where historical vol ends up almost superseding implied vol and forward vol. And that's where we are right now. This is VRP is at a 5-year low because historical vol is well over where VIX is trading right now. Because again, we have the huge trading ranges intraday, 180, 190 points changed around intraday, 200 points intraday, up or down. It's crazy. And as a result, you can see the volatility risk premium is tracking to the same level back when we had the pandemic. And again, huge moves during that time period too. So if we can get historical vol start to calm down, which it is, volatility starts to come in, which it will, that's when those who are selling vol are going to get paid. Let's move to the next slide. Another thing that's calming down is, besides VIX, is 1 month correlation. Now, we always know this. We see this quite often. When things get crazy, volatility goes up, everybody gets scared. Volatility is trading well over implieds. I should say implieds are trading well over historical vol. That's when we get 1 month correlation to rise, meaning most things are moving in the same direction, right? We saw equities going down. We saw treasuries going down. Matter of fact, the only thing we didn't really see going down was gold, right? Gold was making big moves to the up, but equities were down. All the equity names together. Didn't matter if you were a consumer staple or if you were a consumer discretionary, you were down for the most part. Banks, all of that was kind of moving in one direction, and that's why correlation goes up a lot of times when volatility goes up. They're both starting to calm down, and I think people are starting to be able to harvest some of that volatility that they sold, right? Let's move to the next slide. And so now we're seeing a lot of charts that look like this, where you see historical vol is way up here, but implied volatility is down some. And there's this big difference between historical vol and implied vol. And you want to see a big difference between historical vol and implied vol, but not like this when you're short. This is what you want to see when you're buying. You want to see implied vol elevated. That means things are going to be moving around a lot, and you can buy and make money. This is what, honestly, those who like to buy options and trade stock against it, they're able to scalp the stock because of the movements and scalp the stock around that option and what we call monetize that option. So if you bought, say you bought puts and then the stock and then all these, like say XLE fell big, right? You bought, let's put some numbers to this. Say you bought XLE, XLE was trading 94, right? Around the beginning of April. Say you bought puts right then and then it tanked to 81 and you bought stock there. And now it's rising back to 82. You actually need it to rise back more to be able to sort of sell your stock as it goes up. Sure, that put option is going to lose money, but you're kind of hedged, right? And so you want a big move back up, back to 90 or so you can sell out the stock. And there you have fully monetized that option. You know, you were able to sort of take advantage of it. That's what a lot of those option traders, like big option traders at firms, that's what they're doing, right? They're doing that in some type of way, shape, or form. Or they even bought puts and stock at 94, but they really didn't hedge the put really heavy, meaning they didn't buy a whole lot of stock against that put, so that when it tanked, it gave them the ability to buy stock, more stock, even though they lost some money on the stock that they bought at 94. If they didn't fully hedge it, say it was a 30 delta, right? And say they had 100 puts. Let's put some numbers to this. Say they buy 100 puts at 30 delta. That means you can fully hedge it by buying 30,000 shares. But let's just say you only bought 10,000 shares and then the stock tanked and you had basically 20,000 deltas to buy once it got down to 74, 75. You bought that 20,000. Now you're fully hedged almost. Not fully though, because that option ends up being like it ends up being like a 60 delta option, which means you could have bought, maybe 30 or 40,000 deltas against it. This is really in the weeds when you're talking about options. A lot of you have asked how was it like trading at a big option trading firm like I did. This is kind of a small example of it. So you're able to hedge that delta as it gets down there, and then once it jumps back up, then you're able to start selling that delta out. Again, it hasn't jumped back up quite like that yet, but some ways it has. That's kind of how it works. Anyway, this is what you would rather trade. If you saw this as an option buyer, you're like, cool, this is working out. But at some point, you're going to want to close this position out because eventually the implied vol is going to fall and so is the historical vol. It's not going to move as much. And that's, if you're a long option trader, that's where you're getting in trouble. If you're a short option trader and you're putting options on now, you just want to see the historical vol kind of calm down, implied vol calm down. That's when you start to make money. Let's move to the last slide. So earnings, Visa, Starbucks, like I said, we got a little fun question in the chat. Just curious. These are the top four popular drinks at Starbucks. We all have our own favorite thing when you drink coffee. I was just curious. If you had to drink one of those top four, what would it be? Check that out. Snapchat has earnings. We all know it's always about the advertisement in Snapchat. I can't imagine they say anything about tariffs, but who the hell knows? Sometimes these companies use any different crisis to make excuses for what's going on with their earnings. You never know. Booking.com. What? If people are traveling, it will be fascinating to see what they say. Humana, UNH had earnings. It did not go well. I'm curious if Humana is going to be the same way. Caterpillar has earnings. You would imagine they're going to be affected by tariffs. I'm sure they'll say something. WDC, again, electronics, tariffs, GE Healthcare, and then Norwegian Cruise Lines. I thought one of these other cruise lines companies had, was it RCL, had earnings? Apparently they gave a good forecast, so I wonder if NCLH is going to be doing the same type of deal here. We'll see. So things get really busy on the macro front. You got core PCE tomorrow. You got GDP tomorrow. And then I think you probably have ADP jobs report. Not that moves the markets a ton. And then you have April non-farm payrolls, of course, on Friday. Number of S&P 500 stocks above the 50-day moving average is up to 200 now, about 40%. Let's move to the platform. I see you guys are talking about the move. You guys talked about Lakers and Luka and volatility. Playoffs a couple of the series are okay. Last night, Golden State, Houston, watched the second half of that. That was a good game there. Lakers in Minnesota has been a great series. I think, is that tonight? I'm definitely looking forward to watching it if so. Trades that I've done more recently. For earnings, Spotify was a trade put on yesterday during the show. That worked out fantastic. Going on with this idea of selling some earnings here and there. That is definitely one that I sold, and it worked out well. My gold trade has been working. Again, now that gold has calmed down some. Again, I'm short the 34.50, 34.70. I was short the 30.50, 30.30 iron condor. I rolled this put spread to here. Again, gold was moving at $100 a clip. Originally, I didn't want to adjust this thing at all because I was worried about another $100 to the downside. But now I'm okay. I think I'm okay, and I do think gold probably continues to pull back small if we get this current market environment that we have, where markets are starting to head back higher and people are starting to shrug off details about tariffs. But it's not over yet. We'll see. Also tomorrow's the end of the month too. I expect a little something at the end of the month, maybe a little volatility. Maybe I'm wrong. Maybe I'm crazy, but who knows? Nike was one of my short delta plays. I had the July 65 call. I was short. You ever have those situations where you're at home and you're thinking about some of your positions and you're like, shoot, I don't really know if I like that as much anymore. Well, Nike was one of those last night. I just started thinking about how, and I've been in this game a long time. I've seen a lot of these movies before, and that's not saying this will happen, but this stock has really gotten sold off quite a bit. Let's look at the weekly. Let's look at a 3-year weekly on Nike. Stock has been sold off quite a bit, and I started getting a little worried about how much it's sold off. To the point, even today, I looked at, could this be a buyout target? Trading at $57, sharply down from 100 and change just a couple of years ago. I looked at some of the larger players in the field. Nike is like the largest footwear company. Again, you can look at, anytime you're wondering about something like this, look at the market cap of a name and look at the market cap of other names compared to it. And you can use something like FinViz or whatever it may be. And so I did that, and I looked at comparables in the field, and that's when I realized. And then I even searched for it and Googled it. Some of the largest shoe companies in the world. Nike is that, right? I thought so, but I just wanted to make sure. So it won't be another shoe company that buys it, but what if it's a private equity firm that decides they wants to invest in Nike down here, and maybe Phil Knight says yes? Well, that could take the stock who knows where. Maybe it jumps 15, 20%. And that's when I got scared about my further out July short call. So I was like, I'm going to close this thing. $1.85, that's not worth it. When I sold it for $2 and change, I like that. $1.85 is, anything under $2 is a short call, especially in a situation when the stock could make a big move. And that's 30 delta, time to close. So I closed that out. XLK was another one, short put spread that I had for a while, closed that out. And I had a short call spread in Google. I closed that out, 30% gain, small one. No other trades I've added today. I was looking at a Caterpillar, Iron Condor for earnings. Canceled that because I wasn't getting filled right away. I still could be interested in that. Let's see if it'll fill me this time. Actually fills me now. So that's my one trade for earnings for today, for overnight. And again, selling earnings, I know it's crazy. I've never really been much of an earnings seller, but I think that this time is interesting to sell earnings because I think there's going to be a little bit of bid to these earnings vol. And I think the earnings moves that I've seen, most of them so far, have been fairly muted. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. See you.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Good afternoon, everybody. Tim Knight, and it is a green day. We've got the ES up about 35, the NQ's up 120, and the RTY is up about 15 points. So just green across the board. Really, the past 6 trading days have just been nothing but up. The last swoon down we had was last Monday. And the big earnings events are tomorrow afternoon and Thursday afternoon. Plus, we have the jobs report on Friday morning. So today's kind of the last dull day. And tomorrow might be too. It's really what happens afterward where things kick in. So Thursday and Friday almost can guarantee some big market action there. I've got a decent number of symbols today, so I might as well just jump right in and start talking about them. So let's go. Generally speaking, we're going to see closed gaps and achieved Fibonacci's, if you will, getting back to those retracements. In some cases, a little bit exceeded. I admit I'm getting a little weary of waiting for this thing to turn around. It doesn't seem to be doing so yet, but this is about the time it should. But, we're green across the board right now, so it hasn't happened yet. There's just no sign of selling. But let's walk it through. Here's the spider. Gap is sealed. So Liberation Day has been utterly undone. We are back to where we were on April 2nd before the announcement. So I think that's kind of worth noting. It's as if it never happened. So that's the spider. Gap is sealed. The diamonds. In this case, the gap is far from sealed. This gap is way up there for whatever reason you might want to fill in the blank with. We are well below the post-Liberation Day gap on the industrials. There's a lower line I've drawn here, which is simply anchored to this peak. It's not particularly important line from a technical perspective, but that's the best we can do for now. The gap's way up high, as you can see, above present price levels. There are a couple of particularly strong items today which have given the Dow a good day. It's a little unusual because Dow is beating everything else. The YM is higher than the ES, the NQ, the RTY. Honeywell is up big, about 5%, which is a Dow component. GM, I don't remember if it's Dow component or not, but I only wanted to bring this up because as long as we're talking about Liberation Day, there's been yet another white flag, kind of running out of white flags, this time for the automakers. So, there's more and more carve-outs, exceptions, tariff delay. Don't count on, don't mark your calendar for 90 days. Like, well, after 90 days, all the tariffs go back. No, this is just, it's a surrender. And the latest surrender has been carve-outs for the automakers. And so GM doesn't seem to really be benefiting from that. They got a spike higher briefly, and they were very grateful for the dropping of tariffs, but it doesn't seem to be making much of a difference because GM actually is managing a loss for the day. Over in small cap land, up, just like most big items there, gap is sealed. There's the gap right there. And across the board, the gap is the low of April 2nd. So there's a big gap between April 2nd and April 3rd because the market's closed. So the market closed on April 2nd. The poster board comes out, people freak out, and then the next day, the market opens way lower. So the gap is the low for the second, and that is what we have come all the way back up to. It took weeks, but after that big plunge, it is healed all the way up. And so from the bearish perspective, it's like time to start shorting again. You know, we're up here once more. From the bullish perspective, it's, you see, it was no big deal because, you know, a lot of these tariffs are still in place and we haven't lost anything. There's that brief shock, a V-shaped bottom. And, you know, in the bull's defense, they've got a number of things going for them. The usual thing they've got going is 99.9999% of the, you know, humans tend to be bullish, so that helps. Corporate buybacks are back. So there's a blackout period around earnings where the corporations aren't allowed to gobble up their own stock, which is the ultimate self-dealing. That window is opening up again. So that helps because the companies can prop up their own stock by deploying cash to buy it up and artificially prop the price up. And, you know, obviously sentiment is getting a lot better. But that could also be argued as a bearish argument too, because we've got a VIX that got up to almost 60. And if memory serves, 23.66 is the price gap, and we're just about all the way down there. So just as the gaps have been sealed in this direction on price, the VIX gap is getting sealed in this direction because it's kind of an upside down version of prices in that respect. The cubes up, not quite as much percentage wise. Its gap got sealed long ago. In fact, its gap was sealed on the big surrender day of April 9. So the plunge was April 3rd forward, and just days later, that gap was sealed right up. So we're well above that now. This line here, you know what? We'll just give it the old boot. This line is meaningless. The one that the next meaningful resistance line is way up there at the most recent major lower high. So here's the lifetime high, lower high, and we're here now. This might be another lower high somewhere in this vicinity, unless it exceeds that red line, in which case that broad pattern down is moot. Now, I mentioned the 4 mega earnings events. There's a couple Thursday afternoon, there's a couple Wednesday afternoon. The couple on Thursday afternoon are Apple, which tends to kind of bring up the rear for earnings. They tend to be last with the Mag 7 with most companies. In Apple's instance, it's got a major price gap way up there, which is a good $10 away from where we're at now. And then I've drawn a line at this lower level here as a minor resistance point, which was the peak of April 14, which was another surrender because that was the weekend where they said, oh, we're going to have exemptions for cell phones and electronics and so forth. So they got a big boost on that day, which faded. So that's the other resistance lower point. So Apple's a big announcement on Thursday, and then Amazon, which is very much in the news today, not because of earnings, but because the White House is mad at them for, I haven't read the particulars. I think maybe they're showing what components of the price are tariff related to the consumer or something like that, but the White House is not pleased. So they've been sinking today, but recovering. Now they're down just pennies at this point. The big event will be Thursday afternoon. What is guidance? What were the profits, etc.? Closer is Meta, which is tomorrow after the close. And in Meta's case, this line merely represents yesterday's high, which is the highest peak we've had since the big plunge. It's a bit of a messy chart. This pink zone is a pretty well-defined topping pattern, I would say. So it'll be interesting to see if it re-penetrates that or not. And the other The other big boy is Microsoft, which again has a nice little reversal pattern. Plunged away, recovered, plunged away, recovered. It's just been quite the bouncing ball. So people are kind of pulling their hair out because this market, even though it feels very bullish right now for the past 6 days, there's not exactly a lot of trend or direction that seems to persist for long at all. One last tech item before we move away from that is semiconductors, which got walloped yesterday to some degree. Today they're recovering, up about 1/3%. SMH, as I've shown, we've got a pretty evenly spaced chunk of levels here defining resistance. We've got this gap, we've got this high right here, and this high right here. And in each instance, you can see more and more overhead supply. So above this dashed line, a tremendous amount of overhead supply. And then just to add another layer to that cake, 213.29, that's the lowest resistance level. All this activity here, and most of you know already, but I'll just spend a moment. What am I talking about? Overhead supply. All it represents is ownership of the instrument at those price levels. And from a psychological standpoint, some number of those owners want out, and they would prefer to get out at a smaller loss, at a wash, maybe even a tiny profit. As the price ascends, some portion of those owners are going to sell into that strength. Not all of them, but some. That's overhead supply. There's a certain chunk of people that are going to weaken the price. Whereas, say, if you're at lifetime highs, there's none of that. There's no overhead supply, and everybody's happy. Everybody's just delighted. It keeps going up, and the only people selling are those who are nervous and are afraid that it's going to stop going up. So this is human stuff. This is not astrology or, animal entrails. This is like, the mass of humanity and portions of them, how are they going to react psychologically to their own personal circumstance? So that's my speech on overhead supply. Okay, EFA. So annoying. I've given up on this. It just keeps going up. We're close to lifetime highs. My white flag's going up. I'm going to join the White House and do my own surrender flag. I've given up on EFA. It keeps trotting higher day after day. We're pennies away from a lifetime high on this. Okay, God bless you. I don't know what to do with this beast anymore. It had fallen precipitously and has completely recovered all of that. So you got me. So EFA, I ain't touching it. FXI, China, nowhere near lifetime highs. That gap is still very much intact. What else is cooking? Over in bond land, strength, TLT, up about 0.7%, another good day. And as I said a few days ago, even though it's up less, a better formed pattern is the IEF, the 7 to 10 year Treasury bond fund, and it's up about 0.3%, but it's a beautiful base right there. So an interesting long-term hold on that one. Over in gold land, it seems to toggle every day, it seems. It's down a little bit right now. GLD off about 0.85%, banging around still this range. Just not quite sure what to do with itself. Silver also down. This gap never exceeded. Got very, very close to it, but it is repellent to the prices there. So we're still very range bound on that one as well. And in turn, miners are softer. Here's GDX down 1.65%. But in all of these cases, they're just trapped in this little bitty range, just banging around, and so not particularly interesting. One thing I'm very pleased with, and on a day like this, one of the few things I'm pleased with, is oil is behaving itself as I had predicted, stated, hoped, which is down away from that broken right triangle. So this is the 4th or 5th day I've talked about this, but that right triangle pattern's been key. We rushed up to it. At last, it exhausted itself, and now we're on the down on that one. And this is today was a nice big red candle. Yesterday was as well, down almost 3% on USO. XOP down just a touch, and importantly has never exceeded so far this 115.05 level for the oil and gas producers. And so amongst that, some ideas we've talked about. Here's BP down 3%. Here's CNQ down about 0.5%. FANG down a bit more than 0.5%. And then a different ETF, XLE, down just a little bit, 0.25%. Out of time, but you know what? We'll end with this one, the Dow 30. I just want to drive home the point that the Dow is up hundreds of points today, but the trend line is still broken. That pink line there, which is anchored to the COVID crash low, was smashed with quite a lot of gusto back early in August. And ever since then, ever since we put our Nikes on and jumped to the other side of this, it has not exceeded that line. That line has power. That is a very strong resistance point. And there we have it. So the next horizontal resistance is around 47.91. But until and unless we frankly get above that Liberation Day gap, this is still bearishly configured. So that is it. Tomorrow, not sure how exciting it'll be then. Like I said, but Thursday and Friday, hell's a popping. Lots of stuff to drive it. So I will see you tomorrow and hope you're doing all right. Take care. Bye-bye.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tastylive.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. Cool. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate
Thanks.
you holding on the line to say that to us. So thank you.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tastylive.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Ring the alarm, boys! Turn up the charm. Listen up, y'all. Get out the damn stall.
Yes, it is the last call, my friend, and even the S&Ps are up 35 handles. NASDAQ is up 118. Russell is up 13. Do you see a pattern here, Sadnov? Dow up 350. Volatility in by 45 cents. Bonds up by 24. Bitcoin up by 460 and change. And now we get to the commodities. Oil down $1.75. Gold down 14. Silver, after rallying all day, is unchanged. Nat gas, after rallying higher, is basically unchanged, just a little bit green. Corn, wheat, and soybeans are all down. Sadnov, the leader in the clubhouse today, to the downside in the NASDAQ 100 are stocks that we don't really know about. Google is the only one there around 45 cents. All the other ones are kind of obscure NASDAQ stocks. What do you make of today?
Spotify on earnings, UNH, those are the only stocks on my board that are down. And Spotify's rallied back $40.
UNH is down. Did you say UNH just now?
Yeah, I know. It's a Dow stock. I know. That's it.
Yeah, and Dow stock down $8. Yeah.
Yeah, that's it. Yep. Honestly, today was really a boring day. I mean, I don't.
Never sell a creeper, Sadnov. You asked me a couple of days ago. I think on Friday.
I didn't sell it. I told you I wanted to.
No, you don't. By the way, no, you don't have short. You don't have short delta. I'm not trying to say that. Yeah. You asked me on Friday, like, what do I think? And I said, well, yeah, I'd like to see them go a little bit lower so we could buy them. And I think that's how a lot of people feel after the most recent move that we had here. I think it was a little bit scary. I think it hurt some people. We hadn't seen it in quite some time, and the market sold off really nicely. Thought maybe we would get another downturn down and look for, spots to nibble one more time. You had one chance of a 50-point move on Monday, and that was it, Sadnov. It's been a creeper to the upside. My gut tells me, and we know how much you think about my gut instincts, correct? You hold them in high regard, correct?
No, not really, but go ahead.
When's Memorial Day? Is that like in the end of May?
No, it's 3 weeks.
My Taiwanese sources confirm that Memorial Day, we might be flirting with highs.
Yeah, well, here's what I would say about this week. I thought after last week and the rally into Option X that there was a pretty good chance that they could, kind of hold their own, and they did. I think we're at an interesting level right here. This is kind of the spot. I haven't got short yet, but this is the level that I think we were going to have a little more trouble with. I'd like to see him break through 5,600 here, and I'd like to see him kind of run into a little bit of a brick wall. I think bonds over 117, that was a little bit of the layup trade that was out there. The best chance of a rally was the bond market. They're over 117. They've had a really nice comeback. And so I think with bonds at 117, I don't think there's that much risk in the stock market here. But I do think that the tape action will be a little jittery over 5,600. Maybe they get to 5,620, 5,640. But I think over 5,600, you get a little jittery. They got up today.
That's 40 handles from here. If you think that, then you should be thinking about getting short now.
Why? Why can't I just wait?
I mean, you can do whatever you can do whatever you want. But
I think you got to wait. I think you're going to wait.
You've got Netflix up $10. It hasn't had a downtick.
Nope, Netflix. You can't stand in front of that train. No way. No way.
Well, don't tell me the Sadnov has learned lessons. Don't be like that.
I haven't learned. I will get short Netflix again, but I'm letting it run its course. I've been trading Netflix pretty good right now, so I'm not going to go crazy in there. I think there's going to be some long side bias because of where bonds are and because the sellers got exhausted. I think that's the easy trade here.
Bonds go higher, rates go a little lower.
Yeah, I think stocks become more attractive. I think that's kind of more normalized. But the other thing is, I feel like there's not a lot of what I would call, there's stocks that are cheap relative to where they were.
What happened to all the tariff talk and the fear mongering? We're 5 handles away from being up in April.
I've tried to explain this to you before, but you keep
not listening. The tariff talk.
Well, help me, because I can't close
Okay,
my
I will
ears
help
like
you.
I can
I will
close
help
my
you.
eyes. So help me.
The tariff talk's been, the market took its hit from the tariff talks, and now the market normalizes. Markets always do this. No matter what the situation is, markets will normalize things over time, and markets will take everything in stride.
That
and they'll
time
figure
was
out,
10 days?
That
2
time
weeks?
was basically 3 weeks. Yeah, that's pretty quick for the market. You saw the volatility expansion. I think you have a couple things working in favor of the market right now. A, bonds are up. B, volatility is coming down. C, a lot of the kind of the panic trades are off the table. The only negatives I see for the market are that the stocks that you kind of felt like, 2 months ago, if you told me you could buy Nvidia at 108, I'd be like, wow, because that's the first spot we bought it. We were like, wow, this is amazing. Get a chance to buy Nvidia at 108, or you get to buy, something else, Meta at 550, whatever the price of all these stocks are right now, relative to where they were before that. You'd go, wow, this is a bargain. But given where they've just come from, you sit there and you go, you know what? I would have thought Nvidia is cheap at 109, but it looked really good at 89. So I'm a little nervous here.
I know, but you can't think like that. You got to.
I know it's hard though. It's hard to get it out of my head.
Prices here and now. That's why you use derivatives. That's why you sell puts. I mean, like, I know you can't do it in a $500 stock like Meta, but you can do it in an Nvidia. If 108 seemed interesting to you now, knowing where it went, the 100 puts look really fun. The 105 puts look really fun. Maybe both sides. Maybe something with long delta. Whatever your assumption is.
There's nothing cheap out there right now except UNH. That's the only stock I have on its lows. I just did a Jade Lizard in there because I'm convinced that stock is the only stock that I can find that looks so ugly here that
how'd you like the markets in there?
They suck. You have to give up to do a Jade Lizard. To do a Jade Lizard, you have to give up 6 cents.
Yeah, I guess that's not horrible.
It's not horrible, but the implied volatility there is only 35. The IB rank's still high, but the implied volatility is only 35. So to make back 6 cents, it's going to take a while. You're going to need a directional move. Like, you're not going to get it back just in premium.
Sure.
But I mean,
but that has delta. Typically, you put on something that has 5 delta, that probably has 20 delta.
Yeah. The whole thing with UNH is it's the only stock I can find that right now it's on its butt. I mean, you could argue, if you wanted to find something else directional, you could argue maybe like crude oil, Google. There's a few things that are still cheap relative, but not that much. Mm-hmm. Like, you go through your watch list right now. Yeah, because I went through my watch list like 6 times today, and there's
not a lot of stocks. Yeah,
there's not a lot of stocks that you're like, I mean, how much more Nike do you want to buy?
Right.
I mean, I already got it. I don't want to buy anymore. So, like, the stocks that I think are cheap. What's Nike doing today? It's up a little.
It's up 24 cents or so. It was down small. It was up small. Nike's like watching paint dry, though. These puts move, a couple pennies at a time.
Yep, I agree. I agree. I'm just saying, it's slim pickings if you're a bottom feeder like I am, if you're a contrarian. But I also think for trend traders, today was kind of, today wasn't that easy either. You had a couple of pretty sharp sell-offs in the middle of the day, and there was no layups.
Russell and Dow were down earlier. Now the one of the strong.
And they were also down. They were down midday too.
Yep.
And
Yeah.
Today was one of those.
S&Ps were unchanged midday.
Yeah, they went. Yeah, they actually downticked about eight handles. But you know what? You got S&Ps now trading right around kind of long-term averages or maybe below it. You had really light derivatives volume yesterday in options. I don't know what it's going to be today, but yesterday was only 46 million option traded. Just to put that in perspective, it was
25% below the average of my Taiwanese sources told me.
Yeah. 46 million contracts traded yesterday. When we were at our highs, we almost got, like, we did over 80 million. One day we did 100 million. Yeah. So, I mean, just to put some context around that, there's a lot less speculation this last couple of days. Now, normally this is a very busy time of year to get, this is not straight through to June expiration, to June triple witching. May's usually pretty good. Late April, May. You also got a little, I'm not a seasonality guy and I'm not a end of the month guy, but you do have, the markets have been relatively strong when you go into the end of the month, and that's been the case for the last couple of months. Not usually an expiration, but that hasn't happened. But the last couple of end of the months, like, they've been strong. So let's see. Maybe tomorrow they get their last gasp up to 5,600 or 5,620. Then I think you can get a few short deltas. I've been very careful here. No short deltas yet.
You have been very careful. Yeah. Only 8 million S&P options trading again today so far.
How many?
8 million.
Oh, spider options, you're saying?
Yes, spider. Yes. Yeah.
Yeah. Yeah. I think that, I've been ultra conservative, waiting. And I think that, maybe we get there tomorrow. You can do some stuff. Looking around at individual stocks, man, there was nothing that made me want to jump off the screen today. Nothing.
No. I mean, Microsoft has earnings coming tomorrow after the close. It's up today. Tesla was lower earlier. It's up almost 3 handles. So you had a little bit of a reversal, all around the market. You got a couple of earnings plays to look at if you want to. Visa is the one that you have a position in. You got Snap after that, Starbucks, FSLR.
Visa, we're short the 307, 365 in May. 307, 365. I don't love it. It's junky premium. 2 something. What is it? 250.
307 and a half, 265.
307 and a half to 365. It's a crappy trade.
Yeah.
There's nothing there. I mean, that's for 250 in May. You might get $1.50 out of it if nothing happens. If something happens, I think you're risking $2 to make $1 with a high probability profit. That's that. And what else is there?
Snap, Starbucks.
Yeah. So look at Snap. What would you do in there? It's an $8 stock.
Yeah. Nothing. You have to have a directional bias. I mean, the IB rank is good. You mentioned the monthly implied volatility being 100. That's good too.
Well, everybody's playing Snap to the upside. So if you look in there,
there's a lot of volume.
Look at the call volume.
Yeah, it's huge.
It's huge. And look at the put volume. It's non-existent.
Yeah, but it's $1.50 expected move unless you're
I understand that. I understand that. But if you look at the call volume in there, there's thousands on every strike. And if you look at the put volume, there's basically
not as much. Yeah.
Yeah, there's some 7 puts and some 9 puts that traded. The 8 puts haven't even traded. I think that if you want to trade Snap and you want to do something in May, you buy the 9 calls and you sell some higher strike, and you just hope you don't get ratioed out of the existence.
Sure, you get a pin somewhere. You got Mondelez, First Solar, STX, Caterpillar, Yum, Etsy.
Those are all
WDC.
Those are all really tough stocks.
Agreed, but if I don't mention them, you tell me I didn't mention them.
I'm trying to talk myself into buying the 9 calls here and selling the 11 calls on a ratio.
You're talking about in
Snapchat.
Snap
with the $2 expected move.
$1.50 over 3 days. How many days you going?
17.
Why you do 17?
I don't know. What difference does it make?
A lot.
I don't know. I don't know that there's anything.
9 by 11, 1 by 3, Saz. No, if you do it for even, or maybe you could do it for a small credit if you get a down tick one way or the other.
What do you mean 9 by 11? What do you mean?
The 9 strike by the 11 strike.
1 by 3. 9.
Just like you wanted to do.
I did the 1 by 2 small for 27
You did it in May.
Yeah. I know, for a 27-cent debit. I just want to have something on in there. I don't like having nothing on. Earnings have been really good to us. So I figured just having something really small on will just be something. But, I'm sure I don't trust Snapchat. I'll leave it to you that way. That stock is the few times that I've traded it for earnings and sold a bunch of puts in there, it hasn't really worked out.
So I got a question for you. The 3-day 1 by 2 is trading for 31 cents. You did one for 27 cents, 17 days. If you're not really in love with Snap and you only want to be in it for earnings, Don't you think the 3 or 4 cents is worth it just to be in the 3 or 4 day option?
Probably, but I didn't feel like I was too lazy to go look at it. So I was already set up, so I just did it. Okay, I'm trying to do a show here. Got a lot of stuff going on. All right. If I'm sitting here by myself and
I know. All by yourself. You're flying solo. I got it.
If I had time and I was doing stuff, I honestly I don't love Snapchat.
If I had a clear head like you, Bat. Right.
Right. I mean, I just didn't.
You got mouths to feed and stuff like that, right?
I didn't take a look. What else do you have? That's it. Oh, Starbucks is the only other one I wanted to look at. And I looked at Starbucks 3 times today, and but the stock I was trying to sell puts this morning, and the stock kind of rallied away from me. So what do you do in Starbucks? This one has a tendency, by the way, Starbucks, to trade outside of the expected range.
Yeah, it sure does. Remember we used to do the
Starbucks is not like it's no layup that it stays inside the expected range. And when you start to get out, I mean, it's got a $7 expected move. One time we traded this
17 days, 5.5 of it coming tomorrow.
And one time we traded with the $7 expected move in there, and the stock moved 14.
Right.
So, and if you go 2 times the expected move, there's nothing there. You go to the 98s, there's nothing. So what does a new subscriber do in Starbucks? I don't know. What would you do?
A guy like you?
Yeah, a guy like you.
$5. You probably you sell 3 of the 81 puts. 3 of the 81 puts and 1 of the 89 calls. That's what a guy like you does.
Really?
Yep. 67% pop, break even to the upside 95, break even to the downside is close to the 79. That's what a guy like you does.
Does a guy like you ever go to Starbucks anymore? I mean, I know Jim Schultz.
I have not. They changed it. They ruined Starbucks out by me. The Starbucks out by me is a mobile only Starbucks. It's the most unfriendly, unsatisfying, unrewarding cup of coffee you can ever have. And I love coffee. You go in there, it's alphabetical order.
How can they have mobile only?
That's it, mobile only.
Why would they ever do that?
I don't know. It used to be a sit-down place. They changed it into a mobile only. And the people in the back are the rudest that could be. I mean, it's because they don't have to deal with anybody. Ooh, what's your assumption? You people are not rude. That's right. We got trade. You got trades for us. Well, you got assumptions for us. So please send your assumptions to us. tastylive.com/assumption. We're going to do that tomorrow.
75.95 in Starbucks. The strangle.
75.95. 17 days out. You never learn your lesson. Cherry picks also coming out. Sosnoff.
163 filled at mid price. I think that's the only trade that I'm even. I did one
Nick
tranche
Batista
only.
and Mike Recantine. Yin and yang.
I did one tranche only. We'll see what happens. Cherry picks. Okay, go ahead. Put it up. What do we got?
You got all your most favorite stocks to trade. We just had up there just a quick second ago. There we go. By earnings date. So if you're looking at Meta, Microsoft, Qualcomm on the horizon, Sosnoff. That's tomorrow.
Yeah, I'm looking at everything on there. It's the good stuff is already gone, but we got the remnants left, the troublemakers.
Remnants. What are you buying? What are you buying? Rugs?
You got to be careful. You got to be careful with the troublemakers when it comes to earnings. Those are the hard ones. Yeah, anything that's late in the cycle is always hard. All right, let's see what else do we got here that jumped off the screen at me today, and I'm going to tell you it's not.
It was a relatively slow day, slow grindy day. I mean, but again, another 40 handles on the E-mini S&Ps with $1.1 million going to trade on the E-mini S&Ps for the day. Not huge volume.
Yeah, I tried selling them like 4 different times today, but just for tiny little scalps. Didn't make any money. Didn't lose any. All right, we're getting close. All right, what else do we got?
We got our boys in overtime. If you'd like to talk to them.
Sure, bring them in. We need somebody to talk to.
Oh, well, there you go. Somebody to talk to. We got my man Chris. We got my man Dylan. And we got a newcomer in there. Is that Jamal?
Oh, hey.
It sure is.
What's happening?
Oh, hey.
Hello, boys.
Hey.
All right. Dylan, what's going on?
You know, I'm just sitting here enjoying one of the best runs in the stock market since in a few years. You know, thank
there you
God.
Go. How are you enjoying it? Are you enjoying it with a cappuccino? What are you enjoying it with?
I was actually just a piece of chicken. I was having a piece of chicken.
Says nobody ever. You don't enjoy the stock market with a piece of chicken.
No, I did.
You said you had.
I was like, you know, this is one of the best. We was a hell of a run in the stock market. I got to get myself a piece of chicken to celebrate. That's a common refrain here in Milan, especially.
You go.
Tom,
what's your
celebratory meat for the stock market?
Celebratory meat?
Well, you said it's not chicken. You can't enjoy the stock market with chicken.
I don't consider chicken to be meat to start with, but
whatever.
Yeah, I mean, if I had to,
I can't celebrate with chicken either.
Yeah, I mean, if I had to have celebratory meat, it would be like a lamb chop or a veal chop.
Have you ever heard of Thanksgiving? That's not chicken, Dylan. Whatever, it's a bird. It's closer to a chicken than it is a lamb chop.
Yeah, we have lasagna and eggplant parm. Yeah.
You know, sitting here listening to you guys talk about earnings, Starbucks and Snapchat. Starbucks, dude, you're right, Tony. In general, Starbucks, I mean, they're kind of nowadays. I mean, I don't know the last time I went. I actually go more to a local coffee shop than anything. I mean,
support your local coffee shop, Jamal. Support your local coffee shop.
Well, that being said, I mean, you have one. Why would you ever sell puts in there? Why wouldn't you just sell upside and whatever you get blown out on it? It means it's good for coffee shops, right?
It's called a hedge.
You could look at it that way, but since our coffee shop doesn't make any money, I don't need to do that.
He knows there's no tariffs on coffee, so he's okay. He's okay selling puts in Starbucks. That's what it is.
And
Unchanged,
Snapchat,
Dylan, get back to you. Unchanged.
I thought Starbucks was a bank.
I bet you know what?
Isn't that what the cool people say about Starbucks? That it's really a bank.
Probably is. It probably
masquerading
operates
as a coffee company.
Yeah, it probably is pretty close to a bank.
So it's as much but yeah, April is a pretty good month for the stock market, as far as I could tell. Pretty cool.
They have a Starbucks. They have a Starbucks in Milan, Dylan.
They have what I do believe is the largest and most glorious Starbucks on earth is in Milan as a statement, as a marketing play by Starbucks that they can hang at the coffee capital of the world. So I think they dropped like $500 to $800 million on one coffee shop. So think about that the next time you want to open a coffee shop. I don't know if you have any interest in that sort of thing, but these guys are in for $500 million on one location, as far as I can tell. There's the Duomo, there's the Vatican, there's the castle of the Medici family, and there's Starbucks. Just so you understand the real estate that they're using.
I got a legit question. Are there, and see, I know Dylan will answer this, okay? Because see, I know Tom and Tony would run from this. Are there as many women in Starbucks in Italy as there are in Starbucks in general here in the U.S.?
Tony's is drive-through.
I'm going to go with no. I'm going to go with the women in Italy are in the more likely to be seen elsewhere, like in the gelato parlor. Or the street
outside in a palazzo somewhere,
having an aperitivo.
That's right.
Maybe heading down to Rome for the big conclave. I'm going to head down myself for the conclave. Check it out. See if I can get in there. That's the hardest ticket in town. I'll tell you.
Does that start today or something?
Yes.
Or when did it start yesterday?
May 7th. May 7th is the big conclave. I'm going down. I'm going to try to get in there. I'm working on a red robe. I'm going to try to sneak right in there.
You got to take your shot.
Please
Dylan.
record that. I mean, listen, you got to get in there. Have you ever been to a conclave? I think not.
I watched Godfather 3. You know what I mean? This is as close as I came. And that's the weakest one. We all know that.
All right.
Tesla catching a bid here up $6 on the close after being down around $4 or $5 earlier. That's starting to move the NASDAQ up 120. Over its 200-day moving average. Am I right, Chris?
Looks like it. But do you really, do you really trust this move?
Just trying to help you, Chris.
That was some pandering. That was some major pandering over there.
I pandered to Tom and Tony this morning after being, threatened to be beheaded yesterday before we came on the air, Dylan.
Yeah, you just got to trade price and let it come to you. I learned that from Tony. The number one thing is just let it come to you and trade the market that's there.
Good job out of you, gentlemen. Even the S&P's up 32, NASDAQ up 117. Sound enough. We're going to take a quick 90-second break and come back. We got more Tasty Live with overtime and these guys. We'll be back in 90 seconds. Peace. Thank you, gentlemen.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that, and I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from Tasty Live to look at that. And that's when my consistency went from 1 to 30, and I haven't had an unprofitable quarter since.
Hi, my name is Liz Deerking. The beautiful brunette next to me is... What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on. No, you're wrong. Hold on. She's wrong. I'm right.
High school party. High school kind of.
Yeah, because it wasn't in school. I had friends at my high school who were mutual friends of Liz, and so we were all at the same party.
And then parties for the rest of our lives.
For the rest of our lives. The same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together.
Yep.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Lutnick spoke and the market didn't fall. What? It's Tuesday, April 29th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York. Dylan Radigan in Milan, sitting in for Ilya Spivak today. Jamal Chandler in studio in Chicago. We're here to take you through the rest of this hour as we wrap up the trading day. Futures market closes at 5 Eastern. If you're on the platform on tastylive.com, welcome. Thanks for joining us. Join us on YouTube, however, to join the conversation. Tell us what you think of this market today, what you think of stocks moving up to the highest level that we've seen since the Liberation Day close. We have an S&P 500, 5583 on the close, a NASDAQ a little bit up after hours, 19,637. Bonds are also up here today, which is a nice sign. A Canadian dollar steady after Mark Carney ascends to prime minister at a full-term capacity. We find oil sliding, gold pulling back, and broadly speaking, we have a look at earnings now coming up around the corner. GDP tomorrow morning, we're going into the macro storm, so things are about to pick up here in the second half of the trading week. Jamal, you and I had a chance of speaking earlier today, though, about 3 hours ago on the dot, so I suppose we can take a gander at what's going on now. What changed in the second half of the day since you and I last crossed paths?
Nothing really. Actually, it was happening while we were on the show, right? I mean, I think we came on the show and we were up like, I don't know, somewhere between 12 and 16, and all of a sudden we were up 38 and change, and we were both like, what was happened? What was said? I mean, we were expecting, like you alluded to at the beginning of the show, more of a pullback as Lutnick was approaching whatever podium he was approaching, and it never really happened, honestly. Markets seemingly have just sort of come to the resolution, like, yeah, we're going to have tariffs. Some things are going to be a little more expensive than others, and that's okay. It seems as that's the resolution the market has come to over the last 7 days now in a row? That's what it appears.
Still, the market's obviously showing some signs of resiliency in today's session. I couldn't help but notice the last 2 days the White House has moved up their press conference to right before the market opened, 8:30 in the morning. Besson spoke today, and when Lutnick spoke, he didn't exactly scare people off, which is unusual for him. Is the administration in full walk-back mode at this point? Are they trying to just save face and prove to the world that they're not blowing up the U.S. economy?
I mean, I think what you're describing, you have a number of adjectives there. I think that they are not going to go through with the tariffs. I think that they are going to remake a bunch of deals now. I think the market is sort of, because the President of the United States, the office of the President of the United States, and the cabinet of the United States is so powerful that even if it's if someone you really, really don't trust and is a known liar says something, but they don't have a lot of power, they're not in a position of great power, they're easily ignored because they're so predictably false in their actions, I suppose. But
and there's no consequences.
Yeah, it doesn't matter because you're wasting your time to pay attention. In this instance, because the office of the President of the United States is so powerful, even if it's somebody who 99 times out of 100 doesn't do what they say and changes what they think and all the things that we know about this president, it still forces everybody to take it seriously because you can't assume that every single thing that the president says is not going to and is never going to happen. However, it's very clear now that whatever that early April tariff talk was or may have been, that's obviously not where this is going to end up. Obviously, the tariffs are going to get walked back. I thought that the most telling thing was I don't know where the comments were coming from, but it was someone in the administration was really screaming and yelling about the fact that Amazon was going to transparently add the tariff surcharge as a line item on the checkout page of their website.
Amazon Haul, yeah.
Yeah.
And that was being criticized as some sort of, how dare you tell the customers why the price doubled. Which I thought made the administration look extremely weak. Because if the administration wants to double the price of everything on Amazon, then the administration should be proud to tell everybody shopping on Amazon that they doubled the price of everything. And so, I think that the administration is in a naturally weak position at this point, and for sure is not going to go through with all these tariffs. And it won't be surprising, actually, if they don't do any of them. That'll be the real glorious, most humorous thing, is they basically will go back to all of the pre-existing deals, within the next 3 months, and the market will be on record. The market will go back literally to record highs. I think that there's as good a chance of that as any other outcome at this point, and maybe a better chance of that than most outcomes.
Jamal, Dylan raises an interesting prospect here. If we just went through a window where economic data didn't matter in the rearview mirror because it was in the pre-Liberation Day gravity well, right? January, February data has more or less been brushed off. We care a lot about March and increasingly April.
Mm-hmm.
If we get a trade deal or a series of trade deals that come out, doesn't that frame of mind then shift where the March and April data really don't matter because they capture a pre-trade deal world? And we need to be thinking more about the more optimistic future, one in which these tariff barriers were just negotiating tools and ultimately aren't erected in the form and fashion that leads to a significant period of destruction for the economy?
Yeah, I mean, that's the sheer lunacy of the whole entire thing, right? Like, if there really are no tariffs, then what did all of this even matter over the last month and change? What did we just experience, really? And again, this is what you're seeing with these companies when they're coming out with earnings. Most of them, a lot of them, pretty much almost all the airlines decided not to give full year guidance. There's plenty of other companies that are doing the same thing, GM notably today. You got, some companies giving out 2 scenarios of guidance, right? With and without tariffs. So, yeah, I mean, like Dylan says, I mean, there's a very strong possibility that none of this even ends up mattering. It's a negotiating tactic. And I don't know if we get back to all-time highs, but I mean, I could see us getting back to 6,000 fairly quickly if that ends up being the case, if it's like all tariffs are off the table. As of right now, that's not the circumstance we're under, right? Like, as of right now, it's like, oh, well, we're pausing them for whatever. I don't even remember how much time is remaining on that original 90-day hold period, but that's kind of where we are. So, again, there's just no clarity on pretty much all of it. And I think that's what you've seen in the market. Again, we all know the market hates uncertainty. That's why we saw VIX do what it did. That's why we saw gold moving the way it did, the way we saw, equities. But I would argue, and I think we all know this, the biggest thing in this whole entire situation that caused the administration to blink was the selling of treasuries. I mean, the selling of treasuries was scary as hell. I'm not going to lie. Like, that night when we were sitting there and we were watching the way that they got sold off, that was scary. And at that point, I think a lot of us who've been watching the market for years were like, something's about to happen unless they change this. And so that's what
and they did.
It wasn't China. It wasn't anybody else that caused us to walk back. It was that more than anything.
Yeah, that's, I couldn't help but think there may be a window here in trying to put together the puzzle pieces, and this is totally conspiratorial. I don't have my tinfoil hat, but I'll don it in practice only, I suppose. The GDP report's released tomorrow morning at 8:30 a.m. Eastern. If they want to convince the market that whatever that report's going to look like, they haven't found that out actually officially yet. They find that out in the next hour or so, usually around 5 p.m. Eastern the day before, which also opens up the possibility that Trump tweets some things tonight, even though the data is embargoed. We know that he has previously tweeted things out about non-farm payrolls reports. So, keep an eye on what he tweets tonight. But like, my point here is, what if they're trying to get a trade deal out in the next few hours so that it blunts the impact of the GDP report tomorrow, right? So that we're like, okay, it doesn't really matter. We knew it was bad, but we now have these trade deals coming down the pipeline. Let's focus on the future. Is that kind of part of the strategy here? Is that part of this game they're playing with this messaging today?
I think I don't really know how much you can pay attention to the GDP report along with the same way we're looking at these earnings, right? Like, how can you really pay attention to it? We know it more than likely. The way that they look at GDP, they're going to have to account or give 2 different scenarios for GDP, right? So how can we really take it seriously? How can it move markets when it's, for lack of a better word, inconclusive?
So is tomorrow's GDP report, Dylan, like Tesla earnings last week in a certain sense, where we know
100%.
we know it's not going to be good?
Yeah. I mean, and I'm not only that, I really think that the edge, that the marginal price of everything is entirely tied to whatever happens in the White House. I mean, that's why, I don't think Donald Trump is telling a joke when he says he's enjoying ruling the world. I think that he means it. I think
what's the context of that comment, by the way? You were talking about it with us before.
It was a magazine article. He did an interview, I think it was with The Atlantic or one of these magazines, where he told them apparently that he's, I don't want to paraphrase it incorrectly, but part of it was, I'm enjoying ruling the world. And that, I think, is the most true thing. I think that's the truth. I think he's really enjoying this. And I think that anything that's not, the only time that things revert back away from the White House is when the White House is not talking. So as long as the White House is putting cabinet ministers out in the morning and, talking about making deals, then the market will be fine. It's when the White House is like, oh, there's no deals, and everybody can, can screw off. But that's where the opposite, we're like, oh, we're making deals. It's deal. Everybody wants to make a deal. And then, they'll talk about how these deals with he'll say these are the greatest deals that have ever been made in the history of all deals. And that America is going to be the greatest it's ever been. And then somebody at some point will look at the deals and they'll either be identical or nearly identical to the deals that existed before April 2nd. But it won't matter because everybody's going to, there's a predictable theater, I guess I would say, in this at this point.
Yeah, Jamal, I know that you tried talking about Starbucks and Snap earlier on last call as we were going out the door there. You have to forgive our nonsense. That's usually how the handoff goes. Snap here is giving a pretty significant tariff warning. They withdrew guidance. How is that a tariff story, Chris? The second largest advertiser on Snapchat last year was Amazon. Outside of Amazon, some of the other largest advertisers were Nike and Samsung. Those are retailers. If you have uncertainty over your cost structure moving forward, you're probably pulling back your ad dollars in the market right now. So Snap here, which closed at 9.10, is now trading at 8.10 here after hours. The earnings report itself wasn't bad. I'm looking at the numbers right now. They're pretty good. Revenues beat, EPS minus 8 cents versus minus 13 cents expected. EBITDA 108.4 million versus 65.4 million expected. Daily active users beat 460 million versus 459. Everything beats across the board. The guidance they give is they can't give any guidance moving forward because of the advertising uncertainty. And the majority of their advertisers are retailers, people who sell knickknacks and stuff to people. And the other side is like media, HBO, New York Times.
What's this dude's name again? The owner, Evan, what's his name? I forgot his name already.
Yeah.
Or whatever, it doesn't
Snapchat.
really matter.
Evan Spiegel.
I'm surprised this is still, honestly, I'm kind of surprised it's still a standalone company, and I think it's a matter of time before like Meta or somebody buys them. Why they would buy them, I'm not sure. I don't really see the synergy, but I don't know.
Yeah, it's so funny. I saw there was a slide going around, maybe it was some like KKR a few months ago about, if TikTok leaves the market, what companies currently exist that are public or private that could fill the gap for the certain, features that TikTok provides. And their conclusion was that Snapchat was the one furthest away in every single category to replace TikTok. And like it stands to be a big loser if TikTok it's not going to gain any ground if TikTok is ultimately banned and leaves the U.S. market. Del, we're seeing it in a company like Snapchat, though. There's a tariff warning here within the earnings. I think we've been talking on this for a few weeks where it feels like every company right now is going to have this conundrum ahead of them where the first quarter earnings themselves, as good as they may be, they're going to have to tell a story of the future where they don't know what to do.
Yes. However, I think Amazon is super instructive in the
today's news, you mean?
Well, in the sense of saying what Amazon instructive in the sense of saying, oh, we're just going to line item the tariffs, and then let the market let the chips fall where they may, right? And if I'm a CEO, I'm like, listen, I'm going to continue to do business to the best of my ability, and to the degree to which I have to double or agree. If iPhones have to go from $1,500 to $3,000, if Nike sneakers have to go from $100 or $150 to $400, we'll just put the line item on the receipt. The Trump tax. This cost of the sneakers $120. Trump taxes are $220. Your total fee is, and it's very clear, based on the intensity of the reaction from the White House to the Amazon activity, that that's very effective. So I actually think that the corporations, if I'm a CEO and I've watched the last month, I'm much less worried than I was a month ago, because I'm realizing that this administration is profoundly weak. Full stop.
Full stop. I like it.
The bond market will stop them. A transparency with the consumer will stop them. That it's all talk and there's no back end. And whereas if you're the CEO of Amazon or the CEO of Nike or the CEO of JP Morgan or the marginal bond buyer or seller, your actions are vastly more consequential than any hot air that comes out of the press secretary or the cabinet ministers, who are all talk at this point.
That's kind of been the frustration about the whole thing, too, because it has been all talk, right? And honestly, you could argue that the market, I know for a while there I was saying it was a market overreaction, but I mean, after it's like 2 weeks, you can't even call it overreaction anymore. The market has decided, right? Much like what happened in the NFL draft with Shadur Sanders stock, the market decided what were his value, and that's the way it is. You can't say it's an overreaction or an underreaction, but the fact is it mostly was talk until all of a sudden China got 140-something% tariffs or whatever the hell it was. And then you could see why some companies were freaking out. You could directly, see how it was going to affect certain companies, the Temus of the world. Amazon obviously will list a lot of their products. But before that, I mean, it just really kind of didn't make sense. It seemed a lot of preemptive trading. Maybe it was just because markets were where they were, and we were at all-time highs, and everything was great for these companies. And the biggest story was AI, which, by the way, we haven't heard anything about in quite a while now, by the way. It was the biggest story for the past 2 years, and now nobody's even mentioning AI. Nobody has said, I don't even know if they mentioned that even on Google's earnings calls. I can't even remember. It has completely gone away, and it's all been about this thing that we really don't have much tangible evidence of, except for the China tariffs.
Except for the China tariffs, we do see that there's a report that Trump's going to announce relaxed auto tariffs today on his trip to Michigan. There's a
of course
auto plant rally. Yeah, so apparently that's coming down the pipeline too during this session.
The Trump agenda is to maintain attention on him all day, every day, not to actually implement any policies of any kind anywhere.
What's fascinating about this market is that the S&P 500, if we just close a teeny tiny little bit higher tomorrow, we find ourselves having staged a remarkable comeback where for the first time since the stock market went to a 5-day trading week in the 1950s, we will have been down by 10% or more over the course of the month to have closed green. Jamal, when I brought that up with you earlier, you said that's not good. Why isn't it good?
I think it's an overreaction in the opposite direction, and you could, maybe overreaction is a little strong considering we've had a strong bounce. But again, the initial overreaction was to the downside, and now it's appearing that everything was calmer. Even though you and I both agreed about a week ago that the buyers were right around here, right around 5,500 and S&P 500, between 5,500 and 5,600. All of a sudden, those who are super worried were going to come back because you could see it every time we bumped against 5,500 over the past 2 weeks. We had a violent reaction to the downside to it, save for last Friday when all of a sudden things started to turn. And now we do have those buyers. 7 days in a row, people buying all of a sudden when they were just scared not that long ago, I feel kind of gets to a fickle trader at this point in time. Like they're interested in buying at these levels because they figure the fear is out the way, but as soon as the hint of fear comes back, they'll completely reverse their position. So I think that's why I feel like it's not good. Maybe I could be proven wrong at some point. I mean, obviously, when you look at the market internals, things are calming down. VIX has calmed down to some degree. We're still in backwardation. But when you look at June and July, those VIX futures are exactly the same. And likely May is going to fall really soon if we do eclipse 5,600 and start to calm down. So I don't know. I just think it shows how fickle the current trader is right now if we continue to go higher 7-8 days in a row.
Well, we're inching up here. Dylan, if I told you back on April 6th that the market would be flat for the month of April, I think you and I would have said that I was, I needed to share whatever I was having. But that's exactly where we are. Is this just another case of the people who sell when there's blood in the street or pick up the pieces when there's blood in the street win? Or is this unique? Are we not out of the woods yet?
I think it's the ultimate. It's sort of the latest in the never-ending parade of buy the dip. And the latest in the never-ending parade of don't believe a word Donald Trump says, no matter how dramatic, no matter how spectacular, and no matter even if he's the president of the United States. I mean, I don't see how you can look at the market's behavior in April and think anything other than buy the dip and don't worry. And anytime Donald Trump says something crazy, it's an opportunity.
So I guess what the question is,
it's like the Gaza stuff. It's like shorting oil last year.
I hear you.
Mm-hmm.
I guess the question now is, what's the weight of the bull case versus the bear case that we've covered all this ground as we go into May? I see the bear case pretty much straightforward as recession's coming unless we get an immediate abrupt off ramp, which is highly possible given the nature of this particular episode that we're going through, where it's Calvin ball tariffs moving around for whatever rhyme or reason. It's for fentanyl. It's for replacing the income tax. It's for shoring manufacturing, whatever reason it is that day. But it feels like the bear case is that in their current form and fashion, layoffs are coming. It's going to hit retail. It's going to hit trucking. It's going to hit the ports. We've seen that a number of labor unions, including the international shoremen, the folks who were threatening to shut down the ports last year unless they got these egregious raises. Well, they're even saying that this is going to be terrible for their jobs, right? These people are willing to protect their jobs at any cost, including grinding the economy to a halt. That was a threat they levied in the fall last year, if you were paying attention. They're saying it's going to be terrible. So the bear case seems pretty straightforward. Stocks don't like recession, and if the Fed has to accelerate its rate cut cycle for bad reasons, that's historically been bad for stocks. What's the bull case, though? This all goes away. Where do we go? Back to the highs? What's the case to go beyond the highs?
Everything is fine. And yeah, we, at some point, whether it's within a month or 3 months, or less than 3 months probably, a month to 2 months, we're back at the highs. And, to Dylan's point, I mean, there's been a lot of talk of recession, but a lot of that talk has been contingent upon tariff stuff. So, like he just said, I mean, if all of this tariff stuff has been bullshit and there's really not much coming of it, then why are we even talking about recession, right? I mean, it's kind of, it's almost like the snake eating its tail in a way. I mean, it's the weirdest thing, man.
So we can get off this ride at any time.
I mean,
that's the bull case. Dylan, what's your bull case? The
bull case is ignore the noise in Washington, D.C., buy the dip, and believe in the super glide of technology, which is still a global revolution. And if anything, the Trump chaos has triggered a massive wave of trade and spending away from America that will ultimately benefit the world and America, because having Europe build so right now there's theoretically 3 massive nuclear arsenals and armies in the world: America and NATO, plus Russia, plus China. And if the Germans stand up $1 trillion super state-of-the-art drone army, that's another $1 trillion there. So, I think that, you can make an argument that you pull the tariffs out of the way and technology and finance and global war can go back to their leading position as the primary businesses of the world.
We're so close to being out of the woods right now. Technically speaking, the engulfing bar that you have on the 4-hour time frame on April 2nd in the Nasdaq gives you a high of 20,044.25. When you take a look at the S&P 500, that same bearish engulfing bar you have on the 4-hour time frame, 5773.25. We're so close to clearing these key hurdles to suggest that we finally made a turn here. The downtrends from the February and March highs are breaking. We're clearing out the swing lows from mid-March, late March. We've started to advance through the area where we had our rebound capped off on April 2nd overnight, going into April 3rd. So there's definitely some notches being put on the belt here, and the technical structure on the momentum side, great. Stochastics are overbought. MACD is now making its way through the signal line. But for the looming specter of tariffs and this GDP report tomorrow, this is looking pretty good. All things considered, volatility's coming in, Jamal.
This is how I know
you're about to get a big tax cut for you're about to get a big tax cut.
This is how I know we're out of the woods, Dylan. I'm hearing Chris say words he hasn't said in like 3 weeks, maybe even a month. I mean, he mentioned stochastic. I haven't heard him say that word in a very long time. I was really getting worried. It really was. MACD. I haven't heard him say MACD in like 2 months. Seriously. I mean, this is how you know we're out of the woods.
In fairness, it's not appropriate to talk in those terms when you're going through like a crisis market, right? So I'm not going to delude myself that technical indicators matter during those times.
I mean, people on the chat were asking him if it made sense to look at technicals at this time period. Everything was thrown in disarray. Trump administration.
Emotional.
Damn it.
It's running on high emotion, right? When the market's running on emotion, you can't really rely on those type of things unless they're like extreme sentiment signs. Like we've never, you see the call put rate. One of the things that we saw in early April, which we've discussed, the call put ratio in the market in terms of notional dollars blew out past the lows that we saw in COVID, right? Like that's really extreme. That's one of those things we say, okay, maybe this went really far. But the off ramps, maybe they're here. 55.77 here after hours. So we've given up around, 18 points here since the market closed. In part, Supermicro just released earnings. They see their EPS as 29 cents versus 31 cents. Adjusted EPS for third quarter is 29 to 31 cents versus an estimate of 53. Share prices there are now down after hours. Dylan, you were talking about the AI revolution and us really not talking about it, forgetting about it for a long time. This is one of those companies that's absolutely been in the crosshairs over the last several months alongside an NVIDIA, helping drag down the NASDAQ right now after hours. I don't think NVIDIA is escaping it either. This is the concern now. We're beginning. See, there's your NVIDIA trade-off here after hours as SMCI gets pulled in. I believe SMCI is their third largest customer.
Yeah, you're right. I didn't realize they had earnings. I didn't see that anywhere. Missed that one.
And they can't guide. That's fantastic.
No one's going to guide.
There's
Would
part
you
of me
guide? The only guidance, but you have one person who is delighted, I should say, to be in control of the world. No one in the history of mankind has felt they have total domination and control of the entire world.
Okay, forget that for a second, and I hear
no,
you.
But I'm saying if that's the case, then why would anybody make guidance? The only guidance is what the king of the world wants to say.
I mean,
isn't the whole Jack? Go ahead.
No, it was just simply saying. I just piggyback on that. I agree with him. I mean, why would you guide if you're not going to get punished for it? Then why should you guide? Right? Like, right. I mean, in the past, anytime you guide or you remove guidance, you get punished.
Was a negative.
Yeah, right. And now you can do it, and it's like it's a get out of jail free card. I mean, why not?
Who needs it?
But isn't the old Jack Welch beat guide lower? right? Always keep trying to load.
Guidance matters, but Jamal's point is now that there's no consequence. Normally, if you withdraw guidance, it's seen as a negative. You have no visibility. You don't have a handle on your company. You have something to hide. All those things. There's no reason to guide right now. And any guidance you give is subject to complete reversal at every 60 seconds based on what the President of the United States decides.
Yeah, imagine going into Q3, you would get crucified for guidance you made in Q2 that you had no idea how to guide for. So
then just guide lower, right? And then you have to then you beat.
But why? I guide lower, and now I've created a negative expectation. I mean, what's the value of guiding lower as opposed to not guiding?
It's so easy to say, I have no idea what's going on for the rest of the year, and our company is fine, but it's just him.
And we all know why.
Him. Yeah, Yeah. So easy to do.
Yeah, it's the easy way out. I don't know. I think it'd be fun to have a CEO come out and be like, yeah, we're reducing our expectations by 25% because of what's going on in the Oval Office, and we'll release updated guidance when he changes his mind tomorrow.
Well, who has the stones to do that right now? None of them.
But then when the president's number one thing is like vengeance, petty vengeance is like his signature activity.
Totally.
That's
I mean,
true.
Once upon a time, the people that would have done it would have been Amazon, would have been Google, would have been Apple. Well, I mean, those guys aren't doing it. Those dudes were at, I mean, they're not doing it.
The bank CEOs are not going to do it. The car CEOs are not going to do it.
No. Yeah, who's going to do it? Who would do that?
The health insurance CEOs are not going to do it.
No.
In fact, for the health insurance CEOs, it doesn't even matter.
Sosnoff can do it.
Sosnoff, with all due respect, is not a material enough executive to matter, except for to us. But in the scope of the top 50 CEOs in the world.
Number one in my heart. Dylan.
Yeah, I mean, seriously, I'm looking down the list here. Like, who would do? I'm looking at some of Apple. Obviously, Tim Cook was, at inauguration. He's not going to do it. Same thing with Microsoft. Same thing with Nvidia. I mean, well, not so much Nvidia, but the same thing. Amazon. I mean, we just saw what happened with him today. He had that dude back down on something he was going to do in the website. You think he's going to do this with guidance? Hell no. Google, no, same thing. I mean, none of these dudes were going to do it. You mentioned the healthcare CEOs; they won't do it. That would be awesome. It would be interesting just to see, in what industry where a company. I mean, I guess Elon could have did it, but he didn't do it. I don't know.
I kind of like the tariff cost being on there because. One problem that I think a lot of people feel is that when you get like this, we kind of ratchet with prices, right? Tariffs are in there. It's an excuse to raise prices. If the tariffs come down, the company has conditioned its consumers to accept a certain price, so they don't need to lower prices. They can just keep the price there and keep absorbing the additional surplus. I would love to see all the tariffs. Forget the Trump tariffs now. Give us the ones during Biden, Trump 1.0. Show me Obama's tire tariffs every time I have to get my wheels rotated at Ford.
I agree. I think that would be a good idea.
That way, when the tariffs get removed, we could say, "Hey, company, we know you were charging me $50 for this, and the tariffs just went from 10 to 0. I should be paying you $40."
Not to mention, I feel like I was in a discussion. I don't know, it was a director. So I'm trying to think of what this context was, where if some manufacturer was saying that that even though the tariffs haven't been implemented, that they've raised prices across the board and blame the tariffs. That's for sure happening.
Yes,
where
U.S. steel producers
manufacturers are, whether it's or everybody that can, I suspect, is already raising their prices without the tariffs, just as a way to increase prices.
Yeah, we saw companies doing this in advance, knowing that the domestic producers would be able to capture the surplus. U.S. Steel and Nucor back in February announced that they were increasing their prices. So the tariffs go in place, making it more expensive for Americans to import from abroad. And in response, these domestic producers say, we could charge our current prices or we could charge more. And of course, they charge more because they're in the business of making money. If they can make more money. So I think it's interesting, Dylan. I think the messaging that the administration reacted so negatively and viscerally to this potential announcement, and again,
exactly, it just shows you, like, when somebody gets defensive, really defensive or really aggressive, it's not an indication of strength; it's an indication of weakness. And so the fact that they're out front flipping their can about a line item that's going to identify the tariffs, I think tells you as much as the bond market. Like, if basically the Amazon checkout page and the U.S. Treasury market are both more powerful than the President of the United States at this point.
Jamal, I learned a very clear lesson on that when I was a young boy, not too young, but when I was a boy, about if you don't have anything to hide, you don't react negatively. When I moved into my neighborhood, they were still building homes, and so construction workers, they put magazines around the building sites that me and the other teenage boys in the neighborhood would happily find and steal away for ourselves. And so one night my mom comes in my room and goes, "Chris, your room's a mess. Like, what are you keeping under your bed and stuff?" Because you could see, like, clothing that was just stuff under there. And I remember sitting up straight in bed saying, "Mom, I got this. I'll clean my room." And she read me like a book. She's like, "Okay, what's under the bed?" What are you heading at? Yeah. So young Christopher got in trouble that night. But that was like, it was like the visceral reaction, right? Like, so out of character. And the fact that they responded so negatively today, like, what do you mean they're going to list the tariff prices? This is political warfare.
Yeah, right.
Like, this is a political assault.
Clear as tell.
You know what's
because they're going to show. Yeah.
What's kind of
but
funny,
it made it
though,
look very weak. Sorry,
it did. What's kind of funny, though, is, we have a pretty strong bounce back here in market so far. Gold appropriately pulled back to some degree. Why is oil still only $60? Why isn't it 65 or 67? Appropriately rebounded, similar to kind of market rebound, bond rebound. Why is that?
Isn't that one of the tells here? Like, the fact that the dollar and oil didn't shoot back up tells you everything you need to know about where global trade is heading. I think that's one of the, if you were looking for the full royal flush, like, everything's okay. Oil's back up, gold's back down, the dollar's back up, stocks are up, right? Bonds are probably still chopping around sideways. Sovereign credit risk and term premium lower, but growth expectations up. So, call it a scratch. I think that's what you would see and how I envision the world, and everything's the all clear. We're not getting the all clear from the dollar. We're not getting the all clear from oil. Oil here after hours is basically ending the session on lows right now, $60.18, which is much to my personal chagrin, given my short put spread still going on here. Copper today, for all the enthusiasm in stocks, bond yields are lower, gold weaker, oil weaker, copper weaker. And the splits among the sectors, I suppose it's good that financials are leading. That's wonderful news. But not really a growthy tilt still. Consumer staples, utilities outperform consumer discretionary. Consumer discretionary underperforms the broader market prior to the close. I mean, Jamal, I think this market's totally overlooking GDP tomorrow. I can't get this out of my head. It feels like the market's setting itself up for, this is like a bear trap, a bull trap right now here, as we see a market rally after hours, 55.80 or so in stocks.
Yeah, I mean, I also think it's still, kind of almost end of the month window dressing in some type of way as well. I think tomorrow's between Wednesday and Friday. I'm not exactly sure which is more important, which is going to be more interesting, but I think those are going to be two of the bigger days of the week. That's just kind of how I feel, especially given, the data points we got tomorrow. But again, end of the month flows. How's that going to play out? As we mentioned on Futures Power, it's not exactly a quarterly end of the month situation, but still, end of the month is end of the month. Funds still do what they do at the end of the month. And I could easily see some beginning of a reversal, but what the hell do I know?
Dylan, is this just window dressing into the end of the month, or people trying to paint the tape?
I mean, I look at it a little bit differently. I'm like, okay, the tariffs are going to happen in a non-happening way or a very mild way. So the consumer products companies and all the sort of the tech companies, everything that makes sense of the stock market to be more stable. But it doesn't make sense for the dollar to get stronger. And it doesn't make sense, and it does make sense that it doesn't make sense for the dollar to get stronger because the dollar's a referendum on the credibility of the United States, which is at the moment impaired. And it does make sense that there's still some version of a global slowdown underway that will reduce demand for energy. In other words, I realize I'm sort of talking myself into what I want to believe, but I can see a world where the stock market does a bit better, the dollar stays weak, and oil stays weak. I realize it's not a full booming global economy story that I can tell with that, but I can still fit that around the current White House.
Let's just say that world comes true. Isn't that kind of like a muddle forward situation for stocks where they recover, but it's not going to be a V-shaped recovery back to the highs? It's going to be more of a slow, steady climb as we acclimate, and we need evidence in our pocket that the tariff damage isn't there and that there's not a significant slowdown and trade resumes. It's not like the Smoot-Hawley 1930s type of spiral. I guess it feels like the V part of this whole thing may be finished. In my optimistic worldview.
I can agree with that.
Jamal, it's going to be more of a fight than it was last year if we're going to get back to the highs.
I totally agree with that. That's one of the reasons why I feel like even unless there is a completely all-off tariffs, we have renegotiated with every company, which again I think ends up looking more like Dylan said, renegotiating meaning negotiating, and those deals are around the same. I still think it doesn't do much more than get us to 6,000. I don't know if we get to new highs. I think there has to be some other fluff reason that causes us to get to new highs. I still think it's going to be a somewhat of a slower build because of the fact that I think oil might remain weak for a little bit, dollar might remain weak for a little bit. I mean, I just feel like this whole thing has kind of exposed the U.S. in a way. And I think it started with treasuries. And I think I personally still believe China was the main one selling treasuries. Oh, you want to mess around? Okay. Remember, we hold a lot of these. Bam. You know what I mean? So I think it's just a reminder that we're, as much as the U.S. is a superpower, there's still certain things that can be hit, and treasuries is definitely one of them.
I feel like the muddle through scenario for me is like that's the bull case, and that kind of disappoints me. I know I've seen some people say in the chat like I'm rooting for the market to fall. If I was, I'd be buying deep out of the money puts right now. Okay, and that's not what I'm doing here in the follow account or personally. I would love for nothing more for the market to go back to where it was from the past 2 years, where it's like, okay, volatility, VIX term structure, contango, price above the 1 week moving average, which is above the 1 month, VIX below 15. Okay, let's just buy those 30 delta calls 45 days out. See you in 45 days. That was simple, enjoyable, relaxing. Exercised a bit more. Saw my child and wife a bit more frequently, right, than the past month. I've been kind of locked in my office. It's not enjoyable or fun, even though still surviving and thriving, as they say, Jamal, right? I'd love for nothing more from this market to see that there's a path forward. And ultimately, if you're going to be a bull, the bull case is that there is a path forward. And I think that is the defining characteristic of market bulls, like myself, that no matter what's going on, there's a light at the end of the tunnel that will lead to better days, that will lead to more growth, to higher earnings, to better outcomes. And so perhaps the signaling here today with an India trade deal or a South Korea trade deal or a Japanese trade deal, it's about trying to show that there is a light at the end of the tunnel. And if we can get that at least proof of concept moving forward, you have to think that oil probably catches a little bit of something, that stocks catch a little bit of something on that news. I do think it's intentional that we're hearing about these trade deals today of all days, because we have this GDP report tomorrow, which, quite frankly, I don't know what's going to happen. And I think this is the bigger takeaway, Dylan and Jamal, for tomorrow morning. We have a GDP report where if you look at the Atlanta Fed GDP Now growth tracker, you're looking at minus 2.7% for the first quarter. If you're looking at the New York Fed Nowcast, different model, different Fed branch, plus 2.6%. You look at the Bloomberg consensus forecast, plus 0.4, the Thomson Reuters consensus forecast, plus 0.5. This is a wide distribution of outcomes. So there are people who are positioned in this market wrong, no matter what, right? Fat tails for tomorrow. So if it's a good report, what does that mean for the Fed? If it's a bad report, what does that mean for the Fed? Who's positioned correctly in stocks and in bonds and in gold? But there's a large chunk of people, no matter what, who are going to be off sides. And I think that means we're going to have volatility.
The bigger question with all these Fed guys is why didn't they just take a cue from the S&P 500 names that are doing earnings? Just refuse to give a forecast for GDP. It's laid out there for you. Why would they even do this? I don't understand it. Those wide numbers, by the way, are precisely why these companies are not giving guidance.
Yeah. Well, I mean, no one would. There's not a CEO of a publicly traded company in the world that would like to give guidance. They only give guidance because at some point, one of them started to do that, and then it became a thing where you're like, oh well, if you don't give guidance, you don't understand. You don't know what's going on. You don't understand your business. Maybe you shouldn't be running it if you can't give guidance. And it became the whole. Jack Welch probably created the whole miserable ritual, which forces all this short-termism and all these terrible management incentives for these public companies. But I think that this is probably a very beautiful moment for a lot of these people to not have to get involved with it, and also to look past. Again, whether it's the GDP number or whether it's these earnings guidance, it's all been rendered moot in favor of economic policy from the White House.
You know what sucks is that obviously nobody knew this was coming, but Netflix missed an opportunity because whoever it is, right? But like you think about HBO every year, they do the Hard Knocks, right? And then like a year ago, everybody was raving about how they did a Hard Knocks centered around the front office of an NFL, franchise and the decisions they make. The Giants, right? They famously let go of, they didn't let him go, but whatever. They let him walk in free agency, Saquon. If they had done this, to see the war rooms right now for a lot of these companies, it would be awesome, dude. Like if there were like 5 companies they picked and the ones who chose not to give guidance, and just the discussion around that, the ones who chose to give guidance, the one who gave guidance all over the place, that would have been kind of fun.
I agree.
Yeah, I'd love to see like some. I'd love to see like one of the companies in there, like Cantor Fitzgerald, knowing that Howard Lutnick's sons are now running the company, and them just being on the phone like, "Dad, what is going on?"
Right? It would have been a great show. It would have been a good show.
And then it switched to some office style commentary where he's sitting there, he's like, "Well, the Commerce Secretary likes to check in from time to time." Netflix here, as you mentioned, having the modern day consumer staple, Dylan Radigan, as we talked last week.
So you got your right there with hand soap and toilet paper. Netflix.
Your Philip Morris, your McDonald's, your Coca-Cola, your Netflix, and then your Eli Lilly, just to make sure you don't get the diabetes and all the bad things from having that kind of lifestyle, sedentary lifestyle. But that lifestyle joke is holding up here in these markets, which I think is the bigger takeaway, that staples here. What's holding up, what's leading, what didn't decline during the last little bit of a pitfall here that we had in April. What's thriving right now? 170.26, new all-time closing high here for Philip Morris with its green day today. Even a name like Eli Lilly is continuing to track back up, 885. Hasn't really done much for 6 months to a year, but it's still holding its ground. That seems to be the play right now, guys. It's where are stable cash flows in a world where companies are pulling back marketing spend, right? Like if you're Snapchat, that company is wholly contingent on other people putting ads on its platform. So does it surprise anyone that a Meta here today after hours is struggling a little bit, closes at 55.4, now at 549. Odd way of phrasing that. $554 was the close, now down at $549. So they're getting hit a little bit here. Even Google getting hit a little bit after hours. They close at 162 and change now, down 161.5. But people are still going to need to eat. Still need cleaning products still need to buy their toilet paper.
But I mean, the frustrating thing from a trading perspective is, there's some days where you're like, okay, this tariff, they're really going to do this tariff thing. I certainly have had days where I'm like, I believe that they're really going to do this tariff thing. And it's going to be a recession. And is what, I mean, you can have whatever opinion of that, but you can work with that. But then you get sort of the walk back campaign, which is actively underway, and all these signs of weakness, like the temper tantrum about the transparency with Amazon and all this. And all of a sudden, you're like, oh well, maybe they're going to do very little of this actually, because Trump never does anything that he's. I mean, this is a guy who uses a Sharpie to change the trajectory of hurricanes. So I mean, you're not dealing with really a person who lives in the world of truth or facts or information even. But then all of a sudden, a recession place is a bit less attractive, and now all of a sudden it's a buy the dip situation, and it's nuts because it changes every day.
Gillen, I want one reaction, then I have a fun question here to end the show with, to circle back on the chicken discussion on last call.
I was a little insulted by the lack of respect for a piece of chicken to celebrate a fine market event.
Last night, I have this great baked chicken recipe, right? I put some seasoning and some sour cream on chicken cutlets, olive oil, locatelli cheese, and a little bit of olive oil, get that into a crumble, bake it in the oven. The next day, today on French bread, some arugula, some Kewpie Japanese mayo, and pickled shallots I made last week. Unbelievable sandwich.
Okay. So good. And I mean, look at the demand for chicken worldwide.
Chicken and rice. I mean, like, come on. Can you beat a
global
good chicken and rice?
Demand? I mean, I bet you the chicken may be the most widely eaten meat on Earth. South America, Africa, Asia, Europe, North America.
Well, that brings me, I guess we'll go there then. Well, Trump says that he thinks that he should be the new pope, which we don't have enough time. We don't have enough time to get to that today. We don't. Time to get to that today. Okay, so you had a good day in the market, or you had a really bad day in the market. Guys, what's your good day meal? What's your bad day meal? In your fantasy hat. And I'm curious what the chat says. If you had a really good day in the market, what do you do to reward yourself? Jamal?
Good day meal. Good day meal probably is a little braised beef ravioli with a side of Caesar salad is probably a good day meal. I mean, bad day meal, we don't eat bad day meals. We don't eat then, I suppose, is the answer.
I like that. I agree with that. Bad day, no food.
Bad day, no food. Good day, chicken.
Good day, chicken.
Chicken, yeah.
All right.
I do. I like it. I like a good T-bone steak. I like a quality T-bone steak. Like that. Done Milanese style, Florentine style, which is whatever. I believe it would be called a Fiorentina.
Nice.
So.
What are you drinking with that? What are you drinking along with that?
I would recommend, obviously anything, all the Barolos, but I would recommend a Montepulciano d'Abruzzo or a Super Tuscan. Nice. Anything, I think you'd be pretty happy with any of those.
I'm a Chianti kind of person, Dylan. That's my red wine of choice.
Next time you're in Milan, you got to come over to Brera, pick up a Montepulciano d'Abruzzo. I think you'll come around. And the price is right.
Sounds lovely.
You're just trying to. Don't be throwing your Chianti.
I know, right?
What is this?
Sicilian grape. I don't know. It's my people's grape.
All right.
So respecting the homeland kind of thing.
Okay.
Yeah, I think today was a good day. So I think we're gonna do ribs. I think that's the solution. Ribs that have been sitting in the fridge marinating all day and can now go in the oven for the next 2.5 hours before I grill them quickly later on tonight. I think that's the good day meal today.
All right.
So with that, overtime is out of time for this Tuesday, April 29th. We'll be back tomorrow, same time, same place, as always, right after last call, 4 p.m. Eastern, 3 Central. So for Dylan Radigan in Milan, Jamal Chandler in Chicago, I've been Chris Vecchio in New York. Good luck trading. After this brief break, Ilya Spivak up next with Macro Money.
The market's idle on what is the beginning of a month-end process here for financial markets. First week back after last week's would-be improvement. And we face now the decision time. Obviously, last week was a little bit more palatable for the markets than was most of this month. This week, we are going to test whether that little break and that little ray of maybe sunshine is lasting or fleeting. And that is because an absolute avalanche of macro risk faces investors this week. I'm Ilya Spivak, head of global macro here at Tastylive. This is Macro Money, and we're going to go through all of it. There is quite a bit, but it does seem to follow a bit of a story here, because what we are, as ever, looking at is the idea that the world is able to digest all kinds of things as long as there's growth. You can write off all manner of volatility provided there's money to be made tomorrow, as it were, whether you're a business or a consumer or an investor. But if there's no growth, and that's a hit to demand, it's a hit to employment, well, then bad news hits different, as it were. And so the question we're going to ask increasingly this week is, are we already in a place where growth has hit the wall? We'll start the conversation with a look at what the markets did last week and posit why perhaps they did it. And from there, see what it is that is so critical this week that might get everyone back up in arms. Here's the performance across the key asset classes last week. We can see stocks manage a rebound here, and a pretty decent one at that. S&P 500 up 4.5%, NASDAQ up 6.3%. That's pretty impressive vigor there. The story in the bond market reflecting perhaps the easing concern around what looked in April like a sort of sell America dynamic, where U.S. stocks, U.S. bonds, and the U.S. dollar were all falling in tandem. There seems to be a bit of an unclenching here. The 10-year down 1.8%, the 2-year down 1.2%. That's not because the Fed got any more dovish. That's because of the term premium surge that was the hallmark of April seemed to have eased a little bit going into last week. There seemed to be a sort of peak in a level of uncertainty around this idea that we are heading into some sort of a sovereign crisis in the U.S. That, of course, was a very palpable sort of concern. It's how we ended up with bonds crashing and yields surging, even as stocks went down and the dollar weakened. That would normally be the kind of environment where you might think, oh, well, the Fed's going to come cut rates. They'll be firefighting. But no, that was not how that worked out. And ostensibly the reason is because the markets were so convinced that uncertainty downwind is elevated that they built up the highest compensation for duration risk into 10-year treasuries since the middle of 2021. That, of course, drove yields sharply higher. So last week's give back seems to speak more to this idea that maybe we're unclenching a little bit around that kind of risk. That helps to explain how you get yields coming in, bonds coming up. You don't get that kind of a response in crude oil. It continues to march to the beat of its own drum. But gold, a little bit lower. The dollar stops falling, if not outright rallying against the euro, but it does manage to score a little bit of a gain against the yen, which comes in about 0.9%. The risk-on vibes certainly carry over into Bitcoin. It has a very sharp rally of 13%. So as you look at all of this, you get the sense that perhaps that kind of hair on fire sovereign risk in the economy shepherding the world's reserve currency, that kind of concern has ebbed. And it seems like it has ebbed perhaps because the administration, on two separate occasions, once the 10-year yield got to levels they were uncomfortable with, around 4.5%, seemed to walk away from the brink. First with the sort of softening of the rollout of reciprocal tariffs, saying there's a 90-day stay of execution on tariffs above 10%. That, of course, is something that the markets greeted as a welcome kind of thing, not necessarily because it's so good economically. It's not. And that's because when you have an average tariff of 2% and you go to 10, you've increased taxes on imported goods fivefold, as it were. And so that's obviously going to hit consumers, and surging inflation expectations amongst those consumers speak to their realization of what's about to occur and what's coming downwind. But that the administration seemed responsive to an emerging crisis in the bond market and acted accordingly suggested that there is, in fact, a reaction function to market discipline, and that was encouraging. There was a similar instance then again with the on-again, off-again firing of Chair Powell. The president seemed to signal that that's not an avenue that he's going to pursue, even after just days earlier posting on his Truth Social platform that Powell's termination date, quote, can't come soon enough. So there again seemed to be a walk back once fears about compromising the central bank's independence again took yields toward that telltale 4.5% level on the 10-year note. So it seems like we're in a place last week where the markets go, okay, well, it's not a great environment for risk-taking, but it's not the implosion of the most important bit of architecture for the global financial system. That is the dollar and the treasury bond as a risk-free benchmark asset. That is not what this is. And with that, you get stock markets unclenching, you get yields coming in, the dollar steadies, gold comes down, and the markets now look ahead to what was the narrative before April's fireworks. From about mid-February and into March, the idea that we're careening toward a global recession, but maybe just a regular one, and not some sort of an existential crisis, though, of course, recessions aren't easily predictable. Once a drop-off in growth starts, you never quite know which skeletons it'll dredge up out of the closet. All of a sudden, debt to GDP ratios start to surge because with weaker growth, servicing all manner of debt is more difficult. And so the upshot becomes, well, now you need to do something that could be raising cash. Now you need to do something that could be laying off workers. And so all of that has significant implications, maybe downwind, that the markets are not prepared to price in yet. But at the very least, maybe this will be just a recession and not the imminent collapse of the empire, as it were. With that, we have pockets of data in the week ahead from all three major nodes of global growth to see if we can't get a sense for whether, in fact, we have some kind of a situation here where recession is either inescapable or perhaps has even kicked off already. We start on the Asia Pacific side of things. The Australian CPI report is due. It's looking to show us that inflation continued to come down in the first quarter, 2.3% on the headline, 2.9% on the core, which is interesting because actually Australia's economy has been relatively peppy, looking at the PMI numbers over recent months. But most of it has been domestic demand. And the really key indicator here, and sort of how this data fits into the overall story, is what it means for growth in China, because, of course, China is Australia's largest export market, and that part of the Australian growth story has been terribly anemic. It is also an absolutely critical part of how Australia continues to grow and would purport to continue to grow going forward. So if we get weakening inflation, it'd be interesting to see how the markets onboard that and whether they perceive here that what this means is that the drag, the downwind effects of a weak China are finally starting to spill over into the dependent economies, and even strong domestic demand isn't helping things work out. And that's what we are going to be watching for closely here. If these numbers miss and if their internals suggest that weakness is already coming for Australia despite some recent support for the domestic economy, well, then we're starting to see China's weakness spread out. That's an important part of this global recession story. For China itself, numbers don't look all that great as we prepare for the release of official PMI numbers. We'll get the private sector versions, the Caixin and S&P Global numbers later as well. But the official figures kick us off here. And the expectation is that China's economy stalled in the most recent data. That April saw the economy basically get back into contraction mode. The composite index here seen slipping to 49.5 as manufacturing hits a wall, 49.9. As ever in the logic of PMIs, 50 is neutral. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. 49.5 here on the composite index would indeed be a sharp deceleration and a move back to contraction territory for the first time for China since going all the way back to December of 2022. Now, we can see here that services are expected to remain in growth mode, but at a slower rate, 50.7 down from 50.8 in the prior month. And manufacturing is seen going back into contraction mode for the first time since January. So the story here looking weak. And the GDP numbers we've already seen out of China for the first quarter, they sort of reinforce this idea that we are now looking at 8 consecutive quarters, shocking though that is, of economy-wide deflation in China. The story here that nominal GDP is running below real GDP, which means that the inflation adjustment that one needs to make to get from nominal to real, that is negative. And for the first quarter, it's negative to the tune of 0.8 percentage points of GDP growth, which multiplied over the second largest economy in the world is a huge gap. Basically means the economy lacks for demand, and that, in fact, the gap here is the most steep since we saw the peak one at negative 1.06% in the first quarter of 2024. So this is looking like very much reinforcement of that and the idea that that economy is stuck and going nowhere. The Eurozone seen posting growth of just 0.2% in the meanwhile in the first quarter. That's a repeat of the prior month. And again, pointing to standstill. That economy, as we can see here, has been basically idling with low to no growth since the latter half of 2022. Likewise, coming out of the Eurozone, inflation data, 2.1% expected on headline CPI. That would be the lowest that we've seen headline inflation there since October of last year, where we briefly dipped below 2% in September and then hit 2% on the dot in October. This would be the weakest since then. Again, speaking to deceleration, speaking to weakening price pressure. Of course, growth and inflation tend to work hand in hand. You get more growth, you get more money changing hands, you get more demand. That demand starts putting more pressure on whatever supply there is. Supply can't keep up with demand, inflation goes up. Sort of classic story of economic acceleration. Deceleration works the other way, as we can clearly see in China's case, which again has been in a de facto economy-wide deflation now for 2 years. We have there a situation where there isn't demand, and so the entire economy is basically in the bargain bin, where you try to lower prices to clear inventories so you can start to build new things and grow again. And so in seeing this kind of weakening of inflation, not just in the Eurozone, but of course, as we just talked about a second ago in Australia, you get the sense that there is economic deceleration that's afoot. And then, of course, there is the US. Here, things get very spicy. The expectation is that you're going to get a 0.4% rise in GDP, which, relative to where we've seen these numbers, is abysmally low. The last time we saw anything like this was the second quarter of 2022. In fact, outside of that, from the third quarter of 2022 to the fourth quarter of last year, average GDP has grown 2.9% annualized every quarter on average. And of course, there's some standouts. There's some weaker ones. There's a 1.6% growth rate in there in the first quarter of last year. There is a 4.4% surge in the third quarter of 2023. But the average for the U.S. economy from the middle of 2022 onward, sort of second half of 2022 through the end of last year, is to be growing at an annualized rate of about 3%. So to go to basically no growth at all, obviously very eye-catching and is very close to getting us to confirming what would be the first step to a recession, which is 2 consecutive quarters of negative growth. There's not much margin of error for a miss here. Speaking of weakening inflation and the implications for growth there, PCE inflation data coming out. This is the Fed's favored inflation gauge. Here, you're coming into 2.2% on the headline, 2.6% on the core. And again, these are, as we can sort of just glean by looking at the chart with the naked eye, these are meaningful levels historically. 2.6% on the core would be the lowest since September of 2024, or June, of 2024. So we're talking about the weakest in almost 10 months. Then when we look at the headline, 2.2%, that's the lowest since September of last year. That was actually the reference point I was looking at a second ago there. And of course, all of this, again, speaking to perhaps diminishing demand and the impact of that on price pressures. And Of course, the Federal Reserve has been screaming that what they want to see is hard data to hang their hat on so that they can begin to cut rates. But where that hard data has actually shown up already, in the inflation data, where we've seen that core services inflation has been cooling for a few months now. As we can see, most inflation lives in that core services area. That's where the U.S. economy has found growth, where other economies have not, since the middle of last year until it abruptly hit a wall at the start of this year, looking at the PMIs, around tariff uncertainty and sort of the broader uncertainty around the rollout of U.S. fiscal policy, be it on immigration or on trade or on any number of issues. And that what this means then is that you have a solid foundation now telling you between the GDP and this, and of course the data is still incoming, which we'll get to momentarily, that recession is nigh. The updated set of PMI surveys, for that matter, from ISM, the Institute of Supply Management, will report the manufacturing sector numbers this week, services next week. Both are expected to slip below 50, so both are seen in contraction mode. Accelerating contraction is what's on the menu for manufacturing, ostensibly because front-running the tariffs is no longer an uplift for that sector. Nothing else to front-run. The tariffs are here. And the service sector, we'll see that next week. That's expected to get back into contraction mode. And of course, that's between 70 to 80% of the U.S. economy, the service sector. So clearly not great footing there. And finally, the cherry on the sundae here, bearish Sunday, but nevertheless, is the non-farm payrolls report, expected to give us 135,000 jobs added in the most recent data here in the sort of repeat of what was expected last time. Of course, 135 is where we saw it in March, and then the economy outperformed a little bit, gave us 228,000 jobs. We're coming back to still that 135 number here for April, and it wouldn't be so far out of the norm. As we can see here, it's kind of within the range of recent values, but nevertheless, a weak result in relative terms. And of course, the jobless rate seen holding at 4.2%. And again, while that is not terribly high historically, it also matches the high on the range that has held really since we saw unemployment back at 4.2% the last time, which was back in 2021. So here is the range of values, and we're expected to be at the top of it. The last reference point for where unemployment is like this is back here. So in all, not a happy story. And as we just said, this is a rundown of all three major engines of global growth. Between China, the Eurozone, and the US, you have 58% of global GDP. If these numbers come out anything like what is expected, even if they are marginally a little bit better, despite the fact that global economic data has tended to disappoint over recent weeks relative to forecasts, according to data from Citigroup, even if it's a little bit better, we nevertheless are looking at such glaring slowdown that a global recession seems almost inescapable at this point. And that, of course, has been the main issue. As we've been looking at the PMIs here, we can see that since the middle of last year, China and Europe have been increasingly weakening. The U.S. was a pillar of strength until the start of this year, when we get this rapid shift lower in U.S. economic growth around this tariff uncertainty. And so the U.S. is essentially converging on weakness in the other two major growth nodes. And without the U.S. to be the offset here, there really is no safety net. That doesn't bode well for cyclical assets like crude oil or stocks, but perhaps it can finally put a bid into the bond market, because if the markets think this is going to be a regular recession and not the empire self-immolating, as they were apparently concerned about last week, then it should mean lower rates, and it should give the Fed the ammo it needs to start talking about rate cuts in earnest in May, and then perhaps even starting those rate cuts with gusto in June. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go from there. I'm likewise on with Chris for Futures Power Hour Mondays and Fridays. On with Victor Jones for The Price of Truth on Wednesday this week. Back with Victor and Tom for First Call Sundays. Writing for the News and Insights portion of tastylive.com. Commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money's back tomorrow. Happy trading.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
I don't know how to do magic, but I do have a sense of how to use magic to steal money from the taxpayer. First, you need to take off anything that makes you look like a magician. That's key, Alex. The critical thing is to look like you're just a man in a suit trying to make a living. Goldman Sachs pulled off the amazing trick of making $3 billion in 3 months' time while the entire financial system collapses, foreclosures are at a record, and unemployment skyrockets, and the U.S. dollar collapses. Shall we begin?
Facebook.com. Mark, if somebody was to put the question to you about the magnitude of what you think you've launched, how big do you think your product or your service is?
Well, it's impossible to tell.
You said something interesting, which is not within their economic means. I don't know that their economic means should take precedent over public interest.
Welcome back. Here's a story to add to your bailout rage. It turns out we weren't told the entire truth about the banks. Honestly, you're probably not even hugely surprised by that. That's your plan for financial reform. Printing presses and accounting fraud. And it's happening at the expense of you, me, and every future person in this country because of the money machine that the bankers have running to pay off our politicians. As long as you can risk as much money as you want and pay yourself for all the upside and stick the downside with the taxpayer, human nature will just leave them to screw everybody in America for as long as it's legal to do so.
Remember, it got so bad in Egypt that there was a direct correlation between the growth in the GDP and the deterioration in the quality of life of the people because the people at the top were making their money at the expense of everybody else. It's connected. I'm not here to talk about plans to deal with this till 2017. I'm saying we've got a real problem, and I'm tired of Republicans and Democrats who either want Republicans who want to burn the place to the ground, and Democrats, with all due respect, who want to offer a plan that gets it through their end of their second term of their presidency, and then screws me and my kids when it's over. And until we do that, we have to deal with the extraction that is at foot. It is the reason the financial markets are behaving the way they're behaving. That is a mathematical fact. This is not some opinion. This is a mathematical fact.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
If you missed the live show, here's our cherry on top weekly recap. Matt, how about you? What did you get up to last night? Any shenanigans?
Watched a little hockey. Watched my pool get filled up with water.
That must be exciting. When it goes to each level, what do you do? Like, we
have a party.
You have a party?
Have a little party.
Do you fill it with cold, crisp bottles of Saratoga Springs?
No, you use Fiji water, don't you?
Avion?
No. Hose water, Sosnoff, so I'm going to tell the kids not to drink it. All right. Put up this picture. Can you please put the picture of me as an action figure? It looks
Did you
like
put him in a tracksuit. Is that tracksuit?
Tracksuit works. I don't really have tracksuits, but I do wear a lot of leisure stuff on the weekends, so I'll be good. The tricolor cookie is absolutely spot on. The coffee cup is spot on. The trading card is spot on.
It's a pink sheet, yeah. Like
the
a
disco ball, I can handle it. What I have a problem with is, how did Dylan Radigan get in my jeans? It looks like a collab between Tony and Dylan Radigan. It looks like Tom. Like, that's Tom. I mean,
that's because I did this one.
Right, that's Tom as a gnome. You're perfect. You did you, right?
Of course I did me.
Yeah, of course. I could have told you that.
So I have a can of Diet Coke. Liz and Jenny.
Can't say anything bad about that.
They have the zebra and the jade lizard. Jenny, of course, has a glass of wine. I did Jenny's. And her boat, her sailboat.
Yeah. You were very kind.
Also, I'm no dummy. I typed in the prompt, make her look younger and slimmer. I did Dr. Jones. So he has the dumbbell, a cold plunge pool, a calculator, and he's Florida man.
Jamal, perfect. The basketball, the football, the video games.
And the gears, because he's an engineer. Yeah, I did Julia's.
Yeah, perfect. She looks
She's
great.
the cat. So the thing, people think it's a chandelier. It's a quantum computer.
Mikey Butler's perfect.
Yeah, he's got the snowboard, the Chinese takeout, the dumbbell,
Yeah,
golf
perfect.
ball.
Mikey must have done Mikey. Let's go next one. Okay, who did my son dirty?
It was not me.
Okay.
It was not me. The same person that did yours did your son's.
Okay, they don't like Batista, so that's what I figured from the very beginning. Katie McGurgle's beautiful, perfect.
Katie is stunning. She is an icon. She has a Harry Potter wand, cowboy boots. If you haven't seen Katie try to teach Tom how to line dance, it's on our social. And then
Okay, now I know who did the Batistas. It's Gus.
I'm telling you,
turkeys don't fly. They can get airborne for a second.
Called him a wild turkey.
You can get airborne. Well, you couldn't get airborne.
Turkeys fly. Turkeys fly. I've seen turkeys fly.
Turkeys do not fly.
A wild turkey doesn't fly, you're telling me?
You've seen a turkey fly.
When Tom's out on those survival missions that he frequently goes out on with just a knife, and he hunts.
When I'm taking a hike in the woods, I've seen wild turkeys flying all over the place.
Mm-hmm.
Get the full scoop by checking out the archives at tastylive.com.
What is going on, everybody, and welcome back to Risk and Reward with Gus and E. Today's Tuesday, early into the week, experienced some little volatility in the market. We've got another risk of the week for you guys. So we got our picks down. We're going to do a little overview on what type of picks we picked over the last few weeks and kind of how those played out. And then we'll get into a little bit of a tour to market. But before we do that, Gus, my brother, How we doing today?
Doing well on the markets, doing well in life. I'll tell you a funny story. Last night, I was laying in bed, and there was this random rhythm stuck in my head that kept playing, and I was like, man, where did this get stuck in my head? Did I come up with this? Where did it come from? And it was our intro song. It just clicked with me just now that it was our intro song for our show, and I was sitting there trying to figure out where it came from. So yeah, still it's still pretty new. It's probably only like the 7th or 8th time that I've heard it, I guess. But that made me laugh.
You know, those start to sneak in your dreams at about the 5th or 6th week. So we're right on. Yeah,
schedule. when I worked at UPS in high school, we had a bell that would ding every time someone opened the door, and that all of a sudden be in my dreams at night after a busy day. I'm sure everybody knows the feeling. If you ever worked in a McDonald's, I hear horrible things about the fryer done noise getting stuck in your head.
Oh, I can hear it right now. But it was a longer. It felt like a longer weekend. Not really. Did you watch the draft? Did you see some of your buddies go to specific professional teams that you wanted them to go to? What was your experience with that? Are you excited? Where are you at with the draft?
Yeah, I did watch the draft. I just watched the first round. I had I think I turned the second and third rounds on as background noise for a little bit, but I wasn't really paying too close of attention. But I was dialed in the entire first round, made good on some draft bets, which is always a good feeling. And I was pleased. I'm a Bengals fan. I was pretty pleased with our selections. We picked up Shamar Turner from Texas A&M in the first round, which was really awesome. I think that's great. I've just watched him play for 4 years. He's exactly my age, which it's weird that most of the people getting drafted in the NFL are my age or younger than me now. Majority of them younger than me. I guess the dream is dead. I guess I can go ahead and officially say I'm not going to play in the NFL.
With that attitude, absolutely it is.
Enjoyable experience. There was some surprising picks, some not so surprising picks. It was a fun watch overall. Green Bay did a good job putting on a good show. It really made me think. You know how motivated of a football fan you got to be to travel across the country to the draft. Like I was seeing, Jacksonville and California fans and all this at the draft in Green Bay.
Really?
Yeah, it was
didn't know that was a thing.
Oh yeah. It's a big thing. People go and support, and whoever's hosting the draft always has the most fans, obviously. But I was really shocked at the diversity of fans. There were certainly plenty of fans of every single team in the league that they kept cutting to, and that's some dedication that I do not have. I don't know that I will ever have.
Yeah, 100%. It was exciting. I know we got Bo Nix. We're rocking with our young QB over at Colorado, Denver. And I'm excited to see what he's going to bring into this next season, So it's always cool seeing young talent get drafted into the league. And we'll go from there, but we'll see. Broncos and Cincinnati, we'll have to see when that weekend rolls back around. And that'll be the risk of the week.
We both like orange teams that start with B, Anyway, sorry, go on.
We do. Oh, there we go. I'm colorblind, so news to me.
It don't matter. They could be any color.
It don't matter. But no, risk of the week, Gus and I, we can go ahead and pull this up, but Gus and I, we have a little scoreboard down at the bottom. It's 2-1 right now. We both have a position open that we had put on last week, correct? That was a position that you put on last week that's still open?
Yes.
Okay.
And I also I wanted to make a clerical point here. When you gave me the rundown of your wins and losses, there was an extra trade floating around in there. I don't believe.
Wait.
I don't believe that Spotify was one of your risks of the week. I went back through the other slides and never saw it. I didn't see it there.
No, it wasn't.
Yeah, you would include it. Okay. This is correct then. This is correct.
Oh, this is correct. I don't even know that. Is it Spot? Is that the ticker for Spotify?
Yeah.
I don't think it was Spot. You're gonna have to double check the message. It might have been Shop.
Oh yes, perhaps I'm confusing my F5s.
All right,
but yeah, one of those was not. You had an extra.
Valid. Okay, I quickly, as we get into this, I'll let everybody know exactly what happened. We're breaking down the trades that we had put on for the week, and I do remember subtly slipping Shopify in there. And put that on one of the and legitimately, I did put it on for one of the risks of the week, but I don't think I actually had it on the slides because I believe I went with a different underlying than I might have went with. Maybe something along those lines. I was waiting for you to bring that up.
It was definitely mentioned. I know you talked about having a position on stream, but I was like, is this a risk of the week or not? Did he double down? So I decided we could discuss that right now.
Well, I will check the dates on that Shopify position, and if it lines up, we'll leave it. If not, then rightfully so. We'll take it off the board. But right now, one position open.
Asterisk at the moment.
Asterisk. And I got a gold position open. And as we get into the first one for the risk of the week, what is the one position that you have open, Gus? Let us know.
Meta. I'm taking the angle on Meta here. It's obviously like peak earnings week this week, and this is an earnings trade, which always comes with its own inherent set of risks. My exact trade, I believe that should say May 10th, unless my dates are mixed up. It's a 10 DTE bull call spread. Bought the 530, sold the 535. Some technical angles, some sentiment angles going here. Building big on Google's earnings from last Thursday. They had really strong ad revenues, and I'm expecting Meta to post similar numbers. Meta still is also, relative to the Mag 7, still pretty beaten down from this tariff sell-off. I was surprised comparing the charts. It hasn't recovered necessarily to the degree that some of these other ones have. Obviously, it is recovering, but it seems to be lagging behind the pack a little bit in that regard. So it seems like we're maybe due for a catalyst to cause a correctional move and catch that back up with the rest of the pack. They've beat estimates in 9 consecutive earnings reports, so I'm choosing to go with hot hand fallacy this time instead of gambler's fallacy. Oh, we lost Errol. It's all right. I'll entertain you guys. Potential for pre-earnings run-up, risk-free exit tomorrow. He's back. In a risk-free exit tomorrow. This is also something that I'm heavily pricing in with how close to expiration this is already. I'm not relying so much on the premium falling apart. There's going to be a considerable amount of theta that already hits me overnight tonight, even despite these being in the money. So if an exit opportunity presents itself pre-earnings tomorrow, I will gladly take it and take the risk off the board. But should it not, I'm happy to hold through earnings as well. And then, short DTE helps to minimize surface area for tariffs to shake up the entire market. Obviously, tariffs are the word of 2025. And I'm keeping this a little bit shorter term just to, like I said, I don't want 30 days of surface area for something tariff to happen and tank the entire market or something to that end.
Right.
Keeping it short, keeping it deep in the money. Meta currently at 554 closed today. Not sure about post market. But yeah, 554.44. So plenty of room to the downside as well. I have a little bit of built-in tolerance. And yeah, Meta is going to be the risk of the week for me.
I love it. I mean, I like Meta. I know Meta changed its name from Facebook to Meta. Personally, I thought it was a pretty smart move. I'm not gonna lie. I thought the metaverse was gonna come along a little quicker than it's coming along now. But I still think, as of now, just a side note, the change name I think is gonna look like a genius idea 5 to 10 years down the road when the multiverse, virtual reality, all these things are a little bit more developed, and then they have the name like Band-Aid is a brand, and we call Band-Aids Band-Aids. I think Meta's kind of doing the same kind of marketing play there, where it's going to be the metaverse, and they're going to have the name of the overall industry. So I like Meta.
I certainly agree, and I think that people, and myself is really what I mean, but I think generally speaking, people tend to forget that Meta also owns WhatsApp, which is gigantic and making 100%. Its own whole slew of money. So that's a considerably large holding of theirs that I feel like doesn't get enough coverage.
100% valid. And as we know, Instagram as well. I know Facebook, I don't know how big Facebook is on their algorithm and videos. I don't know how much people consume video content on Facebook, but Instagram has Reels. It's been doing a little bit better. It tries to compete with TikTok, not all the way there in the sense of the algorithm, but sometimes I forget.
I hear the younger generation is fond of Instagram Reels. I think that's just a little bit after our time, but I do think that Gen Alpha, I suppose that they're old enough to be on social media now. Gen Alpha and younger Gen Z people, basically high school age or younger right now, I think that there is Reels does kind of have a stronghold on that demographic, which is interesting and kind of inexplicable, but that's what I've gathered.
Interesting. We got Meta for the first risk of the week for Gus. I had to go Microsoft. I enjoy Microsoft. I have my position, but I may be adjusting it tomorrow. I might leg into an Iron Condor. I'm not exactly sure what I'm going to do yet. But I did sell a put spread. I sold the 40 Delta put spread on Microsoft from now, down a little bit on the position. They do have earnings April 30th after the bell. So I did put it on a little early, about 24 hours early. I could have waited a little bit longer, but I wanted to get ahead of the curve a little bit. But strong cloud growth for Microsoft with Azure. Azure continues to be a key revenue driver for them. And there's everlasting growing demand for things like cloud services. I know the other day, I was getting a notification again that my cloud storage that I already upgraded is already getting full again. And it's about that time to start upgrading that storage again. Not only that, going to my Gmail, almost running out of storage on the, and it's like, yo, this is kind of crazy. It's a good thing I don't just have hard drives that I'm dealing with. So these cloud services are very prevalent within my daily life, in doing work, getting work done. And I'm sure it is with you. And I'm sure the cloud services are just ever going to be growing. Not only that, the integration with the Chat GPT, I've been interested to see what more they're going to be doing with things like Chat GPT and the developments into that area. So overall, not that we care too much about the fundamentals, but I am going to be leaning bullish into Microsoft. What are your thoughts on the ChatGPT integration with Microsoft? When I first heard about it, I was like, yo, this is genius. Also, that was my first reaction because ChatGPT just started to pop off. So I was like, yo, so smart. They grabbed them first. But at the same time, there's so many more competitors out there now that ChatGPT that legitimately look like they have a chance to rival ChatGPT, like Claude, Grok. There's so many, there's a handful of them. But that one stands out. What are your thoughts on that, Gus?
Yeah, I think that you raised two very interesting points here, and I think that these are the two forgotten points. These are the two WhatsApps of Microsoft, so to speak.
Yeah.
Really happy you hit on the cloud growth. That's a big thing, and I think cloud computing is this kind of quiet industry that doesn't really get talked about a lot in the media, and it's a little bit underground. But like you said, and I would bet everybody watching has some experience with cloud storage, even just in the last week, and that's just on the personal level. When you scale that up and consider that every business in the world basically needs this to function at this point, it is a really strong part of their business that I think a lot of people neglect. And when you look at the list of companies' market caps in the world, and it's Apple and then Microsoft, 1 and 2, you might say, oh man, how is Microsoft still even managing to keep up with Apple? And it's this cloud stuff. As far as the ChatGPT integration, I don't know. AI or die is a term that I've been throwing around recently. I think that pretty much all tech companies and really businesses at large kind of have to be integrating AI in any way that they can to even stay viable and keep with the times. And so I think that it's a very good thing that Microsoft is doing that. I think that they've partnered with a very strong company in OpenAI and ChatGPT. But I don't know how much I think that gives them a competitive edge moving forward, because I think that the playing field is going to level out to that end. And I'll also add, stop putting AI in things where it doesn't need to be. Like I'm getting
like what? Give me an example. I need to hear an example of this.
Like CapCut. CapCut wants me to talk to CapCut AI as I edit videos.
Okay.
Why? You don't need that. I actually thought it was kind of interesting at first, and I tried it. It's not even super functional. It really can't even do what you're telling it to do at this point. So it's half-baked. It's unnecessary in the first place. Why is it here? And I've been seeing that a lot recently. Online shopping too. Like, where was I the other day? Gymshark. I think I was on the Gymshark website, and they want me to talk to an AI. Why? Why in the world do you have an AI talking to me right now? I don't need this. Minimize. Get it away. So yeah, I do think that it's trendy.
Great point. I gotta ask. With the CapCut AI, I'm curious. Is it direct feedback that the AI wants? Is it AI that's going to do some of the editing, color, whatever the editing is? So for example, the point that I'm getting at is, for example, whenever we call like Domino's or something with the customer service, it is a pain in the butt to speak with the AI customer service members. So I've always noticed with AI, the communication in terms of customer service has always been lagging behind for a long time. So I'm curious, is it the feedback that is like, this isn't necessary, or is it the AI doing its job on a project that is good? Or is, I'm curious with your experience.
Well, yeah, in that case specifically, it's that it's supposed to be able to help you with projects, and it's just not all the way there yet. And if it was all the way there,
brainstorming idea, like feedback, or actually
whatever you need. Yeah, I mean, in terms of ideas and brainstorming and things like that. I mean, it's just powered by, I'm not sure, one of the 3 big AI companies. But yeah, you can talk to it like a person, and it'll give you some feedback, and it does a good job of that. But when you actually get into tangible editing things, and you're like, can you split this such that XYZ happens? It really is kind of lacking in that capacity. And I think another big issue right now is people calling things AI that are not AI. And this has been frustrating me for a long time. Somebody could pull a bad trader clip of me from over a year ago. I remember that there was a tractor, like a combine, a harvester for a farm. And it was like, this combine uses AI to only pick the ripe fruits, and it's literally not. It is a hard-coded robot that scans the color of the fruits and only picks the ones that are ripe, and that's cool. That's a really cool piece of technology, but it's not artificial intelligence. This thing isn't. It's not thinking. It's not creating anything. It's a hard-coded robot doing that, and I see that time and time and time again. I'll throw out a specific one right now. Bank of America. Bank of America has a little chat function inside the app where you can ask to see your account numbers, routing numbers, statements, etc. And it says AI. Talk to our AI assistant. Not an AI assistant. It's a hard-coded thing. If you say something too complex, it will say, I don't know how to provide an answer to that. An AI would never say that. So it's just, I feel like we're overusing the AI label.
Is it purposely using the AI headline for buzz, or is it literally a misconception of what AI is, or you think it's a little bit more for the marketing?
That's a good question. I would need to be inside the executives' heads to figure that out. I really don't know. T-Port and chat, case in point, Apple Intelligence. Exactly another thing that I would float. I mean, the only thing that I'm a little bullish on as far as Apple Intelligence is if they could get Siri competent, because Siri has always been behind. There's so much that she can't respond to. So if Siri could talk back to me with AI, that would be cool. Outside of that, they're just trying to force me to do things, and I have to close out of things just to do what I want to do. Like, it gets to be a little much.
Yeah, I think that's completely fair. Lastly, on the point that you made, if you're not adapting with AI, you're pretty much going to be left in the dust. I mean, I couldn't agree even more.
AI is the internet.
The efficiency, absolutely. And I did say the same. I got to admit, I did say the same thing about, I think the use case is a little different as of right now. But I know Grumpy Mike made the comment about the metaverse came and gone and it's not coming back around. But I'm like, did we say that about the internet? But I think comparing the AI to the internet is a little bit more of a better comparison.
Yeah, I mean, it's just the internet in terms of, when the internet was first coming around, there's countless companies that refuse to adapt to the internet, and they wind up dying as a result. You guys can check out my Business Blunder series on TikTok where I detail lots of those companies that failed to adapt. But it's adapt or die. It's find a way to integrate these things. But the most important thing is finding a way to integrate them that will actually give your customers utility, and not just integrating them to say that you have AI, which I feel like is happening far too often.
100%. So we got Meta, we got Microsoft for those picks. We got a lot of earnings coming up here soon. But SPY is up on the day, seeing a little bit of a rally into the afternoon. Finally, a lot of chop throughout the day, and with the market rallying a little bit to the upside, we're getting a little bit of contraction on VIX. Again, we were spoiled. We were trading a very high VIX for about a couple weeks now, and I mean, granted, sitting at a 24 is still sitting pretty. I mean, 24 is still better than 16, 17, 18 from whatever we were trading all of 2024, it felt like. But that's what we got going on in SPY. That's what we got going on in VIX. QQQ is going to look like a very similar story to SPY, looking a little bit more volatile here, but we're closing things strong. So we'll see what we get into tomorrow and for the rest of the market. But I do have a few positions on here, Gus. We got a SPY position, sold a call spread. This one is going to expire out in June. Not looking too hot right now. So if the market pulls back, but we got about 52 days for that to happen. Silver, sitting about break even on silver. Been in this position for like a month. I mean, we're sitting break. That's how it is sometimes. But we're sitting break even on silver. QQQ, got a few positions on here. Made a little bit on the calls today. Down on these weekly contracts that are going to expire on Friday. So I was kind of happy to be able to hedge some of the profit from today, because if we keep rallying today, that weekly call spread to the downside does not look like it's going to pay out. Other than that, we do have a longer dated one. It's past 21 days to expiration. We have 17 days left. This one's down a little bit. This is the May 16th cycle on QQQ. As you can see, QQQ is a fan favorite according to Arrow, because I got like 6 positions on in QQQ. But that's QQQ. Microsoft, we put this one on earlier today for risk of the week. We sold an out of the money put spread. We did get a little aggressive on this one. We sold the 40 delta, which is pretty close to the at the money. But we did that one out in June. And I'm going to be holding this one through earnings. I chose a later dated cycle because I did put it on early. On top of that, I'm holding it all the way out through June, and we have earnings coming tomorrow. Gold, still sitting in this one. This is one of the trades for risk of the week. I got the June 20th expiration in here too. We're up a little bit on it. Gold we did see a pretty decent pullback in gold after that insane rally that we had saw. I was considering taking the gold position off, not too sure. I was like, is is gold going to calm down now, or are we going to rip and make new highs? So we'll see what happens over here. But we do have a position on in gold. And then we were trading a little bit of the micro NASDAQ futures today. It was kind of annoying. I had swung one of those positions, and of course the market wants to rally and go crazy overnight. So I had to close that one off, and then was able to do decent today to make some of that back. So that's kind of where we're sitting right now. But we do have the gold position on, and then the Microsoft position for risk of the week. Let's go ahead and check out Meta too, Gus.
Yeah, absolutely. Yeah, Meta risk of the week. Like I said, I can tolerate all the way down to 535, which under normal conditions would be like a lot of room. Right now, it's like just enough room that I'm comfortable to the downside in terms of the broader macro context and also with earnings coming up. But yeah, I mean, just looking for a break higher. Like I said, been lagging just a little bit behind the other Mag 7s in terms of recovery. So hoping for a bounce out there. Also have 4 shares of Meta that I picked up at the bottom. Those just flipped green.
You're like, I don't know where those came from.
Yeah.
Oh, nice.
What's this cheeseburger doing in my pocket? But yeah, I got those 4. So those just flipped green yesterday. Did some other portfolio management today. I exited my CCK shares. I mentioned when I opened that Crown Holdings position. This was a position that I tailed Congress on. I did not know why I was doing it. I did not know why there was big inflows of money from Congress. And would you look at that? We get this gigantic pop out of earnings. They gave really attractive forward guidance. It was good numbers. So exited pretty much at the top of that today, something like 10 a.m. Additionally, I have some Broadcom shares, AVGO. I've been holding these for a while. This was actually one of my best entries at the bottom, and this was when I was just blindly buying the top 10 market caps. Was when I picked this up. I have 7 shares. I bought them at 158. So I would really like to see 200, but we're up so much that I'm really debating what to do with this position. So I think I'm going to give it through this earnings cycle and then kind of reevaluate. I only opened these on April 3rd. So April 3rd, 158 to 191 is pretty perfect timing on that. So deciding what to do there. And then additionally, I missed 2 trades today. FOMO has kind of been kicking my ass. This morning, waste management. You all know how I love waste management. Bad earnings. It fell by 1%. And then as you can see, the wick there immediately recovered. I was eyeing this thing at about 8:45 a.m. when it was down and saying, man, I kind of want to take like some 30 DTE, something vertical, something like that. I feel like we're going to recover. I didn't. And by 10 or 11, it had already run away from me. So kicking myself on that one, but we ball. And then also Gilead, midday, Gilead Sciences, that's GILD. Midday today, they were trading up about 0.5%, and news broke that they were going to have to pay out $202 million settlement for giving kickbacks to doctors who would prescribe their HIV medications. So they're settling out there. That news broke. I saw it. It was on CNBC, which is by no means a niche news site. And nothing happened. And I was sitting there eyeing it on the 5-minute candles and waiting for a candle to break red. There was like 3 more consecutive green ones, and I was like, okay, well maybe the market already priced this in. I look back an hour later, and wham, it's down 0.5%. Would have been down 1% on the day. So wanted to go short there and laid off. No one ever went broke holding cash, but no one ever made any money doing it either. So yeah, it's been a FOMO day for me today, but there will be more trades tomorrow.
Yeah, no, I mean, just from my eyeball view, this looks like a crazy move. This looks like somebody got sued for $220 million. I mean, that's what that move looks like. So, goodness gracious, it looks like a lot of the underlines that you chose gave some type of move. Whether that was a massive move to the upside or downside, maybe that's a testament to where volatility is sitting right now. But we're definitely getting some directional moves. So kind of cool to see some of these play out here.
Yeah, the Gilead, I think this was started by some poor test results. They were like talking a big game, like they were definitely going to get such and such approved, and then it didn't, and then they started the fall, and now they're getting sued. So yeah, incredibly bearish on Gilead Sciences.
So that's what the portfolio is looking like right now. Gus kind of breaking down what he's looking at. I'm eyeing SPY right now. So once I get out of this short position on SPY, I'll let you guys know when to get long. And then we'll see how the silver position plays out. And then gold. Gold is one of those ones I've still been eyeing. It's one of those that is it's like the devil on my shoulder. You know what I'm saying? Like it looks like it's still in play, extremely volatile. Is the high put in on gold? I hope so for the sake of my position. But other than that, that's all that's been catching my eye. So we'll see how earnings play out. Anything else to add, brother, before we hop on out of here today?
Yeah, no, earnings, these Mag 7 earnings probably going to bring some volatility. So yeah, everybody strap in, trade small and trade often, as we always say. And yeah, just proceed with caution, which I feel like is good advice in this market in general.
Absolutely. Nuggets in 5. And I hope everybody has a great rest of
Rockets
their day.
in 7. We're going to shock the world.
I'm not going to lie. I'm kind of sad to see LeBron going out sad like this, but Anthony Edwards is an absolute dog. I can't even lie.
I think that we will look back on this series as LeBron passing the torch to Edwards as the face of the league. Honestly.
I think so. Absolutely. He deserves it. He's just got a different type of mentality. You know, there's a lot of guys that have a certain skill level, but some people just have that edge. And I think he's one of those guys that has an edge.
Yeah, he's got it.
Anyways, he's it. Yeah, he might be him. But anyways, we'll see how the rest of this plays out. We'll see how earnings plays out the rest of this week. And we will give an update over here on Thursday. So make sure you tune back in at 4:30 Central Time on Thursday with us. We'll give a quick update. Thanks for taking the time to hang out with us today. And we'll catch you guys next time. Peace.
All right, Tony, we have a big week of earnings coming ahead in a time of high volatility and uncertainty. How are you choosing to attack this week of earnings, and do you think that there's anything that traders should be aware of?
I think earnings become less important when you have volatility in the overall market, because sometimes a lot easier to find a higher probability trade in a longer dated time frame than you would for earnings. But if you are going to trade earnings, I think you have to trade it much shorter term and probably directional. And with this implied volatility being so high, it's going to be even higher in these earnings trades, which means that all options are going to be priced a lot more fatter. And if they're fatter and you're selling them, then you can get a higher probability of success and be further out. So I think you have to trade them directional, and I think you have to trade them shorter term for earnings themselves if you're using options.
If you missed the live show, here's our cherry on top weekly recap. Bat, how about you? What did you get up to last night? Any shenanigans?
Watched a little hockey. Watched my pool get filled up with water.
That must be exciting. When it goes to each level, what do you do? Like, you know,
we have a party.
You have a party?
Have a party. Do you fill it with cold, crisp bottles of Saratoga Springs?
No, you use Fiji water, don't you?
Evian?
No. Hose water size enough, so I'm gonna tell the kids not to drink it. All right. Put up this picture. Can you please put the picture of me as an action figure? It looks like
put him in a tracksuit. Is that tracksuit?
Tracksuit works. I don't really have tracksuits, but I do wear a lot of leisure stuff on the weekends, so I'll be good. The tricolor cookie is absolutely spot on. The coffee cup is spot on. The trading card is spot on.
It's a pink sheet, yeah, like a
disco ball. I can handle it. What I have a problem with is, how did Dylan Radigan get in my jeans? It looks like a collab between Tony and Dylan Radigan. It looks like Tom. Like, that's Tom. I mean,
that's because I did this one.
Right, that's Tom as a gnome. You're perfect. You did you, right?
Of course I did me.
Yeah, of course. I could have told you that.
So I have a can of Diet Coke. Liz and Jenny.
Can't say anything bad about that.
They have the zebra and the jade lizard. Jenny, of course, has a glass of wine. I did Jenny's. And her boat, her sailboat.
Yeah. You were very kind.
Also, I'm no dummy. I typed in the prompt, make her look younger and slimmer. I did Dr. Jones. So he has the dumbbell, a cold plunge pool, a calculator, and he's Florida man.
Jamal, perfect. The basketball, the football, the video games.
And the gears, because he's an engineer. Yeah, I did Julia's.
Yeah, perfect. She looks
She's
great.
The cat. So the thing, people think it's a chandelier. It's a quantum computer.
Mikey Butler's perfect.
Yeah, he's got the snowboard, the Chinese takeout, the dumbbell.
Yeah,
golf
perfect.
ball.
Mikey must have done Mikey. Let's go next one. Okay, who did my son dirty?
It was not me.
Okay.
It was not me. The same person that did yours did your son's.
Okay, they don't like Batista, so that's what I figured from the very beginning. Katie McGurgle's beautiful, perfect.
Katie is stunning. She is an icon. She has a Harry Potter wand, cowboy boots. If you haven't seen Katie try to teach Tom how to line dance, it's on our social. And then
okay, now I know who did the Batistas. It's Gus. Okay, Gus did the Batistas. All of a sudden, he's all buff and what the? This is Gus did the Batistas, I'm 100% sure. And Gus, I will be coming for you.
I should have been. This should have been me.
Yeah, he looks like The Rock. Yeah.
Mommy and Daddy are fighting, okay? And you guys are not getting along. I am not going to come in here and try to mend this broken bridge.
He's just having John withdrawals, that's all.
With you, it's hard.
She always has her A game. Wait, go ahead. I'll take the pressure. I'll take the heat. What do? I love this.
What's the line you always use? It's hard to fly like a turkey.
Fly like an eagle. It's hard to soar like an eagle when you're working with turkeys. Turkeys don't fly. We're like, I cannot with him. I just sometimes.
Wild turkeys
Did you just
fly.
call me a turkey?
What's that? Wild turkeys do not fly.
Yes, Beth. I think you and
Did
me.
you call
I
me
think
a
this was
turkey?
more.
I didn't call you. I'm calling
No, I think
Scott.
it
Turkeys
was
don't
me.
fly. They can get airborne for a second.
I called him a wild turkey.
You can get airborne. Well, you couldn't get airborne.
Turkeys
for anything.
fly. Turkeys fly. I've seen turkeys fly.
Turkeys do not fly.
A wild turkey doesn't fly, you're telling me?
You've seen a turkey fly.
When Tom's out on those survival missions that he frequently goes out on with just a knife, and he hunts.
When I'm
he
taking a
sees
hike
wild
in the
turkey.
woods, I've seen wild turkeys flying all over the place.
Mm-hmm.
Get the full scoop by checking out the archives at tastylive.com.
I love to take risks. I love the instant pain, the instant gain of trading. I would describe my trading style as a calculated risk taker. I like to play towards volatility, which is something that you can quantify high and low points of. Well, my favorite strategy currently is the diagonal spread. I like the idea of having defined risk, but while also having a little bit of positive decay that works in your favor if you're not directionally correct. But the best part about it is the positive gamma that you get from it. I really like that the position can grow and get bigger as you're more correct on that position. So I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
All right, Julia. All right, Nick. All right, Mike. All right, Jamal. All right, Glenn. What was the last trade that you made?
Oh, it was bad.
Oh, man.
I bought SQQQ. It's like a 3x inverse ETF. I feel like I get shit on for the inverse ETF trades. They're not, I wouldn't say they're always good trades, but I'm like, I kind of don't want to get in the options right now, but I want some leverage.
I got long some Apple and it just happened to work out in the last about 5 minutes here. So I sold a wide put spread out in May and it basically lost half of its value in the last 5 minutes.
My last trade was closing out a meta calendar spread that was worthless prior to the 500-point rip in the E-minis.
Last trade I placed was I closed out a put spread in SPY. It went well. I regretted to say it was a long put spread that I put on yesterday into the big move, and I closed it out since we retreated in price today, and it's worked out well.
Short gold options.
How'd it pan out for you?
We're still alive, but we're not looking good.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
Oh, yeah, it's Tuesday, April 29th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast. A little podcast called The Price of Truth, a show where we like to explore the incentives that govern our world. We got a good one today for you, folks. We've got the one, the only, the incomparable Mr. Christopher Vecchio. Chris, how you doing, my friend?
I'm doing well, Vic. I'm enjoying these markets, getting ready for tomorrow's GDP report. Looking forward to the Knicks closing out the whiny Detroit Pistons tonight. How are you?
I'm good. I've been staying up a lot the last 2 days, tracking price action. It's just too meaty, you know what I mean? And I miss slanging futures. I don't really get to do that if I go to sleep after the open. So I don't know. Just been slanging them, man.
It's been a good week to slang them, Vic.
It has. More on that in just a bit. Before we get there, let's say what's up to the people. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tastytrade desktop and mobile applications. If you don't have both, go get them. But if you want to be part of the little chat box in the middle of your screen, did I get it? There's only one place you can do that, and that's on Tasty Live's YouTube channel. Head on over there, subscribe to the channel, and start bashing your skull into the keyboard, create randomized characters, and spoof the Google algorithm into getting us in front of as many people as possible. Off, and away we go. The last couple of days, man, a whole bunch of nothing, I suppose. Markets leaking a little bit higher. Bonds leaking a little bit higher. Nothing really happening except vol compression, but even that's not doing a really good job. What say you about the last 2 days of price action, Christopher Vecchio?
Feels like the calm before the storm. The back half of this week is loaded with a ton of event risk. On the macro side, you're looking at GDP tomorrow, ISM manufacturing, jobless claims on Thursday, and then, of course, non-farm payrolls on Friday. That's not to say anything about ISM services that loom around the corner next Monday. And, of course, earnings with the big tech companies. So are we surprised that the first 2 days of this week were mostly people hanging out, keeping their powder dry, nudging the market higher on some commentary from administration officials that indicate that they've got the message from the bond market back in early April, that they can't do this the way that they want to do it? Yeah, that's all nice. But volumes are light, and quite frankly, I can't help but shake off the feeling that we are set up for a bit of a surprise like we were on February 21st when we had those PMI reports that told us recession was looking more likely, and the market went down, and then we entered a streak where we just kept falling and went into a growth scare that became the tariff scare. So GDP tomorrow morning, wide range of estimates. I think that's what makes it such an interesting report. Atlanta Fed minus 2.7%, New York Fed plus 2.6%, Bloomberg consensus 0.4%, Refinitiv or Thomson Reuters consensus, I think 0.5% right now. Bunch of people are going to be wrong. So we're going to learn a lot tomorrow morning.
You pulled up?
No, I was kind of. I mean, in the sense that I had sold a put spread on March 14th, and that was at 47 days to expiration. And I wrote it out until today, until I got back to break even after a very significant drawdown in early April. So no, I'm not bulled up. Recession seems like it's coming given all the commentary we've seen, and I don't think that we have enough off-ramps yet to suggest that we're not looking at a potential slowdown. So as long as we're tracking towards a slowdown, I don't know a world in which stocks like that.
I'm super conflicted because the price seems, I don't want to call it rich, but it doesn't seem attractive. But here's the flip side. The flip side is, you're right, there is a bunch of event risk this week. And to me, I know that those can collectively be a bit scary. And you can go, what are the odds that we just tiptoe past all of these landmines? And I don't think the odds are that good. I do think we're still in this period where the soft data has been much worse than the hard data. There's a bunch of stuff that was pulled through, so a lot of people's earnings numbers have been great, but their guidance is dog shit. The surveys are horrible, but the hard data is not so bad. If not, it's actually pretty good in some cases. So the risks are really well balanced, but there's a part of me that goes, they're going to crush vol after this week. Right? Like, you're going to get past all this earnings event risk. You're going to get past the PMIs. You're going to get past the ISMs. You're going to get past the GDPs and past the labor reports. And the weirdest thing that could happen right now, because I think most people are like, all right, 5,500. This is all I hear. I'm not buying here. I'm not buying here. We're going to retest the lows. And I hear it so often that I'm like, I think that's the right way to position, honestly. And I even feel that way. But when everybody says it, I'm like, the most probable thing is we go make everybody chase. We go find 5,800. We make everybody chasers from here. And it's just a feeling. I have nothing to back that up. But it's the sentiment here. It's so negative. And the vol is so high, which means people expect lower prices, so they're not overpositioned, and they're hedged up. So what's the worst that can happen in that environment? I guess anyone can come out and they can let Navarro get a microphone again, and you'll get a tape bomb. But do you see what I'm saying here? What's the worst that can happen when you're hedged to 25 and 30 VIX?
There's a part of me that's, while I'm super worried about GDP, I think to suggest that it could come in bad isn't exactly a surprise to people.
Exactly.
Right. And, we were talking about this last week with Tesla. The sky is falling for Tesla.
Didn't matter. It's already in the price.
But like, we knew that because we've seen the reports and we've seen the data and we've heard the stories and, hell, they're firebombing Tesla dealerships. Okay. Like, message received. But it was all there. So the market told us, okay, the worst is over. That's possible. There's a framework here that I was toying with Jamal and Dylan today on overtime, right?
Mm-hmm.
We've had this attitude for the past few weeks that economic data from January, February, throw it away. It's from the pre-tariff world. And recently we're saying March matters, but really let's see what happens in April, the April data. Like March and April, that's the sweet spot right now for what matters. Ignore January, February. And to that extent, 2/3 of the quarter, at least for the initial GDP calculation, a little bit more than that actually is weighted towards January and February than it would be for March. So there's a reason to think that maybe things didn't slow down terribly in the actual initial figure. If we go into a world where we get a trade deal announced, a series of trade deal announced from India, Japan, South Korea, frameworks of it, memorandums of understanding, does the market go into a similar mindset and say, well, this GDP data, it's from the pre-agreement world?
Mm-hmm.
This has no bearing on what the future holds. Just like January and February data really told you nothing about what corporate earnings would be like for the rest of this year. What happens in, say, April, May, June may not be illustrative of what's to come moving forward. And I think the market's trying to hang its hat on that. And I think the administration, it doesn't know, but it knows. They just received the data about what the Q1 GDP report will be like, and given the Trump administration's penchant, really I should say Trump's penchant in the first term to brag about good non-farm payrolls reports before the actual data was released, I would posit that maybe one of the reasons why we're hearing such significant discussions around a potential trade deal today is due to the fact that they're anticipating a weaker GDP report tomorrow. And if that's the case, you can blunt that impact by rolling out a trade deal with South Korea or India or Japan tonight before 8:30 a.m. And you can tell the market, yeah, the first quarter was rocky. That's the transition we talked about. But the pieces are beginning to come together. You can look past Q1 GDP. Let's talk about what this new Q2, Q3 world looks like now that the trade deals are in place. That's a tough sell, but maybe that's the window with which traders are looking right now, which is why we find ourselves still holding on to gains despite pretty bad earnings from SMCI and Snapchat.
Yeah, I think I want to be very clear that there's a difference between what I think will happen with the real economy and what I'm talking about potentially happening over the next 2 weeks with financial prices.
Oh yeah,
so
sure.
I think there's a clear and obvious meaningful slowdown happening in the economy, and I think as much as you try to play with the headlines and create, a financial pump, there's an economic reality that people have to price at some point, regardless of a single day's price action or maybe a week's price action. I'm just saying the positioning is fairly negative, and the sentiment is still, though we're a couple hundred points higher here, it's very still seems a bit washed out. And whenever those moments happen, it's a weird, sick thing that can happen. It just sucks everybody in by going higher. It's like, oh, you're not bullish here yet? Okay, let's get to 5,800 and then let's see what your opinion is. And it's like magic. People aren't bullish at 50, 55, 50, but they'll get bullish at 58, and then the market will run them over on the way to lower prices. I'm going to talk bonds with you for just a second. Bonds at 117, to me, I think is one of the most interesting moves to get back to 117. We're at this level that was so boring for such a long period of time in bonds. Do you have a strong opinion here? There's been a little bit of a flattening. We went from 65 basis points in the 210 curve, and The 230s tighten up a bit. Would you be playing a flattener, a steepener? Do you just want to be long the long end? Are you flat altogether? Do you have a sense of how you want to play bonds here?
Yeah, so today I took my ZN short iron condor position and rolled it out, in part because I think that the market is giving us a bit of a floor underneath the lows that we saw recently near 109. I'm increasingly convinced as we've made our way through the month of April, a talking point that you and I have had for a number of months now, which is that if there is a Trump put, if it were to exist, it's not in SPY, it's in TLT. Not a unique thought among us, in part because the administration has been telling us as clear as day they're not looking at stock prices and they don't think that stock prices should be this high. So the focus on long end rates, as they've said, they want to refinance debt at a lower rate. It makes it seem like they care more about interest rates than equity markets this time around. So taking them at face value, you and I have said for weeks, months now, that the Trump put is in TLT, not in SPY. And I think we are vindicated in that view over the last few weeks, right? We have some scary days where we're pressuring 111, 112 in ZB. But ultimately, that's the 5% threshold in the 30s, and that's where the administration taps out and turns around. So if we're away from the potential liquidation environment that was beset by a basis trade blowing up for Japanese funds in early April, we're seeing off-ramps come into place in negotiations so that we're not totally extricating the United States from the global trade system. We're just rearranging our role within it. We can all step away from the edge of whatever edge we were at in terms of totally destroying the dollar. It's probably not going to be favorable for the next few years in a structural decline, but it's not the end of the world. The U.S. economy, the United States government is still going to be a viable counterparty. Well, then you know what? We go into recession classic type of trading for bonds. And recession classic for bonds is higher bond prices. And the best places to hide out during recessions since the 1980s has been the long end of the curve and in gold. And I think that right now, given the fact that I still have a short put spread on in ZB, and I still have this short iron condor on in ZN, I like harvesting the vol if possible. The IBRs there are 40, 50 plus in some cases, depending upon where you look, but having an upside tilt. And that means instead of going out to the one standard deviation move, go pull it a little bit in. Look to the floor that we just had in ZN and ZB in recent swing lows, where the line in the sand was for the administration, and sell puts against those levels, at least for the time being. It's worked out this far. It's real-time validation of our thesis from a few months back, so I'm going to continue to treat it like such, as long as the vol stays high. And the IVRs and bonds are what it's worth in treasuries, higher than they are in the indexes for equities right now.
They've come in a bit, but I would agree they're still pretty elevated, especially when you're talking about risk-free assets in currencies and in interest rates. I'm just probably a little bit early. I don't know why I'm doing this to myself. I got a little bit short bonds. I should wait. I know I should wait till they're meaningfully above 117. But I thought maybe they could creep. I don't want to take a positive portfolio delta risk. I'm only long a couple hundred portfolio deltas weighted to the SPY. But I thought if we could get a little bit of vol compression and the market does the exact opposite of what people expect, leak a little bit higher, it would be interesting for bond yields in the long end to lift a little bit this week as well. Not happening, so that's not working. Did I just catch you say you have a short put spread on gold, or was that short iron condor?
Sorry, no, in ZB it's a short put spread in ZB. It's a short iron condor in ZN right now, where I just rolled that forward as I put that on a few weeks ago. And then in gold, I'm still short gold from last week.
Got it. I'm still short as well. I had the big GC. I was short the big GC contracts when we hit 3,500. I took those off, and now I'm just short like a couple of the small MGCs. So I don't give it all back. But for some reason, I just don't think they did enough damage in gold, and I was kind of thinking that they'd come in a little bit more. Why
so did I.
Holding on to the short? Why are you holding on, and what are you looking for?
I thought we were going to see a much more significant pullback, at least just trying to check out my charts here, closer to $3,200 in quicker order.
Exactly.
And that never really transpired. So I feel like the trade is not working out the way that one would have hoped in the manner with which it should have worked. And if it doesn't work, I might just get out before GDP. If it's a bad GDP report, gold's going to jump. And there's not going to, who cares? 3,400, I think, is going to be a distant memory once more, kind of like how 3,000 is a distant memory. So, yeah, I flipped last week. You and I believe we spoke, on Tuesday last week? And then Wednesday morning, I just felt like it was time to get out. We got, Tuesday morning, we got to 25% above the 200-day moving average. I texted you this last week, but the amount of times that's occurred in history has been very rare. Obviously not a statistically significant sample size, but around a dozen times before. And the 1 week, 2 week, 4 week, 6 week, 8 week, 12 week returns were pretty bad thereafter. So having been writing this up, it felt like, okay, let's get out here. And with gold and bonds behaving the way that they were, it felt like we're going to get another step back from the administration, just my spidey sense. So I flipped from long to short, but I don't want to be short for that long, because I think that if this is going to be the world that you and I think it's going to be, gold at $3,300 compared to where it is at the end of the year, I think is underpriced. I believe you think that too. So like, it's tactically short, but I'm not feeling great being short.
I agree, and I can't figure out if I'm just being greedy holding this short.
Same.
Close it out too.
Same.
I'm also short upside calls. Like I sold because vol was still pretty high after that first dump. I think I sold. I'm short some like 3,500 calls with some long behind it. So some part of me is like, maybe I'll just dump the short futures and just keep the short calls and call it a day. But some part of me just wants, and like, come on, gold, give it up. Give it up.
There's an ego in there. It's like, I want to say that I got in at 27.25 and wrote it up to 34.20 and then shorted it back down to 3,200 and got long up to 4,000. Like, I want to say that I timed everything perfect, like nearly perfectly well. And I know that's getting in the way of cogent thinking, but nevertheless, but there's nothing, I could always put it back on, right? So I think maybe overnight or ahead tomorrow when we get a little bit better liquidity in the futures market, take it off. There's also been the Asian pump, for what it's worth. Like China's market in line the last few weeks, and gold prices are just going up during those initial Asian hours. And I don't want to dismiss that from happening either. But I think you have to remain constructive. The longer term issues that have besieged the trading system right now are not going away, even if we step back, because the person who's instigated all this will remain in the White House for the next few years. So every other country on earth is going to be very weary as long as Trump is in office, in my view. So gold has a place. Gold's going to have a place. The question is whether or not we can buy into the fact that there's legitimate growth coming forward. I found today's stock rebound nice and all, but I found it equally concerning that copper and oil underperformed.
I understand copper a bit. Why oil?
Well, if they're both growth sensitive, right? If we think that we're getting a better rebound today and we're getting away from the full trade fears, and this isn't a dead cat bounce, you want to see some of the growth commodities a little bit more positive leaning. And we could take a step back from the growth commodities. You look at the sector performance today. It's not like it was a screaming risk on day where semis were leading and tech was leading and consumer discretionary was leading. In fact, those were all outperformed by healthcare and staples once again. Mm-hmm. So when you have staples and healthcare leading discretionary and tech, and oil's down and copper's down, you can make a cross asset estimation that people aren't feeling so hot about growth. And I found it very fascinating, for what it's worth. Copper prices, the high that you have pre-liberation day to the low afterwards, we try to get through the 618 retracement of that move, and we can't. And the 618 retracement technically is that line in the sand that delineates rebound from new rally. And so we couldn't cross that threshold officially. The growth story isn't ready to take the baton yet and say that we're out of the woods. But that's the economic reality, Victor, that you talk about. There's a sequencing of events here where if it takes 25 to 27 days for ships from Shanghai to reach the ports of Los Angeles and Long Beach, or about 36 days to reach New York from China, okay, if we now see data, as the supply chain data has showed from these logistics companies, bookings for the ports of Los Angeles and Long Beach from China-bound shipments down about 44% year over year for the May 4th through May 10th window that's upcoming. And if you have those ships coming in that are empty with goods, you're going to have a 1 to 2 week window where trucks just aren't going to be transporting goods to shelves. And that means companies in a few weeks aren't going to have goods to sell off those shelves. So trucking companies are going to have layoffs potentially. You're going to have retail stores that have layoffs potentially, if not closing entirely. Like, that economic reality is coming unless something changes abruptly. There's only silver lining that I have for all this. There's a meeting last week at the White House. Trump has retail executives in there. After the meeting, we get word that these retailers tell their suppliers in China to start resuming shipments again. If the way this all works out to the script, those goods aren't tariffed until they're claimed at customs. So they're on the water right now. They're making their way across the sea. They'll be here in 3 to 4 weeks. If when they get to port, the tariffs have been removed by then, no cost and increase. No problem. I think we have a window with which they're going to try to negotiate and hammer some of these things out. Otherwise, Walmart, Costco, Amazon, all much, much, much higher costs for consumers. And then things just stop appearing on the shelves. The economic reality isn't going to go away. And that just, to put a bow on this, why are we getting rate cuts from the Fed? Are we getting them for maintenance reasons? Are we getting them for emergency reasons? Are we getting them for recession reasons? The rate cuts that are coming would be for recession reasons, and stocks have never liked recession reason rate cuts, ever.
A lot there.
That was a spiral. You got me wound up. I'm just like vamping subconscious stream of consciousness. I'm sorry.
No, it's all good. I talked a little bit about all those things yesterday, so I think it's good to have back and forth. So the logistics part, I think, I'm not a logistics expert, but it seems like when people start talking about stuff not being on the shelves, like you're definitely going to have less SKUs, but I think people sort of envision a world of like empty grocery stores, and that's not going to be the case at the big box retailers in the next 2 to 4 weeks. That's not going to happen. But what will happen is smaller businesses, more niche mom and pop stores and maybe like more niche type products are not going to be available in this, like, potentially available in this window of time, or mom and pop stores are going to have a hard time topping up inventory. And I think to your point, the longer this goes on, the more squeeze there is going to be, the less number of SKUs there are going to be available in stores. And so I would agree with that. Do you kind of agree with that added nuance I'm adding on top of your commentary? Like, yeah, there's this dire when I don't think you did it, but when people envision, like, oh, we're going to have less product, that does not mean empty grocery stores in 2 weeks. And I'm just adding that nuance on there and seeing.
No, what I do agree. And it depends on what you're looking at. Doing channel checks locally, for example, like my grocery store, like 85% of the produce comes from within the Northeast. The stuff that doesn't is coming from overseas, like the avocados and the bananas. So the fresh produce isn't going anywhere anytime soon. The food that's canned here in the United States, like, that's probably not going anywhere anytime soon. It's the stuff that we really don't make here that you're going to start to see thinning out of, like paper towels and toilet paper and nitrile gloves. For example, like nitrile gloves, one of the big reasons why we had this problem in the pandemic, having looked into this to try to make them here at home in the US, something like 80% of the world's supply comes from one country in Asia. So when supply chains get wrecked, all of a sudden all of our nurses don't have gloves because there's one place in the world to get them, basically, Thailand. doesn't really work in that situation. So that's the kind of thing that you'd see an impact of. Wholesalers, big retailers like a Walmart, a Costco, a Whole Foods, they'll have an easier time, obviously, negotiating on the margins because they have bigger balance sheets. They can afford to nudge out smaller competitors to secure supply. But if you live in a more rural area with mom and pop stores, those are the ones that are going to feel the strain first, if there's significant strain that comes down the pipeline. So it depends. Like if you're in New York City, you're probably not having a problem. Chicago, you're fine. Where I am, okay. We have ShopRite, but we have ShopRite, we have Stop and Shop, we have grocery chains, right? We have Target, we have Walmart in the area. But the further up north you go, now you're like 3 hours outside the city, 4 hours outside the city. You're talking about like the local Jones pharmacy stand that's been owned by the same family for 85 years, and they don't have the access to supply channels like a Walmart or a Costco or CVS would, and they could get nudged out of the market if there's price wars. So.
Mm-hmm. The other thing that you mentioned was commodities versus stocks. So I guess I've always thought stocks start to price in the future way before commodities do. Commodities tend to price the present and stocks tend to price the future. So the only thing that I would say is I sort of agree that the market is not pricing the growth. And I sort of agree. I agree the market is not pricing a growth narrative here. But I think when it does, and who knows how long off into the horizon that is, the stocks will get it first, and you won't necessarily get investment dollars piling into crude and into copper at the same rate that the equity markets will start to price a growth turnaround. Has that been your experience as well? That commodities tend to price the present more so than equities?
Commodities they're a lot more sensitive up front to supply and demand changes, right? And that's what concerns me. Equities are trying to look around the corner and say there are better days ahead. The problem is that the better days, I would feel much better about equities if copper and oil were rallying alongside this, saying like the worst of the now is over. But their performance and their continued underperformance indicates that there are still some near-term issues to be worked out, and that we've thrown some kinks into the gears of global trade that will have negative ramifications. Even if they're short-term and shallow, those negative ramifications will be real. So
I agree.
Square that circle, right?
Yeah, and I'm just adding that nuance for anyone that's a little bit newer, I think, to the commodity side of things. Like you want to be a little bit careful of pricing the growth turnaround when it comes, like going straight to the commodities first. I'm curious. We've talked about this in the past, but never explicitly. Are you a follower of Ray Dalio's sort of changing world order narrative? Are you a follower of his point of view?
I have read his work over the years. Yes, I'm not. I don't know. I'm not a follower of anyone's particular view. I don't believe in isms to sound like Ferris Bueller. Like I believe in me. So I read what Ray Dalio says. Like I read what everyone else says. He's looking more right these days than he has in a long time.
I don't get the hesitancy to answer that question. Like, do you believe that we're in some sort of major turning, like the fourth turning mechanism, or that we're in this, we're at sort of this inflection point of America with the reserve currency, and that we're in the midst of a handoff, and the only question is whether it's a hard handoff or soft handoff, whether it's cooperative one or whether it's not a cooperative one?
It feels like we're on that path right now, if only because of the choices and decisions that are being made. You know, if I tell you that we're going to Disney World and I put us on a boat that starts setting sail for England, you could surmise that we're probably going to England instead. In my worldview, do I think that we were heading down a path towards de-dollarization and the U.S. being displaced by China and a cadre of Southern Hemisphere countries, the BRICS? No. But the current path that we're on would suggest that the current administration does, and they're taking measures to prevent that, or at least isolate and ring fence the U.S. so that when that inevitability arises, the damage to us won't be significant. In the short term, de-dollarization, if it occurs, is a long-term project. Right now, my view is that it's being drawn into question. It's not actually happening. It's being drawn into question. There's so much U.S. dollar-denominated debt out there in the system that the United States will only accept payment for in U.S. dollars. So to pay back the debt that you have to us in U.S. dollars, what are you going to need? U.S. dollars. How do you get those? By trading with us. Okay, so there's still an incentive here to trade and keep things going. There's a dance that needs to be danced still. That's not happening. That's not going away anytime soon. And if there is a dissolution of the U.S. dollar-backed trading system, as a Brent Johnson might point out, if there's a mad scramble off book for Eurodollars, which side of the equation do you think people are taking, the euro or the dollar, in that liquidity reach? They're going to reach for the dollar. So you're not going to look at the yuan. They don't have the proper current account, capital account set up right now. They need to open up their books, need to allow their renminbi to weaken substantially. Not a lot of people have trade with China in a manner that they would want to hold the renminbi as a reserve currency. Even Mohammed bin Salman over in Saudi Arabia, he's happy to do small trade with China, but when there's big deals, they're still being done in dollar denominations. So we're asking the question right now for the first time in a legitimate manner. It's not just some cranks posting in the comment section on Zero Hedge suggesting that the world's coming to an end. There's a legitimate question whether or not the U.S. is going to maintain its role long term if there are alternatives. And right now, the reality is that there's not. That's why gold is doing what it's doing. That's why Bitcoin is doing what it's doing. There's no other fiat currency that can fill that role. So you're stuck with the dollar, whether you like it or not, for the foreseeable future. But if you're allocating at the margins into a reserve, I don't think the incremental decision leads you to the US dollar at this point in time. It leads you to take a risk on something else because we're a month into this, Victor. Liberation Day was April 2nd. We're 27 days from April 2nd right now. If we're talking about this is a long-term capital flow thing that takes place over the course of months and years. So we can't judge as to the success or failure of that point of view 27 days into this potential new world order.
Yeah, I would agree with that. I think from his worldview, he'd probably argue that the president is not. It's sort of this. It's a matter of incentives, right? And it's the handoff between the Dutch and the British to America, and the potential future handoff. It's not necessarily dependent on an individual candidate. There's a set of incentives and a time frame, a window of time that just either accelerates or decelerates that trajectory. At least that's what history has taught us. And the reason I ask that question is I think in some ways, like the Bitcoiners see a world of incentive and see a path that is either sustainable or unsustainable. I think people like Neil Howe on the social side of things have seen cycles that play out over 75-year time frames for whatever reason, usually because kids don't learn the lessons of their great-grandparents until they themselves put themselves in the same situations. So there are social cycles that play themselves out over history. Ray Dalio says there are debt cycles that'll play itself out over history, and there are also sort of primacy cycles that play themselves out over history. I'm asking this to get to sort of I think a more broad conversation, which is, do you believe in that bigger, broader set of backdrops that are driving the things that are happening in this moment?
Okay.
Or because the conversation, I think, the point of view or the framing from you, it seems to be there's a set of individuals who have taken a set of decisions, and those set of decisions are now creating this bigger, broader discussion. And I could say, okay, I can see that point of view. I can see that frame. I can also see this other frame from the Bitcoin community, from the Neil Howes of the world, from the Ray Dalios of the world, who sort of see a bigger set of incentive structures. And it's almost like the reason you get a Trump if you believe this, the reason you get a guy like that in the office is because you've had this festering set of incentives, right? That you've got enough people that wanted to believe that this person was their best choice, so that you have a populist rising for a reason, and that's a symptom of a bigger, broader set of incentives that are leading us along this path. So again, it's more of a challenge of the frame, and I just wanted to see what you would do with the challenge.
I think that's there are cycles. The underpinning of all of this, by the way, is the fact that human biology hasn't changed much over the years. For better or for worse, the meat machinery in our head today is what was there 1,000 years ago, 2,000 years ago, etc. So we're bound to make the same mistakes as our ancestors unless we choose to learn from them. And I think Ray and others point out that human beings are decidedly terrible at learning from our mistakes, which is why every 100 years or so, at least in recent history, we try to use tariffs to solve economic ills. We did it in the 1820s. We did it in the 1930s. We're apparently doing it here in the 2020s again as well, because everyone who was alive last time for the tariffs is now dead. Okay. So I don't agree. I don't disagree that we go in cycles. I question if whether or not Trump is going to be the person to deliver us there because of how flimsy and sensitive he's proven. What did you make of the Amazon backlash today? Immediately, that they were so offended, calling it a political attack, that Amazon would list the prices of the tariffs on goods now moving forward. I mean, the messaging from them has been tariffs are great for by other countries.
Yeah.
And you're saying like, no, don't show them what's beneath don't show them behind the curtain. You're not allowed to show them what's back there. I mean, so like, Trump could be an agent. I also think that Trump could also just be the precursor for the person who is actually the agent of the fourth turning if such a thing exists. He would not be the guy.
Yeah.
Which means that it might be someone on the left.
Oh, what did I think? Sorry, I forgot the question you asked me. So what did I think of the Amazon thing? I thought it was an embarrassment on both sides. I thought if I run a store and I want to break out or itemize my cost structure in the store, that is my prerogative. And the president of the United States, if it's the biggest store, the president of the United States should not be calling me and dissuading me against itemizing out my receipts. In fact, we almost did the exact opposite with Airbnb, right? When everyone was pissed off when you wanted to buy a property, but then you actually click on the rent a property. You click on the property, it gave you one price, and then but by the time you get to the checkout, there's thousands of dollars in extra fees. People hated that. They wanted stuff broken out so they could understand the cost structure. So I thought it's a stupid thing to be talking about. Why a president is engaged at that level, it's stupid. Why he would pick up the phone and call Jeff Bezos, stupid. Why Jeff Bezos would perhaps pivot. Now they say that this was a small entity that was considering doing it, and they weren't going to move forward, right? It wasn't all of Amazon was going to do this. It was a smaller entity who was testing ideas. I don't know what's true. Honestly, it doesn't matter. It's almost worse if that was true. If it was a small individual entity of Amazon that the president was freaking out about, that's almost worse. And why the hell Jeff Bezos would care or pick up the phone and call somebody in his business and squash it is even worse. Like, both of those looks are bad. Both of those looks are bad, in my personal opinion, to answer your question. But I don't think that's what I was asking. But I want to move on to the next topic. But I guess what I'm asking here is when I talk to people, it's either, man, they're so fixated on a dude, and that it's hard to have a conversation about the broader frame. And the broader frame, in my personal opinion, is the more interesting one, the more interesting set of incentive structures that leads us into this moment, because that will drive whether or not you believe there's a sense of urgency to do something, to act in some way. What, you don't have to agree with the strategy, but from your understanding of the broader frame, do you have a sense of urgency to act? And that's always the most interesting question.
No.
I think there's a set of people that say, no, this is fine. We're doing fine. Everything's fine. And we need incrementalism and incremental change. And then I think there's a different group of people that have a high sense of urgency that something needs to be done, major reform needs to happen. And that's the most interesting conversation to me. And I think we get lost sometimes in the...
Well, I think I answered that then. Because if my view is that Trump is being curtailed from being that agent, he may not be the guy, but that guy is going to be coming around. Like, the incentive structure is that there needs to be high agency and high urgency right now to get things done. And whatever politician delivers on that is going to be the politician that secures a generational, perhaps, victory for their political party for the foreseeable future. Kind of in the way that FDR did for Democrats coming out of the Great Depression. You go through a multi-decade spell where Republicans do not take back the House of Representatives simply because of the progress that's made economically for working class people coming out of the New Deal, right? So whoever is able to actually capture this moment and deliver on those reforms and meet the moment with the high urgency and the high agency here is going to make well. But I don't see Trump being that person, right? At least not right now. If this was a true fourth turning moment, I'm not sure that Pierre Poilievre would have not only lost the prime minister race last night, but he lost his seat in parliament. There is the system, okay, as people might say around here, the globalists, if you will, are kind of pushing back. There's almost like an antibody response to Trump right now in the global trade system where the real politic is coming into play. Trump can try to bully his way around, but people have politics in other countries too, and no one wants to be talked down to by an outsider. And that propelled Mark Carney to power. So if this was a real fourth turning and the incentives demanded it and presented that sense of urgency that could be capitalized on, Pierre Poilievre would be the next prime minister of Canada, not Mark Carney right now. And so I don't know if we're going to solve any of the problems that led to Trump. You said before, like, what kind of system produces the incentives for people to roll the dice effectively on someone who is such a game changer, right? Who's so unorthodox like Trump. And it's because they're looking around and saying, well, more of the same isn't working for me.
Yeah, I said the worst thing that can happen for this populist movement is to elect an individual to solve their problems, and you realize at the end of 4 years that you're still dealing with high prices and poor job prospects. That would be worst. That would be the worst possible thing. But it's
you're going to President AOC if that's the case, Victor. You're going to President AOC.
And then you get even worse outcomes. I agree with you. And the policies that would come from that reaction would lead to even worse outcomes. And I see that as a possible out on the horizon. What do you think this means? What do you think, Mark Carney, what do you think the election in Canada means for U.S.-Canada relations going forward?
If
just cemented a complete change. I know Mark Carney sort of signaled, he said, I don't know if they had a call or he signaled that he's going to have a call. I think they already did have a call. So that's sort of the signal one of strength that, look, I'm gonna make the call. I'm gonna stand up for Canada, sort of his positioning, but it's also a willingness to sort of engage. What do you think it means for U.S.-Canada relations?
Polymarket gives Canada a 2% chance of becoming the 51st state, which is up since Carney was named prime minister, since he won his election. I think that somewhat, despite Carney being a liberal and a technocrat, he's kind of Trump's cutting room floor guy. Here's a guy that's been educated at the world's best institutions that have the world's smartest people. He has all the accolades. He's done all of the jobs. He's worked at all the places. UK, Canada, central banker, right? Like, he has the chops, as one might say. So maybe Trump respects him more than he respected Trudeau. I don't know. I could see Trump treating Canada better now that Carney's in place than he would have when Trudeau was in place. I don't think he's going to go away with his, will he call Governor Carney? Will he call Prime Minister Carney a governor before June? Polymarket gives it a nice 69% odds right now.
Does it really?
You can fact check me. Go to polymarket.com, type in Carney, and it should be the second thing that's listed.
There's one thing that will increase those odds. I would want to fade that. But if anyone tells him not to do it,
he's going to do it.
Mr. President, Mr. President, could we just maybe not refer to President Carney as a governor? He'll do it 100%.
Donald Trump has the Frank Castle Punisher mindset, where you're like, Frank, please stop shooting people. And he's like, what do you mean? Bang! And shoots another person just to make a point. Okay.
Let's talk about a few stocks if you don't mind.
Sure.
Good with this? Tesla. What?
Only 2 or 3. Well, in last week we had the conversation like, is the worst over? Because you have all this news flow, and one Dylan Radigan was out there aggressively selling put spreads over the past few weeks during the decline. How much worse can it get? And ultimately, it runs higher. Maybe that's for GDP tomorrow. Although I would argue that the second quarter GDP report is really the scary one. So if you want to talk about a brighter future for stocks, we have to have some evidence that the worst is over. And economically, we do not yet. So Tesla, on the other hand, though, if Elon Musk is going back, his attention is there full time, or at least more than the 1 day a week, it seems. Maybe Tesla can roll out a model update on a few of its vehicles. I ultimately think that is going to be combined with XAI at some point. The crisis in branding that they face is legitimate. People are obviously getting rid of them, and you look at the secondary market. That's by the way, forget the stock price real quick. If you look at the tracking of Tesla sales on the secondary market, they're still at lows. Once those numbers start to go back up, then we'll know Tesla's out of the brand woods. But when people are willing to sell lower and undercut the last price for a sale because they just want to get it off their hands, it's bad. I think, though, that Tesla, the worst is over. We can't really have a quarter worse than we just did here. He's going to be out of the public spotlight soon. That was a big albatross around the company's neck because he'd open his mouth and say something obviously incorrect, obviously very dumb. Doge was a huge failure. So Tesla's probably seen the lows. I will say that.
Brand problem, but seen the lows.
Brand problem, but seen the lows. Rabbit out of the hat is a merger with XAI.
I think, and this is all conjecture, but I think the brand problem is behind them. I think as long as he's taking a back seat and no longer being a political player, there's no reason to keep him in the headlines and attempt to make him a punching bag. So by him taking a step back, he's not going to be in the headlines anymore, and then people are welcome back to their free will and their own feelings of Elon, and I don't think he's going to give him a bunch of reasons, at least politically, to dump the car. And I think a couple.
Can I give you a conspiracy?
We'll forget about this. Sure.
That new Amazon back car, Slate. Slate is an anagram for Tesla. What if Elon and Bezos have launched a company in secret? We know Bezos is there, but what if Elon is helping back this EV company just with him out of the picture, right? Like, could we launch a low-cost electric vehicle without Elon's baggage attached to it? How would that sell? No, it's obviously a low-stakes conspiracy, but like Tesla and Slate, same words, same letters, excuse me.
I don't know. Do you think those guys would cooperate, or do you think they're like wired to compete?
I think that those guys are competing with one another out of ego, but those guys have more in common than, say, they have in common with either of us or anyone else listening to this podcast.
Oh, yeah. I would agree. I think the only thing you have in common with Elon is you're going to end up with like 11 or 12 kids. I'm fairly certain of it.
Well, I already have 11 or 12. I think the real number is, I would actually, this is a market I'd like to make. Do you think that Elon Musk has more than 100 children?
No.
I think he has okay, well, I would say, I'll buy the over then. I think we could go much higher on the ceiling. We only know about like the dozen or so kids that he has that have been publicly revealed. I would bet he probably has like 200 kids.
Yeah, I'd sell that all day long. I'd sell that all day long.
We'll see. Hey, wasn't there a Vince Vaughn movie a few years ago like that, where he was a donor and the bank that was supposed to be administering this IVF or whatnot decided just to give out his donation?
I don't know.
So he had like 500 kids.
I got to go see that movie. Thoughts on Meta here? Closed at 554, currently 549.
I want to believe I really like Meta for the AI story. It has a really impressive model. It's certainly not ChatGPT with this fluffery that the new one is doing. I think that, by the way, the new ChatGPT model, where it's like, that's a great question. You're really delving into like the deep psychosis of the human, right? Like, let's give a bunch of mentally ill Americans a device that reassures them that they're geniuses. With free access to medication that they can buy on TV and guns out the ass. Oh my God. Oh. It's going to get so much worse before it gets better. It's going to get so much worse before it gets better. Yeah, anyway, so the bull case on Meta is that, well, I would pose this as a short-term problem. What we saw in Snapchat today, you look at their advertisers, their number 2 advertiser is Amazon. A plethora of their advertisers, Nike, Samsung, lots of retailers. Okay. These companies can't tell you what prices are going to be in the future because they don't know where the tariffs are going to be. And so they can't make any marketing spend right now. And so Snapchat today looks to the future and says, we can't provide guidance. And so you figure a company like Meta is dealing with that too. I think all companies are dealing with that right now. So no one individual is going to be too improperly penalized for a general market condition. Then again, do you really want to trust that Meta is going to be safe from this? It has the cash balance sheet and obviously the float sitting around the moat sitting around it with reserves to survive and ride out whatever storm. But it's a challenge that's going to be faced in the short term.
I told this story. We'll end on this. I told this story yesterday that whenever we're at this inflection point in the economy, this really funny thing happens, that people will look at Snapchat and they'll try to do if this then that to Meta. So in other words, if Snapchat has poor advertising, they'll look at it as a read-through on all digital advertising. So they'll extrapolate that to Meta because they're always so close. They're a day apart. And I said, if you will likely see a decline in advertising and Snap, but if they give you a big enough discount for Meta, which they didn't really, you only got like $5 here. But if they gave you a big enough discount, I said I'd buy it. Because if you're a head of a marketing department and you go, okay, I got to deal with uncertainty, the question is, you don't cut evenly. You don't go take 10% off of all of our digital advertising spend. You would be an idiot to do that. You say, cut the least effective. And Snap is a bunch of 14-year-olds that don't buy anything. So you cut Snapchat first and don't really pull Facebook and Instagram budgets. And so you see it every time. Whenever things get rocky, Snapchat shits the bed, everyone gets freaked out about Meta, and then they realize, like, oh yeah, you're not really gonna pull Facebook and Instagram, but you're gonna stop selling 14-year-olds, whatever you're trying to sell them. There was a joke there. I'm not gonna take it. But unfortunately, I think the market kind of sees that.
Yeah.
And it's only down $5. And I was hoping that they would kill it. Anyways, Chris Vecchio, I enjoyed the conversation, my friend. We're going to get you out of here on time this week. If the people want more from you, tell them where they can go.
At CVecchioFX on X, Twitter. Always here on Tastylive Monday through Friday, Futures Power Hour, 1 p.m. Eastern. Overtime with Radigan and Spivak, 4 p.m. Eastern, Monday through Thursdays. Let Me Explain on Tuesday mornings with Tom and Tony, 9:40 a.m. Eastern. Today, we actually took a step back from the Trump tariff must talk and focused more on trading philosophy, why Tom and Tony approach the market the way that they do. 20-minute conversation. I would encourage people to check it out. And of course, here with Victor, The Price of Truth. Usually Wednesdays, this week Tuesday, but next week Wednesday, 6 Eastern.
Home builders, buy them or sell them?
Sell them.
Good man. We'll see you back here next week, Chris. Appreciate it, my friend. For everybody else out there, I appreciate you sticking around for this hour. I will see you back here tomorrow with a conversation with Ilya Spivak. If you could, hit the like button. It's the easiest way to support the channel and all the people here behind the scenes. So do me a favor, hit the like button, subscribe to the channel if you haven't already, and do me a favor, come follow me on Twitter at Victor Jones, the Owen Jones of Zero, because I like to be difficult, and I'm tweeting up a storm lately. Kind of dialed in. One of the most interesting pieces of content I have seen lately, outside of this network, of course, is there's a interview with Brent Johnson on what does he call it now? Thoughtful Money, I think, something like this. I'll post it on Twitter, but I think it's well worth people's time if you're looking for a bit of confirmation bias. If you're looking to escape a bit of confirmation bias, I think they do a really good job of tackling the set of incentives that are built around the game theory behind tariffs and how they're being used. I thought they did a really good job of breaking it down without emotion or political bias, and that I think is hard to find right now. So I'll see you back here tomorrow, same time, same place, same great network, only on Tasty Live. Until then, peace.